Tuesday, Thursdays.
Yep.
I like a little more, but Tuesdays we'll take it.
Tuesdays are good.
Yep. Good weekend.
Yeah. Very good. Anything exciting?
Oh, I did Pilates.
You did.
Yeah. So it's more of the sculpting season, winter,
Yeah, sure.
we're in the gym with Ryan Grace, Chris Grace. Just taking whatever supplements they give me, lifting as heavy weights as possible. But summer's coming, swimsuit's coming out soon, so we got to tone.
So I always thought Pilates was where you lay on that wooden thing and pull the strings.
Yeah, it's.
But there's more, because my daughter's getting her Pilates training and certificate.
Oh, nice.
There's a whole, there's sculpting. There's a whole different thing, isn't it?
It's, I don't know. Yes, I think the two variations, I went with my girlfriend. The two variations are you can do it just on a mat, like a yoga mat, or the reformer, which is the
reformer,
contraption.
that's what it's called, right?
And, oh my gosh, I've never been so lost in my life. They're like, it's like, what is it, Twister, where they're like calling out color. The springs are color coded, which is the weight resistant.
Don't want to know.
Then they're like left hand blue, right hand.
Did you feel it? Was it a good workout?
Yeah, my glutes were torched.
Oh, I bet
it was horrible.
Yeah,
because you straddle like one moving board.
So you were on the reformer.
Yeah.
Okay.
And then you just like try and go as wide as possible without busting yourself. It's intense, but it was pretty funny. So
you are you're going to be ready by June to bring out the American flag speedo and be all
exactly
set. Mark Spitz.
But then I had one of my rec basketball games the day after. Wasn't good.
No,
I was not.
When does the league pick up? I thought that was fall. Was it summer?
They have them all year round.
Okay.
I refuse to do it in the winter because I'm not gonna Uber to DePaul when it's -5 out. So
when does Glen basketball season betting start? That was some of the best Caberta dollars I ever made.
Yeah, that was good. This one is more volatile. The market's open. I had 16 last game and then 2 this past weekend, so that not consistent.
Look at you.
But Sunday games kind of tough.
All right, very good.
But I got caught in the rain.
Oh, at the end of the day.
Yeah. But now weather should be up.
Now, are you going to DePaul to play outside?
It's in their rec center.
Okay.
So indoor, which is nice. But
it's indoor.
I just bike straight up Halstead.
There you go. Look at you.
So trying to stay in my fitness because
active.
I don't do it during the week enough.
Well done.
I'm just
whatever
at
happened
my
to
desk.
bands training?
Clink still does bands training.
He does.
He just doesn't do as good a job of getting people in his class. One of our coworkers likes to lead a resistance band workout, and for a time he was getting 6 or 7 people in at a time. Now I think he just does it by himself or with 1 or 2 people that he coerces into doing it. It's a good workout. Somehow it's all just shoulders though, so you just feel it just hurts. But we're good. We got an exciting week coming up this week.
We do.
First full week of May.
Yeah, speaking a little bit of hurt, actually quiet kind of inside day yesterday.
Yeah.
We're waiting again. Are we waiting now? We've got FOMC on Friday, as you pointed out to me, be Bank of England Thursday, Fed Wednesday.
Yep. We can go through the calendar for this week. Today, nothing crazy. We were looking
You're not hanging on that Swiss unemployment rate?
No, just a little soft. But yeah, we were checking this to see if there were any UK data this morning, but nothing really. So we'll have to dig into that. But yep, Wednesday, Fed decision expected to hold. Getting some BOJ minutes. Who knows what's in there? Then Thursday, BOE interest rate decision. A cut expected. That's what's sending a little bit of speculation into our pound-dollar pair.
Yeah, but again, a cut in UK rates and the pound's up. How many pips this morning?
A lot.
Yeah, and this was a rally that actually Euro's up tiny bit. Everything else is mixed. This is a big move. 70 pips. That takes us probably standard deviation and a half out of the daily range. More so if we go from net change at the end of 5 o'clock our time.
Yeah, I mean, interesting with, we get this little low liquidity hours after U.S. close, a pretty strong move around Asia open, and then just a very firm bounce off of those lows, but nothing on your
No,
radar.
this started like at 4 o'clock in the morning. It
Yeah.
just started to move a little bit, and not much of a pullback on it. It's been pretty much straight up. If we jump over to euro, we're going to see it again. Euro, we're now back into that was a big move. Those 12 pips from 13.20 to 32, but good. Let's take a look. Let's stay in this time frame. Let's go to euro sterling just to see if there was something there. So
A little bit.
all right. Now you wonder. Okay, nothing's going on.
Oh, there you go. Yeah.
Nothing's going on. Cable's on a tear. Why? This doesn't make any sense. There was no news announcements. Nothing's coming out. All this other stuff is at the end of the week. Again, people just don't trade. Again, in the U.S., we're very dollar focused. We trade everything's priced now, but the world trades in a basket of currencies. So, euro sterling, when we look at those non-dollar crosses, euro sterling, euro yen, are some of the kind of big boys that are interesting. Now, you see this, again, we started a little bit of down move to the bottom end of the range, and then we saw that accelerate. Now, could this just be euro sterling moving? And it drags the relevant pieces together. Because, again, euro sterling will be reflected in euro USD and sterling USD. So, and what we're seeing here is this is primarily a sterling move. And we're seeing euro sterling get beat up here pretty much. So when you look at, is sterling having a pretty good rally? Absolutely. We're into kind of a congestive area that isn't necessarily saying, short of the fact that we've moved, everything else is up or down 20 pips. This has moved 50 pips in 2 hours. It's hard. And this, I should be careful to say, what's the better trade? Well, it's whatever works for you, but you put the appropriate caveat in there. When I look at this, sure, you can go back, and let's just jump back to sterling really quickly. It's a big up move, but there's not, and let's tighten up the range a little bit. Can we grind up to 134, 134.20? Absolutely. So is this a good level? Well, it's a 50-point run, which is great. Go back to euro sterling. Euro sterling.
Oh.
Perfect. This actually, to me, sets up much better as short-term day trading.
Right.
I like this one because selling sterling right now, there's some clutter for the next 50 points. Am I going to, so the question becomes, if there's clutter, where am I getting out? Am I just going to pick a random dollar amount? That's one way to do it, to stay disciplined. I like sometimes market structure to help me out a little bit. There's no market structure for 50, 60 pips. So I am trading short-term here, and I'm looking for a pullback in sterling. What am I looking for? If it pulls back half the 70 points, 35, what am I risking to the upside? Probably 50 or 60. Otherwise, you're going to get caught up in noise. I don't like that trade so much. This tends to set up a little bit better for me because there's a decent level of that could be pulled back here, back into that above 85 cents, kind of the middle of the range. And if I'm wrong, I know where I'm wrong. And we're pretty close to that level right now. For me, very, very short term, this is where I will forego the dollar component and trade the relative value of the pairs. And what's great with SpotFX is I'm not building out things. I'm not buying one thing long. Could you build this out by selling sterling, U.S. sterling, and buying euro USD? Absolutely.
Is there any merit to that ever?
It is.
It's double the margin.
It's double the margin. It is the weightings. You're going to have to figure out the appropriate weightings because the nominal levels are different. It's 133 versus 113. So how do you weight that? Do you weight that on an IV basis? Do you weight that on a notional basis because you have to convert it back into dollars? No, I don't want. Can you do it that way? Sure. It's an awful lot of work.
Yeah.
I would rather just trade the product. Less friction. You're not getting in and out twice. You're getting in and out once. All better. So I I think we're not running you down the rabbit hole of,
Israeli shekel.
yeah, sterling lira, Turkish lira, and stuff like that. No, these are not places where we want to necessarily go. Yes, we have 80 plus FX pairs, and I'm not divulging anything proprietary. There is a community that trades Turkish lira. They love the overnight rate, and they love that action. Is it a big community? It's a dedicated community within our ecosystem that trades it. That's great. Or they have either some investment in it, some understanding of it in a different way. I like to stay where things are, a pip and a half wide. I like to stay where things are relatively liquid and orderly. And it's not that it's not that a Turkish lira trade is disorderly. It's just a thinly traded market with a wider bid-ask spread. If you're willing to accept that, that works for you. I like things that have, again, for me, the bid-offer spread is friction. The tighter that is, the less friction, the less cost I have of doing business. One of the things we like to talk about is when you look at us and you look at other FX providers, where is that spread? Be mindful of the width of that spread. That's your cost of doing business. So, yeah, interesting setup here as we go through it. Where do you want to go next, my friend?
I mean, I've got some slides on.
Oh, do you? Perfect. Let's do it.
I got some slides on the Australian dollar. If we want to get to that.
Yeah, because this has been a pretty good ripper there. We got a little pullback yesterday.
A little bit.
It was a nice pullback. It was actually 40, 50 pips.
It was good, but the greater story zooming out is this Australian dollar, U.S. dollar breakout, and just what's impacting this rally. Can it continue? Because we know when we look at the Australian dollar over a long time period, a lot of different storylines can be attached to it, whether it be gold, whether it be risk sentiment, whether it be China. We've got all of those things at play, but just wanted to break down what we think is actually driving some of this breakout.
And I love the fact this makes you such a good trader. It's never just one thing. Don't get caught on one thing. Well, gold is here. This should be here. Nothing is correlated one-to-one. If it was, there'd be no trade because it's perfectly arbitraged. There's always a confluence of events that come in and out. We balance that. That's part of our decision-making. Part of the decision-making around trading is, what do I feel? And this is where sometimes you're right, sometimes you're wrong. What are the overriding drivers? But they all come together. So that actually frees you up that you don't have to be an expert on Fed policy. You don't have to be an expert on trade policy. You don't have to be an expert on what the heck is going on in China, because that could take you a lifetime and never get it. You just have to be comfortable with price action.
Right, and price action is what you got in April here with this Australian dollar pair. I mean, we're at new year-to-date highs. Hasn't traded 65 cents since beginning of December. Now we're right there. Got a little bit of pullback, but we're comfortably through the kind of chop we saw at the end of April, and up more than 8% from the fallout at the beginning of the month from Liberation Day and what have you. So just a really crazy run here for the Australian dollar. New Zealand dollar also getting some of this as well, but just sticking to the Australian dollar. One of the main things when I see this graph over April, and keeping track of obviously U.S. equities, you can see a lot of similarities. So went ahead and ran the correlation for the Australian dollar and the VIX, U.S. stock volatility.
Interesting.
And this is back at highs for the past 5 years at least, on a 3-month rolling basis, above or greater than negative 0.5 here. So a pretty fairly solid correlation. And we've seen a lot of that fear lift from the vol shock in early April, and now moving pretty similarly here, and kind of speaking towards the risk on sentiment. We saw the move in the currency space, a big flight to the Swiss franc, the Japanese yen, now some of that coming back, and more demand flowing into risk-on currencies like the Australian dollar. That piece all good with you?
Yeah.
This piece, is the headline here, and you think this has got to be doing something. It hasn't really been, the China trade war news hasn't really been affecting this Australian dollar, how you think about it. And so ran kind of what I thought could be an interesting correlation here, which is Chinese equities and U.S. equities. Me personally wasn't as familiar with what this historic relationship is, but now you're seeing a really strong positive correlation,
right.
which to me tells me that this trade war thus far hasn't been one-sided. It's really been matched, as you've seen the tariff
right.
hikes match 1-to-1, and so when you're thinking about the context of the Australian dollar, it's less so, at least how we've proceeded thus far, it's less about who's going to win a trade war, but really no trade war, good for Australian dollar, and trade war and uncertainty, regardless of who's involved,
right.
Would be less beneficial. Is that a fair assessment?
I think it is. I think the one thing in the previous chart too, around fear subsiding and that negative correlation getting so robust, is where are we in terms of pricing? Mm-hmm. We were at one point multi-decade lows. I think that's, it would be interesting to see the correlations if we were more mid-range, if we were 70 cents, 75 cents Aussie. So I think they're very interesting takeaways here in terms of context, but I think where we are in terms of prices also helps drive that a little bit.
Well, there you go. You called it right there, and we pulled up here the last year of price action in this Australian dollar market, just to get a sense of historical context from a price action perspective.
Right.
And here I've thrown on some moving averages just to kind of run some quick numbers for us over this time period. And 65 cents is right there at the year-long average. So what do you take of that? I mean, we've gotten as high as 69 cents in the past year, last October. A lot of historical room to run, but are you saying that these strong relationships we really only saw because we were bouncing off of multi-decade lows, kind of that sense of when volatility spikes, that correlations tend to go to one.
Exactly.
And now we're kind of shaking out. Is there still room to run here? Or?
I think this is classic Aussie. It gets very elastic when there's uncertainty, and especially when we get to new price levels. And below, 61 cents was a new price level, all the way down to almost 59 cents. So as cheap as 60 cents seemed, and it was cheap, we got down there, we traded another 100 pips lower, and we did it 4 or 5 times. I think that what we've done now is basically normalize that down. I mean, I've traded Aussie at 48 cents and $1.10. So I only say that for context of it. We want to be realistic in our expectations of where things can go, but this Aussie and Kiwi both have a proclivity to get this outstretched elasticity. I would think that really, if we go back another year, you would say the mean is probably closer to 70 cents, not 69. So what have we done in relation to other dollar pairs? We put in new multi-decade lows. We didn't do that in euro. Everybody talked about, euro's going to par, cable's going to 110. Never got close. We did here. Now, we've normalized back to the middle of the year's range pretty quickly. Nothing goes one way in one direction. If you look at the short-term tape action, though, up here, higher highs and higher lows, which means that every rally we put in a new high, and when we pull back, we never pull back below the previous.
And just recently, really breaking out of that 64 range.
Right, and I think as much as we thought 62 cents to 61 was overdone, don't expect the markets to now be completely, well, we're right back in the midpoint. Now we're going to pause. I would imagine that depending on what kind of reaction we get out of the Fed on Wednesday, and I'm trying to figure out what he says, which is going to be nothing. Not in a bad way,
Right.
but just there's nothing for them to do right now. And that statement is after a 500-point rally, which just brought us back to normal. Now, sterling, when we looked at this morning, it's almost up to 134. That's well above the year's range.
Right.
Euro at 113.5, well above the 104 to 108 range.
And those moving in two distinct kind of separate rallies.
Absolutely. So you can make the case, well, this is normalized, but it certainly hasn't outperformed euro or sterling. And absolutely. And if we looked at a Euro Aussie chart, we would see that fact. I think we probably see, depending on tone and the numbers on Friday, we could stretch a little bit up to probably, we trade above the 200-day. We probably stretch 75 or 100 pips higher. But I do know that things don't move one way. We've had a normalization. And I think this is what's hard sometimes to do. Well, I should have bought them at 62 and just held on.
Sure.
Yeah, you would have taken a lot of pain on the way down, though. That would have felt like, the world's collapsing. I think that we're going to have a hard time getting back, I think, anywhere near the highs over the next 3 months. We're shorter-term traders. I think rallies up here become interesting if they don't hold. In other words, can we print to 66 cents? Absolutely. I want to see what they do around there, because that may be okay, we've run the gamut, and everybody, again, market tends to go where it can inflict the most pain. Anybody who is a stubborn short might be shaken out, and then maybe the market turns a little bit. But I also want to be responsive to, if we get a dip down on any of these knucklehead numbers, and we print on non-farm payrolls, not non-farm payrolls, but on the because we already had that Friday, on the FOMC announcement, we print 63.5, 63.25, which is another 100 pips lower, and we stay there less than half an hour. That's an interesting level to buy.
Yep.
So, don't think in your mind, well, I only want to buy dips if we get back to 60 cents, because that was a good level. Think about the available range we have here. I think right now to say, can we continue? That's going to be a little bit more of a struggle. Right now, structure, which is the higher highs, the higher lows, means that there are still buyers out there who are interested at buying here. As long as that runs, I'm not inclined to be short, but I think we've got a great binary event tomorrow that may give us a print above or down. I'd be willing to trade either side of that and see how that works.
There you have it. Australian dollar at an inflection point, moving with volatility as of late. But how much that can continue, who's to say? Stay tuned. That's all we've got for this segment today, but want to call out just one more piece here in the Tasty Trade platform. We've got some exciting stuff on our side at TastyFX.
Right.
Got some exciting stuff
now, this
coming.
This is in desktop, guys. It's coming to web very shortly, but just to give you a little sense of what's coming down the pipe without revealing too much, but some exciting new products coming out of into the Tasty world.
Yep. So if you're in the desktop platform, you're on your watch list tabs. I'm sure you'll find now a new category, Forex pairs. Take a look there. Go to any Forex watch list, click on any pair here, and you have the opportunity to join the wait list here to be notified when something crazy happens.
Right. And now, and if you want to go over the left side there, you can run right down there and bring that up, and that's going to have the bid ask and net change. Again, this is on desktop. It's coming in a day or two, hopefully on web. But this is as we start to get closer to bringing FX into the Tasty world, we thought this was a good way for people to be able to take a look at prices and you know what? If you're interested, sign up. We'll make sure we keep you apprised as we get closer to the impending launch. So lots of exciting stuff coming.
All right, that'll do it for us today on Forex Focus. Got an exciting day ahead of you, so stay tuned for Tom, Tony, and Vanetta up next on Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Ooh, get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hola.
Oh.
See, it's all like lightness over here and then just darkness. But then you do have the white jeans.
You wear white jeans before Memorial Day, didn't you?
Says who?
Didn't your parents teach you anything?
Says who?
Your parents?
No.
Ask your mom. She's listening.
No.
Why don't you stand up and do a twirl in your white jeans?
No, please don't. Please don't. Please don't. I can't.
These are my
take the
fancy
emails.
ones.
Those are your fancy white jeans. All you need in like 2 more weeks when Beyonce comes to town is just some boots and that rhinestone cowboy hat by my desk. You could go see Beyonce, girl.
You have a perfect outfit.
Beyonce playing Soldier Field.
Yeah. Jessica's going.
Yeah, I wouldn't go. I don't think I would go, even if you gave me tickets.
If someone gave you tickets to go see Beyonce, you wouldn't go.
No.
What if it was Lady Gaga?
Less chance.
What if it was Taylor Swift?
See, I like Lady Gaga. I like Beyonce too.
I would probably go see Taylor Swift.
Okay, good. You just saved yourself from me stabbing you.
I want to see what the whole thing's about.
Yeah.
Maybe like-
I could recreate it for you from the top. Hold on.
Oh no, please don't.
I mean, it wouldn't be something that I would like go out of my way to do, but I'm actually trying to convince my wife to go with me to see Little Feat next weekend.
To see who?
Little Feat. It's an old
I don't know
band.
who that is.
It's just a band, like a funky, bluesy,
Where are they playing?
at Rivers Casino. They're about 80.
Oh, wow. That is like one step up above like the
And it's
DuPage County Fair.
FET, by the
Yeah.
way. Yeah.
The DuPage County Fair. That's like the Rivers Casino.
Let's
just
see.
one
When did it
step up.
start?
Early 70s.
1969.
Oh, it's the year we landed on the moon. Cool.
Allegedly.
Cool. Cool.
69 is the year they started? Yeah,
That's what it says
I think they
here.
have one original band member.
You've been going to concerts. You saw the White Stripes, and there was a performance at your son's wedding, and now you want to go see Little Feat?
Late 72 when they started.
Yeah.
Like really getting together.
Yeah, I just got 9 Inch Nails tickets too.
Wow.
Shut up. No, you did not.
Really?
What's gotten into you?
Since when do you like 9 Inch Nails? That's my band. When do
You want to buy them from me?
You're going to scalp them now?
Scalp them to you.
Wait, where's 9 Inch Nails playing?
United Center.
Really?
Oh.
Do they have a new album?
The wife must like them. It can't be.
No, I don't think so.
Oh.
I want to see, I also want to go to Ravinia because I've never been there, but I also want to see Lenny Kravitz there.
I like Lenny Kravitz. I saw Lenny Kravitz.
I've never been to Ravinia either.
Yeah, I've never been there.
I mean, I like to ride up that way, up Sheridan Road, like on my motorcycle, but I've never been to an actual
It'll be
concert
fun.
at Ravinia. Wow, look at you.
Very nice.
So just,
So cool and hip.
I know.
I know.
Impressed.
Out on
But
the
I would
town.
pass on Beyonce.
Okay, well, she says the same about you.
You
know,
can give the tickets to Vanetta.
do you know in like the pure act of just pure pettiness, James Dolan, that's his name, right? So there's a piece of footage in Beyonce's concert where she's like giant, right? And she's like walking over Vegas and she like picks up the sphere. James Dolan sent Beyonce, a cease and desist letter that she could not use this, and people are like, it's literally just a circle, like it's literally just a ball. And so she changed it to Allegiant Stadium in her footage. I don't know.
Yeah, that's, he owns.
But think about, like, you don't want to upset the Bayhive. Like, you think he would be honored that he would
James
be.
Dolan has already upset every single person in New York because he owns the Knicks.
Yeah, what happened with them last night?
Great game.
What happened?
Jalen Brunson just.
Did he choke?
No, he's a stud.
Oh, yeah? Well, I saw that he was, like, and then
He
it.
missed one shot at the end of the game, but
Okay, that's the only one that I saw. Yeah, that's the only thing I
missed
saw
a
on
shot
Twitter.
to win the game, but then in overtime they beat him.
Yeah.
But Jalen Brunson is just unbelievable.
He is who we thought he was.
He literally is who we thought he was. Him and Jokic. But I didn't watch the late game.
Okay.
But I think Jokic.
Man's got to rest. I mean,
I think Jokic had like 40 points and 20 some odd rebounds.
watch
It was
it.
insane. But Jalen Brunson, he had another like 30-point night, and in the stretch when the whole game's on the line, he just takes the ball and just kills you.
So basically, Chris Vecchio is going to be insufferable.
good point.
I mean, they beat the Celtics in Boston. Every one of the favorite home teams lost.
Wow. Last night?
Yeah, but I was watching the hockey game.
Good day to be a dog.
Hockey game, and then the Cubs game was good. Cubs were home.
Wait a minute. The Panthers lost to.
They weren't home. The game was in Toronto.
That's what I'm saying. Oh,
The
Toronto
basketball.
won though.
No, basketball, the home game.
All basketball.
Cleveland lost, Boston
Yeah,
lost.
but not in hockey. You said all the home teams lost. Anyway, I'm not going to correct you. Why am I correcting you?
In basketball.
I was like, am I gonna have to like hop on the bandwagon and be a Pacers fan? I'm from Indiana. Like, it's more legit than anything Dr. Jim claims. Like, should I become a Pacers fan?
Pacers played good the other night. I don't think they can beat Cleveland because Cleveland's really good.
Well, they're beating them.
They beat them in the first game. Yeah, they played good. Halliburton, your boy, played really good.
Yep.
I don't know. I guess I'm a Pacers fan. I don't know. Hey, did you see the NHL? So the draft is going to take place June 27th. Do you want to know how the NHL lottery shook out? Did you see?
I didn't see. What did the Hawks get?
Okay, so you want me to start at 10 or you want me to start at 5? What do you want me to do?
1 through 5.
1 through 5. All right. With the first pick In the 2025 NHL draft, your New York Islanders getting the first pick. Number 2, the San Jose Sharks came in at 2, and the Blackhawks came in at number 3. Yeah. But if you remember, the Blackhawks picked up Jonathan Taves with the 3rd pick, Savard with the 3rd pick. So a lot of history. Like, I sound like I know what I'm talking about. I just heard it on NPR. But there's a lot of history. Well, look at me, right? Like, you were like, oh, damn, girl. But we did pick up Taves, the 3rd pick. So Blackhawks are at number 3. Utah Hockey Club still doesn't have a name at 4. And then the Nashville Predators rounding out the top 5.
We'll take it.
So.
I mean, that Macklin Celebrini or whatever his name is, I mean, he was...
A what? I think I ordered that last time I was at JP Graziano's.
Looks like we're not going to get tickets.
Yeah, what's that?
Looks like we're not going to get tickets.
No, we're not going to get tickets. I got the bad news last night. Did you get your bad news yet?
No, she never emailed me.
Oh, because you guys are trying to get tickets, but you're trying to get tickets like on the glass. Yeah. Like, why are you being so big and greedy?
Because that's all I want. Because other than that, you get tickets anytime you want.
Yeah.
You don't have to buy tickets.
I guess.
Only tickets you can't buy.
I tried. It's a good try.
Somebody told me those tickets, one of our viewers told me those tickets in New York. $250.
What tickets? Oh, on the glass?
Yeah, for Ranger games.
And the Rangers sucked this year.
Right.
Huh.
$250K.
But it's weird because we're blacked out here.
For a ticket.
Yeah, that's crazy. That's...
Oh, 250,000. Oh,
a year. That's what I said.
Oh.
That doesn't make any sense because that would be $8,000 a game. There's 41 games. So yeah, $8,000 a game.
Are you serious?
I don't know. Maybe he was talking about for 2.
I don't know.
You should just buy a motorcycle.
I have a ton of motorcycles.
Right.
150 of them.
Same ticket's $800 in Chicago. Yeah. It's $8,000. That's the case. That sounds too high to me.
Yeah.
What is going on with that?
Cray.
That is cray. Bat, how about you? What did you get up to last night?
Oof. Put a new light on Vinny's electric.
Oh my God, that's exciting.
Bike.
Ooh, on a 773?
No, he upgraded to a Talaria.
I don't even know what that is.
What's that?
I don't even know what that is.
That's now an electric bike that does 40.
Is that legal? But he's a minor though. Like, is that legal? Like,
I don't know, but we also had Busch Light apple beer delivered to the house.
Who? What?
We also had Busch Light.
But he ordered it?
On what's it like? Not Go Puff, but one of those.
Oh, sure, yeah.
One of those things.
Hold on, what? I missed that. What did you order?
So there's this new beer. Not new.
It's like a cider?
Yeah. No, it's like beer flavored with apple like juice. It tastes like.
They tell you bought that?
What's that?
You bought that?
The kid wanted. I showed you the pictures to the party he went to the other day, and all the seniors were drinking this beer, but you can only get it in Schaumburg. So he's like, "Dad, you got to get this beer. You got to get this beer. You got to get."
What is happening?
You got to get this beer.
He's a minor.
It's non-alcoholic beer.
Oh, Beth found it. Found it. There it is. Busch Light Apple.
Busch Light Apple. Yeah, no, it's real beer. And the reason why I'm saying this is they're doing everything geared towards kids now. They started it with the flavored ice seltzers.
Busch Light Apple.
That's right.
But, so why is he asking you to buy him beer?
Because the kids, the high school, the seniors were selling it to the 15-year-olds and the 16-years at like $50 for a 6-pack.
I'm calling the mayor. I'm calling the governor.
You're gonna buy it for him?
I bought it. I didn't buy it for him. Here, I'm of the thing. You let them taste it. You let them have it, and then they won't want it anymore. It's almost like having a candy.
That's not how that works.
Absolutely how it works. It's almost like having a candy drawer. Like I always had a candy drawer at my house.
You asked Drew Barrymore how that worked out for her.
I always had a candy drawer at my house with my mom and stuff, and I never wanted anything. My friend Mark never had a candy drawer, and every time he would come to my house, he would steal all my candy in my house. It's the same thing here. Vinny doesn't even like candy. Doesn't even do that kind of thing.
Candy's not illegal for minors.
You got to be careful because you let these kids drink.
No. We don't let them drink. But I let him try it under my supervision. I let him do his thing, and then he's had it, and he doesn't have to go and buy it from the kids.
Does your back hurt from all the ways you're twisting around all this logic? But hey,
I'm not so sure.
This is my 5th child. I think I have 5th. How many 4? Fourth child. This is my 4th child. Fifth child.
Yeah, sure.
I'll be okay. I'll be okay.
Don't forget, yeah.
They all graduated on time.
Well, I mean, yeah,
So anyway,
sure.
you asked me what I did. I put a light on a motorcycle and I bought booze.
Sure, yeah. What could go wrong?
And I bought beer.
Yeah,
for
because the
15 so
kid,
he could sell it to other minors.
yeah, the kid has a bike that can go 40 miles an hour. Now he's gonna get a DWI. Great. I mean, what else? Like, it's on the road to success.
On the road to success.
I literally am gobsmacked. I'm speechless right now. So I have nothing. I got nothing. So it's fine.
Well, that's what I did.
I'm gonna pivot out of this. The Met Gala was last night. I don't.
Watched it. It was unbelievable.
Did not. But if you were on social media, you saw like some of like the looks, some of the fashion. No, I know you guys don't care.
Sports radio this morning, all the stations, they were going back and forth, and everything. They were all joking. They were like, "Well, we were going back and forth between the Knick game and the Met Gala." And no, you weren't.
I mean, you should. You should. They did raise a record amount of money. It goes to the Metropolitan Museum of Art. So, congratulations to everyone involved. Oh my God, it would be such a dream to get to go. Like, ooh.
Dream for who?
For me.
Would not be a dream
for anyone, actually. Like, it's very cool.
It might be cool, but I don't think I would go if you gave me a ticket.
Okay, so we're back on that again. Well, spoiler alert.
Go if there was like somebody you wanted to see there, like in this, in
like you're
at the Met Gala
in the front row or something like that.
I don't think so.
No.
Yeah.
I went to, no, I wouldn't. Maybe it was a gala. I'm not sure what it was called, but it was at the Lincoln Center.
Oh, okay, yes.
It was like a gala.
Yes.
And it was for a premiere for something.
Uh-huh.
And I was very uncomfortable.
Well, was it black tie? Black tie optional? Did you?
It was black tie.
Yes.
And I didn't have a black tie.
Of course.
And
You were not ready for society, let alone New York society.
I felt very much like I was not ready for that event.
Wow.
And
you weren't prepared?
It wasn't even that I was unprepared. I also felt...
You had trained your whole life for this moment. You were unprepared?
It didn't live up to what I thought it was going to be.
Wow.
What do you think they said about you?
Wow.
I felt very awkward there.
And you feel good here?
Well, I feel more normal. I felt very out of place. I felt very awkward.
I get that. It's hard if you're in a situation that you're not, feel
There's some people that are very
comfortable.
comfortable in black tie at a gala, that kind of thing.
Sure.
And there's other people like
They thrive.
They thrive.
Yes.
People like me that do not thrive in that environment.
Right. You're less Lincoln Center, more OTB.
Much better at OTB.
You fit in better at OTB. You actually could fill in at OTB. Like, you'd be good for an OTB commercial.
Yeah.
I could do OTB all day long.
Sure.
Yeah.
I could work in an OTB. I don't even think they have OTBs anymore.
Oh, they have OTB still. I thought I looked it up the other day.
Yeah, we looked it up for we looked it up for like derby stuff or
I'm
whatever.
just saying, I could easily handle an OTB. A Met Gala is not my thing.
Hey, well, I hope you can handle today's show because today is a terrific Tuesday here in a Tasty Live land, and we got a great show for you today at the top of the 8 o'clock hour. Going to bring you an options jive. Can Delta help your time, profits in a strangle? Whoever is writing these, maybe it's can Delta help you time, profits in a strangle? Yes, maybe.
I don't.
Perhaps.
Okay, yeah, okay. I'm gonna just go. I'm gonna go with that, and we're.
Maybe we should require English as part of it on the job applications. We don't really ask.
We're gonna have to check that box.
And then, like I said, we will have an insufferable Chris Vecchio high from a Knicks victory on at 8:40. What are you gonna talk about with Vecchio? FOMC meeting starts today.
Well, I'm not worried about that FOMC today. They won't make any announcements.
No, I know. I'm just putting it out there. I'm just letting you know.
Oh, they're back a little bit. They were down about 10 ticks lower.
Bonds traded under. Are you talking about bonds?
Did they trade on 114?
They got 113.31.
Ooh, I missed that.
Yeah, they're 114.13 right now.
Yeah.
So you're not out of the water.
What's your question again?
You had 5 straight days of down.
What you were going to talk about with Chris Vecchio? I know you said you didn't care about the FOMC meeting, but I was just putting it out there as just a
We're going to talk a little about interest rates, but we have a bunch of other topics.
Okay. That's going to be at 8:40 with Chris Vecchio. Then 9 o'clock, market measures. Unlocking Kelly with Monte Carlo. What? Why does that sound kinky? But no, more part of our Kelly criterion. Got a ton of just interest in that, and we've been really just going at it. So what is like a Monte Carlo simulation sort of thing? Like
It's the piece that we did the other day was too complicated.
Okay.
So so I asked them to dumb it down a little bit for Tony. I mean, it was really.
It was. You make fun of that, but yeah,
I don't usually dumb things down.
Sure.
But I felt the piece the other day was too complicated, so we're going to dumb it down a little bit.
Okay, good. Have you ever been to the French Riviera?
Yes, I have.
Yeah.
Ooh, okay. Well, excuse me. I'm so sorry.
Actually, everybody who's been to French Riviera, sit down. Okay. You're right.
I've been there twice, and I really like it.
I've only been there once.
I like it, but I mean, it's not on my list of places to go back to.
But you didn't feel out of place there because it's also very, very fancy, very, it's a scene.
When you say I didn't feel out of place there, yeah, I didn't feel out of place there because
he was much younger then, and everybody mistook him for a waiter. Back to that story, by the way.
There's, you know what? I didn't feel out of place there because I was really, most of the time, it was like, it felt like a resort, like I was on the beach or I was at the pool, whatever.
Sure.
Depends where you are.
There's really no beach at the French. I mean, I guess.
Saint-Tropez, there's a beach.
Yeah, Saint-Tropez.
But
not where you were, probably.
No, in Nice and in Monaco, there's no.
It's all concrete.
It's all concrete and rock.
Mm-hmm.
But I kind of like that.
Yeah, okay.
It's casino.
You're like a crab. You like to be
on a rock. I mean, I've seen it just in movies.
No, I like the whole, I can handle casinos. I'm good around casinos.
Yeah.
Yeah. You're natural at casinos.
It's restaurants and casinos. I'm good with that.
Okay, all right.
Yeah.
All right, you thrive in that environment. Hey, and then finally, live from the trade desk, big boy Scott Sheridan, back in studio, counting down the top trending tickers over at Tasty Trade and Programming Note. Liz and Jenny will be live from the floor of the SIBO. It's going to be electric today. Catch the ladies live from the floor. That is going to be at 10 a.m. That is our run of show for today. Like I said, jam-packed show, bell to bell today. You guys want your daily dose? I got a lot of news today.
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Breaking news.
Across the wire. Leading story. Top story. Jump in.
Today's headline. This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It is May the 6th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings for today, Mr. Bat. I got all the ones from yesterday.
A bunch. Tom's going to really care about AMD, SMCI, Uber, and APP because he has positions in them.
Oh, AppLovin.
Who are watching. He might also care about Disney, Mosaic, Win, EA, and Devon Energy. There are a bunch more, but we'll get to them probably at the end of the day.
Hey, getting to my first headline, the S&P 500 snaps its longest winning streak in 10 years as tariff uncertainty weighs on the markets. The market had put together a nice little 9-day run, becoming a little manster before getting a little smackdown yesterday. What do you guys see in these first moves of May?
Buy in May and go away, I guess.
I mean, yesterday was a mix we ended up weak, and then today's week.
We started out weak just like we are today. We creeped up all day long and sold off at the end of the day on very, very little volume, and it looks like a similar type day today, I would imagine, with a bunch of news coming out tomorrow, just in time for Dylan Radigan's show with Tom.
Are you doing anything with the indices relative to each other? Like, are you doing like S&Ps, buying S&Ps, selling NASDAQ, or buying more Russell, or what?
I'm telling you right now, if you mention gold with some pairs...
I don't have anything, but nope, I'm good.
Although silver is doing very well today, too.
Are you doing anything in the indices, though?
Am I doing anything in the indices? We're short premium.
Okay. Just all of them? Across the board, or?
You don't have any NASDAQ, Russell, or anything else like that. You're done with that.
Not really, yeah.
Okay. Hey, good news. The U.S. Commodity Futures Trading Commission moved to drop its appeal of a court decision that allowed derivatives trading platform Kalshi to list contracts that Americans can use to bet on election outcomes. The CFTC asked to allow it to voluntarily dismiss the case.
Yeah.
Yeah, that's it.
You must have some sort of opinion on this.
I'm happy that the CFT, dropped the case because we should have event-based trading.
You don't think that it's dangerous or some sort of issue or a little slippery slope there?
Dangerous how?
I don't know.
Nobody's putting a gun to anybody's head and making trade event-based contracts.
You must trade them.
I think the difference is that the problem with event-based contracts, and I've talked about this before, is that the spread is about 1%.
Okay.
And 1%, it doesn't sound like a lot relative to like sports betting or stuff like that. But if you bet $100,000 over time.
Who's betting $100,000? Phil Mickelson?
No, over time.
Over time.
Sure, no,
People
okay.
trade a
It adds
lot,
up.
notionally.
Okay.
It adds up. It's $1,000, right? That's how much you're giving up.
Okay.
And if you do the same thing in like Apple, just as an example, like let's say you want to buy $1,000 worth of Apple. All right. You give up $100,000 with Apple.
Yeah.
So Apple's trading right now for $200. You have to buy 500 shares. It's $100,000.
Okay.
Okay. You give up $5, 1 penny.
Legit $5.
Legit $5.
$5 versus $1,000.
Right. So the problem,
gotcha.
the problem with the event-based contracts and the stuff that Kalshi offers and anybody else is that if you just trade listed products like Apple, you're giving up $5 to trade $100,000 worth of notional. If you trade $100,000 worth of stuff on Kalshi, you're giving up $1,000.
Gotcha.
So the difference is,
That's a good way to frame it.
$195 in fees.
Sure.
Is the difference.
Sure.
That's what consumers have to be worried about. It's
That's
not
called significant.
And that's significant. Now, it's still better than betting $100,000 on a sports bet, where you're going to give up 5% or 10%. But it's not competitive with what we do in the listed marketplace. And so that's the issue that they have to deal with. As far as the actual contracts themselves, they're fine, but the markets suck.
Okay.
So we have to get better markets. Like there needs to be more market makers. Right now, there's only like 1 or 2 firms making markets.
Right.
There needs to be a much broader appeal. Like I would like to see tighter markets. Like for example, like what Polymarkets does.
Right.
And peer to peer, or I'd like to see tighter markets where anybody can intermediate and just be a better market.
Hey, in other news, Israel's eToro said Monday it was targeting a valuation of up to $4 billion in its U.S. IPO as the retail trading platform moves ahead with its long-awaited New York flotation. Webull entered the IPO markets earlier this year. Now eToro wants to follow. What are your thoughts?
They've been trying to do this for a while, haven't they?
They've been trying to do it for a while. I've spent a lot of time looking at eToro over the years, going back to pre-pandemic.
Okay.
I actually like their CEO, and I think it's very.
Did you hear that? You got his blessing. He's very happy. Tommy just told me
they're an Israeli company. They have a very smart, chain-smoking, aggressive, CEO who I think is really interesting person.
Okay.
I think it's an interesting company. The model that they built, it's very crypto heavy. It's very, they have this follow trader type thing.
Sure. Do you think though that their IPO is going to go the way of Webull? Because it really was popped up 60, 70%. And then now it's just nothing.
Webull, yeah, that's all just bullshit.
No, but I'm just asking. I don't
right now, BULL, $15. I'm just guessing. I don't know.
BULL. Double L? Bull?
Yeah. Bull.
Yep, you're all right.
Where's it?
$14.55 is where it closed.
And so what's the market cap?
It got all the way up to.
No, I don't care where it got up to.
I know, up to
that's
about $60 or so. Market cap
This is the real price.
7.5, almost 7.5.
Yeah, so that's the real valuation for that. eToro, I had them in 2021.
It's only been out for about 3 weeks.
I thought they were valued I thought they were worth $2 or $3 billion in 2021. So I think.
You think $4 billion still in line with everything? They will be trading under the ticker ETOR, eTor. So catchy.
I'm sure it's well within range. Yeah.
Okay.
I mean, they wanted to go public, if you remember, on a SPAC for $10 billion.
Yes.
Which would have been ridiculous.
Sure.
At $4 billion.
Yeah, but that was those were just the vibes of the market back then, though.
I know, but at $4 billion, I mean, we had them $2.5, $3 billion in 2021 or 2020. Yeah, probably right there.
Hey, Solana has patched a bug that could have allowed attackers to mint and swipe tokens. The Solana Foundation disclosed that validators worked quietly to patch a major bug, avoiding a potentially catastrophic exploit. The attacker could have minted unlimited quantities of tokens and withdrawn them from user accounts. See, this is what terrifies me about crypto, is that you could just be sleeping and then everything is gone.
And it's gone.
In the morning. And so this is why I don't mess with things that are gone in the morning. So no Bitcoin, no Solana, no men.
I see what you snuck in.
Yeah, I see what I did there. But I'm glad that they fixed it. But it's still yikes. What are you guys doing in crypto this morning?
Bitcoin hanging out at 94,000 in that very tight range from around 93.5, 94,000 up to about 97. I threw out the highs, threw out the lows. The lower end of its most recent range over the last 2 weeks or so.
Also, Coinbase set to report their earnings on Thursday. Hey, speaking of earnings, let's get to the earnings from last night. Palantir blew away their earnings, and they reported inline earnings, and they lifted their full-year guidance, but the street was still disappointed. I don't know what they want. I don't know what people want from this company. But revenue was $884 million versus $863 million. And again, just the strength of AI. Tom, what'd you do in Palantir?
I sold a crap load of Strangles. Before this number came out yesterday, I said exactly what my thinking was. I said they're going to have great numbers and the stock's going to be down.
Wow, how do you keep doing it, girl?
We had it right yesterday.
Okay.
Stock's trading right now around
113.5 or so.
113.5.
Down about $10.
It's been between 113. It's been between 112.5 and 115 this morning. I've been watching it. I think it's inside the expected move. I think we'll be fine.
Palantir's revenue grew 39%, and again, the street was not enough.
Think about CEOs. That CEO says what's on his mind.
Sure.
I told you I watched.
That's Alex Karp.
Yeah. No,
he does not have a filter. That's all I'm going to say.
Hey, Ford also reporting their earnings, and they suspended their 2025 guidance like a lot of other Fortune 500 companies. And they said they are facing a $2.5 billion impact from tariffs, though they expect to offset about $1 billion of those costs. Again, the Ford Motor Company unable to issue guidance for 2025. Automotive revenue came in at $37.42 billion. Did you trade Ford?
Ford, $9.94 on the bid, down about $30, 30 cents or so. Sorry.
Yeah, it's a pretty much. We did not trade it. There was
wasn't too much to do in there unless you really had a directional bias.
Okay. Hims and Hers gives weak outlook, but says more collaborations are coming. The stock popped last week when it was announced that Wegovy was going to be available as a weight loss option. But for its second quarter, Hims and Hers said it expected to report revenue between $530 to $550 million. Shares, like I said, soared 20% in April. What did you do in Hims?
Nothing.
We didn't trade it. I tried to get Tom to trade it. Hims is down about $3, at least it was the last time. Yeah.
Still way inside the expected move.
Yeah. Yep.
How are the markets in there, though?
They were okay. They weren't great. 25, 30 cents wide. I'd be curious to see how they are for the rest of the day now that the earnings are out.
Generally speaking, it's a very difficult stock to trade.
Barbie maker Mattel pulls its forecast and announces that they are going to hike U.S. prices as tariffs raise cost. The toy manufacturer withdrew their annual financial targets and said they're going to have to increase prices for products in the United States. They pushed the administration to issue 0% tariffs on toys, but I don't know how well that is going to go. MAT is Mattel.
I don't think I've ever traded Mattel, $16.
I don't think I've ever traded it either.
Well, the bigger message, though, and I normally don't report it, but the bigger message is that Christmas is going to be very expensive this year. Well, it is. Like, it's just like, no, we don't really make toys in America. Like, I mean, unless everyone's getting some wood blocks, we just don't make
That's right, Geppetto.
a lot of toys here because we just don't. So just keep it moving. Hey, a U.S. lawmaker plans to introduce legislation in coming weeks to verify the location of AI chips like those made by NVIDIA after they are sold. The effort to keep tabs on chips, which drew bipartisan support, aims to address reports of widespread smuggling of NVIDIA chips. Chip makers AMD and SMCI are on the clock to report earnings after the bell today.
You are 100% correct. They are.
And if one moves, they normally all move. What are you expecting here for AMD,
down around
SMCI?
60 cents. The market's a little weaker,
Sure.
down around 1%, but AMD down around 60 cents. SMCI also down about 60 cents. SMCI is an interesting one, down near its lows or recent lows, just under 30, I would say.
Tom, what are you doing in the chip stocks?
We're really flat, but I haven't decided which ones I'm going to trade earnings on. We stepped up yesterday in PLTR because I thought there was some pretty good juice in there.
Okay.
A lot of upside skew.
Okay.
In these stocks, there's not nearly as much. This morning, I'm not sure. I'm going to look later today.
Okay.
I'm going to look later today.
Hey, in other news, OpenAI has dialed back a significant restructuring plan with its nonprofit parent retaining control in a move that's likely to limit CEO Sam Altman's power. The announcement follows a storm of criticism and legal challenges. So basically, they're going to retain their nonprofit board, and then they're going to be a for-benefit company. So not purely like evil capitalism, but also not pure, true nonprofit altruism. So right in that nice little middle center spot, I guess, is a for-benefit company that they want to make money, but that money will be for the greater good. It's designed to balance shareholder returns with social goals. What are your thoughts?
I mean,
It's a great soundbite.
It's a good soundbite.
Yeah, it sounds like the perfect compromise. I didn't even know that there was such a thing as a public benefit corporation.
I don't think there really is. I just think it's a good soundbite.
Oh, okay. Microsoft, though, does want to make sure that this restructuring would still benefit their $13 to $14 billion investment. You can't really trade OpenAI, but you can trade Microsoft.
Microsoft's down around $4 or so, maybe 3.5.
May it burn and die in hell. Freaking Microsoft.
What do you need Microsoft to
Microsoft
be
did have a
at?
huge rally from
Lower,
under 400 to
all it does is go up 10 points a day.
All right. Well, at least you're not bitter. Hey, the shoe company Skechers is being acquired for more than $9 billion to be taken private by the investment firm 3G Capital. In a trade war whirlwind, sneakers are in the crosshairs no matter what the manufacturer is. We don't make shoes in America. Sorry, not sorry. And so the offer of $63 per share represents a premium of 30%.
In this economy, they're going to pay a premium?
Yeah, Skechers shares were up nearly 25% yesterday.
Skechers, Sosno. If you ever wore a pair, I hear they're very comfortable.
They're comfy, like clouds.
I've had a pair of Skechers. I loved them.
I was going to say, guy like you.
Guy like me. I got Doc Martens.
They have like expanding gout mode or something like
Yeah, and they have like the slip,
can
like you
step
don't even
right
have
in,
to
you
like
don't have
bend
to
down. Yeah.
I like you.
I like
Skechers.
Skechers.
Were
Yeah.
I just don't know if there's a Skechers store.
You can get Skechers at Macy's. Yeah, you don't have to have a specific Skechers store, but I think you can get Skechers at Nordstrom Rack.
You can't get them at Costco, and you can't get them at Trader Joe's. That I know.
Yeah, there you go.
For sure, the rack.
Yeah, for sure the rack. Hey, Apple is sold $4.5 billion worth of bonds late Monday in its first bond offering in 2 years. Apple says it plans to use the proceeds to repurchase stock and repay outstanding debt. What do you think of Apple's corporate
$1 on Apple,
Bondolini sale?
I want to buy Apple this morning on the opening. I haven't touched it yet. Let's see. Where is it? Down $1?
Francis says he wore Skechers way before they were cool, Sosnoff. He will let you wear them.
I believe that. I believe that. He was ahead of his time. He was a visionary. Skechers visionary, yes.
You mean he couldn't bend down before anybody else?
Exactly.
Put on shoes.
Exactly.
Got it.
Well, he's the lowest to the ground, though.
He is the lowest to the ground. That's true. You would think he would be. Yeah.
Apple, what are you doing in Apple?
Long it.
Okay. You're going to buy some more, you said this morning?
Is it 7:30? Yeah. Yeah, I will. I meant to buy some AAPL because today it's going to be up. The rest of the market's going to be down. Apple.
Trading 197.5 on the bid, Sosnoff, down about $1.
I don't really need any more, but I think I'll dollar cost average down. I hate when I do this.
Yucky.
Oh, I'm working it.
Okay, work it, girl. Hey, in a surprise announcement, Google has announced that they've launched a new film and television production initiative to scout projects it could fund or co-produce. It could help it capitalize on an industry reeling from rising production costs and now facing potential U.S. tariffs. Does Google want to be the next Netflix?
I don't think.
I think every stock wants to be the next Netflix if you're just going on stock.
No, but are you surprised by that? Google, are you looking for writers?
Google down $2.5, $3.
I mean, Google's doing what every firm like Google should do. They need to have their own production. I mean, listen, we figured it out for brokerage firms. Who would have thought that?
Sure, right? Yeah, that's true. That's true. You right. You ahead of your schedule.
Where could they find the talent?
Plenty of talent walking around the streets.
Hey, Uber, which is set to report their earnings after the bell today, announced they are partnering with WeRide to set up their robo-taxi sites on 15 more cities. Uber and the Chinese autonomous vehicle technology company WeRide plan to expand a commercial robo-taxi partnership to challenge Google's Waymo in more locales.
But that looks like a nasty car. I like the Waymo cars.
Okay.
They've got Jaguars. They're nice. They're big.
That looks like a Jaguar.
Is it?
No, I don't think
it looks like a RAV4.
Yeah, maybe a RAV4 with the wheels. I'm looking at that too.
I don't know what it is. I can't really tell from the
Uber, you sneaky SOB, rallying about $20 this month already. Well, I mean the calendar month. Back its highs, 85 and change. It is down $1.50 to 84.
What are you going to do in Uber?
I have no position.
Okay.
Numbers are going to be good. It's going to pull a Palantir.
Okay.
I'll put it this way: I never get short Uber.
Okay.
Uber is one of the companies that defines the growth in America, and I will never get short Uber.
It's Uber alles.
It's Uber. I mean,
I never thought I'd hear this from Sosnoff, but go ahead.
To me, if you had to pick companies that have defined, like, you know, this whole last 10 or 15 years, I'm giving Uber like in the top 2 or 3.
So you mean to tell me young Batista going back to LJT, Louis J. Tlee's car back in 1979 was ahead of his time?
No, I'm not saying that at all.
When I was an Uber driver?
I'm actually saying that.
Ugh.
No, it's
3 cents higher.
It's been revolutionary. Like
everything Uber does is revolutionary.
Yeah, it's
incredible.
It's good. Hey,
not revolutionary in 19.
Something that's not revolutionary is rad. That's right. Rite Aid filed for bankruptcy again, just barely 7 months after the chain exited Chapter 11 and emerged as a private company. The financially strapped drugstore chain says they're looking for a buyer and that they're refiling Chapter 11 bankruptcy. Get it together, girl.
Grandma Beanie, may she rest in peace, favorite store.
Rite Aid?
You should buy Rite Aid.
Yep.
Now you're all over it.
Yep.
Yeah, I don't know.
Right after Potbelly.
They are private now, but Walgreens is private now too. CVS is the only publicly traded pharmacy, I think, stock that's left.
$67 and change. Been doing okay, basically unchanged down at.
Very hard to trade.
Okay. Hey, what is your favorite fast food burger?
That's a
Five Guys.
Oh, I mean, come on.
Not Five Guys, because that's like I'd consider that like more elevated. I'd consider that like fancy because it's more expensive.
Okay, so what are the choices? Wait.
So McDonald's,
Culver's.
Wendy's, Burger King.
Can't do
Those three?
Culver's?
Yes, no, those three. These are my rules.
Okay, because
There's not Culver's everywhere, but there's
I'm just gonna go McDonald's.
McDonald's. Well, hold on, McDonald's.
McDonald's, Wendy's, Burger King.
I would prefer of those three. Blind
Don't go public and say Wendy's. You haven't had one in years. You don't even know if you like it.
Wendy's.
Wendy's? Put it on the board. Wendy's is now
always gets
offering
voted number one.
their hamburger meat, their fresh, never frozen beef
I love
patties
Wendy's.
sold in a pack of 4 at some local Kroger's. Kroger and King Supers in Denver and Columbus, Ohio will be the first for the limited edition offering. The beef patties or will follow the retail store release of Wendy's chili nationwide.
But do you get the rolls?
Grandma Beanie loved the chili.
You don't get the roll. You don't get the rolls, but you walk your ass over to aisle 7 and pick up some hamburger buns. Like it's not that hard, homie. You're in a grocery store already.
I haven't
do the
eaten
work.
at Wendy's in 21 years, maybe 22.
You know it's
Since
exactly.
she kicked me
Are you
out.
serious? I had Wendy's yesterday.
Did you?
It was good. Their grilled chicken ranch wrap.
Said nobody ever.
So good. It is my favorite. It's only 440 calories. The macros are great. It's enough protein.
Yeah. I believe it.
And a Diet Coke. I was set.
Diet Coke.
See, I
Very
think
happy.
Wendy's burgers might be okay.
Okay.
When was the last time?
Would you buy Wendy's
Honestly.
beef?
That's what I'm saying. Maybe
A decade?
Yeah.
a burger from Wendy's.
Yeah, decade.
Maybe 2 decades.
Okay, maybe 2 decades.
But I did stop at Wendy's.
More information from a man who hasn't had any. Go
I
ahead.
did stop at Wendy's once and I got a Frosty. I like Frosty.
Oh, I love Frosties.
Frosties are disgusting.
Frosties are good. Why are you so angry?
Disgusting.
WEN is Wendy's.
Frosty is good.
It's not good. It's disgusting.
It's pretty good.
It really is. Wendy, and the price is $12.52 on its lowest. You can buy some stuff.
How much is it?
$12.52, $2.5 billion market cap.
That's all Wendy's is $2.5 billion.
Started.
You should buy
back to
Wendy's.
October, it was $20. If I go back to December, it was $18. It's $12.53.
I can't believe it's only $2.5 billion. You should buy Wendy's.
You should buy Wendy's. We should all buy Wendy's. Hey, Major League Soccer signed a deal with EA Sports to stream 4 soccer matches on the mobile gaming platform. They're going to offer 4 regular season matches on the EA Sports FC mobile platform. That's a mouthful. EA Sports, I don't know, it's probably down. But soccer, as America gets ready for the World Cup, because everything in America's fine. We're not going to have any issues in 2026.
Haven't had any issues so far.
Yeah. EA Sports, anything?
Has earnings.
No?
I don't know that I've traded it.
EA Sports? It's just EA.
154 and change is where it closed. It's hard to tell where it opened. It looks like it's maybe down $0.50 or something like that. Hard to tell.
Hey, man, how does time fly? Guess what happens this week? A local Chicago institution turns 20. I have never been, but my favorite person here has, and that's Scott Sheridan. And it's
Oh,
Alinea.
you hurt me.
Alinea
You
turns
hurt me.
20. Founded by Grant Achatz.
I never been.
Well, that's why I said my favorite person, Scott Sheridan, has been.
Tony's been.
Well, again, Scott Sheridan, my favorite person.
That's why I said she hurt me.
I don't know that
has
Scott's
been.
been there.
No, you went to Ever. You didn't go to Alinea.
No, he went to
No, I went to
Alinea.
Alinea.
Oh, you went to Alinea.
I went to
Okay.
Everett.
Don't tell me where I went, woman.
Okay, my bad. My bad. But Alinea is 20. That's bonkers.
I never been there.
Call yourself a foodie.
Modernist gastronomy there. So
I have to.
I gotta tell you, I liked Ever.
yeah, okay.
I have to admit, it was so much food. It was gluttonous.
You know what? I felt the same thing about Ever. It was so much food.
Everybody said
Yeah.
you're gonna need to go get a burger
No.
from Wendy's when you're done.
But yeah, like look at the these tiny little. I don't even know what this is in
you
this
get
picture.
a million bites at those places.
Oh my God, it was so decadent. And they said the wine pairing was going to be like the equivalent of 3 glasses over the 3 hours you were going to be there. I was like, okay.
So wait, how much was your bill? How much did it cost?
$1,000 a person.
It was $1,000 a person.
When it was all said and done with the wine pairing and all the other crap, yeah.
That's a lot because ever is 500.
In this economy?
Dad, do you know what I could do with $1,000?
Probably save it, knowing you.
Yeah,
I know you wouldn't bet it.
No, I wouldn't bet it. I would go to Ulta, maybe.
The most expensive restaurant I ever went to was the Smith.
Oh, okay, here in Chicago.
Yeah, where
Elizabeth, who works in the trade desk, her husband is the chef.
was the chef there. But that was a 3 Michelin star restaurant.
Yeah.
That was the most expensive restaurant I ever went to.
How much was that?
I don't know.
Never
it was
been.
A lot.
Okay.
Less than a Linea, though.
That's bunk. That's more than my mortgage payment. Like.
Yeah, you only live once.
Yeah, that's true. Hey, if you can afford it, you can do it. Hey, finally today for my viral video of the day. This is pretty amazing. I always love when people teach their dogs like cool tricks, like how to surf or.
We also got the truffle pairing, which made it a lot.
Yeah, made it a little. You gotta get the truffle. Yeah.
Go over the limit.
Truffles are such a scam.
I think truffles are a scam.
And they want more truffle. You're like, I don't want to even see a truffle again. Even my son doesn't want to see a truffle again.
Why did you get the truffles?
Because it was truffle season and white truffles were in season, and it only happens once a year.
So
blah blah blah.
Yeah, I guess. Hey,
Truffles on the dessert.
Here's a corgi video. Enjoy. Watch this.
I love corgis.
I know.
It's a service dog.
Oh yeah, this guy. Oh, he's famous.
How are they doing this?
He's a famous.
I know. Look at his fluffy little butt. He's got the skill, like the turn, like that's what's blowing me away.
The dog's amazing.
Yeah, but he's famous. He's been doing this forever.
I know, but it's
That's
just
amazing.
so cute.
I couldn't train Sosnoff to do that.
It's so
That's
cute.
amazing.
Me? Never. I mean, if I'd started when I was like 6, I could do it. But yeah.
Skateboards weren't invented when you were 6.
Here's the thing. We did not have skateboards.
Yeah, I know. Because you're old as hell.
We didn't have these cool things. I wish
We
I
had skateboards.
We did not have skateboards. I didn't know a single person that ever had a skateboard.
We would make skateboards with our old hockey rollerblade, not rollerblade.
Or like the step-on roller skates and a piece of wood.
Yeah, a piece of wood. Come on, son. I'm sorry. Not where you were from. Not from the Larchmont Country Club, but us kids in the streets would. Unbelievable.
Kids today knew what we had to play around with when we were kids.
Yeah.
We never bitched or anything because we just thought that was the way it was.
Yeah.
That's right. Rub some dirt on it and go play.
Or whatever. We just put stuff together to make games. These kids today, they gotta go. I gotta get what the.
I gotta get it Ubered to me.
Anyway, hey, I was on time, but you yentas today. Bat, what's coming up next?
We're gonna take a quick 90-second break. Come back. We got confirm and send next. But we had skateboards. You're lying.
We did not have skateboards.
Oh my
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions, and Tom will be quick to respond to you. Or if somebody else, Nick, Tony, I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And tastylive has definitely changed my life financially, because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P's down 46.50, much like yesterday, Sosnoff. NASDAQ down 223. That's a little over 1%. Everything's down around 1%. The Dow, I guess, is the strongest of the group, only down 5/8 of a point. That's $269 to the downside. Russell down 18.5. Volatility up 50 cents. Sosnoff, that's over where it was yesterday, or just about right near the high end of its range. It got to 23.90. It's 23.66. Volatility was bid all day long, even at the end of the day when the market was rallying. Volatility was still up small. Bonds up 2 ticks. Sosnoff, after trading under 114. You slept on that. Traded down to 113.
I did not sleep on it. I was watching them last night, and I was like, you know what? I don't need any more headaches here.
SMRT Smart.
I got enough problems.
SMRT Smart. Bitcoin down 394 and change, low end of its most recent range over the last 2 weeks or so. Oil up $1.43, Sosnoff. That was going to be the option trades today. Do a little oil trade to the upside, but now we're going to have to wait, Sosnoff, every Tuesday and Thursday. Hey, lucky for you, today is Tuesday. Maybe I'll come up with something good for you. Gold up $72. Okay. Per K.
I have no idea.
Gold up $72 on top of an almost 100% move yesterday. Gold has gone from around 32.5 to almost 34 in 48 hours. That's a 2% plus move. Silver is also up 2.5%. That's 79 or 80 cents. Silver's had a good 2-day run also. Nat gas, don't hurt me. Pool season, 3.54, basically unchanged. Sosnoff, you did some of the earnings trades from yesterday. You got Palantir down, Ford down, and Hims, you didn't do anything, down about $3 or so. That's all I got. Today you got AMD, Uber, SMCI that you have positions in, Disney for other people, APP you have a position in also. That's it.
I'm missing some positions. What the hell did I do here?
In what?
Bonds. I can't find my bond options.
Can't find them?
I can't find them. What the hell happened to them?
They're usually right
I know.
on the top of the page.
I'm spacing out. I'm blind.
You have a little problem over there?
I guess.
Mm-hmm. Okay.
I'm Tom Sosnoff. He's Tony Batista. It's Tuesday, May 6th. Let's see what we got. Confirm and send. I was just wondering if the size of the SPX is the reason the markets are so wide on the bid-ask spread. I figured all the big funds would deal in it so the markets would be tighter, but I'm having a lot of price discovery. I'm having to do a lot of price discovery when trying to roll my spreads. I don't have that issue in the SPY.
Yeah, so remember, if you had a penny or 2 cent wide market in SPY, that's going to be a 20 cent wide market in SPX. And a lot of time in SPX, just by the sheer size of SPX, and no stock, the disseminated markets are a lot wider than the actual markets will be. So you are doing what is right. You could go to SPY and look at the equivalent spread, same strikes, and figure out what mid-price is, and they'll trade a penny or so around that same mid-price of SPY. But you are correct. It is just the sheer size of SPX, and the disseminated markets, the inside markets, are a lot tighter. Yes. Say something profound.
That's the whole issue here, is that the entire issue is that it's just a huge product.
Yeah. I mean, you're looking at a $5,600 index.
Yeah, I mean, it's just a freaking huge
monster,
huge product. Mm-hmm. Yep, and that's the whole deal. I mean, when you have an index that is as big as the SPXs, markets are actually pretty tight.
Mm-hmm.
The markets are really tight. The markets are just as tight as they are in the SPY, maybe even sometimes a little bit tighter.
Yep.
But you have to kind of just, divide by 10.
Yep.
So, like if it's a 10 cent wide market,
is 10 times.
If it's a 10 cent wide market, it's really a penny.
Right.
Let's go to the next slide. If I use an IRA or a Roth to do an SPX 0 DTE every single day, am I subject to be penalized? Am I subject to be penalized by the pattern day trading rule? Both accounts are $100,000 plus.
You should be fine. Right? I mean, it doesn't.
Yes,
it doesn't matter.
The rule is if you have over 25
kind of account.
If your net lick is over 25,000, whether it's an IRA account or any kind of other kind of account, it does not matter. If you have over 25,000, you are not subject to pattern day trading.
And it's such a silly cutoff or any reason to have it. I mean, why would you want somebody not to be able to take off risk?
Yep.
Silly.
It's absolutely ridiculous.
You know what else is ridiculous? Skateboards were invented in 1959.
They might have been, but I didn't have a skateboard.
Maybe.
Let's go to the next slide. Even. I've read a number of articles talking about the importance of the S&P 500 getting back above its 200-day moving average. I don't understand why that's important. Can you shed some light on this?
When you find out the answer to this, you tell me too. I don't know why it's important either. I mean, it's a good talking point for people who trade and for people who don't trade, just to sound intelligent. I mean, it means absolutely nothing to me. I guess you're looking at what the average price of something, and you can interpret it as bullish if it's above, bearish if it's below, I guess, or maybe there's overhang there or something, but I've never looked at a 200-day moving average or traded it.
Yeah, when somebody can figure this out, you can help me too.
Mm-hmm.
And I would love to know the answer here. So I don't currently know either. I know there's a lot of people, don't write me, please, because I get...
Yeah, if it works for you to help you,
that's right.
Then go for it. I mean,
that's right.
More power.
But the reality is, if you do a lot of research on the importance of the S&P 500 getting above its 200-day moving average, you're going to have a hard time sustaining that there's anything more to it than complete random results. Let's go to the next slide. What is put-call parity, and what role, if any, does skew play?
Well, put-call parity, it's just a way to price options. So, if a $5 wide spread on the call side is trading for $2.50, the same strike put spread is going to trade $2.50 because the whole thing has to trade for $5 just the width of the strikes. So that's just put-call parity and trying to price options. Skew, on the other hand, is when an equal distance option is more expensive, equal distance away from the stock price is more expensive than the other. You would say that side had skew, meaning they're willing to pay more for those options than the other option. The velocity of the move of the stock is in that direction.
Yeah, I wouldn't say that put-call parity necessarily plays a role in skew. I mean,
it doesn't play any role.
Yeah, what put-call parity does is it just lines up all the options so that they make sense. The easiest way to explain it is that that when you add up the different spreads, everything comes out to exactly what it should be. So put-call parity essentially, that's all that is. It's just everything is priced correctly. And the puts and calls are priced against each other to give it, and the spreads are priced against each other to give everything kind of a very fair theoretical value. Let's go next slide. Do you think it's possible for the dollar to lose its global supremacy? Also, what might that mean for the stock market if it should happen?
I don't know. Will pigs fly? I mean, someday. I mean, I guess they could. I mean, I guess it could happen. I don't foresee it happening in my lifetime, but I guess anything is possible, not only these days, but in days past too. What it would mean for the stock market? I mean, I guess on paper it wouldn't seem good, but I don't have any idea. I mean, I thought, you know, when I was trading through my, you know, first war, when we were going to go to war, the market was going to get hammered and it went straight up. So who knows what happens to something?
Yeah, you know, I mean, I think the dollar has lost a little of its global supremacy recently. I mean, it was so strong for so long in the last, you know, month.
It got out of hand too to the upside.
Yeah, in the last month or two, it's come back to earth and it's lost a lot of its supremacy. Now it's a very, you know, average, I guess, is priced, you know, kind of the middle of a long-term range right now. So it's not, you know, it doesn't have that kind of crazy supremacy it had before. But what would it mean for the U.S. stock market if that should happen? Well, it wouldn't be good. You know, the dollar has been kind of the, it's been the safe haven. The dollar has been part of the strength of the U.S. stock market for so long. So I don't think it'd be good. I don't think it's going to happen, but I don't think it'd be good. We're clearly in a worse situation now than we've been in a long time, but I don't know how that plays out. Let's go to the next slide. How much capital are you guys currently using with the VIX around 24? And what do you do with the funds that are not being used? Do you have them in SGov, BIL, or something like that?
Yeah, absolutely. Go right ahead. BIL, SGov, any of those. No commission to buy them, no commission to sell them. Pay around 4.5%, 5%, depending on the time frame. What's going on with interest rates? Sure, go right ahead. Easy, liquid. Get in and out. Move it for other things that you want to do. Go right ahead.
SGov and BIL are both Treasury ETFs. They're, like Tony said, they're transaction free. They're obviously very liquid. They trade about a penny wide. They're super liquid, transaction free. They're essentially riskless because they are Treasury ETFs. They don't really move in price. There's nothing much to. They're vehicles to use to get interest. We also recently launched T-bills direct on a platform. So there's in the icons on your menu bar. There's an icon for T-bills, and it's really cool. So you can do it yourself right on the platform now. But those are usually $50,000 kind of on average. But you can choose your own duration. You can choose your rates. You can choose your counterparty. So there's T-bills right on the platform, and there's SGov and BIL.
Very good.
Let's go to the next slide. And the last one. And it's funny because this is along the exact same lines. What do you do with the extra cash in your brokerage account? Do you leave it in as cash or invest part or all into SGov or something similar to earn interest? What do you do?
Same question twice. Yeah, absolutely. I mean,
yeah, it's a little
I'm not as diligent as I probably should be, but yeah, I mean, if you are diligent and you probably should be with your money, yeah, that's the place I would put it. Sure.
I'm a little more mixed. I use these instruments sometimes, and but I tend to use my trading account mostly for trading, so I don't really focus on the cash management side of it too much. I'm pretty aggressive with my cash in my trading account, so you know, I mean, I will definitely use SGov, BIL, and T-bills, but but for the most part, I use most of my cash, so I don't really think of it.
Good job out of you. Let's take a quick 90-second break. So, do you know why? We got to take a moment so we can get ready for this option jive. We'll be back in 90 seconds. Let's take the live. EMA/S&P down 48. Haven't moved.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The tastylive research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
It's option jive. Tomas, we are back, my friend, and you know what that means? Time for a little bit of an option jive. You mean the S&P's down 50, about 5 handles off of their lows.
Yeah, what do you think about this?
Seems a lot like yesterday. I didn't think
doesn't to me.
I think. Let me finish. We are opening down 50. We opened down 50 yesterday. So to say it doesn't seem a lot like yesterday, volatility was exactly where it was too. To say it doesn't seem a lot like yesterday is just silly. So it seems a lot like yesterday.
Okay.
Just like yesterday. I didn't think we'd get back to unchanged, but we went a lot further to the upside than I thought we'd do. I think we're going to have weakness all day today. Going into tomorrow's numbers, this is the nervousness.
Yeah, I think they stay pretty weak today. Yeah, I agree. I think they stay pretty weak today. Anyway, we got a bunch of stuff.
Let's go.
We've got a bunch of research, and then we've got Chris Vecchio coming on. Then we've got some more research. We got hard stuff today. We're about to do a piece that's that talks about kind of stuff that you would expect, but maybe need a little confirmation. Let's see what we got. Can Delta help you time profits in a strangle? Let's take a look. So a short strangle profits by staying within a range. Okay, we know that. Let's go next slide. Expected timing for profits in a short strangle depends on the delta of the strike selection. What that means is if you go really wide in a strangle, okay, and versus going really narrow in a strangle. So what does the research show as far as the average time in a trade for the P&L to reach 50% of the credit received? Is it better to go wider or is it better to go narrow to get to 50%?
I'm going to say it's better to go further, because that's what I do, further out of the money. But when you go, because when you go closer, you're collecting more credit, it's harder to get 50%. Now, if they compare, I don't know if they did it here, if they compare the same 50% profit, let's assume it's $2 on the far out of the money, to $2 at the money, I'm going to see it's very similar in that case. But I haven't.
Let's take a look, Beth. Next slide. So the closer to the at the money, the longer the duration, which is kind of what you just said. So from 2015 to present, when you look at 40 delta strangles, 30 delta, 10 delta, or 5 delta, you get to 50%, way closer to 5 deltas than you get to 40 deltas. Now, that doesn't mean that the 5 delta strangle is better. Just means that you get to 50% way quicker.
Right, but it's a smaller number, right?
It's a tiny number comparatively. So let's take a look at the next slide. So what does the research show for the win rate and the average P&L? So let's go to the next slide. So same thing, 40, 30, 16, and 5 deltas. You take a look at the win rate. It's 98% on the 5s, it's 70% on the 40s. And then you have the P&L across the board. So you don't make a lot of money with the 5 delta P&L. With the 5 delta strangle, you only make $18. With the 40 delta, you make $77, although it takes longer. The average premium, and then we have the return on capital. Obviously, the bigger number you sell, the more money you're going to make. But my takeaway from this slide is, man, kind of like that really high pop, but you don't make much money.
Yeah, you have to go to the P&L here. I mean, you have to factor in the P&L.
Totally agree. Let's go next slide.
So you got to find that equilibrium, that happy equilibrium for you between,
So for risk, to better understand the worst case downside relative to the capital risk, the closer to at the money had the highest loss. And even the further out of the money, even if the further out of the money had the highest win rate. So what you're looking here is just top row win rates, 70, 76, 90, and 98. And then the largest loss, and then the loss rate, and then the largest loss, and then the max drawdown. So when you look at this page right here, you're going to have to trade off between a tiny delta and making a little tiny bit of money, or a big delta and making a lot of money but taking a lot more risk. And it's going to come down to somewhere between
the Goldilocks. Find yourself in the middle, not too hot, not too cold.
A little bit over the 16 delta is what it's going to come down to.
At least that's what we found for us, right?
Yeah, sure. Because you want the spot with the highest profits and the lowest amount of losses. And when you do lose, the smallest drawdowns. And I think that's the 20 delta. 15, 16 delta, 20 delta, under 30. Let's go next slide. So finally, let's take a look at how strangles performed when implied volatility was elevated above the 30% level. Perfect. Let's go. So when IV was high, we saw a faster turnaround on larger profits, but the 5 delta hardly seemed worth it. The data increase, days in the trade,
the delta increase,
days in the trade, and the average P&L increases while the win rate decreases. That's with IVR over 30. And so if you look here with the IVR over 30, that's kind of the perfect scenario, which what you want to have is a little bit more than the 5 delta.
Yeah, that win rate is huge. I mean, I know 77 is huge also.
Yeah, that's where we live.
Yep.
We live in that area, and that's kind of our sweet spot. You know,
look how much the average P&L goes up when IV rank is high. I mean, again, you know, we talk about ramping up. You ramp up when the volatility is high. A good indication of that.
Yeah, your win rate's going to stay about the same. Your win rate's going to stay about the same as you see it across the board. Stays about the same, but your P&L goes up dramatically, and that's kind of where we want to be.
Yep.
So let's go to the last slide to takeaways. So for strangles, the amount of potential profits and the likelihood that these profits are realized depend on strike selection. So historically, the more aggressive the stock strike selection has led to higher average profits, but it's taken longer than the less aggressive alternative, which is the 5 delta. So I ask you now, which one would you go with?
I mean, I would choose the 30 to 20 delta. I mean, I don't want it to be too hot. I don't want it to be too cold. I mean, I think that's where we should live.
Yeah, I think it's actually closer to
20-ish.
Yeah, the last one. But I mean, I think you want to live in the area of 20, 25 deltas, and that we're exactly where we live.
Yep. I think we went through 9 slides here to kind of reiterate where we live. Now, we've done the research. You get a higher credit with a straddle, and you can get that same type of win rate if you take your profits sooner. To me, it just seems like it's a lot harder. It doesn't work as smoothly for me. Anyway, that's me. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P is down 53, NASDAQ down 259, Russell down 21. The Russell, they're all down around the same. I guess the Dow is the strongest, only down 300. Volatility up 60 cents, 10 cents off its high. So I don't know if we'll be back in 90 seconds.
I don't like this opening. I don't like the fact that the bonds are traded up to 20. Now they're back to 10. I don't like the fact that that Apple's down to 197 even.
197?
Yeah.
Apple? You are correct. 197. And
yeah.
It's off. Yep.
Yeah. I don't like this opening.
You don't like it, meaning you think it's going to continue lower.
I don't like it.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell.
This is going to be...
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and Tasty Live does it. Again, they teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know, we have a little bit of time here, so I'd like to say something to you.
Yes, sure.
Scientists have found
what?
Older adults who drink 4 to 6 cups of coffee a day, they might actually avoid getting frail. Researchers tracked 1,100 people over 55 for 7 years, and guess what? The heavy coffee drinkers were less likely to get weak, tired, slow, or basically feel like their bodies were running on 2% battery like yours is today. Those are the antioxidants, Sosnoff. I've been trying to tell you.
No, my battery's fine.
It controls blood sugar. Sosnoff, it's what you need. It's what you need in your life.
I don't need coffee.
Iced tea ain't cutting it. No. Okay, Grandma was right. That's all I'm telling you.
Thank you so much.
Drink that black coffee. Drink that black coffee. That comes from my Taiwanese source, Shark. And you know if it comes from him, it's right. Even the S&P's down 54. Sosnoff, you said you don't like this opening.
I do not like this tape action.
You yesterday on the close, you said you were bearish. So how could you not like this? You have to like this.
I know. I wanted a higher opening so I could sell them. I didn't really.
No, I've watched you. When they get a higher opening, you put your hands in your pockets like a scaredy cat. So you'll sell them in the hole down here and we'll rally. That's what you're going to do. You like a challenge. You don't like to take advantage of higher prices. You like a challenge.
I don't like what I just did in the bond market.
Bond's 114.09. You're nibbling again?
I do not like what I did.
I do not?
I do not.
I do not. I do not.
I need to sell some bonds back out at 114.20.
I don't. Okay. I do not.
Yeah. But for starters, on the opening, I got to get out of Palantir. So let's get this party started. Let's go.
You still got 4 minutes or so. PLTR.
Yeah, I got a bunch of stuff. I liked it way better at 115 than 112 and a half.
112 and a half. Going to make it a little challenging.
Yeah, a little bit. But
what's Netflix doing? Just because it was
Netflix
11.25, so down around $9 or $10.
Everything is a lot lower. Tesla's down $8. Netflix down
Tesla been weak all morning. Yes.
Yeah.
Tesla 272 and change.
Yeah. I don't know what I'm going to do yet.
In
everything. I don't know what I'm going to do yet for the rest of my life starting today. But no, I don't know what to do.
Okie dokie. Sadnov, you ever had a smoked bologna?
I've had grilled bologna.
Have you?
Yeah.
In college or as an older man?
Older.
I knew it.
Grilled bologna sandwich.
Yeah.
Yeah, I've had it a couple times.
As an older gentleman.
I got it at Au Cheval. They make their own bologna.
Yeah, Au Cheval. Okay, yeah.
I've had a homemade,
a bougie one. Like you never lived on it. You didn't eat Spam or anything like that, right? My peeps are writing in here saying
I like Spam.
When was the last time you had Spam?
I haven't had it for a while, but I like it.
2 decades?
Whatever.
3?
I mean, you could get Spam on Spam and eggs I've had.
I will sell a decade. You haven't had Spam and eggs.
Okay.
I have not been to a restaurant where they've had Spam and eggs. And you can go out and buy Spam in a can and make it.
There's lots of places that sell Spam and eggs. And that sell Spam sandwiches.
Name one.
Aloha Grill.
Okay. One that's not a Hawaiian place that you did not get Spam and eggs.
Just said name.
You
places.
get that other pork dish when you're there. You do not.
I'm just saying they have Spam and eggs. They have Spam. I've had it.
They probably don't, but I'm gonna.
Aloha Grill. That's one place. They definitely have Spam.
Yeah, give me another one.
I mean, I have other places. I just can't think of them right off the top of my head. But that place.
Sure you do.
Aloha Grill.
Mm-hmm.
See that? You tried to stump me. Go ahead.
I don't know, Sosnoff. I don't know here. I'm going through the first little part.
Here's the menu right here.
Yeah, I know. I just put it up. I don't see Spam here anywhere so far.
Under entrees.
Entrees: chicken, pork, chicken, shrimp, sausage, shrimp, ribs, pork, chicken.
No, this isn't the right one.
Aloha Hawaiian Grill on Cermak.
No, that's not the right one.
Okay, well, I don't see. It's
not
the
the right
first one. It's the first one that I put up, Sosnoff, and it doesn't have it. Okay,
Aloha.
I didn't cherry pick it. I just
on Clark Street.
Okay, well, you're gonna have to do your own research, Sosnoff.
Oh my God!
I does not have it.
You're the wrong restaurant.
Well,
I'm trying to help you. Okay, I'm trying to make you feel better about yourself.
Aloha Grill Chicago is all I went. The first one is on Cermak. You want the one on Clark?
It's different owners.
It's gonna take you forever.
Different owners.
Different owners. Yeah, different brother.
Yeah, it's Aloha Hawaiian. Oh,
okay, no. Aloha Eats. I got it right here. Okay, here's your other one. I have not looked. Ham, loco, yeah, salt, Sosnoff.
What?
Oh, here you go. 3 slices of breaded and fried Spam on your Spam Katsu Loco.
There you go.
You've never had it.
Had it multiple times. Love it.
You're such a freaking liar.
Love it.
Even the S&P is down 55 for the opening. You get a low D over there, Sosnoff. If you have a low D, you should try the testosterone pills. It works wonders for me. 256 down on the NASDAQ. Russell down 22. Dow down 357. Down goes Fraser. Volatility up 60 cents.
Yeah, I don't like this opening in PLTR 111. Nah.
PLTR.
Net.
Oops.
Net.
Fat finger. PLTR down $13, just under 111. The leader in the clubhouse to the downside, Sosnoff. Tesla down 8. Goldman Sachs down 8. Meta down 7 and change. Your beloved Costco down 5 and change. Lulu down 5. Carvana down 5. Netflix down 6. Coin down almost 5. Let's see what the buckers are, Sadnov. Let's see if they're fewer and far in between. Baba up 2. Coming for the junk. Anything gold related, Sadnov, with gold up $82, Sadnov, trading near its highs, 34.06. FSLR up $1 or 2 in change. That's all I got, Sadnov, on the upside.
I'm having a few difficulties here.
I've heard no dings out of you.
I'm having a few difficulties accepting this.
You have low D.
I'm having a few difficulties accepting the current price opening on some of these options. In PLTR, I was hoping for better.
You were hoping for better?
Yes. Stock is, where's the stock? There's my first cover.
First cover.
And here is going to be my second cover.
Second cover.
Ooh.
Where's going to be your third cover?
I don't know. It's pretty. It actually is a pretty good opening for me in there.
Oh, see, now you like it all of a sudden.
Better than I thought. Second cover.
Second cover.
Now we're going down to the third cover, and then we'll be done.
Third cover.
Third cover is a little tougher because the markets are kind of wide on the junky out of the money puts in here. 20 cents, 110.
20 cents, 110. That's going to be a problem.
I should have done what I wanted to do the first time,
which was
just sell the calls.
Yeah. Mini S&P down 47.
Yeah. So I bought the calls back for 3 cents. Now I got to buy the puts back. The market on the puts is 7 cents, 29 cents. I think they're going to be about 20 cents.
You're going to try 20 cents.
Try 20 cents. PLTR was a home run.
Look at that. And you were complaining pre-market.
I thought it was going to be worse.
You thought it was going to be worse than a home run? You thought you were going to stretch that home run into a double again, like what you used to when you were a young kid?
Yeah.
You got a partial there on that last putties.
Take a fill. I'm done. PLTR. Little mini home run.
In the clubhouse. Mini home run inside the park?
Yeah. Yeah. I mean, we made on the strangles we sold for $1, we bought them back at 25 cents. On the strangles we sold for $6, we bought them $6.40. We bought them back at $4.40. And the strangles we sold at PLTR, the strangles we sold at like 3 something, bought them back for $1.27. So everything came in.
It's a beautiful thing.
Beautiful thing. Yep. In PLTR. Now let's focus on Apple. Where's Snapple? Snapple.
Where is your Apple?
Not bad.
198.34, Sosnoff. After trading down as low as 197.40, it's 198.60 right now. Apple trying to lead this market higher, Sosnoff.
Yeah,
the S&P's
we
only
bought
down
some
43. Volatility down up 49 cents off its highs by about 50 cents.
Yeah.
More like 30 cents. Sorry.
We got some Apple in there, and then bonds, the problem child, 107s. Okay, so Apple, we're going to cancel our bid.
Apple be Schnapple.
Let's take a look and see where we got problem children. Gold.
Gold is going to be your problem child for today, up 80.
Gold, problem children. Man, I can't
Too far, too fast, too strong.
Can't get around this gold thing. Gold, GLD, that's my biggest problem. Everything else is good. Yeah, PLTR saved us today. For a change, because that's not a stock that saves you very often. Earnings have been the savior.
Earnings have been the savior, and you poo-pooed them.
So what do we got for tomorrow?
AMD, you'll be interested in. SMCI, you'll be interested in. Uber and APP.
Well, SMCI already reported. So they pre-announced.
They pre-announced, but I think they have.
I'm going to say there's going to be no vol in SMCI. SMCI. Stocks trading for $32.
Tuesday at 4:20, Sosnoff. I mean, I know they preemptive strike. Ivy rank is 25. That's relatively low. You got a little bit of vol here. Almost 140 in the 3-day options. 10-day options.
You have a $4 expected move because they've kind of
It's only a $32 stock. It has over a 10% move. I mean, that's a lot of.
Okay. AMD.
Sorry to use logic to win that argument from you.
AMD.
AMD, $8 expected move, less than 10% stock that hasn't pre-announced.
Stock is $98.
Still big. Ivy rank of 43.
It's had a huge rally back up. Okay.
It's had a huge rally back up. It is down $1.90 today, though.
All right, let's put these on our watch list here. AMD,
You have positions in all of those. AMD, SMCI, Uber, and APP. You may be also interested in Disney, Wynn, Mosaic, EA, and Devon Energy, DVN.
Okay. Disney, $92. It's had a nice rally. Uber, $84. It's had a nice rally too.
Mm-hmm.
SMCI kind of on its butt.
Mm-hmm.
And AMD. Okay. What do you think of all those stocks? Which one do you think would be the best? I think it's AMD.
Yeah, I might actually like to flirt with SMCI too. I think that's a lot of premium in there. I think it's going to open lower, believe it or not, with the stock already on its butt. But I think the putty's going to be so elevated you'll be able to. Well,
I'm just going to tell you from my own experience in SMCI because I traded a bunch. It's very difficult.
$4 expected move.
Yeah, just going to tell you, it ain't easy.
It ain't easy being green.
Well,
Sosnoff, you might have to wait for my option trades today. Maybe I'll do a special earnings special, Sosnoff. That's right. Option trades today every Tuesday and Thursday, wherever you get your podcast. So you can just watch it right there on Tasty Live.
Okay, let's do it.
Let's take a quick 90-second break and come back. We got more Tasty Live with, Let Me Explain. Chris, next. We'll be back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Steve in Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this man, Chris. Let me explain. How are you, Chris?
Bing bong. Knicks win.
You knew it was coming.
I watched a lot of the game. I'd like to have Jalen Brunson on the Bulls.
I don't think he's going to be available.
I don't think he's going to be available either, because if I was a Knicks fan, he'd be my favorite player like 10 times over. But what did they get? What did they have to give up for him? Anything? Was he a free agent?
Nothing.
He was a free agent, right?
He was a free agent. For all the crap that the Dallas Mavericks get for trading Luka Doncic away for a bag of beans, the Mavericks got nothing for Jalen Brunson.
Yeah. Yeah.
Feels good. Feels good. Just for the folks who are watching this at home, I mentioned this in the green room, but why was last night's game so miraculous? Imagine buying a 2 Delta 0 DTE option at 1:15 Central Time, and it expires in the money. The Knicks' odds of winning with 5 minutes and 47 seconds left in the third quarter were 1.7%. It was a thing of beauty.
We call that fooled by randomness, because if you really want to know crazy odds, go the night before to the Winnipeg Jet game. The chances of scoring 2 goals in the last 2 minutes in a hockey game is a lot less than the Knicks coming back from a third quarter 20-point deficit.
That is fair, but you just said Winnipeg, so you just lost half the audience.
Along those lines, my Taiwanese source at JC sent me this. In the first 106 years of the NHL, three Game 7 comebacks from 2 goals down in the third.
Yes.
So only 3 in 106 years.
They almost had the 4th last night.
Last 2 days of the NHL, you had 2 games with a comeback, with a Game 7 comeback from 2 goals down the third.
Dallas and Winnipeg. But last night, you almost had the third one.
Yeah, last night you almost had the third one. Yes. With,
they said that.
Panthers.
The announcer said that last night on air. But you know what? I really miss Stanley Cup hockey is not the same without
the Blackhawks?
Without Eddie Olczyk calling the games, and without.
Did Eddie Olczyk have the winner in the Derby? Did you ever look? You didn't look. You didn't even find out. You have so much money, you didn't even care.
I didn't look. And without who's the famous hockey announcer? That's oh my God, I can't believe I'm spacing out.
What are you trying to find?
He just retired a couple years ago. But with that, he was paired with Eddie Olczyk. Without the two of those guys, not Pat Foley, but come on. Who's the guy?
I'll help you right now. I'm looking.
I'm out on a branch right now.
He's probably my favorite announcer anywhere.
Mike Emmerich?
Yeah, Mike Emmerich.
Yep.
Yeah, Mike Emmerich and Eddie Olczyk were the greatest. That's probably the best pairing of any announcers in any sport doing any game. Mike Emmerich was
anywhere, anyhow, anywho.
Mike Emmerich was the greatest, and paired with Eddie Olczyk, They made hockey. It was unbelievable.
They made it.
Made it.
Well, as a Knicks fan, Mike Breen, the national announcer for ESPN, is our local guy.
Oh,
so I get him all year round. It's awesome.
He's all right. He's not. He's no Stacey King. I'll take Stacey King any day.
We got Gary, Keith, and Ron here for the Mets, and we got Mike Breen and Walt Clyde Frazier for the Knicks. Come on, that doesn't get better.
I thought Frazier retired.
No, he's still out there wearing his wacky clothing and calling the games.
All right.
All right, what do you got for us today on, since now you explain the basketball to us.
Let's talk.
It's nice. Thank you for that. We're basically 3/4 of the way through earnings season, and I think it's worth looking at the numbers here to rise above some of the noise that we're hearing about what's happening with companies and the tariff talk that's going on. 72% of S&P 500 companies have reported so far. We're seeing corporate earnings that are favorable. They're lacking the punch of recent high watermarks, but 76% of these companies have delivered EPS results above consensus, which is just below the 5-year average of 77%, but still above the 10-year average of 75%. So it's a modestly positive signal in what's otherwise been a difficult few weeks. On the aggregate level, companies are posting earnings 8.6% above estimates. Again, just shy of the 5-year average of 8.8%, but well above the 10-year average of 6.9%. So we're seeing a beat rate and upside surprise that are historically consistent, but not necessarily market moving. Thus far, the companies that have reported these 8.6% earnings above expectations, it's noteworthy because it's above the 1-year average of 6.1%. So we're seeing that companies are coming through this earnings season with a little bit better than expected. Going into Q1, we were looking at single-digit earnings growth rate. We come out of it with double-digit earnings growth rate, closer to 12%. All in all, while earnings season isn't finished, the tone is largely set. It has not been a problem for the market. Now, part of the reason I bring this up is because over the last few weeks, the volatility at the index level was so high, a lot of people stepped away from trading some of these earnings releases to focus on S&P, NASDAQ, what have you. Yesterday on Overtime, Mike Butler and I were talking about this. Now that volatility has calmed down in the indexes, are we going to turn our attention back to some of these earnings releases moving forward? So I was wondering what you guys are thinking here. We have names like AMD coming up this afternoon, Walmart, Baba. How do you guys approach trading earnings during periods of high vol versus low vol in the indexes? And do you find this to be a time where traders may want to focus more on some of these earnings releases now that index vol has come in?
Well, a couple things. First of all, although, like you said, more companies have outperformed based on whatever the projections are, the up-down, because Kai shows this, the up-down number is 50-50 exactly, which it tends to come out to every time. So whatever we want to say about earnings, one thing people have to realize is that regardless of what companies report, whether they say they're doing better or worse, whatever, every time it comes out to 50-50. 50% are up, 50% are down. Doesn't matter whether the numbers are good or bad or whatever. That's the first thing. Second thing is, as you can see from this earnings cycle, when implied volatility is high, like it is now, earnings plays are much more interesting and much better. We've played virtually every major stock this cycle, and Palantir was one of our biggest winners last night. But we've only had one big loser that did do some damage. So be fair, because it did damage, was Microsoft. The only thing that traded way outside of its range of every single stock that we've traded, which is probably 50 earnings plays so far, is, and I'm not saying they were all winners because there's some break-evens or some losers, but the losers were small. The break-evens were, up or down, basically nothing. And there were a lot of big winners, but the one big loser was Microsoft. That says, so far this earnings cycle has been great for self-directed, traders selling premium. Because most of the trades have been, they haven't even been tested. Microsoft was the only one that I can think of that's a major stock where it tested you and then it kept going.
Agreed.
Today, Microsoft's only down 250. It's been.
And Apple tried to stage a rally. It's only down $1 now, but
Microsoft's down $1. And PLTR, which we covered, is down 15. So I think it's going to be a good cover.
Apple was flirted with 200 a minute ago. It got up to 199.88.
Yep.
197.80. $2 lower.
Sorry, go ahead.
Sorry, yeah.
Well,
Sorry,
one
not
of the
sorry.
stats that we, of course, one of the stats that we like to check in here when we talk about earnings, we go over this about once every 3 months here, is how are companies being rewarded or punished by the market for beating or missing their estimates? The market right now through the first quarter is showing a stronger than usual appetite for upside earnings surprises. In Q1, S&P 500 companies beating EPS estimates have seen their stock prices rise an average of 1.6% in the 2-day window before and after earnings, which is above the 5-year average of a gain of 1% during the same period. On the flip side, negative surprises are being met with only average levels of punishment. Companies missing expectations this quarter are seeing an average drawdown of 2.3% in the 2 days before, 2 days after window, which is exactly in line with the 5-year average for downside moves
but
in the earnings window.
there's a problem, Chris. There's a problem with that. There's a big problem with that. When this earnings cycle first started, we were much lower. And when you're much lower, negative surprises don't hurt stock because they've already been killed. Now that we've rallied, had this monster rally in the last 10 days, you get a positive surprise like PLTR, and they kill the stock. So it's not the source of the information is not taking into account the market move, like where the market is. When the market's oversold, negative surprises don't really hurt the stock. When the market's overbought, positive surprises don't help the stock. So you can't take it out of context, and that's essentially what that
that was the third step in this journey, Tom. We're building up to a story here, but
I know, but that's the whole reason. So you'll get a stock like,
but that is the reason.
Yeah, that's the whole reason.
I think that context matters, right? Like building this up, earnings have been good, stocks are beating. But the context is because the market had come down and the bar was so low. Yeah. And when we take a step back, right, when were companies being punished for earnings a few months ago? When the stock was on highs. Back in the second quarter, third quarter, fourth quarter last year, we'd frequently note how companies were being punished more than rewarded. And it's because we were sitting on the highs. This may be a function of us coming off the lows and us just having gone through an earnings season when the market was down nearly 20%.
Yeah, that's your answer. Okay, what else?
So we've rounded onto that. Well, I think we should talk about what's going on with the Fed tomorrow. You and I had the pleasure of kicking things off this week on First Call, and we found ourselves in the unusual position of agreeing on an outcome for perhaps two different reasons. The Fed right now going into tomorrow, according to the CME Group's Fed Watch tool, which is, I think, as you noted, Tom, the most visited website page that they've ever built for anything altogether. They're telling us there's a 2% chance of a cut this week. But more importantly, there's only a 30% chance of a cut in June. And that's been a dramatic downshift over the past 10 days when the market was favoring a June cut. Believe it or not, all the information that's come out over the past week, from GDP to non-farm payrolls, reinforces a view that the Fed may not be able to move right now. So from my particular perspective, Tom, and I think you agreed as well on Sunday, even though the Fed may not cut this week, what we're seeing in the bond market with relatively elevated state of volatility compared to, say, equity indexes, there may be an opportunity to look short put spreads or find some long deltas in bonds here, because implicitly, if the Fed doesn't cut, they're not fanning inflation. And it's almost a mirror image of what we saw in September. The Fed cut 50 basis points in September, and yields went up because the market priced in faster growth. This time around, no cuts, no faster growth being priced in, yields can stay lower. I'm leaning long deltas here. I think it's an interesting play still. We had a nice little pullback at the start of the week. I think it's a gift. We do have the Trump line in the sand after all, 4.5% of the 10s, 5% of the 30s. I'll continue to trade around them because I don't think the administration is going to give up its yield narrative.
Oh, I don't think the administration is going to give up the yield narrative, and I don't think that they. I don't think that was ever part of the. I don't think they actually. This administration needs help right now because the optics are so bad, and they don't want the Fed to actually lower rates right now, even though they say they do, because right now they have the perfect scapegoat in the Fed, and so I don't think that's on the table. I mean, nobody's going to look at bonds at 114 and think that we should be lowering rates tomorrow. I mean, it's not possible. So anybody that says Like if Trump comes out tomorrow and says,
we could go at 117, 118.
Maybe.
You
could have justified it.
Right, could have justified it.
At 114 right now, you cannot justify it, no matter what.
The market's saying you're not doing it.
Yeah, the market's saying forget it, not a chance. And so if Trump comes out tomorrow and says, well, this is all on Jerome Powell, he sucks, he should have lowered rates. It's all optics. It's all bullshit because he knows you can't lower rates here, so he can still.
It's a soundbite like anything.
It's just a soundbite, yeah. Mm-hmm. So there is no lowering rates here. The question is, what do they say? Because everybody knows they're not lowering rates. So what do they say? So, Powell's going to say the same thing he said all along, because at this point he's got to show strength and independence. He's got to show that he's objective, and so he's going to continue to say what he's basically been saying all along. In a perfect world, we'd love to lower rates, but we're not there yet. There's too much uncertainty. And that is a reasonable answer. Trump will say that's not a reasonable answer, but he gets to throw Powell under the bus still, so that's a good situation for him. Everybody's
always looking for somebody to throw under the bus.
That's his thing. Yeah, he's got to throw somebody. And
throw me under the bus every day.
There you go.
And now it's your turn, Chris.
But I guess my point here is that
shit rolls downhill, Tony.
I don't expect much to happen, but I will say this. I think bonds are way too low here at 114. I've been buying them this morning. I'm down a little money on them today. I want to buy more. I think they're the best risk reward on the board because I think they have kind of like a built-in floor here. Mm-hmm. So I think they have a better risk reward than stocks. And if I was going to be long some asset class here, if I had to pick an asset class, it wouldn't be precious metals because they're just stupid.
Because they just go up every day. I wouldn't want to be long those. Mm-mm.
It wouldn't be digital assets here because they've already had a massive rally. It wouldn't be stocks because they've already had a massive rally. And so if you want to pick something,
they're mid-range for the year. We started the year at 6,000. We went down to I'm gonna say 5,000, and we're 5,600. I threw out the lows. I threw out the highs.
Yeah, I'm just saying. I think
we're mid-range on them.
I think bonds are cheaper than stocks.
Okay,
that's all I'm saying.
I give you that too.
So I think if you had to pick an asset class here, that'd be the cheapest asset class.
Just as a note, perhaps from my own perception, it seems that you guys are shifting away from there's the attitude of the only thing that you should trade is the stock indexes, which in fairness, when you have 100 IVR and ES, why bother trade anything else? Do you guys find yourself looking at other markets more now that we have a VIX term structure that's back in contango as of this morning?
Well, to be fair, the reality here is that we have always been pretty active in equities, since we started Tasty. Prior to that, it was mostly indexes, but for the last 14, 15 years, we've been pretty active in, we like trading earnings generally. And we like,
even though we bitch, moan, and groan about it,
we like the higher implied volatility of different certain stocks. And there are situations right now, like one of the stocks that I've been buying this morning is Apple, just because it's down, whatever, from 213 to 197.5 in 3 days.
Yeah. 4. This is the fourth day.
Yeah, but I'm just saying, to me, that's interesting. Like, I'm not going to buy Palantir today, but traded 130 last night on the curb. It's trading 106 this morning. That's kind of interesting, but I'm not touching that yet. I guess my point here, Chris, is that as indexes go, we're still short premium and stuff like that, but because of a high volatility.
I think the market got a little bit ahead of itself too on this most recent rally. Sideways to lower is not going to be.
We've been pretty bearish since last week. It's okay, but yeah.
Well, speaking of bearish, I know that we just ran off a stretch of 9 consecutive days higher in the S&P 500. I think it's worth noting that's not something that typically happens during good times. Since the end of World War II, 80% of rallies that have been 9 days or longer have occurred during bear markets. So it's been fun. Let's just be careful what we wish for.
Do you think this is a bear market?
Yes.
You really do?
I think this was a bear market rally.
one hell of a bear market rally.
Yeah, plus I'm not
We've
sure.
seen bigger ones.
I don't know how to define. I felt like it wasn't a bear market. I felt like it was just a sell-off. I mean, we could be
Arose by any other name. I mean, we can call every bear market a sell-off and every sell-off a bear market of 10% or more. That's what the industry has put it on, right? That's the number they've given it. I think it's silly at 5,600 that we have the same bear market that we would when the index was 700. I mean, you know what I mean?
So here's my
3,000,
measure. I don't necessarily look to the index to see the 20% decline to determine the bear market. I look at the average, the median stock in the S&P 500, right? Where are we for the average stock? Forget the tech companies that hold everything up. And the average stock in the S&P 500 was down more than 20% and is just climbing back through those levels. So I think that it's still a bear market. We've seen bear market rallies of 17, 20% over the years, right? You go back to the global financial crisis. Some of those bounces in 2008 were nasty, made you think we were out of the woods, and we weren't. So look, the port data is the one thing that's keeping me up at night when I'm looking at this, because if the stock market's going to continue to decline, it's going to be for a recession. The Port of Los Angeles has this great website, Port Optimizer, where they publicly display the container ships that are coming in. Maybe there's a bounce back coming here, which is worth noting, which is worth keeping an eye on, about a 30% year-over-year increase. But the last time we saw that, a bunch of those bookings were removed, and it became a 10% decline year over year for the forthcoming week. The point is that the trade isn't being resolved yet, and recession scares me because it's nonlinear, and equities don't like recessions. So we'll see.
Thank you, Mr. Vecchio.
Thank you, Mr. Vecchio. We're going to take a quick 90-second break and come back. We got more Tasty Live in about 90 seconds. Even the S&P has made a new low just a moment ago. They're off of that low by about 13 handles. They're down 52. NASDAQ down 260. Russell down 22. Dow down 344. Volatility up 75 cents, although it is about 30 cents off of its highs. We'll take a quick 90-second break and come back. We got more Tasty Live with a market measure next. Be back in 90 seconds. Thanks, Chris.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
What's the best or worst trade that you've ever made in your life? Like, what stands out to you?
Oh man. It's a 1x2 call spread that I had in Amazon. It was in 2022. It was during earnings. I was trying to take advantage of a snapback to the upside, so I was short 1, long 2. And if you remember anything about 2022, earnings did not go well for many stocks, and Amazon was one of them. And lost a lot of money on that one, but we learn from these things, right? And so I try to do better next time.
Best trade that I ever made was the first trade that I ever made, and it was a FAS, which is a 3x inverse leverage ETF. And I opened that trade on February 20th, 2020, held it for a month, and I think I made like 140% in like 27 days. And I've never been able to replicate that, obviously. Then the worst trade was GME. I lost like $2,000 in a day on GME. Yeah, that was which is not that bad. Some people had it way worse, but for me, that was my worst. Yeah.
Worst trade? Probably selling a put in Peloton before it crashed to basically zero. I don't even know what a Peloton is anymore. I've stricken it from my memory. Also, Meta. Well, Facebook, before it became Meta, had a strangle on for earnings. It dropped like 60%. Forced to close because I was trading too large, and then watched it rally all the way back. So that's a lesson in sizing. Best trade I've ever made? was probably just buying VIX calls before the COVID backwardation that happened. So that was a really nice trade. That was just like a YOLO, like the world's gonna shut down. Let's play a game here.
I would say anything I do in natty gas is a losing trade. So if you ever see me trade natty gas, take the other side. You will probably be out on top.
NASDAQ futures, worst day, trying to catch a falling knife there. We don't do that anymore. We trade small and we try and trade often.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
I don't know how to do magic, but I do have a sense of how to use magic to steal money from the taxpayer. First, you need to take off anything that makes you look like a magician. That's key, Alex. The critical thing is to look like you're just a man in a suit trying to make a living. Goldman Sachs pulled off the amazing trick of making $3 billion in 3 months' time while the entire financial system collapses, foreclosures are at a record, and unemployment skyrockets, and the US dollar collapses. Shall we begin? The Facebook.com. Mark, if somebody was to put the question to you about the magnitude of what you think you've launched, how big do you think your product or your service is?
Well, it's impossible to tell.
You said something interesting, which is not within their economic means. I don't know that their economic means should take precedent over public interest. Welcome back. Here's a story to add to your bailout rage. It turns out we weren't told the entire truth about the banks. Honestly, you're probably not even hugely surprised by that. That's your plan for financial reform, printing presses and accounting fraud. And it's happening at the expense of you, me, and every future person in this country because of the money machine that the bankers have running to pay off our politicians. As long as you can risk as much money as you want and pay yourself for all the upside and stick the downside with the taxpayer, human nature will just leave them to screw everybody in America for as long as it's legal to do so. Remember, it got so bad in Egypt that there was a direct correlation between the growth in the GDP and the deterioration in the quality of life of the people because the people at the top were making their money at the expense of everybody else. It's connected.
I'm not here to talk about plans to deal with this till 2017. I'm saying we've got a real problem, and I'm tired of Republicans and Democrats who either want Republicans who want to burn the place to the ground, and Democrats, with all due respect, who want to offer a plan that gets it through their end of their second term of their presidency, and then screws me and my kids when it's over. And until we do that, we have to deal with the extraction that is at foot. It is the reason the financial markets are behaving the way they're behaving. That is a mathematical fact. This is not some opinion. This is a mathematical fact.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Well, we got more Tasty Live with a market measure, but you got something you want to say. You got something on your mind?
Apple's unchanged.
Even the S&Ps are down 45.
They've rallied back about
60.
20 handles.
Yeah.
Something.
Yeah.
I'm Tom Sosnoff. He's Tony Batista. Just a quick little reminder. We put out a press release today actually announcing all of our live shows that are coming up. So if anybody sends it to you, yes, we did put that out. But if you haven't had a chance to sign up yet, we've been talking about it all week. May 30th, Tony and I are going to be in Atlanta, Georgia. That's the week after Memorial Day weekend. And we are really looking forward to it. We've got 3 Waffle Houses to try, and among other, what's the place with the hot dog? The Varsity.
Okay.
You haven't been there yet, have you?
No. Is that the hot dog joint?
It's a hot dog hamburger joint.
Yeah.
What do you have? That's what they say when you.
That's what they say.
What do you have?
They have them at airports, don't they?
They have it in the Atlanta airport.
Oh, okay.
It's pretty gross, but what they do have there, that it's gross but edible, is coleslaw on a hot dog. And I happen to be a coleslaw fan.
Okay.
So hot dog, mustard, coleslaw.
Yeah, I don't know. I like coleslaw too, but I don't know if I like the mustard, but the coleslaw, I don't know.
It's the mustard's optional.
Makes sense. Makes sense.
Might have to take you on a road trip to really mess up your system. I don't think you'll recover from that. Anyway, we'll be at the Buckhead Theater in Atlanta, Georgia on May 30th. We can't wait. We got a really fun show planned. And it's, like I said, it's the week after Memorial Day weekend. So it's going to be a short week. You have Monday off, and then you'll be at work on Friday by 11.
Perfect. Love it. Come out and see us. We still got space. Love to see you.
Yes. Can't wait. And it's Tony's first road show, and after he gets done
long
eating,
time.
After he gets done eating the Varsity, it may be his last road show. so that's all I got. Then we'll be in London. Then we'll be in Italy. So that's all we're showing right now, and then we've got tons of stuff after that. Anyway, we're running late this morning as a special treat because this is kind of a heavy piece.
Which you told me you were going to dumb it down for even I could understand it.
Well, here's how the story went yesterday. So yesterday, every afternoon, we do something called the pitch. And I'm sitting...
We used to be able to film it, but then Beth said...
Yeah, we should do a segment like that.
Yeah, but
I'm not allowed to do it anymore.
Somebody ruined that.
Somebody ruined it. Behind the scenes look. It was really kind of fun.
So I'm doing the pitch with the guys. You know, we're having this very high-level intellectual conversation. We're talking about...
Two-way conversation, too, I'm sure. Because you always let everybody...
We're talking about literature, poetry, politics,
world
events, all this crazy stuff.
Sure.
And then Jacob goes, I go, Jacob, what's the piece for tomorrow? And he goes, well, you struggled with Kelly last week when I wrote another piece. He goes, so I put together a very easy piece for you guys. And I'm looking, I go, Jacob, easy for who? Easy for you or easy for Tony?
Easy peasy.
He goes, easy for you guys is what he said. I go, okay. I go, and that's how our pitches go. And he kind of started to explain it. And then he said, I'm going to do is I'm going to use Monte Carlo simulations to unlock the Kelly criterion formula and discussion and how you guys can actually use it in your trading. I go, fine, that sounds like fun. So we looked at it this morning. We're like, oh, it is fun, but it's a little tough still for us. So we brought in Dr. Data because we needed a PhD in the room.
Of course we did.
As is usually the case. So Data, welcome to the show.
Well, thank you. Thank you.
Thank you for.
Oh, what are you doing there?
Hey.
Hey, good to see you.
Thank you for
you
jumping
too.
in at the last minute. I know.
Of course.
We didn't prepare you in advance for this.
No.
But Tony and I struggle with pieces like this.
Of course.
It's been a while.
It's okay. Maybe I can help out with
We
this.
like when all the numbers are already done. We understand the concepts. We like the numbers are already calculated for us.
Well, actually, explain to us is better.
Well, Kelly criterion, right, is just how much money you're supposed to put in a particular trade, but it's very theoretical, right?
Without
So in
risk
practice,
of ruin. Without risk of ruin, mind you.
yeah, exactly, yeah. But in practice, it doesn't really work very well with trading, just because your probabilities are changing, the amount of money that you're putting up is changing.
Of course.
A lot of things. So in
But it
theory,
could help us.
sometimes
Theoretically, it could help us with sizing.
Yeah, absolutely.
And then what's Monte Carlo simulation?
Okay, Monte Carlo simulation is just where you're using a computer.
Yeah.
Right. It's kind of like it's a newer way of, I would say, doing things. Right. You're using the power of a computer to create some randomness, which trading is random. There's a lot of randomness involved in it. And so you're making some small adjustments and seeing how it plays out over time. So you use it for all sorts of things, such as like, does mom have enough money to live out her retirement years based off of different scenarios, right? So they use Monte Carlo simulations to do like retirement planning and to do a lot of planning when it comes to different things.
My mom asked me that question. Do I have enough money? And I'm like, because she's like, you don't let me see anything. I'm like, yes, you have enough.
Oh, you're investing for her? If she had to live off the investing that you did for her, she's going to live a very, how they say it, spiritual life. She's going to live that way. Yes.
So Monte Carlos are great. Mm-hmm. Use them all the time in finance.
But we use them on Tasty. I mean, we use them for the P50.
Yep.
And you've built many Monte Carlo models into the platform.
Use them a lot.
Okay. But you build...
Because it's a very practical way of doing things.
And you build a lot of those models for us.
Absolutely.
Okay. Let's go.
So what Jacob's here, he's doing is he's making adjustments and using... he's keeping some of his variables consistent to make it easier, but then he's making some small adjustments to try to create randomness so that this is to see how these trades would work over time, to look at the probability of loss on this.
Okay. So do you want to take us through this formula here? Because this is just kind of, he's setting the stage.
Mm-hmm. He's setting the stage here. Yeah.
So take us through this.
Yeah. So he's looking at the probability of bankrolling, how much money you would need, and the probability of loss with the wager, and then how much of a bankroll you're using at each opportunity. And then you're looking at that long-term growth of that portfolio over time to experience what the loss would be. But he's then saying, let's go to the next slide here. He's basically saying that we're going to use Monte Carlo simulations just to be able to create
enough occurrences.
Yeah, create enough occurrences so that this is not just some theoretical formula, that we can create something that is a little bit more like nature.
Okay, let's go to the next slide, Beth.
Okay.
So here's the study. We use simulated data for the hypothetical pure Black-Scholes underlying with an initial price of $500 and a constant 16% volatility, assuming a 3% risk-free rate, just to set the background. Then consider two defined risk, 45 data expiration, short premium strategies, shorting the 490, 510 strangle, while doing the long strikes either $5 or $20 away. So basically some iron condor version that's $5 wide or $20 wide in a constant marketplace. And then because that's where we create the Monte Carlo simulation off that.
That's right.
Then we examine the 5-year performance of the portfolios beginning at 50 grand and repeatedly devoting given percentages. 1%, these are the allocations, right?
That's right.
1%, 5%, and 10% of the available capital as buying power to such trades, and then allowing them to trade fractional contracts.
He's just trying to keep it easy, trying to keep the math easy.
So in based on what I understand about this, okay, if it's a $50,000 portfolio, and I have not looked at the results of this,
He's either using $500 all the way up to $5,000 on that $50,000.
That's right. And based on the research we've done in the past, I'm guessing it should be in that 1 to 2% range.
Yeah.
Should be the
And we're not trying to get too complex here when it comes to, so we're even allowing fractional amounts. Let's not, let the truth get in the way here of everything. We're just trying to keep as realistic as possible, but this is a theoretical study that he's doing here.
So iron condors, one with a tight iron condor, one with a wide iron condor, which is similar to like a synthetic, and then 1%, 5%, and 10%. I'm guessing the answer is going to fall in that 1% range, but let's see.
Yep.
Let's go next slide.
Okay, so this is a good-looking visualization here that he did. What this is it's showing it starting out at 50,000.
Yep.
Right? You see that big red, that red right there, and then it goes all the way out to 1,200 days, right?
Yeah.
That's the full number of studies, and then each one of his studies is actually going out to 1,200 days. He's starting out, each one of these at $50,000, right? That red is just showing where basically 50% of the data would fall, between 75% and the lowest 25%. So anything between the 25%, basically like one standard deviation in effect worth of data is what he's showing.
Okay.
See that flat number, that's going to be the 95th percentile. So anything above that would be considered only happening 5% of the time, and that flat number at the bottom, that's what would happen the lowest 5% of the time, right?
Okay.
That's where things don't go very well over time.
Got it.
That flat line is going to be the median, which is the number right in the middle of all the number of occurrences. And then the mean, of course, the mean is going to get skewed upwards. But you could say that the median, which is that light red colored line, is kind of where you'd expect to be the most amount of times. And so you can see it's a profitable strategy overall when you're doing this this particular strategy.
Okay, but this doesn't take into account the different allocations, does it? No.
So this one, he's going to show four different charts.
This is the 1% of capital, right?
That's correct.
Okay.
Yeah.
All right.
So there's five different charts here that he's going to do. Okay. The first one was 1%.
Right.
And that was a $5 wide iron condor. Okay. Then he's doing 5%. Okay.
Yes.
So 5%, there's actually a lot more volatility here in this particular strategy. You can see, it's doing quite well, but the volatility of that movement is quite a bit greater. So that 5% can be really quite great, but then there's also a higher likelihood, it appears, of ruin, which is that lowest line, which is actually going below where you started, even below zero. So there is a probability of ruin here.
Probability that grandma can't live out her money is what you're saying,
right? Grandma's going to be eating cat food.
Can you go back to the last slide, Beth, for 1 second? Oh, so there's no.
So that's the 1%, right? Yeah. And there's actually no occurrences.
There's no probability of ruin here.
Theoretical ruin.
Yeah, theoretical.
Yeah.
Okay, got it. Now I see.
Now you bump it up.
Yeah, I got it.
That's 5%. And okay, now we have some probability of ruin here. That there's just a number of multiple occurrences of loss.
Let's go to the next slide, Beth.
10%. Now you even have a greater volatility of movement. So this is like, it's a matter of how you view risk, right?
Yeah, I understand now. Now it all makes sense.
Now he's going to flip it up.
Now he's going to go to a $20 wide, which is the synthetic.
Yes.
Let's go to the next slide. I see.
So this is basically just a strangle right here.
Yeah, it's like a synthetic strangle. Yeah. Okay.
So you're using 1%, and then you're using 5%.
Yeah.
The next one. And you can see that probability of ruin just gets greater. To me, what this is telling me is that you got to be more careful about making your bets when you increase the amount of a capital in a particular trade. In effect, that's what it is. I mean, that's all we're looking at here, is that he's doing a really nice way and a fancy way of.
Is the takeaway risk of ruin?
Let's see. Well, we can read it. It's on the.
Well, hold on. Go to the next slide, Beth. So the Kelly criterion precisely answers an abstracted mathematical question about optimal bet size. While directly applying the Kelly criterion to option trading, is confusing and risky. The insight and the amount of capital devoted to a trade should scale with the size of the account. The probability of success and the ratio of payouts to losses is profound. So using Monte Carlo simulations, especially with iron condors, larger bet sizes had a better mean performance, but a riskier median performance. The riskier the trade, the more important it was to stay small.
We could actually look at that through slides 3, if you want to even look at a comparison between 3.
Yeah, let me finish this first.
Okay.
Let me go back to that bet. It remains to expand these experiments to include various management techniques to consider trades with undefined risk. Remember, the more efficient the market, the smaller Kelly recommends keeping each trade while trying to make many of them. I mean, I got this. Now I understand. So what he used is just basically lots of Monte Carlo simulations to help to validate the trade size.
Exactly, and what you know kind of intuitively, right? Yeah. So he's using math to back up what you know intuitively. The more that you risk on a particular trade, if you have a strategy that's working, right, you should put more money into it, right? But there's always going to be a risk of loss. So in a risk of ruin, the more that you put it up. So even though these are strategies that over time they have historically worked, that median does go up.
Yeah. Makes total sense. I understand it. It's actually a little more straightforward than I thought.
You just got intimidated by the graphs and the formulas. That's all. You're all right
now. Jacob did a nice job here with this study.
Thanks, Data.
Of course.
Like I tell my son, you just got to make an effort, Sosnoff. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P's only down 30.
Only.
We'll be back in 90 seconds. Let's Tasty Live. Peace. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this man, Chris. Let me explain. How are you, Chris?
Bing bong. Knicks win.
You knew it was coming.
I watched a lot of the game.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I wasn't going to call you out publicly.
Oh, no.
But I have to.
What?
So we're out yesterday afternoon. So we're driving down Ravenswood. Now, for people that don't know Chicago, which is most of you, there's a train that runs in the northwest and then it goes up to the northern suburbs and runs right down the street. So one side of the train is heading south, the other goes north and south, but let's just say it goes north. So we're on the southbound. So Tom takes off in his new fancy electric car, which I can't keep up with. Do you know that there's actually stop signs on that street? Okay.
You blew stop signs.
No, he didn't blow through them. He went from like 40. No, he went from like 40 to 30, and then just kept going.
Oh, I don't stop for stop signs.
Because you're above the law. Above the law.
So
that's so bad.
Only for pedestrians.
There's streets.
Yeah, and you're in a bigger vehicle. You can hurt them. They
There's
can't hurt you.
streets that go east-west.
I don't go through red light, through stop.
No, just stop signs you go through, not red light.
Go through the meters getting on a ramp on the highway. You don't believe in those. You
Oh
say,
no, those are bullshit. You stop at those?
Yeah, it's the law.
You stop at those red lights to get on the highway.
Yeah, it's the law.
Oh my God,
It's so that it's because
only people that stop
a-holes
at those
like
are
you.
tourists.
It's like a-holes like you.
Right.
Don't make it good for people trying to get on because there's not enough room. They're synchronized for the traffic.
Oh my God,
And it's the law.
It's only for tourists.
Beth, I need some help.
It's the same people that sit upstairs at restaurants. It should say that. I've got like 10 tickets.
Don't you notice that the cars around you slowing down? Like, that's what saves me, is like, I'll be up on like Ashland, because there's so many of those things on Ashland, and you notice the traffic around
I never got
you
one on Ashland. I only get them
slows
on
down.
Western
Well,
or
the same phenomenon, Mr. Pedantic. Oh,
Yeah.
Bat, how are you? Jeez Louise. You would not last 30 seconds in an improv class, because the whole premise of improv is like, instead of just shutting everything down immediately, is to be like, yes, and. So like, you know what? I'm going to agree with what you're saying, and I'm going to add on to this to further this conversation so it doesn't grind to a halt.
You know what's funny? As much as I like comedy, improv, like Second City Improv, doesn't do it for me.
Okay, of course it doesn't. Bat, how are you?
Do you think you could name one Taiwanese food?
Yeah, Thai food, I eat it all the time. You now learned that Thai food is short for Taiwanese food. Taiwan. Yes, look at you, Sas. I'm very proud of you.
And I want to ask our producer, John, something.
Yes.
John, can you help me here just for a quick second? Just because I don't want him to yell at me. John, have you ever had Taiwanese food before?
I've had Thai food, yes.
Taiwanese food is not Thai food.
Where's Thai food from?
Thailand. Thailand and Taiwan are not the same country. They're not even
Taiwanese cuisine is commonly referred to as Taiwanese food or Taiwanese cuisine. What are you talking about?
Oh, hold on. Oh my God, here he is. Jason, come here.
All right.
He is our Taiwanese source. When you say Taiwanese source, there's your Taiwanese source.
You're looking at him right here.
You're looking at him.
That's right.
I will take whatever Jason says. I will take it. If I'm wrong, I will apologize.
No,
I said to him, can you name one Taiwanese food? And he started laughing at me, thinking that it was Thai food.
You know, that's a common mistake, because the Thai part of Taiwan, people mix it up with Thai as.
Don't defend him.
Jason, just for the outtakes later this week, I stand corrected. I am man enough to admit when I'm wrong, unlike other people in this room. I am man enough to admit that I am wrong, and I'm glad you came in to clarify this.
No, you're not.
I owe you and your people an apology.
No, you're not. Hey, do you guys? You want to know what we're having for lunch today?
Velvet taco.
No, they switched. We're having Thai food now.
Is that a joke? Did you write that yourself? You're so good.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Now I got a vision.
Oh my God.
You're live.
Oh! Sosnoff! That's enough out of you! Tasty Trade World Headquarters, your friend of mine, the very popular, that's right, from the Scott Sheridan Studios, Mr. Scott Sheridan!
Is that on the record or off the record?
Oh, it was off the record.
That all was off the record?
Yeah, that was all off the record.
So we're not discussing Ixnay on the...
Oh, can we discuss it? Oh, when you're here, we can discuss everything. You're the boss.
Don't you have, like...
Oh, you're in trouble now, Sal.
Yeah, don't... You have viewers that care about you. Don't they send you, like...
Medicine?
Veterinarian, like, don't they send you, like, horse pills or something?
Yes, he has.
Don't they send you, like sheep, like, deworming for sheep or whatever?
That work perfectly well in humans.
Right, don't worry about it. Did you wake up like that, or did you go to bed like that? Because if you went to bed like that, wouldn't you be a little alarmed?
Actually, he did go to bed like that. I did. Talking about it yesterday.
Yeah, it's from 2 days. It's the second day, but it's. Listen,
Do you think this is from rancid hummus?
Could be. I have a tolerance for pain that's a different level than you.
Oh my God. I don't. You might have a tolerance for pain. We will never know that, but I will definitely tell you, you tolerate things that normal people wouldn't tolerate.
Exactly. That was so well said.
Right?
You are so spot on. Every once in a while, you come up with nuggets. That is a nugget.
Thank you.
You are 100% correct. You nailed him.
Thank you.
Show's over. We can end it half an hour early. We're done.
Can we go off now?
We're done. We're done. Do your list. We can get the hell out of here.
Right? Because, like, what's wrong with you? Like, if you called your mom, I know you wouldn't do this and show her. She'd throw up, because I almost did.
Your mom will be down here in an hour.
Yeah, she would be. She'd be calling.
It would take an hour.
It would take an
hour to get to the car, but she'll be down here in an hour.
She would get you, like, say, Tom, you got to call a doctor. We got does Case know?
He's got a doctor on call.
Wait, does Case know?
No. So yeah, I was talking to my mom last night, and she's like,
you're a good son. I appreciate it.
No, she's like, listen. I'm like, Mom, you shouldn't be driving people around. I go.
She must think when she has this conversation with you, because she's been in the car with you, she must think, my son, what did I do wrong? Because he's the world's worst driver, telling me.
Does she say to you, you shouldn't be driving people around?
No, I tell her she shouldn't be driving people around.
And what does she
like,
say?
I'm a great driver.
It sounds like somebody I know, right? Tony, do you know somebody that says that?
You should not be driving. Yeah, I go, you shouldn't be driving. She's like, I'm a great driver. Okay. You shouldn't be driving other people. She's like, don't tell me what to do.
I don't blame her. You shouldn't tell her what to do. No, you shouldn't.
All right, I'm not dealing with this.
Mm-hmm.
How many days are you going to go before you call somebody? Here it comes.
You know what she said to me then?
I'll be fine in 24
You'll love
hours.
this. She said, how's my Bitcoin doing?
Your mom is Bitcoin?
No.
All right, how many days are you going to let this go?
I'm going to be fine. Stop. Don't scare the children. I'm totally fine.
No, don't worry. It's content for the show. We like when you're sick, so stay sick. But he's interested in when you're going to tell somebody.
More importantly, I want to know how bad this is. Are you able to hold a plate of food in that hand?
Right hand.
No, lefty.
No.
Oh no, he just drags the bad hand through the food now. Like that's the hand. That's the
You
hand.
don't get the flip this way. You get the rub.
That's the food tasting hand.
I don't even know what's for lunch.
Oh, I like today. Pita. I like pita.
It's okay.
I like Ben Yehuda better, but pita's good.
They got good onions.
Yeah, pita's good.
They have good onions.
Yeah, I thought yesterday was great.
Grilled onions?
They have good grilled onions.
Yesterday, you missed 5 rabanitos. Threw Tom off. Tacos on Monday. He wasn't sure what
I
day
know.
it was.
We did the show. He's like, why do we have tacos on Monday? I go, well,
the 5 rabanitos
it's May 5th. He goes, what does that mean? I go, well, it's Cinco
I have
de
to
Mayo.
say, of all the hot sauces, I like theirs the best.
Really?
They're green, I think, because it's got good flavor.
But it's not hot.
I like
it just doesn't.
But it's not hot.
Tomatillo.
It's like
It's got spice.
It's got spice.
But you don't feel like you just destroyed your mouth after.
It's not hot.
Oh my god!
It's not habanero. It's it's a mild sauce.
Tomatillo, which is
it's tomatillo, right?
It's good.
Thank you for validating.
I like their red sauce because.
When was the last time, by the way? I'm gonna have a throwback for you.
What?
When was the last time you had the chef's burrito special, but a sandwich at Salt and Pepper? Chef Mauricio.
No, I don't go to Salt and Pepper anymore because they moved.
Because they moved.
It's a half a mile away.
I know. I haven't been there.
You haven't been to the new one?
No.
Oh, it's nice. I mean, it's a dive, but it's nice. But if it's nice outside, you can sit outside, which is nice.
I haven't been to there.
But you know what I'm talking about.
Yeah, sure. Why, you don't like it anymore?
No, it's great. Except for they put green peppers in there. They put jalapenos. I'm like, what are you doing? Like the whole thing, that's right up your alley. It's a nice, so the
problem
chef.
is, I have my breakfast places
Oh my
now.
God, here we go. You have a breakfast place. You don't have places.
I have my breakfast places, and I cannot go to other places.
Besides Ann Sather's, I don't consider if you pick up a bagel on the way home from Ann Sather's, if you pick up a bagel from Gotham, that's not a breakfast place.
No, I like Uncle Mike's.
Where's Uncle Mike's? Oh, the one down
Grand.
on Grand. Is
So good.
that the one you go to sometimes before golf?
Yes. It could
Grand
be.
and what?
What?
Grand and what?
Grand and Wood.
Grand and Wood.
Right off Ashland.
Really?
Yeah. It's so good. It's
on the north side or south side?
It's on the north side. On the
Oh, no.
corner. It's unbelievable.
What do you tell me what you get?
You get, so this is what they do.
And if you come up with something like, here it's going to be.
I'm getting gout medicine sent to me right now. I just want you to know.
Here's what
Go ahead.
here's what you get. When you get in, they give you a bowl of rice parts. It's called like congee or something.
Rice parts?
porridge.
Porridge.
It's like
rice pudding.
Porridge. Where did you grow up? It's seriously porridge. It's porridge. You know, it's
Filipino.
It's Filipino. It's Filipino rice porridge. Okay. So you get that when you first. They give it to everybody when you sit down.
Like you get water and your rice porridge.
Get water, rice porridge. This is a gift.
And then you say, "I'm done," and then you.
And then you can order. And then you choose. So like eggs, but instead of hash browns, they give it to you with garlic fried rice.
Okay.
It's a nice touch.
Nice touch.
And then you can get hash browns if you want, but it's garlic fried rice. And then you get your choice of what you want with your eggs.
Okay.
You can have skirt steak, which is unbelievable there.
Okay.
You can have sausages that are like langanista, the ones that are soaked in wine. They're like a sweet. It's like a sweet wine. The sausage, they're delicious. Then they have pork shoulder that's also soaked in the same wine. Or finally, you can get, I forgot what that's called, Tuscan something with a T.
Look this up. It's called Mike's.
Uncle Mike's. And then
Uncle Mike's?
Uncle Mike's. And then you can get, the last thing is you can get their fried fish with it. Everything's unbelievable.
So the only Filipino I've had is kasama. It sounds.
Blows kasama away.
Not blows kasama away. Kasama has a Michelin star, but it blows it away. Okay.
Someone's got a line out in front. All you can get is a breakfast.
Yeah, because everybody's an idiot. They wait in line because the food sucks. So all these people don't know anything when you can go to Uncle Mike's.
All you can get is a breakfast sandwich there.
Uncle at where? Kasama?
Yeah.
No. You could, if you eat in, you could do this thing with the bowl and everything. It was good. We had it with the rice.
For $100, you can go there, or you can go here for $20.
Oh my God.
Okay. I'm telling you.
I'm sending this to the 6 right now.
This is life changing. Uncle Mike's.
Okay.
I've never been.
Well,
ask your boys. We go all the time. Me and Steve and Donnie.
Okay.
Oh, you go with all the guys, but you don't go with Scott and I.
I've never been invited.
I've never been invited.
You guys are too bougie to play golf at a public course.
That's true.
Oh, you're gonna play the public course?
Yeah,
Oh, never mind. I didn't know that. I was, took that for
And they open
granted.
at 6 a.m.
Oh,
that's good.
Too early.
No, that's good. 6 in the morning is good. All right.
And they're right off the highway. It's right off the highway.
My daughter's coming in this weekend. We might have to go do that. All right, got it. Uncle Mike's.
Oh, it's your daughter's way too special for this place. She's too bougie. She's not going there.
Ooh.
Like I couldn't take my daughter there. It's
okay. You haven't had food with my daughter in the last year. This one eats anywhere and everything.
Okay,
does not matter.
I'm just telling you.
She'll take you to some places in Brooklyn, Vietnamese, whatever. She'll take you to some spots.
This place is great, but like Case, she would hate it.
Okay, but Case doesn't eat.
I know.
Okay, so you need an eater. Has Jules been? That's the key.
Yes.
What does he say?
Loves it.
Okay. See, now that works for me. There's certain people, if you say they've been there, like, I love Donnie and I love Slappy, but I don't put them up there in like the food
But
category.
I wouldn't love it if Donnie and Slappy had a love child together. So
But like Donnie's meat and potatoes, period.
Yeah, he's meat and potatoes.
Okay. Steve gets whatever he gets, it's the same thing every time he goes.
Forget, he doesn't count. He doesn't.
Right. So that's why, but when you tell me Jules, I go,
Like I've been there with like Mike Butler. He's
I don't know, Mike knows food.
Oh, he's good. Yeah.
Man, you're getting down to everybody.
And we still haven't been invited.
I think I might have been there with Nikki.
Oof.
Wow.
Oof. Yeah, I think Nikki too.
Oof.
Oh wow.
That hurts.
Your son, but not you.
Oh.
And we had a good meal.
Tony, what are you doing this weekend?
Evidently not enough.
It's too far. He's not driving to the city. He's not driving.
He might come into the city just for breakfast and skip golf.
100%. I'd come for golf too. Since when don't I play?
What?
Yeah.
Who? What are you, deaf all of a sudden? All of a sudden you can't, those ample-sized ears, you can't hear anymore?
See, I think this is how I was going to say it. You're part of the reserve team, which is what I am. So they have the go-to. They have their A-listers.
Backup team.
They've got their A-listers.
He knows he's a backup.
With their B-listers, and then every once in a while, when the A's and the B's don't fill it out, they're going, hey, call Tony or Scott. See if
I know I'm a backup player for golf, and when they go to EJ's, if they need somebody else to pay, I'm a backup person then. Like, if Tom's taking the guys, then he just takes the guys. If Tom doesn't feel like he's going to take the guys today, he invites me so we can split the bill.
You know how it works. It's old school. The made guys don't have to pay. It's the other guys. Okay. You get invited, you know.
Oh, my God. That's so true. That's so true.
That's fair.
That's bad.
That's fair. All right. Should we get to some business?
Sure.
I'm done with EJ's for a while.
Oh, no. What happened? You
I had a good meal there the last time I was there.
No, the last time I was there was great.
But
no, I'm just saying, but I've been there a lot. I feel like every time I go there, like
what happened? Wait, I want to hear this. Every time you go there, what? Something. I just can't wait to hear what this is. Because you're even going to criticize this place because you're so good at complimenting and then criticizing. You go, no, I had a great meal, but what's the but?
You want to know why I had a great meal the last time I was there?
Because you ordered something off the menu that was not on the menu. Go ahead.
No,
what?
Not at all.
What?
The reason I had a great meal is because I sat in the good room. When you sit in the good room, you get the good food. When you sit in the back, where Steve
When I got the reservations, did you sit in the good room? The night I ate with you, we sat in the good room, right in the middle of the floor. You guys had a nice view, you gavones, of the bar. You made the most handsome guy sit with his back to the bar, and nobody came over or bought you guys a drink. Nobody.
You don't know that?
I know that.
So what did you eat? What did you eat? Just tell me what you ate, and we'll know.
I had a veal chop with the peppers. It was delicious.
Is this the dinner that you asked them to cut?
Yes, they cut up his food fat. Yes, they did.
Was that Donnie or JJ?
We don't like to talk about it on the show, but
JJ.
JJ, cut it, slices spaghetti.
JJ is a little basic. Yeah.
All right, so if you're not going to go to EJ's, where are you going to meet everybody in the suburbs? Or this is just your way of saying, I'm not meeting you.
I want to go back to Carson's in the suburbs with the big pork chops.
And the chicken wings, the chicken wing appetizer. You remember when you had it with me, you said it was the best chicken wings you've ever had.
Good, but I prefer their...
Don't say you prefer anything, because I'm going to go over and I'm going to give you the back of my hand. You ate them like a... I was going to say something, I'm politically incorrect. You ate them
Would you
like
text me
like
that?
if somebody's hand came by, you were going to
Could you hand me that politically correct?
I'd like to... Will you text me that? I want to hear what that was.
I was talking about somebody who doesn't have a filter. Who were we talking about earlier today? I said he doesn't have a filter. Oh, the CEO of Palantir. And somebody wrote into me, like you had our judgment on telling somebody they don't have a filter?
Yeah,
you're the filter. I only say half of what comes into my brain here.
You should write the other half down so you can publish it. Okay.
We used to have people like you. You know, we had a couple of guys like you over the years on the trade desk and stuff. You had to write them down. I don't know anymore who's out there without a filter.
You know, if somebody said to me, who has no filter of your friends, you're at the top of the list.
I'm the guy?
Yeah, you're the guy. And now you're only telling me it's half? I need to hear the other half.
I can respect that.
Yeah.
I can respect
that. Yeah. I have a filter.
By the way, just not to stir the pot, but Jenny have some choice words for you yesterday?
I don't think she heard the conversation, thank God. Yeah, she came on, we talked, we had a little conversation.
Really? We could send it to her.
No, we don't need to. Don't need to. They got a good thing going over there. They don't need our help.
All right.
Fine.
All right, top 15 symbols going through the system. First 40 minutes of the day, no broad-based indices or futures. Time for you, number 15, MSTR at a 20. For everybody else, PLTR at a 39, HIMS at a 51, Tesla at a 30, GLD at a 63, Apple at a 33, NVIDIA at a 33, AMD at a 40, Meta at a 22, Amazon at a 27, Microsoft at a 21, TQQQ at a 38, Ford at a 21, TLT at a 41, DDOG at a 28, and number 15 for Tom, MSTR at a 20.
DDOG, I haven't heard that stock in a while.
Rounding out the
Where's
next.
that trading? Hold on one second. We're testing this.
You know what? I'm not going to disrespect my friend who's talking. I will let him finish his conversation, and
I only have 3 more symbols. And rounding out the next 10 while Tom's looking.
What sneakers are you wearing?
We had this conversation before the show started.
I didn't have this conversation. I didn't see it until right now. What pink sneakers are those?
When you say what pink, like whose? They're mine. They're P448s. What else can I tell you? They had a nice life. Okay, what else can I tell you about them? What's the bottom look like? Are they pink?
Very nice. We're the same brand.
I love them, Scott.
Thank you, Beth.
I don't like the pink sneakers.
You know what? I don't care.
I'm just saying. I don't like them.
What's wrong with them?
They're pink.
Yes, that's why I bought them. I like the pink with the white. Thank you, Beth.
I like
They're
them too.
awesome.
I can't carry it, but I like it too.
I actually wanted the all pink.
Oh, you could not carry them.
I can't carry it, but I have the same brand. I
have like 20 pairs.
Blue ones.
You're just noticing my shoes. I have like 20 pairs of P448s. They're all different colors.
I don't know what P448 is.
It's like Adidas or
No,
Nike.
they'll be in Nordstrom in 12 years. Nordstrom rack, and then you will see them.
P448?
Yes.
I was an early adopter. About 6 years ago, I got my first pair.
P448. Never even heard of them.
Yes, you can surf later. That's what it says.
P448.
Okay, here. Do you want to see the back? Because you clearly don't understand. What does that say right there?
Can't read it.
P448.
He doesn't have his glasses on.
Oh my God.
Can't read it.
Do you want to show your shoes?
Yeah, what are you wearing? Motorcycle boots.
Why don't you lift your leg? Let's see.
I'm wearing Doc Martens.
Oh, you might be wearing Doc Martens. Motorcycle style?
Yeah.
Did you ever have a motorcycle?
What?
Did you ever have a motorcycle?
I wasn't allowed.
Smart move by your parents. I was never allowed, but it was self-imposed.
Well, I made a deal.
Tony, you have one?
I've had a motorcycle. I have a motorcycle license. Yes.
Yeah.
I made a deal with my mom.
I got rid of mine when I started making money, though, but now my kid has one.
Which one?
Vinny.
Too many
I wouldn't
crazy,
let him have one.
Yeah, too many crazy.
I know,
there's too
I know,
many
it was a
crazy,
big moment.
too many crazy drivers.
Yep, I know.
That's the problem. I mean, I wouldn't worry. Like if you're on a road and you want to go do it in the city, you gotta be out of your mind to ride a motorcycle. What'd you make her do with your mom? You wouldn't get a motorcycle if she what?
I forgot what I got, but whatever I got was way.
He got a tricycle.
Not
That's what he got.
No, I
He
didn't get anything.
You were a big kid on a tricycle.
You didn't get
a
what?
three-wheel
so you wanted
tricycle.
one, like a little whatever when you were in high school.
No, I didn't want one.
Oh.
I didn't really want one.
But you made a deal you wouldn't get one if.
Made a deal I wouldn't get one. I can't remember what the other side was.
Great story. It's one of your finest. I made a deal with my
Every
mom.
kid in the suburb has one of these electric motorcycles now. Every kid.
Just like scooters to me make no sense. I mean, just then you hear people, oh, I fell off, I broke my collarbone, car cut me off, they opened the door.
I hear you.
I mean, I have to
Well, they're
say,
supposed to be on the sidewalk, and that's our rule.
not in the city or not.
I don't know about your city, okay? Your shitty is your deal. We go in the suburbs, we're on the sidewalk.
Those are dangerous.
That's dangerous on the sidewalk.
Very dangerous
How
everywhere.
about the two people in Winnetka that were killed? The mother, daughter,
Yeah, they were walking.
walking with a stroller. And somebody
by a young kid. I
was a young kid, but an epileptic
They should never let those things on the sidewalk.
ever. I agree with Tom. That's bad. How fast do they go?
What you got?
18, 20?
40.
They go 40 on the sidewalk.
Yeah.
Okay, well, that's idiotic. Why don't you just drive your car on the sidewalk?
And then they're just going to get hit
when
by
when he gets his license next year. That's next. That's next.
No, I'm sorry. That's
you guys are you.
That's not good parenting.
That's not good parenting.
No, not that we're judging, but that's not good parenting.
Yeah.
You can't. I'm sorry. You can't have a
You too.
You can't have a motorcycle going 40 miles an hour on the sidewalk when people aren't paying attention.
A car can do 120
in the
doesn't
street.
Do 120 on the road. Does
In the
it?
street. You've never gone 120?
Yes, on a motorcycle.
See, that's why I would never have a motorcycle. Because if I had a motorcycle, I would have bought one of the really fast ones, and I wouldn't be here.
I had a Kawasaki.
Yeah, I wouldn't be here because it would be so much fun. I love speed.
Yeah, I know.
Yeah.
Not my most intelligent thing. I got it. Don't do as I do.
I can't believe his mom lets him get away with that.
Yeah.
She doesn't
I know.
know. There's
It's
no
a
way
bone
she
of
does.
contention.
There's clearly pedals on it, and he uses the iPedal.
Oh, this one has no pedals. The old one had pedals. This one doesn't have pedals.
She's getting soft.
He wears you down. And we're old. He just wears you down. I mean, he's like water on a rock. He just wears you down.
Please tell me, please tell me he wears a helmet.
Yes, a full facial helmet, but yeah. Hey, listen. We used to ride out, well, maybe not you two, but we used to ride our bicycles and jump over children. Okay?
Jump over children?
Yeah. You never made a ramp and jumped over children?
No.
Are you serious?
Never.
You never made a ramp.
And I lived on my bike.
You're a Schwinn.
Yes, I jumped, but not over kids. You just added ramp.
Yeah, you put people there. And the kid you didn't like the least, you put him at the end. You guys never did that?
No. That was the Moskowitz.
Are you serious?
Wait, Moskowitz went at the end?
Really?
Never. Hey, Beth, is this a suburban thing here? Would you ever let your kids jump over other kids? No.
Jumping wasn't my thing.
No.
No. How many people?
You guys never did the Evel Knievel thing?
How many people could you possibly jump over on your bike?
3 was probably the limit, but we always put 4 kids out there.
My kids were biking over the mulch yesterday.
What's that?
Mulch piles.
Mulch piles. Yeah.
Say it again.
Jumping over a mulch pile.
Mulch.
Mulch.
Okay. Yeah.
I grew up in Brooklyn. There was no mulch. Mulch.
It's safe.
It's mulch season right now. The gardeners are coming out.
Oh, I know. I saw her husband with the. No,
Beth will have like a.
She has her goy doing it. They had a truckload.
Wait a minute. You have your goy does the mulch?
Oh, mulch day is like Christmas at my house.
No.
Oh, yeah.
Wait a minute. Does he go haul the bags or somebody drops them off?
Oh, he drops off like a whole truckload. No bags.
They just drop them off.
Yeah.
Drops it in the driveway.
And that's
hey,
like,
let me know if he's a professional. Did he put a tarp down first?
No.
Ah, you see, that's rookie move, dude. That's rookie move. You have to put a tarp.
Not if you know it's going to rain. Rain washes it away.
It doesn't. No,
I used to
you
do
want
my
it so you
mulch
can move it
until I realized other people will do mulch for you. As soon as I figured out that other people will do the mulch.
There's other people will do pretty much anything you want.
I didn't know that for most of my life.
Every year as a workout, I would get a full pallet, put it on the truck.
A full pallet of mulch.
We needed
You
it.
need a lot
Full-
for your
full
yard.
pallet
I'm
of
sure,
bags
I'm
from
sure
Home
your
Depot.
landscapers are putting mulch down right now.
No,
They did it a
landscaping didn't
month
get
ago.
paid.
They did it a month ago.
Okay, a month ago. Yeah, we have a slight out trade on
Did you
that
see
one.
Hims? I
We do-
want to
we
get
have a
along
slight.
Hims. It's up $4. You stink.
We have a slight out trade on that one too.
What do you mean?
You know, a couple issues with the landscape at the house we don't live in
You
anymore.
have a problem too? What's
Well-
with you guys? Why don't you just pay?
It has nothing to do with paying.
It does with Tom.
The 6 has a couple issues that
Hmm?
you know.
Oh, put those pictures up, Beth.
No, we're good.
Are you done with your list?
I think I don't.
You want me to come over and do the mulch at your old?
You know what? You could. I appreciate it.
Anyway, I'd have a whole pallet, and Vinny's job was to carry them throughout the.
Aren't they 50 pounds?
What's that?
Aren't they 50-pound bags?
No, mulch has got to be less than that, maybe 20-ish pounds if I had to guess. I mean, they're big bags.
Big bags, but I know
It's only bark, not that heavy.
manure.
But I mean, you make a lot of trips, it becomes.
Or you just get the truck that they load in the bag and they dump it.
That's what Beth did.
Yeah, they just dump it.
That's the professional way.
Yeah.
Better mulch too that way. The one from Home Depot's not that great. More rock, it's stone, more like woody.
Has he been like this all day?
All day. Can't.
We're gonna take a quick 90-second break and come back. Somebody's not. Ooh, Liz and Jenny, are they at the SIBO?
Yes.
Liz and Jenny at the SIBO next. Forget about us. Watch them. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Hi, my name's Angeline Ong. I'm the newest member of the IGTV team.
Well, I began my career at CNN Financial in London, covering everything from the financial markets to the European trading day. What I'm looking forward to working with IG is to be the best version of myself and to use all the skills that I have and help IG reach out to those clients out there who are, like me, looking to learn and are ambitious and willing to put themselves out there to learn more about a financial instrument they might not have ever used before. My philosophy is, if you're going to play, why don't you play big? Let's not settle. Let's try and learn more and become a real expert in the field that we are trading in. And that's what I hope to bring to IG in its strategy, in its content, and expand that across Asia, the US, and also Europe.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
And welcome to the Liz and Jenny Show. I'm Jenny, that beautiful blonde is Liz, and it is actually a pretty busy Tuesday over here. About 5 minutes ago, there was a roar that came from the pit.
That's because I dropped something, but that's okay.
I was trying to act like there was more going on than someone dropping a water bottle, Liz.
And it was a water bottle, it was a big loud bang, and the entire crowd went crazy. But yeah, no, we've had, we're only up 21 right now. We've seen
only up 21?
Yes, 21.75.
Oh, no, that's not good for our SPX trade.
No, it is not.
At 9 a.m.
I'm sorry, SPUs are down 21.
Down 21. You know at 9 a.m. SPUs are down 60. That's when we put the trade on.
Yep. Well, we're following the rules. We're following Jacob's rules. We don't have a Jacob study today. It is a Tuesday, so we're still getting our Tuesday SIBO legs, right?
Yeah, Tuesday SIBO legs. We'll see what comes on next Tuesday. We're working with our research team trying to come up with something earth-shattering to bring on Tuesdays. We'll see what they come up with.
Yeah, they always comply, so we shall see. But we do have Jacob's study tomorrow, so we don't have that today. We do want to talk a little bit about his study from last week because he's going to springboard off of it, right?
Well, because we've been doing it. We've been doing the trade. Yeah. So let's talk about the one we chose from last week's study that we've been doing successfully, kind of. Knock on wood, right?
Successfully.
They've all been okay.
Successfully, but like I said, and I'm gonna use your quote from yesterday. We have the tools, we know the rules, and we know how to break them because
we can choose to break them.
But my friend from the trading floor a long time ago, who's also on the floor official committee with me, is the one who told me. He used to call me Lizzie, so you know who it is. So he's like, Lizzie, you need to understand the rules in order to know how to break them. And I was like, okay.
Yeah. I think that's fair.
Yeah,
I think that's fair. So we're going to talk about that today. We're taking live tweets. Send a tweet, include the hashtag LAZJNY. If you're on YouTube, you can post on YouTube, and Frank the Great will share it with us via Twitter. What else do we have going on? I know there was something you wanted to tell me, but you said I'm going to save it for the show.
Oh, I thank you for reminding me. On SIBO days, just because I get very excited. I get up very early and I was listening to...
She can't sleep. She can't sleep.
I'm too excited to sleep on these days. So I was listening to the network that's on, another network that isn't us, that's well before 5 a.m. And they were talking, they brought on a specialist, and they're like, what shoe apparel would you buy if you had to buy one shoe company right now? And she's like, hands down, Birkenstock. 100%. I knew you'd be so excited.
Finally.
She's like, for sure, Birkenstock, 100% Birkenstock. And it was on the heels because Skechers just got bought or sold or something. So Skechers. Yes. And so they had a shoe expert on, and she's like, buy Birkenstock.
Okay, that makes me very excited because, as soon as Birkenstock IPO'd, it was the first thing I bought because my entire closet, this is kind of funny, and you should come over.
She only wears Birkenstocks. Get your leg up here. Let's see if we can get the gym shoe up here.
Maybe if I were at my home studio, but not here.
She's got Birkenstock gym shoes on, ladies and gentlemen.
Gym shoes. One of these days, and this is no joke, one of these days, I'm going to fall backwards on this chair.
You are.
Right.
I know you are.
Okay, my closet, it's so funny because back in the old day when we were young, it's like heels, like all these heels and wedges in the entire closet. I don't even wear those anymore. So now there's 2 small shelves with all my Birkenstocks just packed in there.
Oh, I'm getting rid of all my heels. I don't wear them anymore.
I need to get rid of
Yeah. Foot.
Yeah.
Whatever.
Liz broke her foot in a wedge.
Wedge?
Rolled it in a wedge.
A wedge.
And so that inspired me to stop wearing my heels and wedges.
Yes. And the doctor told me that is. I'm sure you guys love this at the SIBO. They love hearing this. This is like the time when I dropped an entire perfume bottle in the pit. I thought they were going to kill me because it shattered.
Oh, funny. Oh, it probably smelled forever.
Yeah, but nonetheless, so the wedges are bad for
Okay, so what did the doctor say?
Wedges, 90% of this break come in when somebody puts on a pair of wedges.
Yeah.
Yeah.
So that's when I switched. Not going to break my foot. And our other friend. So we're almost 50. Our friends are all breaking their feet wearing heels and wedges.
Yep. Not us. All right, but you know what? Let's jump into the platform.
And I'm going to go right to Birkenstocks. BIRK. Now, people say, oh, it's a little illiquid. Only 75,000 shares have traded today.
I was 5 of those. I'm just kidding.
I will continue to sell puts.
Wait, when are their earnings? Oh, May 15th, sorry.
May 15th before the bell. But it hasn't really moved much since it IPO'd. Let me take a look. Okay, it IPO'd and was in the $40 range. And now it's $52. So not crazy, nothing crazy.
Let's do a pre-earnings trade in there.
I just sell puts in there every month. Just keep selling puts in there. So the 50 puts, that's what I have right now. 50 puts in June, they're about $217.
How much capital? Oh, it's a lot of capital.
Yes, like typical margin.
It's 50% of the stock, right?
I know it's using margin as if you own the stock. If I owned 100 shares at $48, the margin on that would be like $2,400. It's close to it, $2,100. It's higher margin than usual, but I still do it. I still do it every month.
She has the tools. She knows the rules.
And I choose to break them. So, okay, if we don't want to use $2,000 to sell the 50 put, what I would do is buy the 40 and create a $10 wide spread. It's not like, oh, I'm trying to get a third of the width on this spread. It's just, I want to sell that put, but I don't want to use $2,000.
Ship it.
We're in.
Press that button, sister. Okay. So I figured you'd be thrilled with that news.
Yeah.
That was the breaking news story of the morning.
Yeah, I do, because they're everywhere. You went to Germany. Did you go to the Birkenstock store in Germany?
Everything was closed. I went to Germany and everything was closed.
They wear them.
The only thing that was open was the Red Bull factory.
Really?
And it's not in Munich. It was on my way to Hallstatt. Was the Red Bull factory.
I didn't even know it was from there.
I didn't either. I could never look at Red Bull the same.
I didn't know it was from there. Oh, and we're filled immediately. And maybe I didn't even lock the price. And I was just so excited to sell that put spread in Birkenstocks. All right, but this show is really, I know what I'm going to do when I get home today. Throw out all the heels.
It's very inspirational.
I don't even need to throw things out anymore.
Listen, when I would put a pair of heels on, it was like comically funny how tall I was.
Yeah, you don't even need to be in them.
Yes, it's comically funny. I'm taller. I will be the tallest person in the room, even in this room, if I put on a pair of heels.
Yeah, you probably would be.
Me and Jeff Gerke.
Okay, so, but that's what I'm going to do. Just replace my heels with Birkenstocks all over my closet in honor of the puts. And then it reminds me to sell the put every month. You see them? Sell the put every month.
You see Birkenstocks all the time. So every day you're going to have 1 million puts in your account.
I used to have the
stock.
stock.
Chat would like to see your shoes.
They're just gym shoes.
No, I don't think you can get your leg up that high. Can she get her leg up? She's going to fall backwards.
I'm not going to even take them off. They're gym shoes. They're new. They make gym shoes now.
Yeah.
Yeah. They're brand new. Birkenstock gym shoes. They keep coming out with new styles. Although I will say, this is what can be a little concerning to me. If you pop out the side over here and you look at the overview, you've got Birkenstocks of market cap. Oh, it's not on here. It's not written on here. Anyway, if you look at their market cap.
Wait, Jenny, I think if you popped that left side in, you'd get more room over there.
Okay, let's see.
Let's see. Nope, I lied.
No.
Totally lied.
Okay, well, anyway, their market cap is like double of Crocs. Does that surprise you?
No, Crocs are out and Birks are in.
Worth company valued at twice as much as Crocs?
I mean, but life cycles of things. Okay, so this woman was also, I just gave you the highlights about the Birkenstocks, but she was also talking about how everything is cyclical. Everything, all these companies are so cyclical.
Okay. Well, I don't know. I mean, I wore Birkenstocks in college.
Yeah, but then the stock was probably really low for
it wasn't even
between college and now.
It just IPO'd a year ago.
Everything is cyclical. She was even talking about like how Louis Vuitton is like kind of.
Is it out now?
It's cycling. Like she was just saying, different things are cycling.
Tell me more.
You're gonna have to. I'll send you the clip.
All right, Skechers. So this was in the news. Skechers is being taken or bought or taken private or whatever. So let's take a look at. Market cap, 7.4 billion. Okay, Skechers.
Okay.
7.4 billion of Skechers. Crocs, 5 billion. Oh, and then I think Birkenstocks was somewhere like 10 billion, something like that.
10 billion.
Sell more puts. All right.
Okay, we have some things to do. It is earnings season extravaganza show today. We're going to take a look at 3 things that had earnings. We had something in Ford. It was a longer duration. Ford had earnings. We have to take a look at Palantir, and we have to take a look at we're going to look at HIMS after, but I don't know if we're going to do that anymore, right? After
yeah, I don't know that we need anything in HIMS.
Okay.
HIMS, the buying power in HIMS isn't great either.
It's not.
Okay. So here I'm in the platform. I have Ford pulled up. We had the 985 puts. We sold them for 56 cents. We're up 55%. Now, that's June.
I'd roll them up.
Yeah, maybe, right? If we want to stay in, let's see what we can get.
You got 50 cents in. Oh, never mind.
There's nowhere to roll them up to. You would have to then turn it into a synthetic covered call.
And you're only getting the same amount of extrinsic value, so I would not do that.
Yeah, I think it's unfortunate. There's not a lot of premium in here. When we put these on, getting 56 cents on the 985 was pretty good.
It was pretty good.
And so now, the rank is only a 19. I guess we just close it and keep an eye on it.
Close it and move on.
Close it, we'll keep an eye on it. I still have my Ford stock. I'm not out of that. But what do you do when I have a handful of positions where I have long stock and there's no premium in there to sell?
When you've got a $10 stock, that it becomes an option. I don't consider, you're not going to get a lot of premium in a $10 stock.
Yeah, I'm not selling, maybe I could sell those 11 calls for 20 cents.
I don't need 20 cents that way.
I guess so. Okay, then we'll just take a look at these because they were earnings and we didn't put them on. HIMS was down yesterday after hours, after earnings came out, and it's up $4 now. And I want to say it opened down this morning.
It did, and it was down last night too.
Yeah, and opened 38. It's up to almost 46. So kind of had a big reversal.
PLTR took a huge hit.
PLTR.
It's down. What percentage is it down?
It's down 11 or 12%.
Yeah. So this was fluctuating. This was down 7 or 8 this morning before the open. It's continued its plate down.
If I were to look at something in here, maybe it would be a downside ratio spread.
This has a lot of capital required. That's the only reason I lean towards diagonals in here. This has a lot of capital required to it.
I know.
So
the rank kept its wings up, and we kind of said we can do an after earnings trade. The rank would probably stay high if it did fall, but again, to your point, it uses a lot of buying power.
And we kind of looked at it, so we can spread it up. So we're going to get $1. I would rather risk, my 500 or 800 or whatever in there in a new earnings trade.
And something else.
Something else.
It doesn't. Right. So Liz's point. What are we going to do? Get $1? Oh, but let's take a look at this calendar. We had a calendar. Let's see if we can get anything for it. Let's just get out of it. We paid $1.15 for it, and it says it's 64 cents. So let's just save ourselves 65 cents.
That's not nothing.
No, I'd rather save ourselves 65 cents and get out of that. So I'm working that, trying to close it.
And you don't want to keep that on. I mean, there's no reason to keep that calendar on.
No, I mean, what do we think? It's going to come skyrocketing back to 124 next week?
Seriously, and there's a chance. Maybe. I mean, Palantir has had violent moves like that, but we put it on if it's worth 64. If it was worth nothing, if it was worth a dime, I'd say just leave it.
So did we do any earnings trade yesterday?
We did PLTR, and that was it.
Just a calendar?
Yeah, that's all we did.
That's all we did?
Yeah.
Now and then that ADM was another one. They had earnings, and that's up a little bit, $1.19. That was the one that actually had earnings yesterday. AMD has it today.
AMD has it today, and we're going to take a look at that.
Okay, so I guess we don't have anything in here to manage. Nothing.
No, we don't. So we are taking live tweets with the hashtag LIZJNY. We did want to go over one of Jacob's slide studies because we are doing that trade.
Should we save that till 10:30?
10:30.
Because we'll talk about that. We put it on. We've been putting them on at 9, taking them off at 10:30.
Correct.
So we'll take a look at that at 10:30 because we could look at the position that went on at 9. We have, if you take a look at Twitter here, there are so many people now putting on
the Jack Tucker.
Putting on the Jack Tucker. So good luck to everyone.
That makes me so happy. And new tweeters, I love it. And you know what's great about doing this? Oh, see, Jack Tucker inspired. The GOAT, Jack Tucker inspired. So this is interesting because, and I love this because people can still talk to each other. You know what I mean? When you're putting this up, Jack Tucker wants to comment, or you can comment on Jack Tucker's. Like, you can actually, I love that there's some type of, you know, you can
and you're
talk to
right.
people.
And this is from Eric, also known as Blue Wackadoo.
Love it.
Love it, Eric. Good luck. Good luck. Hopefully these all work out for everyone. Again, at 9 a.m., SPY's down 60. Now they're only down 24. So we need a little dip down in the market.
Yeah, they're 56.47 right now.
And here we have DK who put one on as well.
Yeah.
Okay.
Okay, so as someone who's been here before, literally been exactly here before on Friday, I'll let it go. We'll talk about that at 10:30.
Right.
We're gonna put it. We're just
gonna
like
put it.
what office space? We're gonna put a pin in that one.
And we'll in 15 minutes we'll come back to that. As far as earnings today go, take a look at this list: SMCI, AMD, Rivian, ET, ANET, Upstart, Wynn, Uber, Disney. The list goes on and on and on.
Novo Nordisk.
NVO. Let's see.
Frank, your nephew's walking by.
Hey Jeff, you want to come on the show?
Yes, Novo Nordisk.
Novo Nordisk. I've never traded this. Have you?
I have. I mean, when I say I have, it's been for earnings in and out. I just know that I know the symbol.
Yeah.
I can't remember.
Maybe
I can barely remember my anniversary, but if you give me a stock symbol that I traded and lost money in, I'll remember it.
So, a $4 expected move for a $66 product. That's decent. I'm just curious to see what the buying power is. Not bad.
Not bad at all.
No.
So, okay, let's talk through a couple scenarios. We're not going to do, maybe we'll do the same thing in all of them, maybe we won't, but just a discussion point right now. So Novo Nordisk has a 64 rank. The implied volatility seems to be keeping its wings up across the board.
Yes.
We were talking about that today with the VIX. Puts have been helpful. Diagonals have not been
helpful, right? Diagonal, you need it to go up
or down, whichever direction you pick.
But these short puts, you're getting yourself out of the way of the move. Even in Palantir, what was the expected move? You were out of. I think
you would have been out of the way.
You would have been out of the move.
Yeah,
you would have been out of the way.
It was pretty wide. Right.
So puts for earnings this season, and it's crazy how times change, right? Like in the start of the year, we weren't selling naked puts for earnings because we said we weren't going to get taken down by one earnings trade. And now we have gone back to selling naked puts on earnings.
Well, because even if it goes down, so TP's in my head, puts are neutral too. I forgot to call him yesterday. I know you're out of
Why
town,
do you have to call TP?
Because you're leaving me.
Oh,
Not for good.
Memorial Day.
Not for good, just for 2 days.
Memorial Day weekend.
Yes. Puts are neutral too. And that's good because if you can get yourself out of the way, but in high price products, like so Palantir was only down, what, $14? And you were right at the expected move. That we're not talking about something like that. But what moved out of the way? XYZ.
Oh, XYZ did by a lot.
Why the heck did they change their name to XYZ? It kind of makes me mad.
It's annoying because when we talk about it, I feel like people think we're talking about some example. Like, hey, in XYZ, we did a downside ratio spread.
It used to be Square, SQ, and they moved it to XYZ.
It doesn't make any sense.
No.
Maybe that was the first mistake.
Yeah.
I'm not sure. But I'll tell you.
It is pretty funny, though.
Okay, so as far as Square goes, it's a little bit of a funny story. As far as Square goes, that's when you pay with that little square on people's phones. Last week was the first week that Liz and I learned how to use our phone to use Apple Pay.
Nerd alert, that's us. Nerd alert. And then I got a congratulations from my 17-year-old being like, good job, Mom.
So we never needed this before. When we worked at Tasty Live, they just cater in lunch every day. Now that we're here at the SIBO, we actually go to a cafeteria, and you have to pay at the register. And we were watching all these people just tap their phone, tap their phone, tap their phone.
I tap my card, but I got to go get my card.
Yeah, then we're like going through our bags, digging out our cards, trying to find a way to pay, and we're watching all these traders just tap their phone, and we look like two fools out there who don't know how to tap their phone to pay for something. So we had to learn.
Nerd alert.
But we got it last week. We were so proud of ourselves. I tapped my phone, paid for our lunch. We were high-fiving.
We're going to do it again today.
And so, on that note, do you want to get long apple? That's the right? Isn't that just the Apple Pay?
Done and done. I'm long Apple. Hi, my name is Liz. I've been long Apple for a long time.
Let's see.
Let's see what Apple's doing today, because I think it's taking me
barely moving. Barely moving.
Oh, that's good. It's unched. I'm good on that.
What do we have? We have something here. Oh, we have a put spread. The 205. Oh gosh, don't remind me. That's from last week's earnings trade. Why did I even open it?
And because she's saying this, because it on Friday it closed at 205.35, so this would have been a full profit.
It would have been a full winner. Yeah, not a full winner, but not a. And now
it would have been full because our 205 is our short strike.
No, but we sold the put spread to buy a call spread.
Oh, it would have been a loss.
It would have. Yeah.
Yeah.
Now I'll have to keep looking at this for the next 10 days.
Yep.
If we were to put a new bullish trade in an Apple, we'd probably go to.
These are only down 222. They're
not
right
good.
there.
Not good.
No, we've got a lot of stuff to do. So I understand why we're getting bullish Apple because of our victorious iPhone payment.
And I pulled up, and we do have a lot to do. I pulled up a $5 red put spread for $1 in June, and I know Liz hates those, so I'm just going to delete it. You tell me.
It's the right thing to do. So the rules are a $5 red put spread for $1. Actually, TP would say you need to bring it up and collect a third.
It's too high. We're not. It's like too high to bring it up.
That's what I think, and I feel like. Do you remember when we were in the old studio? I think his name was
JR.
No, Roger or Ron. He was a viewer. He came in and he's like, these calendars. It's like a slow bleed.
Oh,
I can't do it anymore.
That was Robert. I think.
And that's how I feel about these
that was I believe Rob from Colorado.
Rob from Colorado. And that's how I feel about these
$5 ride for $1. I get it. And 45 days seems like a long time to wait. I hear you. That's why we love the weeklies and the earnings and everything. That's instant gratification. Okay, so I'm going to go back. You steer me back to earnings.
Let's jump into the Twitter and we'll take a look at it again.
SMCI, which we said they've got their margin is
too high. We want to take a look at. Let's let the cat out of the bag because I think at 10:30 we got to take a break. Not take a break, but go to something. We want to look at AMD. I want to look at Rivian.
Maybe Upstart.
Uber.
I know you hate Win.
I'm not a fan of Win, but I don't mind it.
Uber,
Disney.
Maybe Novo Nordisk.
We did look at Novo Nordisk. I like it. I mean, I've been in Novo Nordisk.
We went in it. It's not bad.
It's not bad for markets. It's not bad for that kind of stuff.
Okay. All right. So AMD, that was the first on the list. Earnings 750 expected move, 39 rank. Earnings after the bell today, and I like when they're after the bell because I thoroughly enjoy at the end of the day. Shows are over, market closes, but I sit there with my coffee and my computer. Wait till 3:05 for the earnings to start rolling in and to watch the stocks.
I talked to her yesterday. I was like, "This is my favorite time of the day. Let's see what's happening."
Let's see. It's like I get a snack. I'm watching. It's like I'm watching a movie.
Yeah.
Wait for everything to start moving.
Okay, so I do like them after. I like them after the bell instead of before the open.
Oh, way better.
Yeah,
way better.
So if I owned a company, I would do it after the bell.
I agree.
But you know what makes me even more mad though? I like them after the bell, but I like them at 3:05. I don't like them at 4:30.
Oh my gosh! If they're at like 4.
Apple.
I don't know why they do it so late.
Apple does it so late. Yeah.
Okay, AMD. We could either do A, downside ratio spread, B, Jade Lizard, C, just a naked put, or a strangle. I don't know. I mean,
okay,
honestly,
I'm leaning towards Jade Lizard or strangle, but I'm just going to go through my thought process.
Okay.
So if you're just selling a naked put, I want to get $1. So if you're just selling a naked put, you're going to go to 90.
The 90.
If you're selling the Jade Lizard, you can go to the 85, which is pretty far down.
The 85?
Yes.
No.
No, I'm sorry. I can't see that far. 88.
88.
Okay. But
still, then your break even's down to 87.
Yeah.
Not bad.
Yeah.
Not bad. We haven't done a Jade Lizard in a long time.
Do it.
We're bringing back the Jade Lizard. I honestly, when was the last time we did a Jade Lizard?
I do them in my account all the time. I do them around stocks.
Oh.
So
that's a good idea.
They're great around stocks.
Because then if the stock goes up and it blows through the call spread, who cares? Glad you have a jade lizard instead of a strangle.
Yeah.
Yeah, that's
I do
clever.
jade lizards on stocks.
Very
Thank
clever.
You. Thank you.
I just sell strangles around my stock, and then when I was running through the calls, I buy them back for a loss.
Jade lizards are the way to go.
All right.
You don't get as much on the call spread, but it's fine.
Selling the 88 put for 70 cents and selling a dollar right call spread, maybe this 106, 107, gets us just shy of $1.
Yeah, that's fine.
And using only $900. And so when we talk about getting $1, getting $100 and waiting 45 days in June, or getting $1 and this is going to come off tomorrow, sounds a lot more appealing.
It's hard. Call spreads are hard. I think we say
The
this all
spreads,
the
the
time.
put
We're
spreads.
a broken record, but anytime you can start trading naked options, it becomes
It's
a lot more.
easier.
It's a lot more fun.
It's easy. It's
easier.
It's easier, but you have more risk, right? So what is our risk here? Getting long 100 shares of AMD at 87. 100 shares.
And how will we lose $400 like we would in that spread? Is if it goes down to what, 83? Yeah.
83.
Yeah.
Yeah. Could it?
Sure.
Has it been there before?
Yeah.
Yes. I mean, you look at the chart in AMD, and you think, oh well, it's down at the bottom of the range. Well, not really. If you want to go this far, it was $25, $30.
Yeah.
In 2020.
But
2021.
you can make any data look anything that you want it to look like. I'm okay with the Jade Lizard AMD.
I'm
in favor?
I'll take my chances. I'll tell you our chances. It was only down 17. All right, we're going. So then we have a choice. At 10:30, we have a choice of taking the loss on our SPX.
Not doing it.
Jacob's breaking every rule.
I know.
All right, I'm going to sell the 88 put and the 106, 107 call spread, taking 95 cents, so $95 over. We want to get out of this trade tomorrow, one way or the other. If it's a loser and we're rolling our put out, we're rolling our put out. If it's a winner, it's off.
Yes, correct.
One day trade. Or it could be a lifer. If AMD plummets, this could be a lifer.
And I'm not trying to throw something on you because I know you're running everything today. You didn't pull up tastylive, did you? tastylive.com?
No, I did not.
Okay. But if you do go to tastylive.com, go to On Demand, Liz and Jenny Strategy
Yeah.
Series, you can see us walk slowly through what a jade lizard is. We haven't done one in a while. That's the only reason I'm saying that.
We haven't. And so, again, the jade lizard was created back in about 2012. So can you believe it's that old?
Yeah, it was 2012 and it was done on Facebook. And I believe Facebook was about $40.
Yeah, I think so.
Yeah.
All right, so that's working. That's working. Next up on the list would be Rivian.
So Rivian is tough because it's such a low-priced product, and now I'm just in Rivian.
Okay, here's the thing. I'm a fan. I'm a big fan of the Rivian trucks. Every time I see one, I think that's a sharp-looking truck.
I think the same thing, and it just reminds me of my mom because I kept telling her I liked the Rivian truck. And then we pulled in, one of the last times I took her out for breakfast, we pull in and there's this jacked up pickup truck that was a Raptor. That was the name of the pickup truck, a Raptor. She's like, isn't that the truck you want? I was like, no!
Well, Lily and I were driving. We were on the phone. Lily and I were driving to go shopping over the weekend, and we saw quite a few Rivians, honestly, on the road. And I said, Lily, I think that's the next car I want. And she's like, I don't want to drive that, Mom. It's too big. But
They're big. I like a big truck.
I like a bigger car, so I would be happy with it. So I'm biased because I'm a fan of Rivian, so I always have a position on.
Yeah.
Typically short puts. And honestly, short puts in here have been okay because it's been in a range for a long time.
Oh, I don't think it's
moved.
I don't think it's gotten out of this range in a year.
Oh, you could see.
No,
Here's
but the range is, I mean, when you say that, that looks like it's a violent range.
Yeah, it's $10 to $14.
Yes.
It's not a crazy range. No.
Yeah.
It's almost like Intel, which Intel's been hovering around $20. Rivian's just been hovering around this $12, $13.
Yeah, you're right.
Yeah.
I don't like it.
Well, I mean, so all I'm doing in Rivian, probably selling these 13 puts for 49 cents.
That's fine. You're in the 3 days. So what's your worst case scenario? You're long Rivian at 12.5.
Right.
And you're doing a one lot, right? How much capital?
Well, yeah. I mean, we only have one lots here. No,
I know, but you can do a multiple. The
okay,
capital's
so
what,
it's 486.
Yeah, that's not bad.
No, if Rivian drops and we're long it at 13, I think what was the lowest we've seen at 6 or 7?
That sounds about right.
Yeah. So, and earnings might not be good, but so what if someone wants to get in this but doesn't want the risk of a naked option? If I'm in that scenario, then I'm just going and giving up a little bit and I'm just buying a call. That's what I would do. I would buy a call, like here you're giving up 18 cents, buy a call, and your risk is 174, then you know your risk.
And this is why a lot of people start with buying calls. Now, I like the selling puts, and I know you like to start with selling puts because that's the equivalent to being long the stock. Where here, you're actually, it's not bad in a low price product, but you're in the 3-day.
Well, this is just an earnings play.
Yeah.
It's not a long-term play. It's an earnings play. It's, okay, if I want to get, if I like it and I want to be long, they have earnings. This is defined risk. I'm paying $177. Yes, I'm giving up 18 cents in extrinsic value, but if it goes up on earnings, I'm in it. Versus...
no, but this is one of those where if it doesn't move, so we talk about this. If you sell a put and it doesn't move, you're still keeping all your profit, all your extrinsic value.
Oh, yeah.
If you buy this and it doesn't move, you're probably out $10.
Well, and if it goes down to 13, you could still make $50 on the put. If this goes down to 13, well, then you're out $70.
Yeah.
But this...
So I do think this is where the kids these days are starting, is in the money or even out of the money calls. So lots of people are taking a chance. Like if you look at Rivian, I know a lot of people will be like, oh, if Rivian's going up, I'm going to buy a boatload of the 15 calls.
And it needs
like
to go up so far.
Yeah, if you're spending 174 on the 12, if you're spending 174, I can do,
instead of 174, I can do
I can do 7 of those, 7 of the 15s, and then if it goes up,
and I don't like that.
I don't like that.
I would rather just do, a smaller size of something in the money.
Yeah.
Right. What's going on?
No, Anita just came back. I was waving to her.
Thought you were getting some kind of signal.
No, I was like, hi, Anita.
So I think if I'm looking at making an earnings trade in Rivian, these are my choices. Buying in the money call with very little extrinsic value, or selling out of the money put.
Yep. Check.
What do you want to do? And honestly, sometimes what I'll do would just be like,
I'll do both.
Maybe I'll do both.
I'll do both. You're using $660 here. Yeah. I honestly do the put because I don't mind being long the stock. We'll just roll that put into perpetuity.
We'll do the put. We'll just...
And we'll roll the put into perpetuity.
All right. We sold just one 13 put in Rivian, $49.
Yeah.
Okay. Next, 10:30. We're going to take a break from earnings, even though we have a lot more to look at today, and we're going to talk about Jacob's study. So here was the main slide from last week, our takeaway, what we've been doing. This is selling this iron condor at 9 a.m.
No, this is Jack Tucker-esque in the fact that a little bit.
His are $25 wide. This was $30 wide.
Farther out. Like he goes farther out, meaning like bigger delta.
Maybe a 20 delta.
20 delta.
This was selling 30 delta strikes, making this spread $30 wide.
Yep.
30 delta strikes, $30 wide. This morning at 9 a.m., we put it on and collected $11.50.
$11.55 is what I've collected in here.
Oh, $11.55. You got a nickel better than me.
Got a nickel better than you. That's correct.
I only got $11.50. And with SPOO's down 19. Okay, so SPOO's are down 60. So with SPOO's down 19, how much of a loser is it?
$578.
Ooh. So our choice is, which this is, close it at 10:30 or 25%, which would mean close it now. Close at 10:30, which means close it now.
Or close it at noon.
Or close it at noon. So
or leave it unmanaged. Wait, what did unmanaged say? $219 in profit?
Negative. You're missing the negative.
I can't see the negative.
There's a negative.
In front of it. I was like, I'm leaving it.
Negative. So we don't want to leave it unmanaged.
No, I did that on Friday. I was in this exact same
That was
scenario.
like luck. That was very lucky.
And I sweated it all day. So here's what I was going to say about this. This is the hard part about this trade. So we collected $11.55, and my short strikes are the 56.15. So
let's take a look. It's the short call that's getting tested.
Yeah, just the short call. So the 56.15 is my short call.
56.15.
Which is pretty far down.
Yeah, right.
Yeah, 56.15. But I collected $11. So that brings me to 25. 56.26
is your break even, which is right where we are.
Which is right
where
we are.
Or no, we're at 56.30. We're at 56.
No, but I mean, right there. So you get a small downtick. It's at my break even. So it happened to me on Friday. Not that I don't, this isn't, keep in mind that negative 219 that I couldn't see the negative. I was like, what are we doing? We leave
it on until the end of the day.
That happens because if you're doing them all the time, you're going to come up with some big losses. This wound up being a $120 winner at the close.
That was Friday. That was one day.
But like at the close. So
but if you look at the study, that's not how it's not how it plays out over time.
No, but my problem was, and I'm very similar right here. Now it's like a $505 loser. The problem is looking at this, I didn't want to lock in the $500 loser. I was willing to take my shot to risk it all.
But then you're risking 20. What?
1,800.
They're 18. Oh, that's not terrible.
I know. That's what I'm
Then
saying. It was like a $700 loser and $1,800. I was like, I'm not
gonna take $500. I'll just take the chance of the
yes,
$1,800.
because when you look at this is a $500 loser. But if we get a point or two down, back under my strike, I'm back. I'm back, baby.
Tell me what our put spread is, please.
The put spread is the 50s, 55.70, 55.40.
55.70. 55.40 and this wasn't in the study, but would you ever think of
not for 65 cents, because I need that right now.
5,600, 90, 80. Maybe I'll make it narrower. Would you ever think of moving it up? It's narrower now, 5,600, 55.80, and taking an additional credit?
Probably not.
Yeah, I don't. It's tricky. We just need
probably not. No, I don't want to micromanage the zero DTEs.
I guess. I'm curious to see what Jacob's going to bring tomorrow.
And I know we get a lot of newer viewers on a daily basis. This is the SPX pit behind us. These guys behind us are trading these markets.
Right.
These are the markets that you can see displayed all over. This is what they're doing.
And a lot of the orders go through electronically, but a lot of the orders come through on the floor.
Yes.
And what's the ruling on that? What goes electronically, what goes to the floor?
I think anything under 200 comes to the floor.
And if it's any order under 200?
Over 200?
Or if it's over 200. They're filling big orders.
They're filling big orders.
They're filling big orders. So maybe it's orders over a certain size come
over
here.
A certain size that come here. They're bigger orders.
Yeah. Yeah, because I could see
like mine, I guarantee you wasn't like KMQ to to TBK with the two people.
Right, and you can see the size popping up there, like 500, 550, 200. They're all bigger orders.
Yes, and so these zero DTEs in my mind, have been the biggest revolutionary thing that happened to trading.
Since they added puts.
Since puts inception. That's funny.
Right? It was just calls at first.
Yeah.
Yeah,
it was
they added
calls.
puts.
And I will say, I mean, he's probably watching because Tom does watch. He claims he invented the zero DTEs, doesn't he?
Oh, yeah, he does, I think.
Yeah.
I think he does, or the weeklies or something like with the weeklies. The weeklies. He doesn't claim he invented these SPX zero DTEs. I think he claims he invented the weeklies.
Correct.
Okay, see, here's a big.
So I hope they can hear this stuff behind us. But that's what we're talking about. So that now we're left with a choice. And it shouldn't be a choice because it should just be if this, then that, do this. And you can remove the emotion. It makes trading easier, but it is hard.
But here, even closed at noon or 25%, that's still a viable option.
I'm almost like if you get to the 10:30 mark and it's not a winner, I might let it ride till noon.
Right, that's what I'm thinking.
And I'm not going to put in a GTC at 25% at noon. That's the other thing I want to say. Once it rides past this 10:30 mark, I'm putting a GTC in for 10%.
Oh, I cut mine down. As soon as this turned into a loser, I cut my GTC down from 25% to 10%. And maybe I should put it in for a scratch.
You could put it in for a scratch. You could put it in for a small loss, however you want to do it. But yeah, that's kind of where we're at.
So anyway, that was last week's study. That now...
we know Jacob is adding to it tomorrow. That's another
reason.
Oh,
and this was sold at 10 a.m. And so we've been talking, bouncing back and forth on selling it at 9, selling at 9, 9:30, 10.
Can you wait? Go to the 10 o'clock one again. So
it's not as...
I like the 10 o'clock, 10:30 close, $19. But it's a lot of capital.
Or 10 o'clock close at noon, $38.
That's not bad.
Then you're leaving on until noon.
Yeah, I like a little bit later than 9 o'clock.
We have had viewers write in and ask for things from Jacob. I did send it to him. I don't know what he's coming back with tomorrow. We'll see.
Yeah. Well, I know it might not be tomorrow because I know he's adding to the study. It might be a couple weeks down the pipeline, but
I think the best P&L of all of these is sold at 9, closed at 10:30.
That's what we've been trying. And I've been successful up until this point. We'll see how today shakes out.
We'll see how today shakes out. Who's down 17? Who knows what the day will bring?
Yeah.
It's only 10:30.
Okay. Then let's pop back.
But I get it getting out by noon because there's that old saying of like the noon balloon. Yeah. Have you ever heard Tony say that, the noon balloon?
Yeah, the noon balloon.
Like the market rallies during lunchtime?
Well, I mean, I would say the market rallies during our show because it's the European close. That's what I always thought. But that's lunchtime for us.
And then we have Jajun's study of more red bars in the morning, more green bars in the afternoon. That's why I think like we get out by noon.
Yeah. Yeah.
Okay. So we're leaving ours. We didn't put into this account because it uses $2,000 and that's just too much.
And tomorrow's a big day because there's a Fed meeting tomorrow.
tomorrow. So then I don't know that vol would come out. I don't know if I'd be putting it on a day that there's a Fed meeting.
It's tomorrow. Yeah, tomorrow.
Tomorrow. I mean, so that's what I mean. Tomorrow. I don't know I'd be putting it on at 9 a.m. tomorrow if there's a Fed meeting in the afternoon because you might never get out of it.
That vol is going to keep its wings up.
Okay, so we did AMD. We just did Rivian. ANET, Upstart. I'm skipping over Win because I know Liz does not like that. ANET, Upstart, Uber, Disney. What do you think?
I'm sorry, I was going back into Twitter. I was looking at all the stuff that came in above that. I do want to look at Uber. I want to look at Disney.
Uber and Disney. Okay. Now,
Disney, because I love the product.
Uber has had quite a rally.
Jenny's going to get in her first Uber ever this Saturday.
I don't like taking Ubers. Oh, is that why you were looking at your schedule of like, can you drive me? And do
I was thinking about driving you, but I can't.
Oh, I could sneak you into the shower.
Well, I have to go to a play. I was just going to drop you off.
You don't have to drive me. I don't. If I get the like Uber Black professional drivers, I'll do it. Maybe I'll call our buddy Ra.
Oh yeah, Ra can do it. But nonetheless, so she doesn't like Ubers, but she's getting in one on Saturday with a massive present the size of this table.
I have to get like the Uber XL because the present is so big. It literally is. If you put these two desks together, I don't even know how I'll carry it. I have to ask the Uber driver to come to my house and get it.
They don't watch. You can tell us.
It's the Breville oven air fryer.
Oh.
And I don't. That thing in and of itself is about the size of this desk.
Yeah, but the
box is so big.
Yeah. Well, they have to pack with all that styrofoam to protect it.
So anyway, I'm getting in an Uber, and I need the Uber driver to come to my house and pick this up and put it in his car.
You can't lift it?
No. It's so awkward.
I'll come get it. I have to carry all the heavy stuff for you. I'll come pick you up.
All right, so what do we want to do in Uber?
So we were looking at Uber. I don't know. It's up so high right now.
Oh, yeah, it is. It's up. It's had quite a rally from 65 to 85. So
okay, and then do you remember a quote from Liz Deerking a while ago? This is pre-COVID, where I thought Uber was going to be the most revolutionary thing ever, and then COVID hit. Because I was like, this is a game changer because no one's going to be driving their cars anymore.
You and Tom. Tom said that today, that he always thought Uber would be the most revolutionary thing ever.
He did? Mm-hmm. But then COVID hit.
Yeah, and no one was going to work anymore. Everyone was working from home.
Yeah.
But it's back in business with Uber Eats.
Oh, and DoorDash just bought another company.
And okay, so there's Uber Eats, DoorDash, and as far as groceries, there's Shipt and Instacart.
I'm going to sound like I'm 107. I do not use Uber Eats or DoorDash at all, period, end of story.
We use Uber Eats probably 10 times a week.
I know.
I just tell my kids if I go.
My husband calls it a gateway drug. He's like, once you start, you can't stop.
In the morning, wake up. Oh, you want bagels delivered for breakfast? Uber Eats. Oh, you're home after school and I'm not home? Order something at Uber Eats. Oh, you've got friends over? Order Uber Eats. That's all my kids do.
Yeah, mine don't at all. Isn't that weird?
Constant.
Well, since Lily has her driver's license now too, but it's like, especially Annabelle's like, if I want it, I'm going to go get it. I was like, perfect.
Well, we order a lot of Uber Eats, but I know the answer to this. Who delivers alcohol?
Oh, Instacart.
But Shipt does not.
Shipt does now, I think.
Oh, you think so?
I think so.
Okay.
I believe they do now. They used to not.
Okay. That's why I need to find something that delivers alcohol.
Instacart. I got you.
Instacart.
I got you.
I have to switch. Uber, what do we want to do? If we did a downside ratio spread, like, I'm going to look, 79, 78, you're getting 63 cents.
That's not bad. How much capital? $900 for 63 cents.
Break even down to 77, 76.
It's not bad. Can you pull it up a little bit?
Or $2 wide for 40.
Well, yeah, I just want to collect to see. Because I don't mind a 77 break even. What are you collecting? 80 cents? That's not bad.
That's not bad. No.
No, and there really is no gaming of the system. Let's take a look at this. So you got the 80-79 ratio spread.
Okay.
The 78 is also 80 cents. That's what I'm saying. You can either just sell that put for 80 cents or you can do the ratio spread. With earnings trades in these like weekly, I don't mind
the ratio spread.
Even the narrower ones. I would never put a dollar-wide ratio spread in a 45-day option contract.
Okay, 80 cents. 80 cents. I'm pushing this. And now I only hesitate because I feel like we're tempting fate with all these naked puts on earnings, and like one of these is going to take us out.
That we are.
But
buy something then. I mean, you could do a put spread if you wanted to.
Let me see.
It's pretty far down. But
you can buy something. I just want to see.
But that's really going to say, like, are you going to walk away? So this is why I think buying something is interesting. So are you going to walk away with I can't even take a $600 loss on my SPX right now. But that's what I'm saying. If you buy something, are you going to walk away with that loss? Or are you just going to, because it's never going to be anything. It could go down to 72 and you're still going to be mad.
Okay. All right.
You know what I mean?
You're right. I'll just put it, and then that's a good point. We talk about these options that you buy as a hedge. It's like, what are they going to do for you?
Unless you need the capital, which sometimes
unless this pulls an XYZ.
True.
Which was rough. I lost a lot of money in XYZ.
Jenny took me out in XYZ because we put it on right before the close.
I was like, oh, you're not in XYZ.
You got to get in it.
All right, 79 cents. Using $1,000 in buying power. Okay. I saw our buying power as I pushed that button. We had $11,000 in buying power.
Beautiful. No matter what, we're going to do something with this trade tomorrow. If it goes,
Smooth's down 27.
If it pulls an XYZ, we would change this into something else.
How much is the SPX a loser now?
Let me tell you. $300.
Not bad.
Better than what we would have taken it off at.
Now that Frank's nephew Jeff is in charge over here, he just walks back and forth out of show view, making sure everyone is following all the rules.
Yes, he does. Yes, he does.
Making sure no one's misbehaving while the show is on.
It's kind of a quiet day today. I think it's going to be a quiet day until tomorrow.
Wait a second. Oh, okay. I wasn't getting filled in AMD. I'm lowering it by 2 pennies.
Okay.
Lowered that by 2 pennies. Next, Uber. Did we get filled in Uber? No. I'll lower that by a couple pennies. I'm not going to give up too much. 77 cents. Okay. Next, we have. Should I look at some of the tweets coming in?
Yeah, you should. Let's
take a little break from earnings.
Let's go top down because it's already 45 and we've got to keep an eye on that.
Okay. All right.
It's Deliveroo. So DoorDash is inks the deal to buy Deliveroo. Have you ever had anything delivered from Deliveroo?
Never heard of Deliveroo.
Well.
Wait, it would be less expensive for Jane just to hire a live-in chef. Okay, so
I agree.
No. Now Uber Eats has this deal where it's like you pay a certain fee, like you pay a yearly fee, and then you don't pay the delivery fee every time.
Don't you tip them every time?
I do. Yeah, but what if you're in the middle of trading and you've got trades to put on, things to manage, things to do, and your kids are like, Mom, make me a grilled cheese sandwich.
I would say you're 17 and 18, go get it yourself.
And my response is, go get it from Uber Eats. Go order Uber Eats. I used to like to cook. I don't anymore.
Well, I'm an extremely spoiled woman. I don't have to do anything. My husband does everything.
Yeah, he does.
Yes.
He cooks.
Yes. So if he says, so when he wants to tell the kids if they have to go get Uber Eats, I was like, go get in your car and go get something if you want it.
When we were during COVID, when we worked from home, when we filmed from our home studio every day, I never ordered Uber Eats. I cooked every meal.
Yeah.
Now that we're on the train working down in the middle of the floor of the SPX pit, when I get home, I'm like, don't ask me. I'm not cooking anything.
I never cook, so it works out well. Okay, so Frank says orders over 200. You're right. We were just misspeaking.
Thanks, Frank.
I should have just yelled at one of these guys and asked it.
Jack loves it. We know the rules. We have the tools. And we can choose to break them.
And we know how to break them, is mine. That's how I like to say it.
Cupcake, using the high options volume watch list to look for my trades, but why does plug always show at the top as super high IVR and super high volume? It's such a low price sub-penny stock.
Is that Plug Power?
Plug Power. Let's take a look at Plug Power. And I'm guessing they're going watch list.
High vol. High vol.
Which one is it?
I don't know.
Or is it fast movers?
No, I think they have a high vol watch list. I'll go through and look while you're talking.
Anyway, let's say you go to fast movers and sort by IV rank. Yeah, I don't know which list he's looking at, but why is Plug Power on a list?
High options volume. Go to liquidity.
Oh, okay.
So go to liquidity.
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 High option volume. Okay. This is what's so great about our viewers corresponding on Twitter. I never would look at this. I've never looked at this.
I've never looked at this before.
So, and here it is, number 1, plug power.
Yeah, that's crazy. Thank you very much for bringing this to our attention. So plug power, it is so cheap.
And why is it 39 million shares have traded?
But
why is it high option volume? Is there anything? There's nothing in those options. I doubt these even trade.
Yeah, so I mean, I understand why you're asking this question. Sometimes when we see something that that it looks kind of funky, we just kind of say, okay, well, whatever, it is what it is.
I mean, a 79-cent stock I would just buy the stock if you wanted it.
Yeah, for sure.
Interesting that plug power is really. What else is on that list? Okay.
Well, there seemed to be a gap on that list then too. See, it's like
right.
Save. Your save's on there.
And so those are things that aren't really even, Save's not even really trading anymore.
So Target is on there?
Oh, I'm in Target. Target's one of my new favorites. Because, look, Target, TGT, bottom of its range, it's had quite a fall, right?
Oh, yeah,
look at this fall from grace.
76 rank. When is their earnings?
May 21st before the bell.
Well, I was in Target yesterday and no one was in there.
Really? I've been selling weekly puts in Target. Every week, just look for $1. Like here, I'll go out to next week's $1. Dollar.
And when are their earnings?
Not until May 20th.
That's not bad.
No. And if I get put the stock, my thought is Target, 4.6% dividend. I'll take it.
Yeah, that's not bad.
Yeah. Add Target to your list.
Okay, so let's take a look at that. I don't mind a pre-earnings trade in Target if you want to.
PE ratio, 10. Checks all the boxes. All right, what's next?
So let's go back to Twitter. Okay, then Daniel Perkins comes in, SPX trade. Now, you did the right thing. You followed the rules.
Closed. Oh, he closed for a loss.
Yeah, that's exactly where we were, $290.
And last margin call, Disney earnings. Yes, it's Disney earnings, and decided to go with a put diagonal. A put diagonal sold this week, expiration 27 delta, and riding at the money further out. Enjoying the current pop from Ford stock replacement I ran yesterday. Okay, well that's good. At least you did well here. Now from his P&L, it looks like he has a bullish trade in Disney, not a bearish. But when I read put diagonal, I would think bearish.
That is it. Put diagonal is bearish.
It depends on how you set it up. Yeah, it depends on if you collect a credit for it.
I mean, it totally depends on how you set it up.
So, what do we want to do in Disney?
I mean, Disney's got my number. I love Disney. Like, I'm a huge Disney fan. We should have worn Disney ears today. Like,
I know, we used to wear our Mickey ears when the Disney had earnings.
Yeah, I don't have, mine are all in a different location.
Oh, they're all in Florida.
Yes. Unfortunately, I got to get those back. So I like Disney, and it's low, 92. But this is another one, Jenny, this is your Rivian, this is your Intel. These have been, like, just staying within
just kind of chopping along around this. Okay, filled an AMD and the Jade Lizard. I guess since we were just filled an AMD Jade Lizard, let's look at a Jade Lizard in Disney. You can go to the 85 put.
That's what I was saying. When I was looking at the AMD, I was thinking it was going in 85 strikes, because that's pretty far away for me to look.
85 put, 98.99 call spread.
It's not bad. It's $1,100.
$1,100, similar to the AMD trade.
And we'd have to do something with this tomorrow.
Yeah. Well, yeah.
No, I mean,
all of these earnings trades.
No, but yes, and if it goes down, we can change it. It doesn't have to be a naked option.
No.
Change it to a zebra. Change it to a diagonal. Change it to something.
We haven't. Every trade we put on today was like $1,000, $1,000, $1,000, right? All right, 98-cent credit. What do you think of the Jade Lizard? I'm going to go to the curve view so people can see what it looks like. Hang on, analysis. So we've got this wide win range. If this is a trade that expires the end of the week, it's got to stay between 85 and 98 to keep this $98.
So, and I like this so much better. And don't get me wrong, I love Jade Lizard. We love them. But the 45 days to get $1 on this, it's just so tricky these days. I like it for earnings.
Yeah.
And you're getting pretty far. What's your, can you go to, your break even is what? It's going to be
84.
84. What's the delta on the 84? Oh, there is no delta.
Well, the expected move is 592, and the 84 delta is like a 14.
Yeah. $2
Yeah.
outside the expected move for the cycle. I like it.
All right, I'm going to ship this. So we're not thinking, we're not under the assumption that Disney's going to blow it out of the water with earnings. Although I heard their new Marvel movie was doing okay at this show.
You didn't like it.
It's not I saw it. It's not my kind of movie.
Yeah, I don't know. But I'm fine with that. So here's the deal. This is what I love about Jade Lizards. Now, don't get me wrong. I'd like to make money in Disney. I would like to make money in Disney. But if it blows it up and we don't lose money, that's not a loss.
It's fine. It'll be fine.
Yes.
We might be a little crabby of like, ooh, if we just sold that put, we could have made money.
I'm not going to with Jade Lizards anymore because this is for one day.
And I didn't like the Marvel movie, I don't really care for any of the Marvel movies. But what I do like, imagine movie theater, now when you go to order a drink, they say, would you like us to deliver this same drink to your seat an hour into the movie?
Well, they give you a gallon. Like the wine, it's like a fishbowl, the first glass you get, and you want another one?
They have different sizes.
Oh my God. The one time I was there, I was like, we can never go to the movies again. I can't drive home. It was a fishbowl of wine.
They have different sizes. You don't have to get the large.
I didn't know the large was going to be the bottle.
It literally is. Their large wine is literally this cup, and they just fill it to the top.
I know.
How many ounces is this?
It's like the thirsty 2-ouncer from.
Well, yes, I'd like. Well, that new feature is nice.
I mean, sure, I'd like. Said, would you like this delivered again in an hour? No.
No, but if someone's getting a bottle of beer, it's a nice feature.
Yes, there you go.
If Tony's there with Vinny and he's getting the Apple new Amheiser, what is it? The new.
It's Busch Light Apple.
If someone's getting Busch Light Apple delivered to their seat, they might want another one in an hour.
I can't believe that Vinny knows what that is.
All right. So we've got Disney, and so far, I'm going to go over what we've done. Activity today. Today, all symbols. Whoa, look at this. Look at this side. Did we really do this many trades today?
No, you have the working orders on.
Oh.
I feel like I tell you this all the time.
Okay, Birkenstocks, we sold a put spread. Ford, we got out of our short put. Palantir, we sold our calendar and saved ourselves $64.
We got out of it, yeah.
Rivian, we sold a put for 49 cents for earnings. AMD, we sold a Jade Lizard on earnings. Disney, we sold a Jade Lizard on earnings. And Uber, we did a downside ratio spread for 77 cents.
I just Googled the Busch Light Apple. I think it's going to be a good summer drink.
You know, I'm a big fan of cider.
For the pool. You're going to come over, we're going to have some Busch Light Apple.
Usually, I'll always get a cider if I'm out somewhere where it's like my only choice is beer. And they can be a lot of calories. So you were saying this one's light.
Light.
Yeah.
Light.
All right. Stack up.
You're in.
Stack up. Okay.
This is going to be our pool
10:56. We're almost out of time. I just want to make sure we got to all tweets. Jack Tucker. One tranche, 0 DTS.
The OG comes in 7 minutes ago.
Showing GTC order entered right after being filled.
So look, he's at 10:44 right now. So he's later now.
He put it in at 10:44. Or is he on Florida time? That would be 9:44.
No, he's usually, unless he's in Florida right now.
No, because at 10:40, did he do this at 10?
Yes. And then
that would just be 10 minutes ago.
Yes, he just tweeted it 7 minutes ago. Maybe he's a little late. I like it.
Yeah, $25 wide, and he's only getting $5.40. So yeah. Okay. I like this idea, Florida 7, live-in chef.
Oh, I would love the idea. Oh, Jenny. What? Andrews. It's only down 150.
So then that's where I would probably take the loss, because it's almost 11. It's only down 150. It was down 600, and you made 150 on the day before. So it's like, okay, you give up your winnings from the day before.
So I think if it doesn't go according to plan, you like the new time frame or just then.
It's only down 150. It was down 29.
Yeah, now 180. I mean, it's got a little bit of wide markets. It was like 150, 180.
I might take it if I were actually in my account, but I'm not. So you can take it.
The hard part is it's at your strike.
Yeah, it's close. It's too close for comfort, I think.
Yeah.
I don't know. I'm more of a panicker, and a rule follower typically. So I think where it says closed at 10:30 or closed at noon, by noon we're out of this.
And I've always had a hard time following rules.
You have.
Yes.
She was driving cars when she was like 10 years old. How old were you when you first drove a car?
8.
How is that possible?
I had to, though. I mean, I drove
But
my
how'd
dad's
your
car.
feet reach the pedals?
There was no seat. There was no seat in the car that I drove. My dad was in a wheelchair, and so his car didn't have a front seat.
So you
and
just
so
stood
somebody
there.
parked next to him, and I stood up and drove a
And
car.
drove the car.
Yes.
Yeah, crazy.
Yeah.
All right, I think that's it. We're out of time, Liz.
Yes,
Fastest
we are.
hour of the day.
That's our
Tomorrow,
date,
we've got a good study coming in tomorrow from Jacob. I know it.
He's adding to the one from last week. So everybody have a wonderful afternoon. Good luck with your earnings, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Good Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course, Mr. Thomas Westwater for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, get spent with my buddies, Mike and Thomas. Thomas, sir, how's the plans?
The plans are good. You know, I just planted 5 more San Marzanos yesterday, so I'm up to, I think, 11 or 12 there. Got some other stuff, but I'm excited about those. I'm going to be saucing. I'm going to be canning. You know.
Nice, nice. This is my week to start my garden.
Yes.
You know,
Technically, it is. You based on the Home Depot lady's advice.
Mother's
She
Day.
said, "What'd she say, honey?
Mother's Day. You got
Wait till Mother's Day."
Yep.
And that is Sunday.
Yeah. So
it's here.
This is the week. Yeah. Got all my supplies ready to go. Got my grill ready. Summer.
Your illegal
I'm ready. Yeah, the illegal grill.
Oh, it's banned?
I don't know how it's possible, but the HOA says only natural gas or electric, which doesn't make a ton of sense because we don't have outside natural gas like we have in the, like, our stoves. We have like natural gas stove, but it's natural gas.
You live in some kind of communist building or something?
That's what I'm looking around and I'm like, there's a grill over there, there's a grill over there, and those are not electric grills.
Tell your neighbors snitches get stitches.
Yeah, that's what I'm saying. It's like, who's gonna
put signs on each side?
Yeah.
Snitches get stitches.
I get the charcoal because I'm elevated,
obviously.
so it's like I can't be dropping hot coals
Yeah,
on people on the street. But propane, how else do you have a grill on a balcony?
You simply don't.
Yeah, but I need a grill.
Yeah. So just do whatever
need
you
to
want.
be flipping burgers all summer long. Steaks, burgers, maybe some veggies.
I am interested to see how you set up the tomato vines.
I'm gonna go peppers.
Peppers.
Yeah.
Oh,
But I got like a garden box, like an elevated one.
There you go.
I'm really playing into it. Yeah. I'm ready to go. I want to make like jardiniere like John. You know?
He could teach you a thing or two.
Yeah. John's is really good.
It's legit.
Yeah.
Beautiful.
Yeah.
Well, we are getting older because we just spent 5 minutes talking about gardening.
Yeah.
So.
Yeah. I think that's a good sign.
Yeah.
Creeps up on you.
Yeah.
It does.
Yeah. It comes quick. And look at my freaking beard.
You have to get those endorphins somehow.
Yeah.
Exactly.
Yeah.
But yeah, it'll be nice to get some warm growth weather here, especially for wheat, Chicago wheat, potentially.
It's growing.
Potentially. But yeah, love it. Love you're back. You're back. Welcome back.
Yes, thank you. I know. I feel a little loopy. You miss like a couple days in the market and the show, and I feel like I lost my mojo.
Ooh, you can't have that.
Yeah, but it'll come back.
Powers, you got to get that mojo back.
Yeah, it'll come back.
Yeah.
But I cleaned up my positions. I'm all good.
I think they make a pill for that.
Do they? I'm hoping I don't have to. That hasn't become a problem yet, so I'm not that old.
You'll get there.
Omaha. Well, if you want to join us on the YouTube channel, we're streaming live there. It is Tuesday, which means cherry picks are coming out. So get your cherry picks today. Got the link pinned to the top of the YouTube chat, tastylive.com/newsletters. And I've got plenty of cash on the sidelines in this portfolio. Lightened up a lot in the past couple weeks into the rally, as you might imagine. And I'm just trying to trade into another crude oil spread. I remember a couple weeks ago, we threw on that short call spread and the big crude contract against the micro crude long that I have. I closed that yesterday, and now I'm trying to resell it into this 2.4 point rally.
Nice. Yes, I have also been lining up on positions. And as for the cherry picks today, there's an interesting one coming out. We're looking at correlations and just the change that we've seen over the last 1 month, 3 month, and 12 months. So we we kind of compared the correlations of just the major markets, including like oil and gold and stuff like that. We should have put ags in there, but I didn't put the ags in there. But certainly seeing the more traditional correlations start to play out in the last month or so, where you have, kind of market weakness, the negative correlation of the metals really to the market itself, and a little bit of like a no correlation with oil. Oil's kind of been doing its own thing. I know that we've got a whole lot of geopolitical stuff, a whole lot of, those sort of things happening that have kind of moved oil, but correlation matrix is coming at you today. A couple other things, of course, 2 trade ideas, but another good cherry picks. If you don't get those on the regular once a week, please sign up. Links in the chat there.
Yep. Yeah. No reason not to.
Yes.
No reason not to.
Quick little market update.
Yeah.
E-minis down 29 here. We've bounced off the lows. They got as low as 56.07, so about 35 points lower from here. We've had about a 70-point intraday range, 65-ish point intraday range. So definitely a little bit of weakness to start the week. Yesterday had a little bit of a down move. Today continues. After what? Did we have 10 straight up days? 9?
No, I mean
9?
Yeah,
I think it was
most
9. Most since. Yeah. Was it all time?
No, not all time. In a long time.
In a long time. Decades. So a once in a blue moon occurrence in the markets here. NASDAQ down 167. It's the weakest of the group. You got the Dow down 246 and the Russell down 13. So everything down between 0.5% and 1% here. Oil has been whipping around. It had a huge move over the weekend. I think it got to what, 60 or 53, 52-ish was kind of the low.
Yeah, I got down there.
And it got down, somewhere around there. 54-ish. It's having a little bit of bounce back today, up $2.30, about 4%. Volatility futures up 40 ticks, 2360. You got the VIX at 2437. It's stayed bid throughout last week's rally and into this week's little bit of a sell-off. Bonds down 8 ticks. They had a huge move through last week, kind of giving it back here today and into this week as well, down to the 114 handle. You got gold doing another one of its moon dances here, up $85, basically the high of the session here, a point off the highs. It got into the 32 handle. It's bouncing back, along with silver, which is up 77 cents. Big move in silver. I think it was outpacing gold in the overnight session, but they're up basically the same amount. Bitcoin had a little bit of a sell-off yesterday, but is kind of stabilizing here at that 94 handle. Spot's up $399. The future's basically unchanged. Ethereum 1763. It goes nowhere, never, forever.
Yeah, something we talked about yesterday. Had Ryan on the show.
Yes, I missed the crypto Monday.
It was just a lot of the same in terms of Bitcoin dominance. Ethereum needs some kind of catalyst, but the Ethereum over Bitcoin strength has actually outperformed Ethereum or Solana over Bitcoin. So there may be something shifting in the background a little bit, but we both agreed that unless there's some catalyst for Ethereum, it'll likely just ride the coattails of Bitcoin. If Bitcoin has a big rally, Ethereum
usually follows suit. Yes, I agree. I've seen such things. One of the stocks that had earnings this morning before the open, Palantir down 16 and change. I know I had some questions on that butterfly that I had in my Johnny Trader account. I wish I had held, but I closed it this morning. I took like a 50, 60, 70 cent loser, something like that. It's since come down a little bit further, maybe an 80 cent loser, $86 loser. It's now even cheaper, so it's actually a profitable trade. So if you held that, congrats to you. Got bailed out a little bit today. We're kind of at the tail end of earnings season. There's a handful. I think Walmart comes up. You got a couple today. I think AMD is one that has earnings middle of this week. Yes, AMD on the 6th after the close. Is that today? Yes, it is today. So a couple still left, but not the most tradable ones. All those were kind of last week.
Yeah, I just put a link in the YouTube chat for the AMD earnings preview that Thomas wrote.
Very nice.
We've got Disney and Uber in there too.
Oh yeah, Uber's after the close side.
Yeah. So
or tomorrow morning.
Ooh, look at that! Look at that image on the Disney one. Wow, that's fun. Yeah, we'll see what happens.
Never fade the mouse.
Never fade the mouse unless you want to.
Something's happening right now. E-minis just rallied like 20 handles in the span of 5 seconds.
Yeah.
Look at this. Here we go.
Gotta go green.
Yeah. Is there anything scheduled today?
No, we have J-Pow tomorrow. Interest rate decision. And the consensus is we will stay where we're at, but the market can certainly still move. And I think the market, if it's going to move, it's going to be based on what he says going forward.
Trump just said we will have a very big announcement before Middle East trip. Really positive announcement Thursday, Friday, or Monday.
It's a big positive announcement. Yeah. A big one, a huge
Beautiful one.
Huge.
It's a huge one. Got to do the hands. Too.
Yeah.
Huge.
All right, well, 97% chance that we stay where we're at in terms of interest rates. And yeah, I was on overtime yesterday with Ilya and Chris, and we were just talking about, there's 3 cuts priced in through the end of the year. So we'll see if we get there. I don't think we will. I think we'll be under, just like last year. But who am I?
E-mini's unched.
Yeah.
There it is.
Love it.
We're so back, baby. We're so
E-mini's
back.
unched and oil rallying a little bit. I feel like that's a better sign than yesterday.
Yeah.
4.3% now for oil.
Yeah.
Beautiful.
Cool.
And SLV's rallying a little bit, catching up with gold.
Yeah, I saw Katie took off her trade there. It's a big move. Silver, 2 or 3% overnight. But it hasn't participated in the same sort of upside that gold has. Not at all. Very nice.
Yeah, if you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live, click the link at the top of the chat, get your cherry picks as they come out today.
Yes.
But yeah, I only have one futures position that's in crude oil. And I'm looking to add to that. So, and obviously I'm impermeable. So I think today's content might set up well for me.
Yeah, I mean, crude oil has been doing good. The thing is, a lot of Chinese traders got back on the desk over the weekend. They had that week-long holiday that they have.
Oh.
So every time they have a holiday, they take like a week off work.
Perfect.
Okay.
Why we don't do that? But
Yeah, we should.
We need to, we need to implement the Chinese way.
Yeah, let me talk to some people.
We used to do that. We remember that? Like 10 years ago, we took the entire, before Tasty Trade. It was when we just had Tasty Live. And remember, Tom was like, yeah, the whole week of Thanksgiving, everybody's off. And we were like, okay. And then he came back. He's like, we're never doing that again.
Yeah, I was going to say that probably did not last that long because that's not the Tom I know.
Yeah. But yeah, that did happen once.
Yes.
One and done.
Yes. It was so long ago, I forget.
Yes.
It was, a decade.
I'd pack my bags and drive down to Florida or something.
Yeah. Got to do something crazy.
Yeah.
The whole week off.
Yes.
Wheat futures, what do we got?
Yeah, wheat. We're going to be talking about a little positioning, how the crops are doing, Russia. Yeah, I mean, wheat hasn't had the best year, especially since the February highs. And let's go to the first slide. We'll just get right into it.
Yeah. All of them have been pretty weak over the last. I mean, like, soybeans haven't really moved. Where's corn at? I guess corn is basically at the lows. They're all kind of getting hammered here.
Yeah, I mean, we're coming up to these lows here. We're at 535. You get a lot of these low points right in the 515 to 520, 525 range. So definitely some buying down here coming in. But this is the USDA's crop progress report. So this is wheat headed. It's kind of a metric for early growth. And you see down here, the 18 states they measure the latest week, May 4th, 39% headed. That compares to the 5-year average of 33% for this year, this point in time. So, farmers are doing good on their wheat that they've planted. At the same time, the Midwest, a lot of this wheat belt, we have really good looking weather over the next week, dry. We just had some rain, but it's going to be, 70s, pretty mild, not a heat wave, not cold. So
cross your fingers that stays.
Yeah, we're at the good growing stage here. So, we're just setting up for the crop this year, but it's looking good so far. Let's go to the next slide. We will look at exports. So the purplish pinkish line is 2025, comparing it to the last 5 years. We see that right now in point in time, we're only above 2020 when that COVID thing happened. Every other year, we're below it. So we've gone off to a really slow start with exports, especially January. That was very, very low. February, that was lower than the previous 5 years as well. Making a little bit of progress this past month. One thing why we could see this go up is, well, I guess 2 reasons. The trade negotiations can make some progress. If you get some trade negotiations, it could come with a caveat of saying, purchase some wheat, purchase some corn, things like that, especially if it's China or another major importer of these AG products. So we could see some upside on that front. Another thing is Russia's exports of wheat through the Black Sea have been pretty weak so far this year. Just like the U.S., they've been weak. Demand overall is a little weaker, so you expect that. But, the Russian prices haven't dropped, whereas the U.S. prices have dropped. So that spread between the Russia and U.S. wheat, it gets more advantageous for the U.S. So we can see maybe some incentive to buy U.S. product over the next month or two. So, hopefully we see this go up if we're taking a bullish thesis. But, the expectations are baked in so low, and that's why the prices have come down to where they are. So a lot of this bearishness is priced in. We'll go to the next slide, and we'll look at how this bearishness is priced in. So this is the wheat price in blue. In green, it is the net positions of non-commercial traders, aka speculators. And we are very, very low right now, the lowest since 2017. And we've seen a pretty significant drop off since 2025. We spiked really quickly in January, sold off really quick. Shorts have piled in. We are at the lowest since 2017. So very, very short position relative to the past, 8-9 years here. Let's go to the next chart.
I appreciate you giving me the softball my first day back. You give me the charts that I love, that net positioning.
Yeah.
The shortest it's been since 2017. I love that.
Yeah, you can't get shorter.
Yeah,
it's already short.
If there's a contrarian indicator, that's got to be the one.
Yeah, right.
Yeah.
So this, I ran some data. Over the past 8 weeks, we have dropped 38,735 contracts on that net position. Ignore the plus sign after it. That's a reduction. Okay. So this, since I think is 2007, 2008, we've had 41 times where over 8 weeks, we've dropped by at least 38,750, which is where we're at right now. So I ran the parameter. If you took a trade at the end of that 8 weeks, so pretty much Friday, where we're at, you did 7, 14, 21, 35, 45, and 60 days. How does those 41 times, how does the trade work out? So the blue box is the average return, and then the red dots are the median return. And as we see, if you take this trade at Friday, you can take it now. I don't think it makes too big of a difference. You get some upside starting at 35 days. So it takes a little bit for this overwhelming net short position to shake out. A few weeks, 3 weeks. And then you start getting an unwinding of that. So 35 days, you're almost at 2%. But the median return is much lower for the 35 days. 45 days, it's the median and the mean are much more in sync. You get 3.5% return over 45 days if you took the trade Friday. 60 days, you get even better on an average basis. You get up around that 5% mark. Median, it's about 2.8%. And again, that's over 41 times that you've run this trade. So what this is, it's simply a back test on the data. So this morning I put on a wheat trade. It's on my follow account.
Beautiful.
I went with a long call spread, 45 days out with the 540, 550.
I like that.
Nothing fancy.
That's an upside shot, though. Like,
Yeah.
you're playing for more of a move. Like, I just went and sold a put spread, and it's more of like a, risk 2 to make 1 type trade. Your trade's going to have a lot more upside to play into this. I almost wish I had waited for the slides. I just
jumped the gun.
I jumped the gun. But I like that.
I just got filled in one as well.
Nice. But I mean, all the CC, corn, soybeans, they've been being down. A lot of it's to do with the trade war, global economic demand down. People still need to eat, but some of that food, some of those grains go in towards discretionary junk food items, Doritos.
Yes.
Things that people buy where you can skip it if your wallet is getting thinner.
But can you skip Doritos?
You don't.
Yes.
Yeah.
You don't.
Yes. Do you see, I know this is not what you were looking at specifically, but do you see the ags in general, like your wheat and corn as well, sort of have this same sort of dynamic, or anecdotally do you?
Yeah, corn planting is looking good right now. Corn belt also, we're looking at good weather.
Okay.
Exports are subdued, but again, it's kind of the trend with the trade war right now. The thing is, the trade basis fundamentally that I'm taking in is bearishness is now priced in.
Yes.
We're going to get some buying here.
And you think like the rest of the ags too kind of see that sort of lift as well. Do they have the same sort of positioning? Just offhand, I don't know, I put you on the spot.
I did not look too closely.
Yeah.
I did look. I think it's quite similar, but not maybe as extreme as the wheat. But fundamentally, these are all the correlation between, especially soybeans and corn, is pretty high. I think it's definitely above 0.5. So you see a lot of. I mean, it makes sense. The weather, food demand, things like that. So.
Does Russia have the same? Do they also actually?
They have a lot of wheat.
Oh, it's just wheat.
I don't know if it's just wheat. It's a lot of wheat.
Okay.
Yeah, they do a lot of wheat right there to the east of Ukraine, and Ukraine does a lot of wheat as well. So those are two big wheat players.
Okay. I know we've talked about China demand for soybeans and going elsewhere for that.
Yeah.
As like kind of a different story, similar but different story of what's happening with wheat.
Yeah, China takes a lot of soybeans, and they do it now from Brazil. So I'm guessing, if they could do it from Russia, they would, but Russia doesn't have as much soybeans.
Love it.
Very nice. Yeah,
Beautiful.
I know we just launched the micro ag products, but they just don't look very liquid.
Yeah.
MZW
For now.
is maybe
We'll see.
54 contracts today. It's just
yeah.
It's not enough. I'd rather too new. I'd rather do a put spread or buying a call spread.
Or call diagonal spread, like I did.
Call diagonal spread if you want to get spicy.
Yeah, so there's the wheat contract. You got to be careful to make sure you're trading the same contract, but the 45 and 17 day both settle to the ZWN5 contract. So classic setup, bought the 45 day 535 strike, sold the 17 day 560 strike right at the expected move, paid $800 for it, and max profits $800 if you get a rally up there.
Yeah.
Which would be very nice.
Yes.
Imagine the amount of Doritos I could buy with $800.
A lot.
Yeah.
Gold. Are we continuing higher? This has been the spot because, I give you the props on both you and Vecchio and Ilya too. I'll give him the props too. I've been gold bugs, and you've hit it on the head. And you I don't know if we covered it on one of our segments where you had that chart of like the buying in the middle, that like Monday and Friday.
Yeah, we did that. That was like 4 or 5 weeks ago.
Yeah. It's playing out a little bit today. Like, Monday obviously was a big move here, but we're back up to the 34 handle here, kind of the spot where it stalled out a little bit. Is this a trading range, or are we still going higher?
No, I think we're still going higher. I'm still in my call spread. Got 50 days left. It's the June 25, 3400, 3410. I'm going to keep it on for now. I could take a nice profit right now. I'm just going to keep it on. It's got plenty of time left.
Love it.
We're going into a lower interest rate environment. There's some questions on the economy.
It's all set. It's too good to be true.
Yeah, it's a good story. Tariffs could bump up inflation a little bit, probably not that much, but gold is physical demand is there. I mean, China demand is there. Stars are aligned. So,
do we see it in silver too? Do we get that same sort of move?
I'm not playing the view in silver. I wouldn't be surprised. The thing is, silver has a little bit of an industrial component to it. It's used in some applications there. So it's not purely that hedge on, inflation, the hedge on risk taking, things like that.
Well, gold's in industrial too. I mean, it's in all the iPhones and all the chips and all that stuff too. So
I think
not as much, obviously.
I mean, silver's catching up.
A little bit.
To be fair. I mean, it hit a low of 26.5 recently, and it's at 30 now. So it's had a big rally.
Nothing like the gold.
Nothing like gold. Gold looks like a Costco chart.
Gold's moving like a meme stock. It's probably not a good thing.
Bless you.
That was a big one.
Yeah.
Big sneeze.
Yeah.
No bless me?
I said bless you before you did it.
Oh, you did. Thank you.
Yeah.
Thank you.
I have a witness here.
Thank you.
Yeah.
Thank you. Can't have me go out in this chair.
Yeah, so Wednesday is gold's best day over this year at least.
Yeah.
Wednesday average return for gold 0.92% on Wednesdays, average return on Tuesdays 0.42%, and then you get the selling on Friday.
Going into the weekend.
Yeah.
You got to sell your gold to go to the casino with cash.
So you can double up on black or red.
There's probably people out there that do that. Buy some gold, sell it on Friday, hit the casino, come back.
Yeah, why not?
Yeah.
It's the gold wheel.
Yes.
All right. Lovely. We're all bullish. Wheat futures. I've got a call diagonal spread, long the 45-day 535 strike, short the 17-day 560 strike, $800 of debit, $800 of max profit-ish. You've got the short put spread.
Yes.
And you've got the long call spread.
520, 500.
Yeah. All three of those are on the follow page.
Yes.
Mine will be shortly. Yeah. Lovely.
I got this big wide butterfly in gold. 21 days out, wrapped around 3,400. That's why I was hoping you'd tell me like maybe we'd chop around here, and I'd be like, yes.
Yeah.
I was kind of having FOMO of not participating in this, but that's what I'm going to do right now. I'm going to throw on another call broke wing butterfly.
In gold?
In
gold
gold.
futures?
Yeah. I'm going to make it a little wider.
Yeah, go wider.
Trump is saying more things right now. He's saying,
Classic. He just couldn't stop.
Yeah. We don't have to sign deals. In some cases, we'll sign some trade deals.
Okay.
We'll present a number. We'll put down some numbers. Say country is open for business. Countries don't have to sign the deals. Stop asking how many deals we're signing.
Awesome.
And the market's selling off again.
Hell yeah.
Perfect. Yeah, I'm going to get into the 21-day, 3540, 3560, 3600. So 20 by 40.
There you go.
If we see any kind of sell-off here, I'll immediately sell out of the 3600, roll to the 3580. Because this is a $260 credit. So I could do that easily on a reversal of today's move.
Yeah.
That's the plan.
I need 3350 to 3450. Got a big wide one. I think I did that for a 3 trade ideas. Yeah. The 50 by 100. And I bought in the risk. Used like $2,000 in buying power. Yeah. Nice one.
Yeah, mine uses $700 in buying power. Max loss is more, but it's wrapped around the expected move in the 21-day cycle. So, love to do it into this 2-day rally of what?
5% ish, 5, 7. Big move yesterday.
So I'm leaving it at $2.50. We'll see if we get filled.
Cool. Good stuff.
Are you doing anything in your Uber trade? Popping over to the YouTube chat now.
For me, so this morning I sold a put. So I have the May 75-80 call ratio spread. So that gives me a break even at like 85, which is where we're trading right now. I sold the 78 put against it for $1 and change. I did it at $1.11. It's marked at like $1 right now. So I'm wrapped around this 80 handle in Uber. It's had a monster run here. Hopefully after earnings, we get a little bit of a chop slash, down move. I'll come in a little bit. That would be perfect. I need somewhere around 80 would be my perfect spot. But if we sit here at like 84, 85, maybe $1 or $2 to the downside, that would be perfect. Risk to the upside. We open in 95 and I don't like that. That's not a good one. But stock's at high, so all right.
Trying to figure out what I'm going to do here.
It's a tough one. I mean, vol is high, but it's not.
I like the bullish sentiment here, but
it's at highs.
Buying it at highs is really tough.
Oh, you missed it.
Yeah, I might have to sit this one out, but we'll
maybe do like a strangle. You might be able to.
I mean, the buying power is high in there,
Is it?
so yeah.
No, only $800.
Well, I was looking at the 10-day, like a put ratio spread. That's what I was looking at.
I would think you'd do like a 75, 95 in June or something like that. 350, $800 in buying power. Leans you slightly short. Scares you.
It does. Last strangle I entered was United Airlines. You got a chart of that. Scary.
Oh.
Yeah, I don't know. I'm off the undefined risk for earnings.
All right. That's fair.
I've been scratched too much by the earnings claw.
It's okay.
With that said, how well do iron condors work in low IV environments? I'm thinking of doing one in TSM.
I don't know if anything is low in IV. Just based on the last month, it might be low, but you still got a VIX at 24 and change. You got ball.
It's decent. I mean, TSM's IV rank is 20, but you always got to look at the actual implied volatility too. So I was just filled in the gold, broke me butterfly for 250. TSM IV is 43%. So it's not super high, but it's not super low. You can still sell premium in there. But yeah, iron condor defines your risk. Markets are 10 cents wide, so you just got to watch your pricing there. But yeah, I don't mind it. You can do you can sell a June expected move iron condor for almost $2. 190, 155. Covers a decent range.
Yeah.
Totally fine with it.
Yeah.
And really, low IV iron condors just protect your risk for a cheaper value than a high IV. But you can't get as far away.
Yeah, I would rather just go to like an NVIDIA. I know it has earnings, or even like Apple or Microsoft, Tesla, kind of the same sort of stock price. I guess these are a little bit higher, but a little bit higher volatility than TSM. TSM has binary risk too. It's Taiwan and China situation. So might consider that.
How to defend an ANET short 85 call in May, sold for $1.50 before earnings. Close for a loss, or would it make sense to buy 100 shares, turn it into a covered call?
You can't do that now. But if you're okay, I mean, if you sell a naked call, you're leaning short. You can't buy the 100 shares now into a 10-point rally or 15-point rally. But maybe you take the position into earnings, which I think are after the close today. You roll out to June, you do something like you can move it to the 90 strike and turn it into a strangle, sell the 80 strike put. It cuts your delta, basically in half. Your May 85 strike is a 70 delta, so your 70 short deltas. This will cut it down to 40 short deltas and gives you a little bit of short premium. That's a consideration.
Yeah.
I don't think buying the stock helps you much here, because then if you get a 5-point move on earnings, the downside, you're like kicking yourself.
Yeah. So yeah, I sold it in the beginning of April. Yeah, I mean, you had that 2-day move, and this kind of speaks to what we've been talking about. If you sold this in the beginning of April, when it was trading at 80, and then you got that drop to 65, like there's no reason to have it on after that move.
Mhm.
You gotta be nimble in these markets, unless you sold it like after the sell off and then you got the rally into that position. But in these markets where the markets are flying around and this, like the stock went from 85 to 65, we're not waiting for 50% profit. We're just taking that. If it's 30% or 25% in a few days, we're just taking it off. But if you wanted to have it as more of a longer term position, totally fine. But yeah, I agree with Nick. I think you roll it out to June, or if you want to stay in May, you can do that too. You could throw on the 85 strike, turn into a straddle,
Yeah.
or sell the 80 against it. But buying the shares now just multiplies your downside risk that wasn't there before and doesn't give you much upside profit potential.
It's also just a lot of capital.
Yeah.
Put out.
Yeah. But yeah, I think selling something against it on the put side makes sense.
Yeah.
And whether you stay in May or June just depends on whether you want that big IV crush or if you want to push it out and be more conservative with it. If you wanted to take a gold trade today, what would you do?
Ooh.
Well,
Mr. Goldbug.
I mean, when gold rises, the volatility usually expands.
Yeah.
It's different than other assets. So, I mean, buying a long call spread would be better than selling a short put spread for gold.
Yes, it becomes cheaper
Yeah.
to play that upside because of the skew.
Yeah. I just did that call brokering butterfly. So I like those a lot because you can throw them on into today's rally, which gives you that IV boost, gives you the strike premium boost. Like the 3550s are double in price is what they were yesterday.
Mhm.
So, yeah, I like these, especially because if you get any kind of sell-off in gold, I can buy in the risk and just have a free butterfly on and lock in a credit for profit. But yeah, I think buying a call spread into a move like this allows you to make a really wide one.
Yeah. Do you ever mess around with any of the miners like NEM or GDX or GDXJ? Is that just...
I used to a few years ago. I don't anymore. I just play the straight gold exposure. I think it's easier to get a read on fundamentals and stuff. When you're doing miners and stuff, you have to worry about CapEx and cost of extraction and all that.
Yeah, they seem to have caught up, but they didn't really participate in the first move.
Yeah.
You know, like it seems like you need the kind of tail risk FOMO move in gold to see those sort of moves. And this isn't like, you know, in past times when we've traded around gold, like the miners, the correlation is not as high as you would expect it to be.
Yeah, no, it's not.
So I agree with that.
Double calendars for earnings. Meta was a 50% gain. Palantir was a 10% loss. Is it because the shorts are at the expected move, but there's a valley of death that gets exacerbated after earnings? If you're throwing them on after earnings, you're missing that big IV crush in the near term options. So that could be your reason there. Meta, if you throw on a post earnings trade and you get a continued move like you did in Meta, that's going to help you. You want the stock to go towards your strikes. Where Palantir kind of opened it might have opened towards your strikes and then it dropped towards the middle, if that was the case. But either way, double calendars are tough. You need to really take advantage of that IV and the short options before earnings.
Yeah. The double whammies are tough. I mean, you can even see on the put side, especially with something like Palantir, which had such huge call skew. You know, some of these puts with the contraction and volatility, even 40 days out, they really didn't move. Like you need volatility to stay bid, which it didn't. And in something like Palantir, where there's a lot of call skew, you kind of need the move to pin your call strike, not your put strike. When you look at these options, these put options, even the like the 100 strike only moved $2. It's not a ton of value relative to the 17-point down move. But when you look at these upside calls, the 150 strike is $4. That was 30 points out of the money. This put was only 20 points out of the money. So yeah, you have to be careful with some of these stocks in terms of doing both sides. I mean, obviously, you make some of the money on the shorter duration, short premium, but the meatier part of your position, your call calendar spread probably traded at 3 times what your put calendar spread traded at.
Yeah.
And that was probably the reason why this was not good versus Meta, where you probably had the same dynamic because Meta probably had slight call skew or maybe no skew into earnings, but it had the up move, and so your call, stayed bid, whereas here the puts just got killed.
Yeah. And generally speaking, if you do both sides, you're always going to want an upside move because the calls will gain value more than the puts will on a downside move
Because of the gamma and the actual value.
increasing price of the stock.
Yes.
Yeah. So that's definitely why.
Yes.
And if you look at the net change, so these were pre-earnings. So if you look at the net change, if you were like long June, short the weekly, the Junes lost more than the weeklies lost because of this downside move and big vol collapse.
Mm-hmm.
You lost money on your call side. You didn't lose money on your put side.
Yeah, the puts.
You didn't gain anything on your put side.
That's the big problem. Is the put basically the put calendar was a nothing, was a scratch.
Yeah. Am I in deep doo-doo? Microsoft July 18th, short 410, 415 call spread.
July.
Yeah. You're in deep doo-doo now.
I mean, it couldn't have moved.
Oh, no, you're out of the money. It's fine.
410?
Yeah.
Put spread or call spread?
Call spread.
Call spread.
Yeah, you're okay for now.
410, 415 in Microsoft?
Yeah.
It's 30 points in the money. 20 points in the money.
Oh, I pulled up MicroStrategy. Whoops.
Yeah, I mean, with a spread that's 70 days out, it's just not going to move.
Yeah.
So I would just take the lick and roll to June and go into an at the money spread if you want to be short here, or a little bit out of the money if you want to be a little less short. It's just 70. You're going to bleed out $1 a day here. Your theta is 10 cents here. So it's just.
So the nice thing is that you're in July, and even though it's deep in the money, it's not trading at max loss.
No.
So yeah, you could go, you could basically buy in the July one, go to June, and bring it up to the 420, 425, or the 425, 430, and just try and replicate that premium.
Mm-hmm.
You'll give up a little bit of premium, but if you get any kind of big down move, the June will come in much faster than July.
Yeah, the July won't move. July is going to trade at $2.70 no matter where the stock trades.
Yeah.
Over the next 30 days.
Yeah. So yeah, I like that transition to the near term cycle and just moving it closer.
Yeah.
Manny, question on Palantir earnings. Long a put butterfly, 124, 114, 104. I can leg out of the long put spread for $9.10 today, so basically max profit. Would you, or see it through a couple days?
I imagine this is in the weekly.
Yeah, the May 9th.
Yeah. So you have about $2 of premium left in the short option. So your spread is going to move basically 1-to-1 with the move in the stock here, because your long put that's out of the money is $2 and change. Your two short puts that are in the money are $2 and change. You basically have no extrinsic value here, maybe a slightly positive couple pennies. I would probably hold it with $1 left in extrinsic value over 2-3 days. 8 points out of the money.
Yeah.
You get a 5-point up move, and yeah, you might miss out on $1 or $2, but you're gonna make 5.
Yeah.
It's a tough decision.
Yeah. You either hold it and see what happens, and then tomorrow, if it continues to sell off, then you close it. if it contracts even more, and you only have like 40 cents or 30 cents left to make. But if you close it now and then you get a rally, you could then roll your 114, 104 remaining put spread out in time for a scratch or a small credit or maybe a small debit. Or you could just leave it in the 3-day and see if you can double doink both of them. But it just depends on your intention. If you're out of this trade, regardless of what happens, I would hold it. But if you're trying to roll that put spread out in time, if you get a little bit of a rally, then maybe you close it.
Yeah.
But it's tough.
That'd be a good trade.
Flip. Yeah.
Probably made some money on this.
Potentially.
E-mini's down 34 now, so the tariff talk down didn't work. Or the tariff pump. I guess that was a pump.
Yeah, he said the announcement is not necessarily about trade, so then the market sold off.
Can't keep track.
Too much.
Gold's ripping higher, up 95.
Perfect.
Just continuing the moon.
Gotta love your gold.
All right. So we got AMD, Disney. What do we do here? Disney is what? Tomorrow morning? What's the scouting report? Who did the Disney? You did. He did Disney.
I did Disney.
And AMD.
Yeah.
What's the scouting report? We bullish on either? We bearish on both?
I think they're expecting some weakness in the parks and stuff.
You got to think so, right?
You know, the movie, what was that Marvel's movie that came out this week? It did a lot better than expectations.
The new
after Snow White,
Avengers,
that was a good thing. But I mean, there isn't too much there. It's going to be about, do they have a lot more elasticity to raise prices at the parks? That's probably done with for a while. So it'll be about, Disney Plus, ESPN, all that good stuff. I don't expect anything huge out of it.
Getting long AMD.
I know AMD I think is the more interesting one. Not that it's been a great long, considering it's down like 50% in the last 6 months, but it's super high implied volatility. I've sold some puts this year. It's been a nice, kind of picking bottoms here. Like I sold the 75 put on the 22nd, and closed it the next day for like 50%. Maybe it's something like a put ratio or a naked put trade or call diagonal spread if you want to get a little spicy with it. What are you thinking?
I did a call diagonal spread. I bought July, the 100 strike, and I sold the 108 weekly against it for like 760. I was just filled on it.
Yeah, I like that.
And then in Disney, I'm going to play the downside park weakness. Nothing good's coming out on Disney Plus except
And
for
we just got the movie tariffs.
Yeah. Yeah, that hit Disney, but they rallied back after the market opened on that.
Oh, did they?
The thing is now retaliation over that move. So
I'm going with Disney. I'm buying the 95 put in July.
Okay.
I'm selling
at the money, or a little in the money.
Yeah, I'm selling the 85 against it in the weekly.
Okay.
That could be a big one if that drops, because that's a 10-point wide diagonal for $5 and change. But yeah, the only thing that's come out on Disney Plus that's been good has been Andor. You watch Andor?
I finished the 3rd episode last night. I heard the 4th episode, and now it starts to get really juicy. So I'm excited. Yeah, it's good so far.
Yeah. Yeah. The Last of Us is also
it's another
We gotta start
wild.
that.
Yeah. But yeah. Disney bearish, AMD bullish, and then Uber's
What are you
wild.
gonna do there?
I mean, the big headline around Uber is that there's car companies that are vying for their exclusivity for autonomous driving. I just can't picture myself in a car that's driving itself.
I don't like it. I don't like it.
I was telling Chris and Elliot last time, like, just put a mannequin in the front seat.
Yeah,
a
right.
little driver hat with the suit and everything.
Yeah.
Put a little mannequin up there that maybe says stuff like, "Hello,
yeah,
how are you today?" That's I feel like that's better than nothing.
Pre-program on that before you get in.
Exactly. Fasten your seatbelts. we're gonna that's gonna be a thing.
Yeah, it's coming soon.
Yeah.
You know, wasn't Chicago a pilot city for Uber when it started?
I feel like
question.
Denver was. Is that wrong?
We
I remember there was some driver that was like the first driver, and he was this guy that was like a ski bum, and now he's a multimillionaire. He's like on their board
Perfect
and
job.
whatever. Yeah. Let me see.
I don't know. We've seen a lot of these
Francisco.
the stocks that have gone to highs kind of cool off after earnings. A lot of the moves to the upside have been all the ones that have been just like beaten down, feels like.
I remember 2011, I was out with someone and they ordered an Uber. And like a random car pulled up and like, she got it. I'm like, this is someone's car. This is weird.
Yeah.
Like,
now it's just
right.
Normal.
Yeah. I got the text of, have you seen all these people getting robbed in Ubers, like fake Ubers? I'm like, yeah, but first to get robbed in a fake Uber, you got to get in the wrong car.
Yeah.
Right.
Well,
So
drink a little too much and that can happen.
Yeah.
And it's also like, you know, when your credit card you get the credit card fraud, it's like, oh, what did you do? Oh, I entered in my credit card information because I got a text saying that the Illinois tollway had a 50-cent over.
I get those. I get those every week.
It's insane.
Yeah.
It's they're aggressive. Final notice.
Yeah.
It says final notice
for your 50
all
cent overdue.
Yes.
Insane.
Like if you don't wire us $100 in Bitcoin, we're going to come arrest you.
There you go.
Let's see.
I sold a put in AMD. Sold the 85 strike in June. It's a little nothing trade. At least I hope it's a nothing trade. I hope it doesn't turn out to be a massive bag I'm holding. But it's near the lows of where it got down to 76 and change for a couple sessions there. But 85 is kind of the lows. I figure I'd sell put there, use $800-ish in buying power and see what happens into earnings. It's in June, so a lot of time.
Yeah. Do I need a live data subscription for Taste Trade? No, you do not. Everything's live.
Yes.
So if you have an account,
as long as
and
it's funded,
you get the live feed.
Yes.
Regardless of where you're trading from. If you're in the UK, you'll get it. So yeah, if you have an open funded account, live feed, no subscription needed.
I saw somebody mention TTD too. That's another stock that has just been murdered.
Price in July in TTD. Best guess?
Oh, I have no idea where the price is going to be, but
Well, the implied volatility right now, which is actually pretty high, 64 IV rank, has a plus minus $12.40 range. So that puts it at 68, 69, or 42, 43.
I had a little call diagonal spread there. Stock just getting murdered. But how are you pulling that up, Mikey? Because of the expected move, or that the money straddle, or the standard deviation? You can look at all those.
Yeah, I just look at the plus minus number on the expiration. But yes, you could pull up, if you don't have the Tasty platform, you can just pull up the straddle.
Yes.
That's your expected move. And you can just play off of that.
Yes.
But yeah, the trade desk, no clue, no interest. These stocks are tough. The ones that just get pummeled and they're just down at extreme lows.
Yeah. They do ads. It's all ad placement. So you have a recession. Everybody cuts their marketing.
Yeah. Got ARM tomorrow, I think. Right?
Ooh,
Is that
that's
tomorrow?
another one.
Thursday?
Another one of the chip names. Yeah, Thursday. No, Wednesday after the close. That's another one we'll have to look at there. What's SMH doing? Had a nice little move.
Drin wants a short Uber, highs 87-ish. Yeah, it hasn't gone above that.
Kind of with
If they
you.
rally, it'll be all new all-time highs in Uber. So I remember a time when Uber was a $30 stock.
Mm-hmm. You could do a Lyft trade as a sympathy play.
Ooh. Yeah, Lyft has earnings
coming
on
up on
the
the
8th. Lyft is so cheap, you could just do a little zebra on there.
Buy the stock, sell the call. 13.5 gives you $125 of upside.
Sure.
Or the 14.
You do a 12-13 zebra for $200 in Lyft, 10 days out. Playing for a sympathy move, but yeah. Uber's going to be interesting.
I'm gonna buy stock, sell the 13.5 in the weekly. Set it and forget it, hopefully, because we'll wake up at 13.50. I'll just take my money and run. Right?
Sure.
Hopefully. If not, I can continue selling calls. But you got to think there's some upside there.
That's it. That's it for us. We're out of time. Thanks for tuning in. If you got any further questions, you can find us on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. We are violently long wheat futures in 3 different ways. So check out the follow page to see those 3 different ways. We'll see if we can get this gold train to stop running just a little bit. A little pullback would be nice for us. But yeah, plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok game.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. It's like losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I distinctly remember getting an email from Tasty that Look Back had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Stephen and Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
We are back. It is Tuesday, May 6th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Nick Batista. Nick, thanks for coming on today.
Of course, sir. It's great to be back. Had a little hiatus over the weekend. Went to Arizona, sat in the sun all day. As you can see from the golden tan that I have going, played some golf, but it's good to be back in markets, and a little bit of volatility coming into play. It's nice. It's good. Can't complain.
Yeah, I still have my alabaster Casper-like skin tone from the winter. That needs to be fixed pronto. I look sick most of the time.
You do, Chris. You're not representing the Italians well with that fair skin you got. It's okay. You're northern though.
The northern part has overtaken the Sicilian part for sure. Nick, I find it funny looking at this market today. We're not really seeing a significant advance or decline in stocks one way or the other, although healthcare and biotech getting hit pretty hard for, I think, would be a good reason, I suppose, right? More drug manufacturing here in the U.S., faster approval times, more overseas inspections. It needs more supply, quite frankly. And so that's being hit. But otherwise, the market sector rotation isn't fantastic. Bonds are continuing to twist. If you're a commodities person, you're having a pretty nice day, it would seem. If you're selling the dollar, it's a pretty good day. And of course, we have the Fed meeting tomorrow. So there's a lot to walk through here. But let's start off the show with some of the commentary from President Trump here. He's been on the microphone. Asked specifically, John, we can turn to the slides, asked specifically about how the progress is on the trade deals that we're making. He said, stop asking how many deals we're signing. And so equity markets did take a little bit of a brief reprieve off the highs, S&P off about 30 points from there. Nick, are you looking for any more of this tariff talk to influence today's action?
I mean, I can't keep track of it. I know we've been saying that for quite some time, but it seems, I mean, I will say we were watching the move higher because we went to basically unchanged on the E-minis while we were on the show in the past hour, and Thomas was pulling up the quotes for us live, which is obviously moving markets. But I think overall, the talk has started to get digested by the market a little bit. I think the action that we've seen over the last week or so, you obviously had like a little bit of a bid from the big tech earnings, which seem to always help bounce the market a little bit. But I think over the last, I don't know, let's call it 2 weeks or so, it's become a little bit more dull. Like I feel like the market's kind of just saying, all right, things are going to be crazy. It's going to be flip-flopping every single day. It's become a new norm, so to speak, for the market. Except if you're looking at gold, which continues to scream higher.
Well, I have plenty to say on that, Nick. Someone who recently got out from short to long a few days ago feels pretty good.
It's beautiful.
One thing that we have to keep an eye on here, we talked about the earnings this morning on Let Me Explain, which for those who will be watching this after Futures Power Hour ends, there's going to be videos on demand today. Let Me Explain from this morning as well, so I won't go too deep into the earnings now. Be sure to check that out. But the earnings actually have been pretty good for Q1, all things considered. Double-digit earnings growth. Companies are beating in line with averages historically, being rewarded more than being punished if they miss or beat expectations. We obviously had a bunch of data come through for the first quarter recently, Nick. The GDP report, we had the non-farm payrolls report. Now we're talking about the Fed meeting tomorrow, and the question is, what can the Fed do for us? Yes, that top-line GDP print last week was weak, and there's a lot of reasons to be concerned. But as we noted, core GDP, when you strip out inventories and trade and government spending, it was still pretty solid at 3% annualized. So as we look into the second quarter, now on the back of this non-farm payrolls report that came in better than expected, even netting out the revisions, the growth trackers that the Fed would be looking at from the Atlanta Fed on the left and the New York Fed on the right are telling us that growth is still kind of stable. It's chugging along. And that, quite frankly, is not the backdrop in which the Fed would feel the need to cut. So, Nick, as a just trader, not that you're necessarily placing trades around this idea, but as a trader, what does it say to you that the Fed is unlikely to cut tomorrow? Is that something that bothers you, you care about, or are you worried about it?
I mean, it's already priced in that rates aren't moving tomorrow. I think it'll come down to kind of the Fed speak, which I think has always been, the real mover, because you can price in the probabilities of a rate cut. That's all known info. It's what Jay Powell comes up there and says. I mean, I think it's hard. It feels like it's been the same sort of thing that we saw last year when we thought there were lots and lots of rate cuts coming, where, the first couple of the year were volatile and then it kind of got washed out, so to speak, in that it started to be less of a market event as the year went on. I think, this one will probably be an event, but I think cuts are on the table and that's kind of priced in already. Like, I don't know if I'm super bullish or bearish on either announcement. I think once it happens, it's probably going to be like a nothing burger.
Well, here's the good news. The market and the Fed aren't really that far apart in terms of pricing right now. Per the Fed's most recent summary of economic projections, talking about 3 more cuts through the end of the year. And that's where Fed funds futures are currently priced. So knowing that, Nick, I mean, you talk about it being priced in. If we were going into tomorrow's meeting where the Fed was telling us 3 for the rest of this year and the market was pricing in 5 or 6, that kind of non-committal commentary from Powell could be problematic.
Yeah.
But the market already knows that he's going to be non-committal, and quite frankly, the market's still pricing in 3 cuts. So the Fed and the market are in somewhat of agreement, as it were.
Which is
Today,
sort of rare. Which is rare from what we've been used to, which seems good.
Well, last year we start the year 5, 6 cuts priced in, and then we get to May 1st, and then there's none, effectively the rest of the year, 1, right? And there's an outside chance of a hike. And then you go back to August, there were 6 cuts priced in with a 63% chance of an emergency cut within a week of the August 5th market open. So like typically those big divergences are what give us the opportunity.
Yeah.
And I think that's what you're referring to. Powell's comments are going to be the ones that drive it. It's not going to be the decision itself. There's no new numbers there.
Do you think he moves anything? Sorry to cut you off. Do you think he moves off of what the market is projecting? Like, I don't think there's any surprise coming down. Like, I don't think there's an emergency rate cut. I don't think there's any change. No. I think it's going to be more of the same. We're data dependent. We're going to see what happens. More nothingness. Like, I don't think there's any surprise on the horizon here.
I think more nothingness is the right way to look about it. He can't do anything right now. His hands are tied. And the ironic thing from my view is that if the more Trump speaks about the cuts and Powell doing a bad job, the less likely it is Powell actually cuts.
But he's walked that back too. Him and Powell are like kind of buddy now. Not exactly buddy, but they're like, on okay terms. Like it's like, side piece.
And if he wants his cuts, that's where you should leave it. Right? Yeah. The market doesn't want a world in which the Fed chair isn't independent. It's, as we've clearly seen in the pricing for things. Today, Trump is obviously in focus for the past hour. You were covering the headlines earlier, but we do see some of these comments coming out. There's no tariffs with India. Apparently, that's a deal that's presently on the table. We see that the talks with China haven't really begun, according to Scott Bessent. He was in front of a House committee this morning, talking about the tariffs. It's also a quiet day. We had Mike Butler on Overtime yesterday, and he was talking about what to expect for today's price action, and he was thinking more of the same, which is just a bunch of chop, if not slightly weaker. And I think he's right. 780,000 contracts traded. This should be 1 million or so. Today's light volume on light news, light data, light earnings. We're all waiting for the Fed.
Mm-hmm. Yeah, I agree. I mean, it's last week's action is a little bit interesting because you've kind of, I don't know, it feels like you've kind of baked in the upside already. It seems like it's setting up for somewhat of a buy the rumor, sell the news. It would fit perfectly at this point. You have a 10-15% rally off the lows into all the big name tech earnings. Everything kind of has a nice move higher. You have J Powell come on, and it's sort of like a sell event. Like, okay, now there's nothing else to look forward to. You got option expiration coming up, VIX expiration coming up. Maybe it's a little bit of like okay, we sell in May and go away type thing.
Talk to me about the VIX and VIX expiration. I couldn't help but notice today the VIX term structure is starting to look like it's back in contango. It's obviously at a little bit more elevated levels. We're not in contango at a 20 front month. It's 23.6. Mm-hmm. How does it make you feel about stocks right now? Is that a sign that we're in the clear, or perhaps for those who want to hedge against the downside, it's fairly cheap, all things considered?
I think it's cheap to hedge to the downside. I've been putting on slight downside plays here. I have one that will come in the cherry picks as well in SPY. But that's when you get back into contango, it tells you that the fear is certainly not as high as it has been. But we were basically flat into Thursday last week when the last time I was on the show. The vol curve was completely flat going into the weekend. So for it to be in somewhat of a contango right now is kind of an interesting point. It means that hedging is cheap relative to what it has been, especially with VIX at 24 and change here. This has kind of been the bottom, and it has been somewhat sticky even into the up move. Like if you look at the VIX itself over the last 6 or 7 trading sessions going back to or through last week, it basically hasn't moved despite the market up 4 or 5%. So it's kind of telling you that, there's a little bit of fear that's come out of the market, but it's still a high, VIX at 24 is still high. There's still, that's a 1.5% move day to day is what a VIX at 24 projects. So, you get one of those and you could easily see a pop in volatility across the board.
Right. I mean, I know that a lot of people who have probably started trading more recently, they go, well, VIX at 24 is high. Of course it is. It should be back near 15 or 16. It's not the long-term average. Long-term average for the VIX is closer to 19. So even in that sense, right, this is an elevated state of vol that we're seeing kind of form around where the market opened up on April 2nd. You can see the zone between the April 2nd and April 3rd opens. This is the Liberation Day announcement, and that's kind of where the market's caught itself down here. I'll never do technical analysis on the VIX. It's a non-stationary time series. But I can't help but notice that this is happening, that the levels that we kind of treated as a ceiling pre-Liberation Day are kind of acting as a floor right now in vol. Billy and I were exploring this yesterday, Nick. We were looking at if you wanted to, sell a put spread, if you really wanted to do this in the tasty way, was it a better risk to reward to look to sell a call spread or sell a put spread right now? The pivot low that we have from April 30th, which is the breach of the downtrend off of the February, March, April highs, and ultimately a hold there from the 1-month moving average, that's closer to 54.50. So even on a day like today, if you're going out 45 days, we want to pull this forward. We'll call it to like 50 points on the other side of it. 71% probability of profit's decent, but you're risking about 4 to make 1. I don't find that particularly enthralling. I would much rather, as we talked about yesterday, if we want to approach this market from a bearish perspective, we go above the recent highs. The 5773.25 high that you have on Liberation Day becomes your line in the sand. If you want to sell a call spread against there, even on a day like today, you're getting almost a 1-to-1 risk to reward. And the market just needs to not go up from here. Whereas if you're buying the put spread, you need it to go down.
Yeah.
If you're selling the put spread, you need this thing not to go down. If you buy an out of the money put spread, if this thing goes down but not enough, you're in trouble. So selling the call spread might be the most efficacious way to operate in the market in the short term here, just in terms of risk to reward and where the technicals stand.
Yeah, or do both sides. I mean, we've kind of bounced between this, let's call it 5,400 and 5,700. It's kind of been like the spot. You've obviously had some moves below that, but that might be kind of our trading range. I know everybody wants to pick directions, but sometimes it's, you get a little bit of sideways action. We had a couple weeks of that through, from March to April until we had the big move lower, but maybe that's what we're setting up for. Vol to stay bid, a little bit of choppiness, that sort of situation to play out here with no sort of big catalyst on the horizon. You have no, the earnings are done with, the Fed stuff is going to be done with tomorrow. After that, maybe it's kind of just choppiness and not a huge directional move in either direction.
You have people like Paul Tudor Jones out today saying things like he thinks that there's more downside ahead and, we're going to test the lows again. I would posit that if we do go back down towards those lows, it's not going to be like the action we saw in early April. It'd be more of a slow and steady decline. But also the quirk of the calendar here is what really interests me too about thinking this thing isn't going to just fall flat on its face. April was a month where we didn't have a Fed meeting, right? The Fed meets in the second half of March, and then we get all this tariff stuff coming, and you look around and go, well, if the Fed does do something, it's going to have to be in an emergency meeting. So, they're not coming anytime soon. And do we want a Fed coming into the market screaming fire?
No.
No, we don't. So that kind of left us without a cushion. May, June, July, 3 months in a row, 3 meetings. And I know they're always 6 weeks apart. That's not the point. The point is just psychologically, is there a Fed meeting this month? Last month, you couldn't say yes. This month, you can. So on the downside, right, as the data comes in, the Fed is going to be talking to us tomorrow. They'll talk to us in mid-June. They'll talk to us in late July. And what will we learn? Well, There are 3 now opportunities each calendar month psychologically for the Fed to adjust if it so is demanded. Yeah. And they won't have to do so with an emergency meeting. So the framing is different than it would have been if they cut, say, in April.
Mm-hmm. Yeah.
I like your chop idea.
I
44
think so.
days out.
And I think that's the hardest trade. I think like the CNBCs of the world, you have everybody still coming on and saying they're nibbling on this, nibbling on that. We expect, retest, blah, blah, blah. And then you have, the other side of the coin is like, Fed's going to come to the rescue. They're going to cut rates. The deals will be done, and we're going to skyrocket back to highs. Like I don't think the consensus is just a painful chop in both directions. I think the consensus is either we're back to highs or we're crashing, and I don't think anybody's kind of in the middle right now, which is kind of a surprise in my opinion.
Yeah, a lot of sideways grind and chop here wouldn't shock me.
Yeah.
We talk about the technicals here, though, Nick. The swing high on April 2nd. 57.73 in ES. Likewise, we have the 618 retracement of the yearly high down to the yearly low range there. So we haven't quite cleared the turning point on a technician's basis to say that the downtrend is over yet. Mm-hmm. Just as a point of emphasis for this, we're going to go over here shortly, but this happened recently in copper prices where we have this big decline and we rally up to the 618 retracement and then we get stuck there and we immediately pull back. Right? We don't cross that line in the sand to say that the thrust that guided us lower technically is finished. So ES has that kind of characteristic right now where it's not exactly punching through the area it needs to. And the same can be said of the NASDAQ where 618 retracement, April 2nd swing high, and we're finding some trouble up there as well. So risk to reward this week, I'd rather be short delta with willing to close up any position upon a breach of the recent highs in NASDAQ or the S&P, rather than leaning long delta and having to have a stop closer to the April 30th low and giving this a significant amount of breathing room if I'm going to be wrong.
I like it.
Sector rotation today, Nick. Mm-hmm. Garbage, I think they say in Italian. 25 ETFs we track here on Futures Power Hour and Overtime. 6 are in the green. 19 are in the red. Biotech with the manufacturing executive order, smaller profit margins for these companies, down 5.37%. Healthcare also off by 2.54%. So that's a little bit of an exogenous shock with respect to that. But otherwise, I'm still not seeing things I like. The names I want to see at the top of the board, like an SMH, is one of the weaker components here, down 1.25%. Retail ETF, right? Thinking about textiles, clothing. That's still off today, and XLY is also off today. I've been talking a bit here, Nick, though. So when you think about these names, these tech names, these consumer discretionary names, maybe even individually, is there something that interests you? A Tesla, an Apple, an NVIDIA?
I mean, they all still have relatively high implied volatility, so I'm not opposed to selling premium. I mean, a lot of these have given up their moves that they had last week. If you look at Tesla's down a couple, Apple is another interesting one. It kind of was sideways on earnings. It's given back a little bit of that move. NVIDIA too, you had a nice little bounce. It's now back to kind of where it started the move higher. These might be iron condors or short put spreads. I think that's kind of still on the table here. For most of those stocks. I sold a put in AMD the hour before this. Not a super bullish position, but volatility is still relatively high. A lot of these stocks are near the lows. It's been, my earnings trades have been like buying the pigs and selling the ones that have just been really outperforming. Mm-hmm. So the stuff that's kind of gotten whacked, I feel like it's gotten, the news has been kind of baked in, like a Meta, for example, was one where I didn't hit a mega home run, but I just sold an out of the money put spread thinking, the stock has had a big move lower. Maybe it's already baked in. Maybe it's not an explosion higher, but maybe it trades sideways. That's how I'm looking at some of these earnings that are coming up. An AMD, a Disney, ARM is another one that's kind of on the lower end of where it's been trading. I don't know if they're going to explode higher, but they've had nice pullbacks to at least dabble in some short premium on.
It makes sense to me. So obviously some of the individual equity names are a bit juicier than the top line indexes. Indexes have come in quite a little bit here. But then again, like Tesla, 28.3 IVR. And it's kind of meandering right now. This is a pretty nice trading range between like 295 and 215 here in Tesla. Maybe more chop is due. It kind of seems like more chop is due when you look at some of these individual components, which would, I think, speak well to your perspective that we could be looking for that in the S&P. Just a lot of sideways ping pong as we sort through stuff. And maybe the economy doesn't falter. Maybe the Fed doesn't cut, so you don't go anywhere.
For sure. Like the two earnings that are coming up, AMD and Uber, I'm leaning short delta in Uber and long delta in AMD. And for no other reason than the sentiment of the markets of feeling like, the stuff that has gotten whacked has been, discounted. And the stuff that's been, rallying, like when you see these, like Uber at basically highs, I have a harder time getting long Uber than I do AMD. And that's, like with out of the money premium. And that's kind of how I've looked at it across the board in everything, in all the,
Some of the defensive stuff is holding up here today. Worth noting, XLU, the utilities, which is somewhat of an AI play, I suppose, which that's how I'm treating it through Exelon and Duke Energy. We see consumer staples here, a lot of sideways chop the past few weeks, but holding up, right? In the market today, you're seeing discretionary down, retail down, semiconductors down. The tariff-sensitive stuff is down hard. Utilities, staples are not. And then we look at the broader macro asset picture here today. So stocks are struggling. It's mostly defensive on a sector basis. Bonds are twisting, but the long end of the curve most of the day has been down, and I think it's recovered a bit here.
Yeah.
But the dollar's off and gold is soaring. It feels pseudo sell America again.
Yeah, I agree. The move in gold, the volatility in gold has been kind of a one that has given me pause in my sideways chop thoughts because, it's acting like a meme stock. Like you look at the move in gold and it's acting like things are not so good. So that one's giving me pause, but the rest of the market, it's kind of been just a chop and that's good. So I'm conflicted. I'm conflicted here. Chris, you're supposed to be my voice of reason. You're supposed to come in. I mean, I did tell you last week, you get the rally on all the tech earnings and then maybe a little weakness this week. You're supposed to tell me where we go now from here.
I'm not playing in the equities index pool right now. I'm playing in gold.
I respect that. You and Thomas have been spot on in that. I mean, that's been a great trade.
It's been a good trade and it's been holding up technically. And we flagged something yesterday that was worth noting. And we're going to revisit that shortly here.
Beautiful.
But I want to make the case for what's going on in bonds and notes over here, which are twisting again. Sorry for not updating the title slide from yesterday, but if the glove fits, Nick, we have a recovery now in the second half of the session. So literally 30, 45 minutes ago, we were looking at a market that was fading a little bit weaker. However, we did just have a treasury auction that came out good, which is what we need to see. I think this is the important thing that people need to understand about the state of the bond market. If foreign buyers keep coming to these auctions, a lot of the fear, a lot of the noise that we hear, it doesn't really matter. And what do we have today? We have a good 10-year auction once more. What do we do? The bid to cover is 2.6, which is above the 6-month average of 2.56. We see that the foreign demand, 71.2%. All these are good. These are all fine. Bid to cover ratio is up, demand is up. We see notes bonds turn the corner after that 10-year auction at the top of the hour. There is no auction tomorrow. There's another auction on Thursday for the 30s. They don't auction on Fed days. But either way, though, Nick, that's the key piece of information. At the long end of the curve right now in the 10s, foreign demand is still there. That's good news. I'm still trading this directionally neutral for what it's worth. I see a lot of chop. You talk about chop, I see chop. I'm looking for directionally neutral in bonds with an upside kicker in ZB. If only because I think when we get the Fed tomorrow, it's a mirror image of what happened in September. This is a market, we have a president screaming, yearning for cuts.
Yeah.
In September, when the Fed gave us a 50 basis point cut, what happened to yields? They went up, not down. Why? Because the market said if you give us cuts now, you're going to add fuel to the inflation fire. If the Fed doesn't cut tomorrow, they don't add that fuel. Bonds can recover.
Okay, so you're playing rates to come down then.
I think rates are going to go they're like tilting, cresting to the lower. It's bouncing back and forth, but now we're due for another swing to the upside.
Do you play bonds short term, or are you playing it more medium to longer term?
I think you have to take the typical tasty 45 in, 21 out, and maybe even a little bit more duration depending upon where you are on the charts.
Okay.
If 10s are trading near 4.5% and 30s are trading near 5%, then we could be a little bit more short-term in duration, because that's kind of the line in the sand that the administration's been defending. So let's say ZB falls into 112. I'd be comfortable going 45 in, 21 out, or even shorter. Let's go 30 in, right? Let's go 10 in.
Yeah.
But if we're up trading near 117 or 118, if I'm playing chop, we have to give it time to breathe because we're near the top side of the range. We're nowhere near the administration's pain points. And so, could you see a pullback? Yes. But I'm going to continue to treat those numbers in the 10-year yield and the 30-year yield as the Trump put, because the administration has been very, very clear about not wanting higher yields.
Well, they're down. They should be happy. Yields are down.
I suppose. Yeah, yields are down today.
Yeah.
Good news. What do you see with here at bonds? And it's a 42.1 IVR in ZB. It's a little bit more elevated than the equity indexes here. Does that draw you in?
I was going to let you dictate my position, and so I heard 112 and 117, and I was kind of going to trade that on a 45-day time frame using ZBs and do some sort of iron condor or something like that. I mean, I don't mess around with the bonds all that much, but I can be persuaded.
Well, let's look at where the highs and lows have been for this year, Nick. The high that we have on April 7th is 122 and 5 ticks. The lows that we have from this year are closer to 110. If we go out 45 days and look at the one standard deviation move, we find ourselves with an iron condor that could effectively be wrapped around that high-low range. And that's going to give you a 64% probability of profit, risking 3 to make 1. And the buying power is less than the max profit, which I always like, right?
Yes.
Frees you up to do more stuff. In this case, yeah, I mean, I think there is an argument to be made that as long as we are trading, 113, you're probably near lows. 118, you're probably near highs. A lot of chop in between. That makes a good deal of sense. And there's a way to capitalize on the relatively elevated vol still.
I'm in. 110, 120, my shorts, 2 points wide. So I'll play it.
As long as we don't break the yearly high or low in the next 2 weeks, right? Or tomorrow.
What do you think would have to happen for that to go down? Emergency rate cut or some sort of crazy China event?
Yeah, like China or Japan announces it's selling our treasuries because it's fed up with the administration's stance on trade. Right? Like that would be that's been discussed. It's the nuclear option. To see it actually put into the field of play would be crossing a Rubicon kind of moment.
Okay.
On the other end, what could get us to the yearly highs? Trade deals immediately. Right? If Trump came out tomorrow and said, hey, I have a deal with China and the EU, bonds would rip. Because now the inflation that the Fed was worried about coming probably doesn't come in the manner it does. And then they can focus on what they will see as a still decline in real output. coming around the corner.
And then they'd have to have the emergency rate cut. If that happened, you think they would have to cut rates because there'd be no inflation. Or, the inflation idea would be squashed.
Yeah, I would argue that if we saw a meaningful rate trade deal come together today, for example, just kind of hypothetically, I think rate cut odds for tomorrow would shoot up. Not that we're going to get a cut tomorrow, but I think the market's reaction mechanism would be, okay, we don't need to price in all this longer term inflation stress.
Mm-hmm.
And it's going to be growth positive, but in a manner that allows the Fed to operate more on the growth side of the equation rather than worrying about this tail risk of what happens if inflation goes up first before coming back down. And that is what they're worried about. They're worried about inflation going back up in the near term, and they don't want to be cutting into that.
Mm-hmm.
So, yeah, I think that would be the play, right? Give us a trade deal. Give us trade deals.
Mm-hmm. Big deals.
And
huge deals.
The biggest.
The biggest you can get them.
Big as possible. I like the moves here. Again, directionally neutral with slight upside bias. I have the short iron condor on in ZB. I have a short put spread on in ZB. I have a short iron condor on in ZN. Days like yesterday and today, they work out well for that mindset because we're just chopping and grinding. I think you want to talk about gold here, though.
Yes, of course. You're supposed to tell me that we're going to sit at 3,400 for about 10 more days. I got a nice wide butterfly right at I'm long the 3350, short 2 of the 3400s, long 1 of the 3450s, 50 by 50 points. Can we stay in that 100-point range? That's what I need to know for the next 20 days. 21 days.
For my sake, I hope not. For your sake, I hope so.
It's fair. At least one of us will win in that case, right?
This market's been so resilient. And, I've had my maneuvering in and out of it recently. We got to the 25% above the 200-day moving average here on April 22nd. I flipped long to short, rode it out for a few days, got back long, looked like an idiot after the market fell off at the end of April into the beginning of May. Was impatient. We were talking about getting back to 32 in the 1-month moving average, but it moved sideways and whatever. But then I got back long, and yesterday on the show, we talk about the black cat making its way through that building in the matrix. We've seen you before, Morningstar Candlestick Cluster. We saw you here at the start of April, where you have the big red bar, the inside day, and then the big green up bar, then encapsulates the previous one. We just saw that here this week, right? Big red bar, inside day, doji, yesterday the green up bar, also up against the 1-month moving average, just like it was in the start of April, also up against the former high. Now turn support, just like here at the start of April with the February high. So this is expected. This is what should happen if the charts and the technicals are, we're reading the tea leaves appropriately, right? If we're doing the candlestick analysis the right way, then this is what should be on the other side of it. And it is, which gives me greater confidence, Nick, that this thing is going through 3,500, through 3,600, through 3,700.
No.
So I'm playing this for new all-time highs. And that's the position that we put back on last week here in the GCQ5 contract. We're long again, the 35.50 call spread. And that's just been what's working this year, rolling up call spreads out of the money on dips.
You think that's through the end of this year is 37?
Oh, no, I'm through the end of this quarter.
Oh.
Like...
So where's our year end?
4K this year?
I'm ready to 4K. I'm ready to take some YOLOs. I could play that.
If we stay along the current path, yeah. I bet if we also get those big trade deals, gold's going to get vaporized in the short term.
It's fair. Yeah. But you get all the rate cuts. That should help.
You're going to get all the rate cuts. You're going to get a world where trade is more balkanized either way. And there's less need to hold U.S. dollars in the future, but there's no alternative.
Bitcoin,
gold. I mean, yeah. Bitcoin looks good in this world.
It does. It's been very strong. I mean, it's starting to move with gold a little bit more than it was into the down move in the market as a whole. Bitcoin was, you could see the NASDAQ Bitcoin correlation. It's kind of stopped a little bit recently.
what really intrigues me about the Bitcoin aspect of this, it has that narrative flexibility that gold has had for the past year plus, right? Rate cuts coming, good. Inflation still here, good. Geopolitics, great. Trade wars, excellent. Central banks buying, fantastic, right? Like name something, it's been seen as good for gold.
Yeah.
And what happened with Bitcoin in April? NASDAQ down, Bitcoin up. NASDAQ really down, Bitcoin sideways. NASDAQ up, Bitcoin really up, right? Like it's safe haven, steady.
Yeah.
It's nice. So you were asking, what do we do here, Nick? This, to me, for gold, seems like a stereotypical rather, environment of what has defined gold trading for the past several months, year plus, which is that as we start to go with a big thrust higher, you start to see volatility expand. And that was very much the case here at the start of April as we rebounded. Vol actually surged more during the rally than it did during the decline on a relative basis. And you're seeing vol pick up. People panic buy gold. That's why it has a positive relationship with volatility, unlike stocks. People panic sell stocks. You don't really panic buy safe haven, panic sell safe havens. That's unless you're in a very unique environment, which maybe we saw earlier this year. But I digress. Playing this momentum-wise, we have the things on the chart that we wanted to see yesterday. We have the Morningstar candlestick cluster at former resistance turn support at the 1 month moving average. This thing looks like it wants new all-time highs again. So feeling more confident than I did certainly yesterday or the day before.
Let's see, what's our the high was what? 35, 3,500. So we're almost there.
3,509. What's $80 between friends?
No, 1 day of price movement. It was up what, 80 or 90 yesterday? I mean, we should be there by the end of this week, no doubt.
Yeah, last Thursday we were near 32, and now we're up over 34.
Oh, it's crazy.
So
Does that spook you though? That you're seeing
Yes.
this? I mean, like gold is something that even right now, GC volatility is 23%, which is very, very high. I mean, there have been many a time where I remember gold volatility in the 10 handle, 10, 12, 13 maybe. You know, that's you're seeing that sort of volatility, realized volatility week to week. Kind of is a little bit of a weird sign, don't you think?
Yes, I think it's a horrible sign.
It's a horrible sign for everything else. I know.
What does it say to you that a shiny rock has more interest in it
with no yield?
No yield.
You just hope it goes
the
up.
future earnings potential stocks. Well, yeah. JP Morgan has a great study that they put out every single year to talk about like what gold's true yield is. And they estimate that gold's true yield, if you were to compare it to a currency, like the Fed's main rate is X, the ECB's main rate is Y, what's gold's rate? It'd be about minus 2.4%, because you have to factor in security, storage, and transportation costs.
Oh,
and so absent capital appreciation, you really do just have a shiny rock.
Yeah.
Right? And so when gold, this thing that has a negative real return, theoretically is soaring the way that it is and is highly volatile, it's not something that makes you sleep well at night. And I think that's one of the reasons why you're probably not feeling good about equities.
Mm-hmm. Agreed.
Silver is helping a little bit better today. I am still sitting long here. Today's 21 DTE. I'm going to have to make a decision about rolling this in some form or fashion. But like with gold, vol is creeping back up. And outside of that brief drop that we had here at the start of April, it kind of seems like we have a line in the sand near 31.75 or so. At pivot low that we have from May 1st, also pivot low that we have from the end of February.
Mm-hmm.
I think that the metals look fantastic here. That's why I'm long all of them right now. That's why we sold the put spread in copper last week when we pulled back into that 4.5, 4.6 area. Supply constraints, tariffs, easing, central bank easing, stimulus from the governments. The Trump administration is spending more money than the Biden administration did on a fiscal year basis, and the new budget that they're sending through is not going to cut spending in a significant manner. Why not trade the things that have done well in those pseudo-inflationary types of environments that have worked for the past few years? They continue to do so. But the market behavior is what's most encouraging. The price action, the volatility, evolution, all behaving in manners that are supportive for metals prices in the short term.
Yeah, Thomas was less bullish silver than gold. I think one of the interesting parts about the move in the metals is that, you've seen silver have these 1 or 2 day moves, but it really hasn't had the same sort of follow through. You haven't seen that beta play out. And I wonder if that's kind of the last leg of the metals move is you get that 1 day or 1 week, catch up of silver to the sort of move that gold has had. And then that's kind of your exit at that point. When silver finally catches up to what's happened in gold, that might be the top in metals. Do you feel that same sort of way in that, you probably see that, kind of velocity in silver at some point, and that kind of be the end of it? Or am I crazy? You could say I'm crazy too.
No, I understand what you're getting at, because there is, if we look back historically, there are windows, right, where after gold does really well, silver tends to play catch up.
Yeah.
And then once the silver catch up ends, it's not like a baton being passed back to gold and then gold takes the leadership for a while. It's the end of the bull run for metals altogether.
Yes. It's the FOMO trade, everybody missed gold. So they're like, okay, I'm going to get the cheaper, the sort of play, and everybody piles into that. And then you get that move and it's there's nothing left to pump it higher.
That I would agree with. I don't think we're close to that threshold yet, though. We need to see the gold silver ratio come back down to 90 in an environment where both gold and silver have rallied. Mm-hmm. Right? If the gold silver ratio gets back down to 90 because gold's at 2,500,
that doesn't work.
Silver's going to be at 26.
Yeah.
Right.
So you need silver at 36 and gold at 4,000.
No, I need gold at 4,000 and silver at 50.
Okay.
I'm really constructive on silver, Nick. It hasn't been great the past several months. It's been a lot of chop. There have been some good trades in here, obviously on the way back up. But looking at that monthly chart, longer term is what really gets my juices flowing here. Ooh. Left shoulder, head, right shoulder. There's an inverse head and shoulders pattern. Or if we want to just be cheeky with the Fibonacci extension off the lows that we have in 2020, swing high here in 21. Okay. We still have the short-term target would be about 36.25. The longer-term target, if we go to a doubling of the range, would be up over. And we want to get rid of you, and we're good there. Yeah, that's 54. We'll call it $55. So, there's still some longer-term, multi-year momentum to the upside as this base builds. I don't know if we're going to get to 55. It's not a target, quite frankly, I'm playing into. But I see 36, totally reasonable. That's why I have the 35, 37 call spreads on. And that's why I'm going to roll them forward. I'd like to get into the middle of that range and then reconsider the position. But I'm constructive on silver from here.
Noted. It's a constructive doubling. That's a 50% move, 60% move. I respect that. I like that call.
It seems crazy. Last year when silver was trading at 22 and 23, we started talking about moves up into the 30s and the 40s. And it was wild, but silver prices are up 50% since last February when those discussions were first being had. If it works in this environment, I like sticking with what works. I'm a loyal person, Nick. Gold and silver have been good to me. I'm not going to abandon them.
I like it.
Let's talk about oil reversal here, though, because what a move. Continuation from yesterday's intraday reversal. We're now up 3.78% today. From the market open on Sunday, from the gap open lower, oil's been the best performing asset class or asset period on the board. Nick, what do you make of this action down here? Because it looked like the world was ending Sunday night when futures opened.
Yeah, when it got into the 54 handle. Which is a huge move. And then into Monday, too, it sold off as well. It was weak the entire session. This one is a tough one. We've seen it bounce off of this kind of level a couple times. So, it's been relatively sideways, 55 to 65. I think maybe that's the range. I know Thomas was talking about kind of this kind of 55, 56 range is kind of when production starts to take some hits just because of the costs associated. So you would think that we kind of stay there. I don't think anybody wants, I know we could talk about the gas prices at the pump, which never change, but I think generally speaking, U.S. producers don't want it super low, and I'm sure, Russia and OPEC don't want it super low as well. So maybe it's a buying opportunity here if you don't think we're going into a recession.
Yes, that's the dynamic about the oil market, right? A lot of these countries, while they can produce oil at really low prices, $10, $20 a barrel, because of how their budgets are structured and their tax systems are set up, they don't have the same type of income taxes that we do. Mm-hmm. And so they use the revenues from oil sales to bolster their fiscal authorities. So the fiscal break-evens for a lot of these countries reside in the $60, $70, $80 a barrel range. For Saudi Arabia, it's closer to $96 a barrel right now if they wanted to balance their budget just using oil revenue, okay? So when you get oil this low, if you're OPEC and you're trying to increase production, to me it says that you're just trying to kill competition. You're trying to drive everyone below their break-evens to root out the weak hands, and ultimately you'll control more market share on the other side of it. What a damning review by the market in terms of OPEC's power, that we are already back to where we were prior to the leaks that were coming out Friday afternoon. I have long deltas on in here. Volatility starting to come off the board. The short put spread is working-ish today. It's not great. I'm going to sneeze. Nick, what do you think about oil longs off these lows?
I have some long delta here, so I'm with you. Bless you, sir. Bless you.
Thank you.
I have some long delta here. I haven't been trading a ton of oil over the last couple months. I've kind of stayed away from this this move, but I don't have a dog in this fight. Volatility is relatively high. Maybe it's like an iron condor type thing where, you kind of play for more of this chop, but I hope you steer me somewhere. I have a little bit of long delta here of a put spread that's in the 9-day that's right at the money. So I would like to see this move continue for 1 or 2 more days, and then I'd be out. But yeah, what's your thoughts here?
I think this is, first off, being in the 56, 58 short put spread, this move today is very welcoming. The rationale for why I had long deltas on in oil in the first place, totally idiotic now. Oil came off the board a lot. It looks like there's geopolitical risks in play. Keep an eye on Diego Garcia. Watch what's happening in the Middle East, blah, blah, blah. Obviously, none of that's working whatsoever, but the short put spread was put on when the IVRs were in the 80s. And this, we do have the weekend gap here, but imagine this red bar being filled out down to here, Nick, as if that's the weekend trading, and then we get the Monday open. That 1, 2, 3. Where did we just see that pattern? Oh, yeah, we just saw that in gold.
That's the gold pattern.
That's the Morningstar candlestick pattern here. And so it's occurring in crude again, right near the washout lows that you have in early April, which happen to be near the break-even points for U.S. producers. 49 to 53 is the average for most producers in the U.S., and you get below 54, well, then you're in that range where existing wells shut down. And that is not, again, what is the stated goal of the drill baby drill initiatives. So I like the long deltas here against these lows for the time being. If recession sets in, oil can crack and can go much lower, but this is a market that's highly emotional right now. And the fact that it's trading higher after OPEC, that's no bueno.
Okay.
I'm so torn about the recession, Nick.
Are you on or off?
I'm on right now for recession coming, just given the data that we've seen.
I know. I heard you this morning. You were talking about bear market rallies. Can't it just be a chop? Can't we just have like a chop, a no-name market? What do they call it? The kangaroo market now, where it's just like kind of both, a little bit of both.
I also can't help but wonder, we all, and computers and algorithms and bean counters, people with abacuses, like we all process information a lot faster now these days.
Yeah.
And so instead of it being like, oh yeah, this thing's happening and we all need to figure out what the impact is, so it's a slow burn, everyone kind of came to the same conclusion. Like most of the world came to the same conclusion about what the impact of these policies would be long term. And it was like, oh, U.S. recession. So we know it's coming. It's largely priced in, I would suggest. Core GDP is holding up. I'm trying to stay even keeled about this.
Yeah.
I'm using all of the metrics that I used in 2014, 15, 2017, 18, 19, right when these growth scares appeared. Because I just want to be intellectually consistent. If I said it was not a recession under Obama, and it was not a recession under Trump, and it was not a recession under Biden, we have to look through the same lens so that we're not just playing politics here. But politics may be played in natural gas. If you would let me explain for a quick second, this is very tariff sensitive. We hear all these headlines that are coming out. We see all this news flow about tariffs for movies, for pharmaceuticals. Unless we get trade deals going on, we're oversupplied with natural gas in this country domestically. This turn here is not quite that evening star candlestick cluster that we would see, the opposite of the morning star, but it is against the 1 month moving average. And it would give us a close back below the 1 week today is 2. You don't see positive slopes, rates of change here on either of those moving averages, the 1 week or the 1 month. I'm for natural gas prices to fall back. So you're getting this odd asset class mix today, Nick. Like natural gas is down, gold is up, bonds twisting before the auction, stocks still somewhat struggling here. Nasdaq's off 1% now. It feels like the market's landing in the tariffs are sticking around for a little bit kind of place.
Well, I'm short natty gas, so I'm with you on that.
Do you have any strong feelings on the currencies before we wrap this up? I know we have videos on demand coming up next, so we're not exactly pressed for time, but dollar down.
Again. I'm short premium in the euro. Volatility is just super high. Obviously, we've had a huge rally to the upside. I think it's a short vol play. I don't know if I'm all for it. I think I've poo-pooed the whole anything but the U.S. idea, but I think it's a short vol play. So that's how I'm positioned.
I think you have a good look there, Nick. In the euro, it's a 53.1 IVR. I would draw people's attention to that 1 month moving average here. You see at the end of February, Morningstar cluster, and then we start to rally. We treat the 1 month as support throughout late March. Here, we've created a level right around 113 that seems to be a line in the sand the last few sessions, and now we're rallying off of it again, plus that 1 month. German Chancellor Merz was confirmed today on a second vote to become the new Chancellor of Germany. He failed the first one. It kind of threw the euro into a bit of a, ooh, what's going on here? But it has since recovered. That is obviously the largest part of DXY. So you look at these two things in conjunction. DXY, this is, again, pretty clean here. Former lows from last September, Nick. Up against that 1 month. Now resistance. Right at 100, basically on the nose. So soft dollar, strong gold. It's fine. Works for us.
Works for you. That's no doubt. You're printing money over there. You're going to send some my way or something. My birthday coming up end of May, so I expect a nice present in the mail after that.
We only buy domestically now. And I was thinking it was going to be Pappy Van Winkle or a bottle of Corner Store Malort. And unfortunately, the coin landed on Corner Store Malort.
That's fair. I'll take that too.
Calendar tomorrow, Fed rate decision. We'll talk about it more on overtime. We're running over here for Futures Power Hour, of course. There are video on demand coming up. I think one of them is going to be me with Tom and Tony from this morning. Let me explain. So I'll be back, I suppose. We'll be back later on today, though. Overtime is after last call, as usual. For Nick Batista, I've been Chris Vecchio. Good luck trading. Brief break. More Tasty Live coming up next.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P's down 46.50, much like yesterday, Sosnoff. NASDAQ down 223. That's a little over 1%. Everything's down around 1%. The Dow, I guess, is the strongest of the group, only down 5/8 of a point. That's $269 to the downside. Russell down 18.5. Volatility up 50 cents. Enough. That's over where it was yesterday, or just about right near the high end of its range. It got to 23.90. It's 23.66. Volatility was bid all day long, even at the end of the day when the market was rallying. Volatility was still up small. Bonds up 2 ticks. After trading under 114. You slept on that. Traded down to 113.
I did not sleep on it. I was watching them last night, and I was like, you know what? I don't need any more headaches here.
SMRT Smart.
I got enough problems.
SMRT Smart. Bitcoin down 394 and change, low end of its most recent range over the last 2 weeks or so. Oil up $1.43, Sadnoff. That was going to be the option trades today. Do a little oil trade to the upside, but now we're going to have to wait, Sadnoff, every Tuesday and Thursday. Hey, lucky for you, today is Tuesday. Maybe I'll come up with something good for you. Gold up $72. Okay. Per K.
I have no idea.
Gold up $72 on top of an almost 100% move yesterday. Gold has gone from around 32.5 to almost 34 in 48 hours. That's a 2% plus move. Silver is also up 2.5%. That's 79 or 80 cents. Silver has had a good 2-day run also. Nat gas, don't hurt me. Pool season, 3.54, basically unchanged. Sadnoff, you did some of the earnings trades from yesterday. You got Palantir down, Ford down, and Hims, you didn't do anything, down about $3 or so. That's all I got. Today you got AMD, Uber, SMCI that you have positions in, Disney for other people, APP you have a position in also. That's it.
Can't find, I'm missing some positions. What the hell did I do here?
In what?
Bonds. I can't find my bond options.
Can't find them?
I can't find them. What the hell happened to them?
They're usually right
I know.
on the top of the page.
I mean, I'm spacing out. I'm blind.
You have a little problem over there?
I guess.
Mm-hmm. Okay.
I'm Tom Sosnoff. He's Tony Batista. It's Tuesday, May 6th. Let's see what we got. Confirm and send. I was just wondering if the size of the SPX is the reason the markets are so wide on the bid-ask spread. I figured all the big funds would deal in it so the markets would be tighter, but I'm having a lot of price discovery. I'm having to do a lot of price discovery when trying to roll my spreads. I don't have that issue in the SPY.
Yeah, so remember, if you had a penny or 2 cent wide market in SPY, that's going to be a 20 cent wide market in SPX. And a lot of time in SPX, just by the sheer size of SPX and no stock, the disseminated markets are a lot wider than the actual markets will be. So you are doing what is right. You could go to SPY and look at the equivalent spread, same strikes, and figure out what mid-price is. And they'll trade a penny or so around that same mid-price of SPY. But you are correct. It is just the sheer size of SPX. And the disseminated markets, the inside markets, are a lot tighter. Yes. Say something profound.
That's the whole issue here, is that the entire issue is that it's just a huge product.
Yeah. Yeah. I mean, you're looking at a $5,600 index.
Yeah. I mean, it's just a freaking huge
monster,
huge product. Mm-hmm. Yep. And that's the whole deal. I mean, when you have an index that is as big as the SPXs, markets are actually pretty tight.
Mm-hmm.
The markets are really tight. The markets are just as tight as they are in the SPY, maybe even sometimes a little bit tighter.
Yep.
But you have to kind of just, divide by 10.
Yep.
So, like if it's a 10 cent wide market,
is 10 times
if it's a 10 cent wide market, it's really a penny.
Right.
Let's go to the next slide. If I use an IRA or a Roth to do an SPX 0DTE every single day, am I subject to be penalized? Am I I subject to be penalized by the pattern day trading rule? Both accounts are $100,000 plus.
You should be fine. Right? I mean, it doesn't.
Yes,
Doesn't matter.
the rule is if you have over 25
kind of account.
If your net lick is over 25,000, whether it's an IRA account or any kind of other kind of account, it does not matter. If you have over 25,000, you are not subject to pattern day trading.
And it's such a silly cutoff or any reason to have it. I mean, why would you want somebody not to be able to take off risk?
Yep,
silly.
It's absolutely ridiculous.
You know what else is ridiculous? Skateboards were invented in 1959.
They might have been, but I didn't have a skateboard.
Maybe
let's go to the next slide.
Even.
I've read a number of articles talking about the importance of the S&P 500 getting back above its 200-day moving average. I don't understand why that's important. Can you shed some light on this?
When you find out the answer to this, you tell me too. I don't know why it's important either. I mean, it's a good talking point for people who trade and for people who don't trade, just to sound intelligent. I mean, it means absolutely nothing to me. I guess you're looking at what the average price of something, and you can interpret it as bullish if it's above, bearish if it's below, I guess, or maybe there's overhang there or something. But I've never looked at a 200-day moving average or traded it.
Yeah, when somebody can figure this out, you can help. You can help me too, and I would love to know the answer here. So I don't currently know either. I know there's a lot of people. Don't write me, please, because I get.
Yeah, if it works for you to help you,
that's right.
Go for it. I mean,
that's right.
More power.
The reality is, if you do a lot of research on the importance of the S&P 500 getting above its 200-day moving average, you're going to have a hard time sustaining that there's anything more to it than complete random results. Let's go to the next slide. What is put call parity, and what role, if any, does skew play?
Well, put call parity, it's just a way to price options. So, you know, if a $5 wide spread on the call side is trading for $2.50, the same strike put spread is going to trade $2.50 because the whole thing has to trade for $5 just the width of the strikes. So that's just put call parity and trying to price options. Skew, on the other hand, is when an equal distance option is more expensive, equal distance away from the stock price is more expensive than the other. You would say that side had skew, meaning they're willing to pay more for those options than the other option. The velocity of the move of the stock is in that direction.
Yeah, I wouldn't say that put call parity necessarily plays a role in skew. I mean,
it doesn't play any role.
Yeah, what put call parity does is it just lines up all the options so that they make sense. The easiest way to explain it is that that when you add up the different spreads, everything comes out to exactly what it should be. So put call parity, essentially, that's all that is. It's just everything is priced correctly, and the puts and calls are priced against each other to give it, and the spreads are priced against each other to give everything kind of a very fair theoretical value. Let's go next slide. Do you think it's possible for the dollar to lose its global supremacy? Also, what might that mean for the stock market if it should happen?
I don't know. Will pigs fly? I mean, someday. I mean, I guess they could. I mean, I guess it could happen. I don't foresee it happening in my lifetime, but I guess anything is possible, not only these days, but in days past too. What it would mean for the stock market? I mean, I guess on paper it wouldn't seem good, but I don't have any idea. I mean, I thought, when I was trading through my, first war, when we were going to go to war, the market was going to get hammered, and it went straight up. So who knows what happens to something?
I mean, I think the dollar has lost a little of its global supremacy recently. I mean, it was so strong for so long in the last, month.
It got out of hand too, to the upside.
Yeah, in the last month or two, it's come back to earth, and it's lost a lot of its supremacy. Now it's a very, average. I guess it's priced, kind of the middle of a long-term range right now. So it's not, it doesn't have that kind of crazy supremacy it had before. But what would it mean for the U.S. stock market if that should happen? Well, it wouldn't be good. The dollar has been kind of it's been the safe haven. The dollar has been part of the strength of the U.S. stock market for so long. So I don't think it'd be good. I don't think it's going to happen, but I don't think it'd be good. We're clearly in a worse situation now than we've been in a long time, but I don't know how that plays out. Let's go to the next slide. How much capital are you guys currently using with the VIX around 24? And what do you do with the funds that are not being used? Do you have them in SGov, BIL, or something like that?
Yeah, absolutely. Go right ahead. BIL, SGov, any of those. No commission to buy them, no commission to sell them. Pay around 4.5%, 5%, depending on the time frame. What's going on with interest rates? Sure, go right ahead. Easy, liquid. Get in and out. Move it for other things that you want to do. Go right ahead.
SGov and BIL are both Treasury ETFs. They're, like Tony said, they're transaction free. They're obviously very liquid. They trade about a penny wide. They're super liquid, transaction free. They're essentially riskless because they are Treasury ETFs. They don't really move in price. There's nothing much to. They're vehicles to use to get interest. We also recently launched T-bills direct on a platform. So there's in the icons on your menu bar. There's an icon for T-bills, and it's really cool. So you can do it yourself right on the platform now. But those are usually $50,000 kind of on average. But you can choose your own duration. You can choose your rates. You can choose your counterparty. So there's T-bills right on the platform, and there's SGov and BIL. Very
good.
Let's go to the next slide. And the last one. And it's funny because this is along the exact same lines. What do you do with the extra cash in your brokerage account? Do you leave it in as cash or invest part or all into SGov or something similar to earn interest? What do you do?
Same question twice. Yeah, absolutely. I mean,
it's a little.
I'm not as diligent as I probably should be, but yeah, I mean, if you are diligent and you probably should be with your money, yeah, that's the place. That's the place I would put it. Sure.
I'm a little more mixed. I use these instruments sometimes, and but I tend to use my trading account mostly for trading, so I don't really focus on the cash management side of it too much. I'm pretty aggressive with my cash in my trading account, so I mean, I will definitely use SGov, BIL, and T-bills, but but for the most part, I use most of my cash, so I don't really think of it.
Good job out of you. Let's take a quick 90-second break. So, do you know why? We got to take a moment so we can get ready for this option jive. We'll be back in 90 seconds. Let's take the live. E-mini S&P down 48. Haven't moved.
It's option jive.
Tomas, we are back, my friend, and you know what that means? Time for a little bit of an option jive. You mean the S&P's down 50, about 5 handles off of their lows.
Yeah, what do you think about this?
Seems a lot like yesterday.
It doesn't to me.
I think, let me finish. We are opening down 50. We opened down 50 yesterday. So to say it doesn't seem a lot like yesterday, volatility was exactly where it was too. To say it doesn't seem a lot like yesterday is just silly. So it seems a lot like yesterday.
Okay.
Just like yesterday. I didn't think we'd get back to unchanged, but we went a lot further to the upside than I thought we'd do. I think we're going to have weakness all day today. Going into tomorrow's numbers, this is the nervousness.
Yeah, I think they stay pretty weak today. Yeah, I agree. I think they stay pretty weak today. Anyway, we got a bunch of stuff.
Let's go.
We've got a bunch of research, and then we've got Chris Vecchio coming on. Then we've got some more research. We got hard stuff today. We're about to do a piece that's that talks about kind of stuff that you would expect, but maybe need a little confirmation. Let's see what we got. Can Delta help you time profits in a strangle? Let's take a look. So a short strangle profits by staying within a range. Okay, we know that. Let's go next slide. Expected timing for profits in a short strangle depends on the delta of the strike selection. What that means is if you go really wide in a strangle, okay, and versus going really narrow in a strangle. So what does the research show as far as the average time in a trade for the P&L to reach 50% of the credit received? Is it better to go wider or is it better to go narrow to get to 50%?
I'm going to say it's better to go further, because that's what I do, further out of the money. But when you go, because when you go closer, you're collecting more credit, it's harder to get 50%. Now, if they compare, I don't know if they did it here, if they compare the same 50% profit, let's assume it's $2 on the far out of the money, to $2 at the money, I'm going to see it's very similar in that case. But I haven't.
Let's take a look, Beth. Next slide. So the closer to the at the money, the longer the duration, which is kind of what you just said.
Mm-hmm.
So from 2015 to present, when you look at 40 delta strangles, 30 delta, 10 delta, or 5 delta, you get to 50%, way closer to 5 deltas than you get to 40 deltas. Now, that doesn't mean that the 5 delta strangle is better. Just means that you get to 50% way quicker.
Right, but it's a smaller number, right?
It's a tiny number comparatively. So let's take a look at the next slide. So what does the research show for the win rate and the average P&L? So let's go to the next slide. So same thing, 40, 30, 16, and 5 deltas. You take a look at the win rate. It's 98% on the 5s, it's 70% on the 40s. And then you have the P&L across the board. So you don't make a lot of money with the 5 delta P&L. With the 5 delta strangle, you only make $18. With the 40 delta, you make $77, although it takes longer. The average premium, and then we have the return on capital. Obviously, the bigger number you sell, the more money you're going to make. But my takeaway from this slide is, man, kind of like that really high pop, but you don't make much money.
Yeah, you have to go to the P&L here. I mean, you have to factor in the P&L.
Totally agree. Let's go next slide.
So you got to find that equilibrium, that happy equilibrium for you between,
So for risk, to better understand the worst case downside relative to the capital risk, the closer to at the money had the highest loss. And even the further out of the money, even if the further out of the money had the highest win rate. So what you're looking here is just top row win rates, 70, 76, 90, and 98. And then the largest loss, and then the loss rate, and then the largest loss, and then the max drawdown. So when you look at this page right here, you're going to have to trade off between a tiny delta and making a little tiny bit of money, or a big delta and making a lot of money but taking a lot more risk. And it's going to come down to somewhere between
the Goldilocks. Find yourself in the middle, not too hot, not too cold.
A little bit over the 16 delta is what it's going to come down to.
At least that's what we found for us, right?
Yeah, sure. Because you want the spot with the highest profits and the lowest amount of losses. And when you do lose, the smallest drawdowns. And I think that's the 20 delta. 15, 16 delta, 20 delta, under 30. Let's go next slide. So finally, let's take a look at how strangles performed when implied volatility was elevated above the 30% level. Perfect. Let's go. So when IV was high, we saw a faster turnaround on larger profits, but the 5 delta hardly seemed worth it. The data increase, days of the trade,
the delta increase,
days in the trade, and the average P&L increases while the win rate decreases. That's with IVR over 30. And so if you look here with the IVR over 30, that's kind of the perfect scenario, which what you want to have is a little bit more than the 5 delta.
Yeah, that win rate is huge. I mean, I know 77 is huge also.
Yeah, that's where we live.
Yep.
We live in that area, and that's kind of our sweet spot.
How much the average P&L goes up when IV rank is high. I mean, again, we talk about ramping up. You ramp up when the volatility is high. Not a good indication of that.
Yeah, your win rate's going to stay about the same, Your win rate's going to stay about the same. As you see it across the board, stays about the same. But your P&L goes up dramatically, and that's kind of where we want to be. So let's go to the last slide, takeaways. So for strangles, the amount of potential profits and the likelihood that these profits are realized depend on strike selection. So historically, the more aggressive the stock strike selection has led to higher average profits, but it's taken longer than the less aggressive alternative, which is the 5 delta. So I ask you now, which one would you go with?
I mean, I would choose the 30 to 20 delta. I mean, I don't want it to be too hot. I don't want it to be too cold. I mean, I think that's where we should live.
Yeah, I think it's actually closer to
20-ish.
Yeah, the last one. But I mean, I think you want to live in the area of 20, 25 deltas, and that we're exactly where we live.
Yep. I think we went through 9 slides here to kind of reiterate where we live. Now, we've done the research. You get a higher credit with a straddle, and you can get that same type of win rate if you take your profits sooner. To me, it just seems like it's a lot harder. It doesn't work as smoothly for me. Anyway, that's me. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P is down 53, NASDAQ down 259, Russell down 21. The Russell, they're all down around the same. I guess the Dow is the strongest, only down 300. Volatility up 60 cents, 10 cents off its high. So I don't know if we'll be back in 90 seconds.
I don't like this opening. I don't like the fact that the bonds are traded up to 20. Now they're back to 10. I don't like the fact that that Apple's down to 197 even.
197?
Yeah.
Apple? You are correct. 197.
Yeah.
It's off. Yep.
Yeah. I don't like this opening.
You don't like it, meaning you think it's going to continue lower.
I don't like it.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell.
This is going to be.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this man, Chris. Let me explain. How are you, Chris?
Bing bong. Knicks win.
You knew it was coming.
I watched a lot of the game. I'd like to have Jalen Brunson on the Bulls.
I don't think he's going to be available.
I don't think he's going to be available either, because if I was a Knicks fan, he'd be my favorite player like 10 times over. But what did they get? What did they have to give up for him? Anything? Was he a free agent?
Nothing.
He was a free agent, right?
He was a free agent. For all the crap that the Dallas Mavericks get for trading Luka Doncic away for a bag of beans, the Mavericks got nothing for Jalen Brunson.
Yeah. Yeah.
Feels good. Feels good. Just for the folks who are watching this at home, I mentioned this in the green room, but why was last night's game so miraculous? Imagine buying a 2 Delta 0 DTE option at 1:15 Central Time, and it expires in the money. The Knicks' odds of winning with 5 minutes and 47 seconds left in the third quarter were 1.7%. It was a thing of beauty.
We call that fooled by randomness, because if you really want to know crazy odds, go the night before to the Winnipeg Jet game. The chances of scoring 2 goals in the last 2 minutes in a hockey game is a lot less than the Knicks coming back from a third quarter 20-point deficit.
That is fair, but you just said Winnipeg, so you just lost half the audience.
Along those lines, my Taiwanese source at JC sent me this. In the first 106 years of the NHL, three Game 7 comebacks from 2 goals down in the third.
Yes.
So only 3 in 106 years.
They almost had the 4th last night.
Last 2 days of the NHL, you had 2 games with a comeback, with a Game 7 comeback from 2 goals down the third.
Dallas and Winnipeg. But last night, you almost had the third one.
Yeah, last night, you almost had the third one. Yes. With,
they said that.
Panthers.
The announcer said that last night on air. But you know what? I really miss Stanley Cup hockey is not the same without
the Blackhawks?
Without Eddie Olczyk. calling the games and without.
Did Eddie Olczyk have the winner in the Derby? Did you ever look? You didn't look. You didn't even find out. You have so much money, you didn't even care.
I didn't look. And without who's the famous hockey announcer? That's oh my God, I can't believe I'm spacing out.
What are you trying to find?
He just retired a couple years ago. But with that, he was paired with Eddie Olczyk. Without the two of those guys, not Pat Foley, but come on. Who's the guy?
I'll help you right now. I'm looking.
I'm out on a branch right now.
He's probably my favorite announcer anywhere.
Mike Emmerich?
Yeah, Mike Emmerich.
Yep.
Yeah, Mike Emmerich and Eddie Olczyk were the greatest. That's probably the best pairing of any announcers in any sport doing any game. Mike Emmerich was...
Anywhere, anyhow, anywho.
Mike Emmerich was the greatest. And paired with Eddie Olczyk, they made hockey. It was unbelievable.
He made it.
Made it.
Well, as a Knicks fan, Mike Breen, the national announcer for ESPN, is our local guy.
Oh.
So I get him all year round. It's awesome.
He's all right. He's no Stacey King. I'll take Stacey King any day.
We got Gary, Keith, and Ron here for the Mets, and we got Mike Breen and Clyde Frazier for the Knicks. Come on, that doesn't get better.
I thought Frazier retired.
No, he's still out there wearing his wacky clothing and calling the games.
All right.
All right, what do you got for us today on, since now you explained the basketball to us.
Let's talk.
It's nice. Thank you for that. We're basically 3/4 of the way through earnings season, and I think it's worth looking at the numbers here to rise above some of the noise that we're hearing about what's happening with companies and the tariff talk that's going on. 72% of S&P 500 companies have reported so far. We're seeing corporate earnings that are favorable. They're lacking the punch of recent high watermarks, but 76% of these companies have delivered EPS results above consensus, which is just below the 5-year average of 77%, but still above the 10-year average of 75%. So it's a modestly positive signal in what's otherwise been a difficult few weeks. On the aggregate level, companies are posting earnings 8.6% above estimates. Again, just shy of the 5-year average of 8.8%, but well above the 10-year average of 6.9%. So we're seeing a beat rate and upside surprise that are historically consistent, but not necessarily market moving. Thus far, the companies that have reported these 8.6% earnings above expectations, it's noteworthy because it's above the 1-year average of 6.1%. So we're seeing that companies are coming through this earnings season with a little bit better than expected. Going into Q1, we were looking at single-digit earnings growth rate. We come out of it with double-digit earnings growth rate, closer to 12%. All in all, while earnings season isn't finished, the tone is largely set. It has not been a problem for the market. Now, part of the reason I bring this up is because over the last few weeks, the volatility at the index level was so high, a lot of people stepped away from trading some of these earnings releases to focus on S&P, NASDAQ, what have you. Yesterday on Overtime, Mike Butler and I were talking about this. Now that volatility has calmed down in the indexes, are we going to turn our attention back to some of these earnings releases moving forward? So I was wondering what you guys are thinking here. We have names like AMD coming up this afternoon, Walmart, Baba. How do you guys approach trading earnings during periods of high vol versus low vol in the indexes? And do you find this to be a time where traders may want to focus more on some of these earnings releases now that index vol has come in?
Well, a couple things. First of all, although, like you said, more companies have outperformed based on whatever the projections are, the up-down, because Kai shows this, the up-down number is 50-50 exactly, which it tends to come out to every time. So whatever we want to say about earnings, one thing people have to realize is that regardless of what companies report, whether they say they're doing better, worse, whatever, every time it comes out to 50-50. 50% are up, 50% are down. Doesn't matter whether the numbers are good or bad or whatever. That's the first thing. Second thing is, as you can see from this earnings cycle, when implied volatility is high, like it is now, earnings plays are much more interesting and much better. We've played virtually every major stock this cycle, and Palantir was one of our biggest winners last night. But we've only had one big loser. It did do some damage, so be fair, because it did damage, was Microsoft. The only thing that traded way outside of its range of every single stock that we've traded, which is probably 50 earnings plays so far, is, and I'm not saying they were all winners, because there's some break-evens or some losers, but the losers were small. The break-evens were, up or down, basically nothing. And there were a lot of big winners, but the one big loser was Microsoft. That says so far this earnings cycle has been great for self-directed, traders selling premium, because most of the trades have been they haven't even been tested. Microsoft was the only one that I can think of that's a major stock where it tested you and then it kept going.
Agreed.
Today, Microsoft's only down 250. It's been.
And Apple tried to stage a rally. It's only down $1 now, but
Microsoft's down $1, and PLTR, which we covered, is down 15. So I think it's going to be a good cover.
Apple was flirted with 200 a minute ago. It got up to 199.88.
Yep,
197.80. $2 lower.
Sorry, go ahead.
Sorry, yeah.
Well, one of the stats that of course. One of the stats that we like to check in here when we talk about earnings, we go over this about once every 3 months here, is how are companies being rewarded or punished by the market for beating or missing their estimates? The market right now through the first quarter is showing a stronger than usual appetite for upside earnings surprises. In Q1, S&P 500 companies beating EPS estimates have seen their stock prices rise an average of 1.6% in the 2-day window before and after earnings, which is above the 5-year average of a gain of 1% during the same period. On the flip side, negative surprises are being met with only average levels of punishment. Companies missing expectations this quarter are seeing an average drawdown of 2.3% in the 2 days before, 2 days after window, which is exactly in line with the 5-year average for downside moves in the earnings window.
There's a problem, Chris. There's a problem with that. There's a big problem with that. When this earnings cycle first started, we were much lower. And when you're much lower, negative surprises don't hurt stock because they've already been killed. Now that we've rallied, had this monster rally in the last 10 days, you get a positive surprise like PLTR, and they kill the stock. So it's not the source of the information is not taking into account the market move, like where the market is. When the market's oversold, negative surprises don't really hurt the stock. When the market's overbought, positive surprises don't help the stock. So you can't take it out of context, and that's essentially what that
that was the third step in this journey, Tom. We're building up to a story here, but
I know, but that's the whole reason. So you'll get a stock like,
but that is the reason.
Yeah, that's the whole reason.
I think that context matters, right? Like building this up, earnings have been good, stocks are beating. But the context is because the market had come down and the bar was so low. Yeah. And when we take a step back, right, when were companies being punished for earnings a few months ago? When the stock was on highs. Back in the second quarter, third quarter, fourth quarter last year, we'd frequently note how companies were being punished more than rewarded. And it's because we were sitting on the highs. This may be a function of us coming off the lows and us just having gone through an earnings season when the market was down nearly 20%.
Yeah, that's your answer. Okay, what else?
So we've rounded onto that. Well, I think we should talk about what's going on with the Fed tomorrow. You and I had the pleasure of kicking things off this week on First Call, and we found ourselves in the unusual position of agreeing on an outcome for perhaps two different reasons. The Fed right now going into tomorrow, according to the CME Group's Fed Watch tool, which is, I think, as you noted, Tom, the most visited website page that they've ever built for anything altogether. They're telling us there's a 2% chance of a cut this week. But more importantly, there's only a 30% chance of a cut in June. And that's been a dramatic downshift over the past 10 days when the market was favoring a June cut. Believe it or not, all the information that's come out over the past week, from GDP to non-farm payrolls, reinforces a view that the Fed may not be able to move right now. So from my particular perspective, Tom, and I think you agreed as well on Sunday, even though the Fed may not cut this week, what we're seeing in the bond market with relatively elevated a state of volatility compared to, say, equity indexes, there may be an opportunity to look short put spreads or find some long deltas in bonds here, because implicitly, if the Fed doesn't cut, they're not fanning inflation. And it's almost a mirror image of what we saw in September. The Fed cut 50 basis points in September, and yields went up because the market priced in faster growth. This time around, no cuts, no faster growth being priced in, yields can stay lower. I'm leaning long deltas here. I think it's an interesting play still. We had a nice little pullback at the start of the week. I think it's a gift. We do have the Trump line in the sand, after all, 4.5% of the 10s, 5% of the 30s. I'll continue to trade around them because I don't think the administration is going to give up its yield narrative.
Oh, I don't think the administration is going to give up the yield narrative, and I don't think that they I don't think that was ever part of the I don't think they actually this administration needs help right now because the optics are so bad, and they don't want the Fed to actually lower rates right now, even though they say they do, because right now they have the perfect scapegoat in the Fed. And so I don't think that's even, I don't even think that's on the table. I mean, nobody's going to look at bonds at 114 and think that we should be lowering rates tomorrow. I mean, it's not possible. So anybody that says, like, if Trump comes out tomorrow and says,
we could go at 117, 118.
Maybe
you
could have justified it.
Right, could have justified it.
At 114 right now, you cannot justify it, no matter what.
The market's saying you're not doing it.
Yeah, the market's saying forget it, not a chance. And so if Trump comes out tomorrow and says, well, this is all on Jerome Powell, he sucks, he should have lowered rates, it's all optics. It's all bullshit because he knows you can't lower rates here, so he can still.
It's a soundbite like anything.
It's just a soundbite, yeah. Mm-hmm. So there is no lowering rates here. The question is, what do they say? Because everybody knows they're not lowering rates. So what do they say? So, I mean, Powell's going to say the same thing he said all along, because at this point, he's got to show strength and independence. He's got to show that he's objective. And so he's going to continue to say what he's basically been saying all along. In a perfect world, we'd love to lower rates, but we're not there yet. There's too much uncertainty. And that is a reasonable answer. Trump will say that's not a reasonable answer, but he gets to throw Powell under the bus still. So that's a good situation for him. Everybody's
always looking for somebody to throw under the bus.
That's his thing. Yeah, he's got to throw somebody. And
throw me under the bus every day.
There you go.
And now it's your turn, Chris.
But I guess my point here is that
shit rolls downhill, Tony.
I don't expect much to happen, but I will say this. I think bonds are way too low here at 114. I've been buying them this morning. I'm down a little money on them today. I want to buy more. I think they're the best risk reward on the board because I think they have kind of like a built-in floor here.
Mm-hmm.
So I think they have a better risk reward than stocks. And if I was going to be long some asset class here, I mean, if I had to pick an asset class, it wouldn't be precious metals because they're just stupid.
Because they just go up every day. I wouldn't want to be long those. Mm-mm.
It wouldn't be digital assets here because they've already had a massive rally. It wouldn't be stocks because they've already had a massive rally. And so if you want to pick something,
they're mid-range for the year. I mean, we started the year at 6,000. We went down to, I'm going to say 5,000, and we're 5,600. I mean, I threw out the lows, I threw out the highs.
I'm just saying, I think
we're mid-range on them.
I think bonds are cheaper than stocks.
Okay,
that's all I'm saying.
I give you that too.
So I think if you had to pick an asset class here, that'd be the cheapest asset class.
Just as a note, perhaps from my own perception, it seems that you guys are shifting away from there's the attitude of the only thing that you should trade is the stock indexes, which in fairness, when you have 100 IVR and ES, why bother trade anything else? Do you guys find yourself looking at other markets more now that we have a VIX term structure that's back in contango as of this morning?
Well, to be fair, I mean, the reality here is that we have always been pretty active in equities, since we started Tasty. Prior to that, it was mostly indexes, but for the last 14, 15 years, we've been pretty active in, we like trading earnings generally. And we like,
even though we bitch, moan, and groan about it,
we like the higher implied volatility of different certain stocks. And there are situations right now, like one of the stocks that I've been buying this morning is Apple, just because it's down, whatever, from 213 to 197.5 in 3 days.
Yeah. 4. I mean, this is the 4th day.
Yeah, but I'm just saying, like, to me, that's interesting. Like, I'm not going to buy Palantir today, but traded 130 last night on the curb. It's trading 106 this morning. That's kind of interesting, but I'm not touching that yet. I guess my point here, Chris, is that that as indexes go, we're still short premium and stuff like that. But because of
And
high
I think the
volatility,
market got a little bit ahead of itself too on
Yeah, I
this
did.
most recent rally. I mean,
we've been-
sideways to lower is not going to be out.
we've been pretty bearish since last week. It's
Mm-hmm.
okay. But yeah.
Well, speaking of bearish, I know that we just ran off a stretch of 9 consecutive days higher in the S&P 500. I think it's worth noting that's not something that typically happens during good times. Since the end of World War II, 80% of rallies that have been 9 days or longer have occurred during bear markets. So it's been fun. Let's just be careful what we wish for.
Do you think this is a bear market?
Yes.
You really do?
I think this was a bear market rally.
One hell of a bear market rally.
Yeah, plus I'm not
We've
sure.
seen bigger ones.
I don't know how to define. I felt like it wasn't a bear market. I felt like it was just a sell-off. I mean, we could be
a rose by any other name. I mean, we can call every bear market a sell-off and every sell-off a bear market of 10% or more. That's what the industry has put it on, right? That's the number they've given it. I think it's silly at 5,600 that we have the same bear market that we would when the index was 700. I mean, you know what I mean?
So here's
3,000,
my
whatever.
measure. I don't necessarily look to the index to see the 20% decline to determine the bear market. I look at the average, the median stock in the S&P 500, right? Where are we for the average stock? Forget the tech companies that hold everything up. And the average stock in the S&P 500 was down more than 20% and is just climbing back through those levels. So yeah, I think that it's still a bear market. We've seen bear market rallies of 17, 20% over the years, right? You go back to the global financial crisis. Some of those bounces in 2008 were nasty, made you think we were out of the woods, and we weren't. So I look, the port data is the one thing that's keeping me up at night when I'm looking at this, because if the stock market's going to continue to decline, it's going to be for a recession. The Port of Los Angeles has this great website, Port Optimizer, where they publicly display the container ships that are coming in. Maybe there's a bounce back coming here, which is worth noting, which is worth keeping an eye on, about a 30% year-over-year increase. But the last time we saw that, a bunch of those bookings were removed, and it became a 10% decline year over year for the forthcoming week. The point is that the trade isn't being resolved yet, and recession scares me because it's nonlinear, and equities don't like recessions. So we'll see.
Thank you, Mr. Vecchio.
Thank you, Mr. Vecchio. We're going to take a quick 90-second break and come back. We got more Tasty Live in about 90 seconds. I don't know, even the S&Ps made a new low just a moment ago. They're off of that low by about 13 handles. They're down 52. NASDAQ down 260. Russell down 22. Dow down 344. Volatility up 75 cents, although it is about 30 cents off of its highs. We'll take a quick 90-second break and come back. We got more Tasty Live with a market measure next. Be back in 90 seconds. Thanks, Chris. Tomas, we are back, my friend. You know what that means. Well, we got more Tasty Live with a market measure, but you got something you want to say. You got something on your mind?
Apple's unchanged.
Even the S&Ps are down 45.
They've rallied back about
60.
20 handles.
Yeah.
Something.
Yeah.
I'm Tom Sosnoff. He's Tony Batista. Just a quick little reminder. We put out a press release today actually announcing all of our live shows that are coming up. So if anybody sends it to you, yes, we did put that out. But if you haven't had a chance to sign up yet, we've been talking about it all week. May 30th, Tony and I are going to be in Atlanta, Georgia. That's the week after Memorial Day weekend. And we are really looking forward to it. We've got 3 Waffle Houses to try, and among other, what's the place with the hot dog? The Varsity.
Okay.
You haven't been there yet, have you?
No. Is that the hot dog joint?
It's a hot dog hamburger joint.
Yeah.
What do you have? That's what they say when you
That's what they say.
What do you have?
They have them in airports, don't they?
They have it in the Atlanta airport.
Oh, okay.
It's pretty gross, but what they do have there, that it's gross but edible, is coleslaw on a hot dog. And I happen to be a coleslaw fan.
Okay.
So hot dog, mustard, coleslaw.
Yeah, I don't know. I like coleslaw too, but I don't know if I like the mustard with the coleslaw. I don't know.
It's the mustard's optional.
Makes sense. Makes sense.
Might have to take you on a road trip to really mess up your system. I don't think you'll recover from that. I Anyway, we'll be at the Buckhead Theater in Atlanta, Georgia on May 30th. We can't wait. We got a really fun show planned. And it's, like I said, it's the week after Memorial Day weekend. So it's going to be a short week. You have Monday off, and then you'll be at work on Friday by 11.
Perfect. Love it. Come out and see us. We still got space. Love to see you.
Yes. Can't wait. And it's Tony's first road shoo. And after he gets done eating,
time.
After he gets done eating at the Varsity, it may be his last road show. So that's all I got. Then we'll be in London. Then we'll be in Italy. So that's all we're showing right now. And then we've got tons of stuff after that. Anyway, we're running late this morning. As a special treat, because this is kind of a heavy piece.
Which you told me you were going to dumb it down for even I could understand it.
Well, here's how the story went last week. So yesterday, every afternoon, we do something called the pitch. And I'm sitting.
We used to be able to film it, but then Beth said,
Yeah, we should do a segment like that.
Yeah, but
not allowed to do it anymore.
Somebody ruined that.
Somebody ruined it. Behind the scenes look. It was really kind of fun.
So I'm doing the pitch with the guys. You know, we're having this very high level intellectual conversation. We're talking about
two-way conversation too. I'm sure. Because you always let everybody.
We're talking about literature, poetry, politics,
world
events, all this crazy stuff.
Sure.
And then Jacob goes, I go, Jacob, what's the piece for tomorrow? And he goes, well, you struggled with Kelly last week when I wrote another piece. He goes, so I put together a very easy piece for you guys. And I'm looking. I go, Jacob, easy for who? Easy for you or easy for Tony?
Easy peasy.
He goes, easy for you guys is what he said. I go, okay. I go, and that's how our pitches go. And he kind of started to explain it. And then he said, I'm going to use Monte Carlo simulations to unlock the Kelly criterion formula and discussion and how you guys can actually use it in your trading. I go, fine, that sounds like fun. So we looked at it this morning. We're like, oh, it is fun, but it's a little tough still for us. So we brought in Dr. Data because we needed a PhD in the room.
Of course we did.
As is usually the case. So Data, welcome to the show.
Well, thank you. Thank you.
Thank you for.
Oh, what are you doing there?
Hey,
good to see you.
Thank you for jumping in at the last minute. I know. Of course. We didn't prepare you in advance for this.
No.
But Tony and I struggle with pieces like this.
Of course.
It's been a while.
It's okay. Maybe I can help out with
We
this.
like when all the numbers are already done. We understand the concepts. We like the numbers are already calculated for us.
Well, actually, explain to us better.
Well, Kelly criterion, right? It's just how much money you're supposed to put in a particular trade, but it's very theoretical, right?
Without
So
risk
practice,
of ruin. Without risk of ruin, mind you.
Yeah, exactly. Yeah. But in practice, it doesn't really work very well with trading just because your probabilities are changing, the amount of money that you're putting up is changing.
Of course.
A lot of things. So in
But
theory,
it could help us.
sometimes different.
Theoretically, it could help us with sizing.
Yeah, absolutely.
And then what's Monte Carlo simulation?
Okay, Monte Carlo simulation is just where you're using a computer.
Yeah.
Right. It's kind of like it's a newer way of, I would say, doing things. Right. You're using the power of a computer to create some randomness, which trading is random. There's a lot of randomness involved in it. And so you're making some small adjustments and seeing how it plays out over time. So you use it for all sorts of things, such as like, does mom have enough money to live out her retirement years based off of different scenarios, right? So they use Monte Carlo simulations to do like retirement planning and to do a lot of planning when it comes to different things.
My mom asked me that question. Do I have enough money? And I'm like, because she's like, you don't let me see anything. I'm like, yes, you have enough.
Oh, you're investing for her? If she had to live off the investing that you did for her, she's going to live a very, how they say it, spiritual life. She's going to live that way. Yes.
So Monte Carlos are great.
Mm-hmm.
Use them all the time in finance.
But we use them on Tasty. I mean, we use them for the P50.
Yep.
And you've built many Monte Carlo models into the platform.
Use them a lot.
Okay. But you build...
Because it's a very practical way of doing things.
And you build a lot of those models for us.
Absolutely.
Okay. Let's go.
So what Jacob's here, he's doing is he's making adjustments and using... he's keeping some of his variables consistent to make it easier, but then he's making some small adjustments to try to create randomness so that this is to see how these trades would work over time, to look at the probability of loss on this.
Okay. So do you want to take us through this formula here? Because this is just kind of, he's setting the stage.
He's setting the stage here. Yeah.
So take us through this.
Yeah. So he's looking at the probability of bankrolling, how much money you would need, and the probability of loss with the wager, and then how much of a bankroll you're using at each opportunity. And then you're looking at that long-term growth of that portfolio over time to experience what the loss would be. But he's then saying, let's go to the next slide here. He's basically saying that we're going to use Monte Carlo simulations just to be able to create
enough occurrences.
Yeah, create enough occurrences so that this is not just some theoretical formula, that we can create something that is a little bit more like nature.
Okay, let's go to the next slide, Beth.
Okay.
So here's the study. We use simulated data for the hypothetical pure Black-Scholes underlying with an initial price of $500 and a constant 16% volatility, assuming a 3% risk-free rate, just to set the background. Then consider two defined risk, 45 data expiration, short premium strategies, shorting the 490, 510 strangle, while doing the long strikes either $5 or $20 away. So basically some iron condor version that's $5 wide or $20 wide in a constant marketplace. And then because that's where we create the Monte Carlo simulation off that.
That's right.
Then we examine the 5-year performance of the portfolios beginning at 50 grand and repeatedly devoting given percentages. 1%, these are the allocations, right?
That's right.
1%, 5%, and 10% of the available capital as buying power to such trades, and then allowing them to trade fractional contracts.
He's just trying to keep it easy, trying to keep the math easy.
So in based on what I understand about this, okay, if it's a $50,000 portfolio, and I have not looked at the results of this.
He's either using $500 all the way up to $5,000 on that $50,000.
That's right. And based on the research we've done in the past, I'm guessing it should be in that 1% to 2% range.
Yeah.
Should be the
And we're not trying to get too complex here when it comes to, so we're even allowing fractional amounts. Let's not, let the truth get in the way here of everything. We're just trying to keep as realistic as possible, but this is a theoretical study that he's doing here.
So iron condors, one with a tight iron condor, one with a wide iron condor, which is similar to like a synthetic, and then 1%, 5%, and 10%. I'm guessing the answer is going to fall in that 1% range, but let's see.
Yep.
Let's go next slide.
Okay, so this is a good looking visualization here that he did. What this is it showing it starting out at 50,000.
Yep.
Right? You see that big red, that red right there, and then it goes all the way out to 1,200 days, right?
Yeah.
That's the full number of studies, and then each one of his studies is actually going out to 1,200 days. He's starting out each one of these at $50,000, right? That red is just showing where basically 50% of the data would fall, between 75% and the lowest 25%. So anything between the 25%, basically like one standard deviation in effect worth of data is what he's showing.
Okay.
See that flat number, that's going to be the 95th percentile. So anything above that would be considered only happening 5% of the time, and that flat number at the bottom, that's what would happen the lowest 5% of the time, right?
Okay.
That's where things don't go very well over time.
Got it.
That flat line is going to be the median, which is the number right in the middle of all the number of occurrences, and then the mean. Of course, the mean is going to get skewed upwards, but you could say that the median, which is that light red colored line, is kind of where you'd expect to be the most amount of times. And so you can see it's a profitable strategy overall when you're doing this this particular strategy.
Okay, but this doesn't take into account the different allocations, does it? No.
So this one, he's going to show four different charts.
This is the 1% of capital, right?
That's correct.
Okay.
Yeah.
All right.
So there's five different charts here that he's going to do. Okay. The first one was 1%.
Right.
And that was a $5 wide iron condor. Okay. Then he's doing 5%. Okay.
Yes.
So 5%, there's actually a lot more volatility here in this particular strategy. You can see, it's doing quite well, but the volatility of that movement is quite a bit greater. So that 5% can be really quite great, but then there's also a higher likelihood, it appears, of ruin, which is that lowest line, which is actually going below where you started, even below zero. So there is a probability of ruin here.
Probability that grandma can't live out her money is what you're saying, right?
Grandma's going to be eating cat
Can
food.
you go back to the last slide, Beth, for 1 second? Oh, so there's no.
So that's the 1%, right?
Yeah.
And there's actually no occurrences.
There's
in
no
the
probability of
simulation.
ruin here.
Theoretical ruin.
Yeah, theoretical.
Yeah.
Okay, got it. Now I see.
Now you bump it up.
Yeah, I got
that's
it.
5%. And okay, now we have some probability of ruin here. That there's just a number of multiple occurrences of loss.
Let's go to the next slide, Beth.
10%. Now you even have a greater volatility of movement. So this is like, it's a matter of how you view risk, right?
Yeah, I understand now. Now it all makes sense.
Now he's going to flip it up.
Now he's going to go to a $20 wide, which is the synthetic. Let's go to the next slide. I see.
So this is basically just a strangle right here.
Yeah, it's like a synthetic strangle. Okay.
So you're using 1%, and then you're using 5%.
Yeah.
The next one. And you can see that probability of ruin just gets greater. To me, what this is telling me is that you got to be more careful about making your bets when you increase the amount of a capital in a particular trade. In effect, that's what it is. I mean, that's all we're looking at here, is that he's doing a really nice way and a fancy way of.
Is the takeaway risk of ruin?
Let's see. Well, we can read it. It's on the.
Well, hold on. Go to the next slide, Beth. So the Kelly criterion precisely answers an abstracted mathematical question about optimal bet size. While directly applying the Kelly criterion to option trading is confusing and risky, the insight and the amount of capital devoted to a trade should scale with the size of the account. The probability of success and the ratio of payouts to losses is profound. So using Monte Carlo simulations, especially with iron condors, larger bet sizes had a better mean performance, but a riskier median performance. The riskier the trade, the more important it was to stay small.
We could actually look at that through slides 3, if you want to even look at a comparison between 3.
Yeah, let me finish this first.
Okay.
Let me go back to that, Beth. It remains to expand these experiments to include various management techniques to consider trades with undefined risk. Remember, the more efficient the market, the smaller Kelly recommends keeping each trade while trying to make many of them. I mean, I got this. Now I understand. So what he used is just basically lots of Monte Carlo simulations to help to validate the trade size.
Exactly, and what you know kind of intuitively, right? Yeah. So he's using math to back up what you know intuitively. The more that you risk on a particular trade, if you have a strategy that's working, right, you should put more money into it, right? But there's always going to be a risk of loss. So in a risk of ruin, the more that you put it up. So even though these are strategies that over time they have historically worked, that median does go up.
Yeah, makes total sense. I understand it. It's actually a little more straightforward than I thought.
You just got intimidated by the graphs and the formulas. That's all. You're all right
now. Jacob did a nice job here with this study.
Thanks, Data.
Of course.
Like I tell my son, you just got to make an effort, South enough. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P's only down 30.
Only.
We'll be back in 90 seconds. Let's Tasty Live. Peace.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract. Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
I wasn't going to call you out publicly.
Oh, no.
But I have to.
What?
So we're out yesterday afternoon. So we're driving down Ravenswood. Now, for people that don't know Chicago, which is most of you, there's a train that runs in the northwest and then it goes up to the northern suburbs and runs right down the street. So one side of the train is heading south, the other goes north and south, but let's just say it goes north. So we're on the southbound. So Tom takes off in his new fancy electric car, which I can't keep up with. Do you know that there's actually stop signs on that street? Okay.
Blue stop sign.
No, he didn't blow through them. He went from like 40. No, he went from like 40 to 30, and then just kept going.
Oh, I don't stop for stop signs.
Because you're above the law. Above the law.
So
that's so bad.
Only for pedestrians.
There's streets.
Yeah, and you're in a bigger vehicle. You can hurt them. They
There's
can't hurt you.
streets that go east-west.
I don't go through red light, through stop.
No, just stop signs you go through, not red lights.
Go through the meters getting on the ramp on the highway. You don't believe in those. You
Oh
say,
no, those are bullshit. You stop at those?
Yeah, it's the law.
You stop at those red lights on the highway.
Yeah, it's the law.
Oh my God, you're
It's so that it's
the
so
only
that
people that stop
a-holes
at those
like
are
you.
tourists.
It's like a-holes like you,
right?
Don't make it good for people trying to get on because there's not enough room. They're synchronized for the traffic,
Oh my God,
and it's the law.
It's only for tourists.
Beth, I need some
It's
help.
the same people that sit upstairs at restaurants. It should say that. I've got like 10 tickets.
Don't you notice that the cars around you slowing down? Like, that's what saves me, is like, I'll be up on like Ashland, because there's so many of those things on Ashland, and you notice the traffic around
No, I forgot
you
one on Ashland. I only get them
slows
on
down.
Western and
The
Irving.
same phenomenon, Mr. Pedantic. Oh,
Yeah.
God. Bat, how are you? Jeez Louise. You would not last 30 seconds in an improv class, because the whole premise of improv is like, instead of just shutting everything down immediately, is to be like, yes, and. So like, you know what? I'm going to agree with what you're saying, and I'm going to add on to this to further this conversation so it doesn't grind to a halt.
You know what's funny? As much as I like comedy, improv, like Second City Improv, doesn't do it for me.
Okay, of course it doesn't. Bat, how are you?
Do you think you could name one Taiwanese food?
Yeah, Thai food, I eat it all the time.
You now learned that Thai food is short for Taiwanese food. Taiwan. Yes, look at you, Sas. I'm very proud of you.
And I want to ask our producer, John, something.
Yes.
John, can you help me here just for a quick second? Just because I don't want him to yell at me. John, have you ever had Taiwanese food before?
I've had Thai food, yes.
Taiwanese food is not Thai food.
Where's Thai food from?
Thailand. Thailand and Taiwan are not the same country. They're not even
Taiwanese cuisine is commonly referred to as Taiwanese food or Taiwanese cuisine. What are you talking about?
Oh, hold on. Oh, my God. Here he is. Jason, come here.
All right.
He is our Taiwanese source. When you say Taiwanese source, there's your Taiwanese source.
You're looking at him right here.
You're looking at him.
That's right.
I will take whatever Jason says. I will take it. If I'm wrong, I will apologize.
No,
I said to him, can you name one Taiwanese food? And he started laughing at me, thinking that it was Thai food.
You know, that's a common mistake because the Thai part of Taiwan, people mix it up with Thai.
Don't defend him.
Jason, just for the outtakes later this week, I stand corrected. I am man enough to admit when I'm wrong, unlike other people in this room. I am man enough to admit that I am wrong, and I'm glad you came in to clarify this.
No, you're not.
I owe you and your people an apology.
No, you're not. Hey, do you guys, you want to know what we're having for lunch today?
Velvet taco.
No, they switched it. We're having Thai food now.
Is that a joke? Did you write that yourself? You're so good.
Get the full scoop by checking out the archives at tastylive.com.
Welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler.
I was a chemist and engineer for over 10 years and conducted experiments and research of all kinds. However, for the past 15 years, I've been an options trader, and I've traded strategies of all kinds. While the concepts may be different, there are certain similarities between these disciplines.
My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything, and that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So, no, I love to trade it all.
I'm running Snow Leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Rolling to the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter.
tastylive.com/events. Options just got molto interessante.
If you missed the live show, here's our cherry on top weekly recap.
I wasn't going to call you out publicly.
Oh, no.
But I have to.
What?
So we're out yesterday afternoon. So we're driving down Ravenswood. Now, for the people that don't know Chicago, which is most of you, there's a train that runs in the northwest, and then it goes up to the northern suburbs, runs right down the street. So one side of the train is heading south, the other goes north and south, but let's just say it goes north. So we're on the southbound. So Tom takes off in his new fancy electric car, which I can't keep up with. Do you know that there's actually stop signs on that street? Okay.
Blue stop sign.
No, he didn't blow through them. He went from like 40. No, he went from like 40 to 30, and then just kept going.
Oh, I don't stop for stop signs.
Because you're above the law. Above the law.
So
that's so bad.
Only for pedestrians.
There's streets.
Yeah, and you're in a bigger vehicle. You can hurt them. They
There's
can't hurt you.
streets that go east-west.
I don't go through red light through.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So
I drove a tractor on a farm. I can fly an airplane.
who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Good afternoon, everybody. Tim Knight here, and we've got a second Red Day. Can you believe it? It's been a long time. Tomorrow's Fed Day, and I guess the supposition is that there's not going to be any rate changes, but of course everyone reads the tea leaves for like changes in the press release and how questions are answered and so forth. It's a very bizarre event. It happens 8 times a year. There's some things I've never understood, like when Powell walks away from the podium, the market usually sells off. Honestly, it's just very strange. But anyway, that'll be cooking. And I've got charts ready for you today, and it's been a pretty consistently red day so far. They tried to pull some shtick like yesterday, where it rallied on just nonsense. There was kind of a 1-2 punch. The Treasury Secretary spoke, I think, to Congress saying that, trade deals are coming, which she says about every 12 minutes. And that got people excited for some reason, even though it specifically said we haven't been talking to China, even though they have all said they've been talking to China. Apparently they haven't. And the other thing which really goosed the market out of the blue was Trump declaring that he'll have some good news on Thursday. And he won't tell us what it is. And so people went crazy about that, with a naive hope that, maybe he's going to say they have a deal with China or something. It's probably going to be like a new low golf score or something. It's absurd. So in short order, that pop higher, and it was a big one, disappeared. So we're still red a little bit, about 0.5% or so. I guess people are just kind of waiting for the Fed. But anyway, like I said, got some charts for you, and let's jump in and catch up on this last pre-Fed day we've got. I have drawn a new line here to represent the high from last Friday. There's a possibility, and I certainly hope it's true, there's a possibility that the peak from last Friday was the peak of that counter trend bounce. If it was, what that results in is another lower high. That is to say, here's the lifetime high, which was not, it was only like 10 weeks ago, feels like 50, 60 years, but the lifetime high was February 19, fell, bounced, peaked on March 25. That was our lower high. Plunged, blasted higher, and thus far, Friday was that peak. Again, really hope it sticks. If we push past this, then a huge uncertainty and risk comes up, which is to cut through the peak from March 25th, in which case things are such a mess. I don't know, maybe I'll start teaching macrame lessons or something on this program. It gets really messy at that point. So far, it's not messy. It is clean, clean, clean. I just wanted to stay that way. So that's how the spider's set up. And you're going to see this reflected in just about any chart you look at. Here's a much longer term chart. This is the Dow Jones Futures. And it's a beauty of a chart. Here's the internet bubble. There was a housing bubble. And remember, this was like end of the world type stuff. And this is like a wart compared to the everything bubble, which we're engaged in right now. I mean, this was like what the Big Short was all about, and the trillions and trillions of dollars to pay bonuses for investment bankers, end of the world type stuff. Again, just a splinter compared to this monstrosity, the everything bubble. And so far, the best hope we've got for any kind of top to this is defined by that dashed line. And we shall see. But yeah, even from this multi-decade distance, you can see this top, which is the cleanest top we've had so far, is still intact. Here's the small caps, IWM, which is down about 0.9%. The small caps have not been as robust in bouncing higher. And this is the Friday peak on those. So again, March peak and last Friday peak. Much more of a spread between those two, because again, it's been much, much weaker critter. The cubes are also down about 0.2%. And we zoom in on this, and the spread here is exceptionally tight. In fact, I haven't even bothered having a second line. The March 25th high is like so, and forget it. We'll just leave it right there. We're not going to monkey around with it. The Friday peak was quite close to that, but did not exceed it, and that's the important thing. So we'll just be very efficient and have one line there because they're so close. And more specifically, the semiconductors SMH and AMD, I believe, reports after today's close. And I emphasize, I believe, because I've been wrong a few times on earnings release dates, but I think that's right. So SMH is down a little more than 0.5%. And in this instance, there's been this quartet of lines moving lower, anchored, be it to a gap or to a peak, like so. So steady as she goes. EFA, which I probably spent way too much time talking about, continues to be of this morbid fascination with it. It is the fund representing worldwide equities, except for North America. It is pretty close to lifetime highs. It had its, on an intraday basis, the highest point ever yesterday. We're just pennies away from that right now. So we're hanging out up here at these very, very lofty levels. If I hide the drawn objects, you can see how mighty the ascent on this has been. And we've got this broken wedge going right here, which is acting a little differently than this one did, because as I said, we've been pushing to lifetime highs on very modest volume too. But as we look at some of those worldwide markets, they don't look that healthy. Like we've got France here, for example, pushing up against that top. Here's the Euro Stoxx 50 futures, which shattered both trend lines and have been blasting higher, but to this overhead supply. So it isn't exactly the picture of health Now, the big news last night was Palantir, of course, which I have a weird fascination with because my little company, Profit, which I sold back in 2005, Palantir took my office. They took the whole thing over. It's a beautiful building, but yeah, they moved in there once Profit had scurried out. And Palantir grew here in Palo Alto and then moved on to bigger and better things. I'm not sure where they're based now, but they've become a giant. They have declared themselves their desire is to become the most important software company in the world. I was just glancing at some fundamentals. They're the most overvalued company in the world, whether you're comparing them to Cisco back in 1989 or Zoom back in 2000. There's a variety of fast-growing companies that had eye-popping valuations. Palantir leaves them in the dust. And it had a particularly amazing run, going from a few dollars at the end of 2022 up into the triple digits. So however many thousands of percent that is. Well, it seems to have hit a road bump here. Last night, they announced earnings. The report was exceptionally good, and the stock rocketed higher to over 130 and then began falling. Presently, it's 109, down about $15, down about 12%. I thought we had beaten the lifetime high yesterday. Not quite. Actually, we're a little bit less. The tippity top was back on the 19th of February, the exact same date that the S&P peaked. And yesterday's high was a few pennies short of that. In any case, down we go. Earnings disappointed there. I'm only showing Netflix to show how resilient this has been in the face of the latest vanishing tariff, the declaration that we're going to have. I guess Trump talked to John Voight, who I guess appeared in movies decades ago, but that convinced him to put a 100% tariff on foreign-made films. Netflix freaked out, sold off, and has completely shaken that off. They're near lifetime highs now. So if you want, what are the financial markets? How much credibility do the financial markets give to this 100% tariff? Zero. We're higher now than we were anytime yesterday. And our old friend Pepsi's still fallen. PEP down again over 1%, below that lovely massive topping pattern. Now, another old friend, gold, is having a great day. Good. Triple-digit gain. It's just been an eye-popping run ever since the escape here from this tremendous base, which has been hammering out for many, many years, well over a decade. That was around 2000. And that's a psychologically very important price as well, of course. Once it escaped 2000, it was off to the races. And there's been precious little pauses or breathers in that. And we're getting close to lifetime highs again, which is great. Big old stick in the eye to the Fed, because gold recognizes that the Fed just destroys purchasing power, destroys the value of the dollar, usurps wealth from the middle class. And so gold is, kind of showing the way. GLD itself is up about 2.6%. It sliced right through that gap I mentioned yesterday and is getting very close to the lifetime peak back on the 22nd of April. Silver also having a good day. Hasn't beaten its gap yet. Wouldn't take much, but 30.64. It's got to cut through that to shake off that little bit of an obstacle. There's also this critter here, some of you may have heard of OUNZ, OUNZ, which is kind of an amalgam of investing in gold and silver. I'm not sure what the ratios are, but it's kind of a way to kind of participate in both in a blended fashion. And then, of course, miners are having a good day too, up over 3.5%. They too cutting above their price gap and getting in the neighborhood of lifetime highs, not quite as close as gold is. Now, energy has been falling for a lot until today. Crude oil had a big pop today. I'm a not energy bear, but energy producer bear myself. So that is a little bit of a weakening factor in today's portfolio, but this is totally cool because we're just bouncing toward major resistance anyway. Crude remains up $1.86, 3.26%. I think they have an earlier closing time than the than the S&P. But the long-term prospect is still just, you have the abyss here, nothing beneath all of that. But shorter term, we have fallen, and we were at a multi-week low yesterday, and we've popped higher to price levels not seen since Friday. So it's not a big deal. But yeah, that's crude for you. XOP is but again, not nearly as much. It's up about 0.5%, in contrast to crude being up percentage-wise 5 or 6 times that amount. So this is still a very good-looking pattern, a very well-formed head and shoulders pattern. I think it's going to pay off. So I continue to have a variety of energy positions, some of which are still down today, weirdly. And then XLB, this is only obliquely related, but this is the material select sector. And you may recall last week, I was pointing out the importance of this price gap, and we got deliciously close to it on Friday, and have started to fall away. Fell a little bit yesterday and a little bit more today. So this XLB pattern, which I would describe as a diamond pattern, this oval up here, so far so good on XLB. Some other odds and ends. DuPont, DD, I consider this an interesting bearish setup. You can see that tremendous top right there in pink. We had a similar one back here. This is starting to slip away. Don't think we've talked about this one. This is a new one, I believe. Hilton, HLT, failed multi-decade trend line, and a squeaky clean stop right there at 241.52. So that's a new position. MetLife down a little bit, about 0.1%. I consider a prudent stop loss on this would be at 77.58. And Royal Caribbean, this one has been, this bottomed, as so many other things did, back on the 7th. We went roaring higher, seem perhaps to have stalled out. Let's look at 231.5 as a limit to that price ascent before we resume below that channel. Got a few more moments. We were on time today, which is cool. We got a nice full show. Here's XHB. We entered this early today. So far, so good. Down 1.55%. 97.68 is where that dashed line is located. We're still way up in that channel right there. So maybe ultimately this year, we'll make our way down to that midline, that dashed blue line that you see. But as I said, my data is correct. AMD is on deck today. No position on this, but I'll be watching it as I was Palantir last night with great interest. 102.05 is a kind of a wispy resistance level, one worth watching. It's had a pretty steady series of lower lows and lower highs for many, many months now. So I wouldn't be surprised to see it slip again, but again, no position on this. And finally, our old colorful friend, the ES right here. We remain a little above the fib right now. But as with all things, that anchor point, Friday's high, that remains a very important level to watch. And perhaps by tomorrow when I see you, which should be probably at the tail end of Powell's press conference, we'll have some clarity whether it's still intact or not. Okay, well, good luck. I'll see you tomorrow.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I wasn't going to call you out publicly.
Oh, no.
But I have to.
What?
So we're out yesterday afternoon. So we're driving down Ravenswood. Now, for people that don't know Chicago, which is most of you, there's a train that runs in the northwest, and then it goes up to the northern suburbs, runs right down the street. So one side of the train is heading south, the other goes north and south, but let's just say it goes north. So we're on the southbound. So Tom takes off in his new fancy electric car, which I can't keep up with. Do you know that there's actually stop signs on that street? Okay.
You blew stop sign.
Now, he didn't blow through them. He went from like 40. No, he went from like 40 to 30, and then just kept going.
Oh, I don't stop for stop signs.
Because you're above the law. Above the law.
So
That's so bad.
Only for pedestrians.
there's streets.
Yeah, and you're in a bigger vehicle. You can hurt them. They
There's
can't hurt
streets
you.
that go east-west.
I don't go through red light, through stop.
No, just stop signs you go through, not red
You
light.
go through the meters getting on the ramp on the highway. You don't believe in those. You
Oh
say,
no, those are bullshit. You stop at those?
Yeah, it's the law.
You stop at those red lights to get on the highway?
Yeah, it's the law.
Oh my God,
It's so that it's because so that
only people that stop
a-holes
at those
like
are
you,
tourists.
it's like a-holes like you,
right?
Don't make it good for people trying to get on because there's not enough room. They're synchronized for the traffic,
Oh my God,
and it's the law.
It's only for tourists.
Beth, I need some help.
It's the same people that sit upstairs at restaurants. It should say that. I've got like 10 tickets.
Don't you notice that the cars around you slowing down? Like, that's what saves me, is like, I'll be up on like Ashland, because there's so many of those things on Ashland, and you notice the traffic around
No, I forgot
you
one on Ashland. I only get them
slows
on
down.
Western
Well,
Irving.
the same phenomenon, Mr. Pedantic. Oh,
Yeah.
Bat, how are you? Jeez Louise, you would not last 30 seconds in an improv class, because the whole premise of improv is like, instead of just shutting everything down immediately, is to be like, yes, and. So like, you know what? I'm going to agree with what you're saying, and I'm going to add on to this to further this conversation so it doesn't grind to a halt.
You know what's funny? As much as I like comedy, improv, like Second City Improv, doesn't do it for me.
Okay, of course it doesn't. Bat, how are you?
Do you think you could name one Taiwanese food?
Yeah, Thai food, I eat it all the time. You now learned that Thai food is short for Taiwanese food. Taiwan. Yes, look at you, Sas. I'm very proud of you.
And I want to ask our producer John something.
Yes.
John, can you help me here just for a quick second? Just because I don't want him to yell at me. John, have you ever had Taiwanese food before?
I've had Thai food, yes.
Taiwanese food is not Thai food.
Where's Thai food from?
Thailand. Thailand and Taiwan are not the same country. They're not even
Taiwanese cuisine is commonly referred to as Taiwanese food or Taiwanese cuisine. What are you talking about?
Oh, hold on. Oh my God, here he is. Jason, come here.
All right.
He is our Taiwanese source. When you say Taiwanese source, there's your Taiwanese source.
You're looking at him right here.
You're looking at him.
That's right.
I will take whatever Jason says. I will take
Did
it.
you
If
hear
I'm
this whole
wrong, I will
discussion?
apologize.
No,
I said to him, can you name one Taiwanese food? And he started laughing at me, thinking that it was Thai food.
You know, that's a common mistake, because the Thai part of Taiwan, people mix it up with Thai as.
Don't defend him.
Jason, just for the outtakes later this week, I stand corrected. I am man enough to admit when I'm wrong, unlike other people in this room. I am man enough to admit that I am wrong, and I'm glad you came in to clarify
No,
this.
you're not.
I owe you and your people an
No,
apology.
you're not. Hey, do you guys, you want to know what we're having for lunch today?
Velvet taco.
No, they switched. They were having Thai food now.
Is that a joke? Did you write that yourself? You're so good.
Get the full scoop by checking out the archives at tastylive.com.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
That's right, Thomas. Ring that alarm. It's time for the last call. Nothing alarming here, though. Even the S&P is down 23. A little over a million contracts have traded. A million cars have traded. Slightly larger than yesterday's volume. NASDAQ down 100, Russell down 14, and the Dow down 288. Pretty much down for most of the day. Volatility up most of the day. It's up 60 cents off its highs of 24.25. It's 23.80. Bonds may have been the best play of the day with a little bit of two-side action. Sold off earlier, traded under 114 for a second. They're 114.23, higher, closer to their highs than they are their lows. Bitcoin 95.5, it caught a bid too after making lows under 94,000. It's 95,500. Oil up $1.60 and change. That's $59 or so. Sadnov had a nice almost $3 range from 57 to 59.84. Gold is the culprit, Sadnov. It's the big mover to the upside. It's up 3%, although your beloved, which we're not allowed to mention, platinum is also up 3%. But gold is up 3%. Like I said, I digress. Silver also up just about 3%. That's 95.95 cents. Net gas basically unchanged. You did good for earnings today, but there are more things going on than just earnings today. On the downside, you had Lilly down 44. It's a big move in Lilly. Volatility upticking a little bit by about 2% over the last 5 days with an IV rank of 33. Palantir is the other one. Had earnings trading still near its lows, $4 off its lows, but down almost $15. Meta down almost 10. UNH down almost 9. Try to put a trade on UNH. It's untradeable. Reddit down 6 back to 109, and Tesla down 4 and change. The buckers to the upside, Sadnov, well, anything gold related or gold products, GDX, GLD, they're all higher. But you also have Netflix higher by almost $7, Adobe by 3.5, and then it's some oil related products, and your beloved Baba up $1 and change. That's all I've got for earnings today. My Taiwanese sources tell me we have AMD, Rivian. I missed that. Possibly Lucid, TEM, UPST, ANET, Win, Devon Energy, EA, all after the close. And then tomorrow morning you got Uber, Disney, NVO, VST, Gold, GOLD, and Trip. So we've got a couple things to do, Sadnov. I kind of sprung those on you.
I didn't.
I didn't either. But my Taiwanese sources did. Hey, you'll be happy to know I read an article yesterday that Rivian's putting like a $120 billion facility right here in your beloved Illinois.
Why would I be happy to know that?
Oh, maybe it was Lucid. I don't know. Maybe it was Lucid. It was Lucid then. I'm so sorry.
LCID.
LCID, which has earnings after the close. Your beloved Lucid. One of them. One of those electric vehicles.
All right.
Lucid, $2.33. Boy, those two putties are going to look so juicy to you. Yeah. You could get a good 5 cents for them in 10 days.
12 cents. June 2 puts.
June. I was going to May. I'm so sorry.
Oh. Yeah, no, I'll pass on the Mays.
You'd much rather go 45 days for the extra 7 cents than the 10 days for the 5 cents. Mm-hmm.
No, I'm not selling puts. I'm just long a little stock in there. That's it. But you said ANET, huh?
I said ANET, ANET.
Oh, ANET. Oh, I don't have that. Okay.
I thought you said I was all right, Spider.
Yeah. So I played two earning stocks, pretty decent size. Not huge, but a little bigger than normal. AMD, which they already took a lot of premium out today. Just sold some May strangles and some June strangles in there, pretty wide, cheapies, and then Uber. And in Uber
up another $1, almost 94 cents.
Oh, this stock's had a nice little rally this afternoon.
After trading as low as $83.10, $3 lower than where it is right now. It's up $1 at 86 and almost a half.
Yeah. So
you do May or June in here?
We did June. I think the
When you
Mays.
say, when I ask you what you did, and you say we did June, is that like, what is that? You and your trust fund? Who's the we? Who's the we?
Yeah, it's me and my trust fund. Thank you.
Your trust fund. Got it.
Uber Goober. Yeah. Sold some 75 puts, some 72 and a half puts, and some 100 calls. I don't know. I don't really have an extra grind in Uber.
Kind of like a little package all over the place, huh?
Yeah. I don't really have an extra grind in there. I kind of feel like it's just, all right. I tried to find some good stuff to do in Uber, but the stock was down earlier. Now that the stock's rallied a little bit, it's a little less interesting to me. But we got a little bit of short premium in Uber and a little bit of short premium in AMD. Best trades for us today were definitely buying some Apple pre-market, buying some bonds early today.
Apple up on the day, trying to save this market, up $1. Apple trading just under.
I don't think it's going to save this market today because they really don't care. But but it's strong relative to everything else. Looking at kind of my watch list, Netflix up $7, Nvidia's up, Baidu are up.
These stocks.
You know what? I just remembered.
Lower pre-market.
Disney has earnings, right?
I included Disney on my list. Yes, I said that.
Yeah, we have no Disney position. Haven't traded in a long time. Disney earnings are kind of tough. You got to take a direction.
$5 expected move over the next 3 days. Almost $6 expected move. 581.
Yep. I don't have an opinion in Disney. What do you think? Haven't traded in a long time.
I haven't traded in a long time either. I mean, I ain't afraid of the upside.
I don't think there's a reason to be afraid of the upside in there. I don't think it's had an uptick last couple of days maybe, but before that, nothing much.
Let's see if June even has any call skew or put skew. Let's see, 83 on the puts. Yeah, still a little bit of call skew.
Yeah, I sold some I sold some.
Not really. It's about even.
Yeah. I looked at it earlier today. I forgot about it. I sold some 85 puts just to have a position on, but not because I'm really very bullish in there or anything like that. That's for sure.
Oh, you sold those in May with 10 days to go.
When in doubt, just sell puts.
Go like the bat said and do May. Got it.
When in doubt, just sell puts. I mean, when you don't know what to do, just sell puts.
Because puts are schmutz.
Yeah, right. Exactly.
Makes sense.
But today was all about Palantir for us.
Mm-hmm.
That worked out beautiful. No complaints.
We peaked early.
Yeah, we peaked early. I peaked on the opening today.
Mm-hmm.
There was nothing else. I need a little help from gold tomorrow. That's been the drag of the week. Every single day, the damn GC. That's the killer.
Yeah, up another 3% today, a little over 3%. I mean, it's been parabolic. I actually thought it was having a nice little week and a half there of like some downturn or at least two-sided action. But man, these last 2 days, like back-to-back 3% moves on a product that has, what is it, 20-something? Yeah, 24, 25 monthly IV. Not
34.27. Let's just see. 34.27. Let's see how out of whack gold is right here. Where's silver trading?
Silver's trading 33.45.
Yeah, the gold silver ratio is back to 102.45, which is as high as it's been, basically.
Mm-hmm.
So yeah, that's back into the trouble zone.
Back in the trouble zone? Is that?
I would put it on.
Means you put it on more, or it's not where you want it to be.
That means if I put it on more here, then I'm breaking my rules. I mean, I've broken rules before, but this time, no, I'm locked and loaded. I got my position limit. I can't take any more. I don't want any more pain in gold. Looking around the rest of the scope of commodities today, just to think if there was anything that was kind of crazy, and I'm going to say not really. Everything else pretty much stayed in line the whole rest of the day. God, there was a couple times when I thought they might take the stock indexes and move them higher, and then they just
they just ran into like a brick wall.
Slowly ran into a brick wall, though, right? I mean, there wasn't really much velocity to the day.
Oh, yeah.
Right. They just kind of walked into the wall. It's like walking into a glass wall, Sadnov. You know how you've done that many times at a party? You walk into those sliding doors, kind of like that.
No. I never walked into a glass wall.
That's not you. You don't hurt your hand banging into a sliding door. Never did
done
that.
Huh. But 42 trades today for me, which is about half of what I made yesterday. So I think I made like 90 yesterday. So very slow day for the good kids today.
What are you waiting for? That FOMC meeting tomorrow?
I'm not waiting for anything. I just didn't need to do anything today. I didn't think there was a lot there to do. Every scalp we made.
You scalped some bonds today.
Scalped a bunch of things. They worked out okay, but I didn't. It wasn't enough. Wasn't enough.
Wasn't enough for the self-inflicted wound that you did in gold?
No, I mean, it wasn't enough. There wasn't enough there to do. Yeah, I just didn't, I thought there'd be more stuff over the course of the day. I was watching the market the whole day. I just ran out of ideas, I guess, a little early. But I still like bonds here tomorrow for the FOMC thing. I think the risk is, the real risk in bonds is, and I think they're going to be flat tomorrow morning. I mean, for tomorrow, wherever they do tonight and wherever they are tomorrow, by 1 o'clock tomorrow afternoon, they're going to be flat. And then we'll see what happens. But I think bonds have the best upside. I said it all morning. And, as far as stocks go, I just think Apple got a little oversold, but I don't really love it here. But it got a little oversold. We need Apple up to about 102. I'm sorry, 202, 203 would be good.
You loved it. You loved it this morning when you were trading the pre-market. You don't usually do that opening stock trades pre-market.
I did like it. This morning, but I thought it would be strong, and it was. But every once in a while, you get right. Anyway,
I mean, how does it feel to be always right like that, Sal?
It's a gift. It's a gift. It's a gift.
Is it a gift? Is it a gift to use it for good, not evil?
I would use it for evil if I could, but I don't really know. I don't really know what to do. Not evil by nature.
But you could be provoked, right?
Well, I'm not evil by nature. Let's see. Anything else here to do in any of these stocks as we kind of glide towards the close here? And I don't really see it, but who knows?
But you've had plenty of time to do whatever you want because we've been stuck right here, right?
Yeah. No, there was no real intraday moves. I mean, gold moved up $27 through the course of the day. It was up 80 when I came in this morning. So it was up 80. Now it's up 107. So that moved. And the S&Ps were down 50. And then they rallied all the way back to down 10. And then they were down 50 again. And they rallied all the way back to now down 24. So, but again,
you were watching.
I don't put that much weight into it. It's just not, I can't count that for anything. I think it's thin right now. People are just jockeying for position. They're buying back some. I think if I was short, which I'm not, if I was short any of these stocks that are kind of been beaten up at all, I would probably have taken them in. I guess that's about it.
I didn't really look. You really are flat. I mean, you got a positive theta decay and a good pop, but you really are flat.
I'm flat. Yeah, I'm flat here totally. I mean, I like to be flat going into the numbers unless I have a very strong opinion, which I don't. But I don't think the Fed's going to do anything tomorrow. I think it's going to be a complete non-event. I mean, it might move bonds a little bit, but man, I'd be shocked if it moved stocks a big number tomorrow. I just don't see it. And maybe there'll be some. I don't know if there's good earnings tomorrow afternoon. Is there on Wednesday afternoon? I mean, tonight's not bad, but I don't know about Wednesday.
Yeah, there are others on Wednesday. That would be the 7th after the close. Let's take a look here for you. Let's see. No, really, just Oxy. No, nothing.
Yeah.
No, not too much. And then the 8th of them. No, not too much. You're right. A couple oil-related stocks, COP.
If we're trading Oxy tomorrow morning,
we got problems.
Something horrible. Something went horrible. I mean, tomorrow afternoon, something went horribly wrong. Back on the trading floor, I remember when you needed an oil, kind of like an oil play, you trade Oxy, and then as soon as you trade it, you'd be like, why the hell did I ever trade this stock? It never freaking moves.
Whose brilliant idea was this?
Yeah, doesn't Warren Buffett own like 99% of Oxy?
Something like that. Something like that. 99.9. Hey, what do we do every Wednesday, Sadnov?
We cry ourselves to sleep.
That's partially true. But what do we do on the show every Wednesday, I should say?
Tomorrow we have a little What's Your Assumption? tastylive.com/assumption. Send us your assumptions and make sure they're liquid. Don't give me any of these app loving trades.
Still in app loving.
I was trying to sell a strangle at App Lovin' this afternoon, and I think I started at 350, and I quit.
You got filled.
No, that was just buying the guts and selling the wings. But I want to put a new position on there for earnings. I think it's today or tomorrow, and I started at 350. Okay, I got it down to 310, and I never got filled.
Boy, yeah, that's no fun.
Yeah, it's no fun. But this morning, I put positions on in Uber and in AMD, and there I got pretty good prices early today. You never know. Just like people like, how do you know to sell early? You don't. Sometimes I sell early in the day and I get killed by the afternoon. Other times I sell early in the day and are up half a point by the afternoon. Today was one of those days.
Right.
I think this morning.
And it's Rivian who's putting 120 million, not Lucid. Sorry.
Oh,
she bought the wrong car.
No, I did not buy the wrong car because I do not want a Rivian.
Yeah, bought the wrong car.
No, I don't want a Rivian, so I definitely did not buy the wrong car. Even though I don't mind the Rivians, not my style.
I don't blame you.
No, not my style. Taking a quick scan here of just all the other stocks on the board to see if there's something funky, something that we might want to touch going into the close, but I don't see it. Yeah, don't really see it. I was hoping, I think tomorrow, listen, last time when we had the FOMC thing and it was a Wednesday and we had a monster move, like 100 handles.
Mm-hmm. Yeah.
So
well, we'll see. And usually you can fade the FOMC meeting 48 hours, 24 to 48 hours. I think that's our research.
Maybe, but every day the big moves have come overnight or in the morning, and then tomorrow I sense that the big move will come, to be dead in the morning, and then the big move will come after 1. So just a little bit, flip the cards over, go the other way.
Yep. Gotcha.
All right, you can bring in the boys. The overtime
All right,
boys.
we got Chris and we got Ilya. Get in here, boys. Come right in. Dive right in. The water's fine.
We called this. Just so you guys know that the official term for this is a warm handoff.
Mm-hmm. I like it.
Yes. We used to do this with Tim Knight, but then he got mad at us.
Can't imagine why.
He just didn't. He didn't like the warm handoff. We asked too many questions. Tony got too personal. But we don't
Chris
feel
and
like
I, on the other hand, have no shame whatsoever.
Right. I was going to say we can't. Whatever we say doesn't really bother you guys. You just blow it off anyway. So it's
like water on a duck's back.
Yeah.
You called it the FOMC thing, Tom. I mean,
on
a Wednesday of all things. Does it always happen on a Wednesday?
Yeah. I mean, when Dylan and I planned this Truth or Skepticism, the last thing we realized is that every single time there's a Fed announcement, we'll be starting our podcast, and it drives me crazy. But that's what we can't change it. So the game plan for tomorrow, we're thinking is dead in the morning, and maybe something happens in the afternoon. Bonds will be unchanged when the number comes out, and then we'll see what happens. What do you guys think?
If this was all of the disappointment today in a Fed that's not going to cut, then my stock market shorts are in trouble. But I think there's more to go here. I think the market has room to be disappointed because they're going to be too vague for the market's liking. So I'm a little bit short stocks still. I got a little bit long, the long end, because I think the market is going to say, okay, you won't cut now, so you'll cut more later. And I joined Chris on the gold side of things at the start of the week. That's working and sort of fits in with all of this. And I've started to sell dollars again last week, and that's working, which falls in with all of this. But it's a little bit uneven. Euro, pound aren't really going anywhere, but the yen is back up, which is nice, and so is the Aussie.
Chris?
I mean, you and I think are very much on the same page about the Fed meeting tomorrow. We came into the week mostly with the same view, except for gold, and I think we're still pressing forward by and large. The Fed's not going to tell us anything that we don't know. The market's priced for a Fed that's not going to tell us anything that we don't already know. So the question is how much
volatility is certainly priced for that. Flirting with 24 now. 20 there you go. 24 /VX. That's up a little over 3% move on volatility. That's substantial.
Speaking of the vol, Tony, what do you make of the VIX term structure being back into contango now?
I didn't make anything of it when it was in backwardation, so I don't make too much of it now that it's in contango. I mean, I guess a little bit of the unknown is known. The unknown is not quite as unknown as it was before. The fear of that is not quite what it was before, I guess is the way I would say it.
I actually think that's one of the more interesting things. I'm glad you brought that up, Chris, because when the VIX is in backwardation, that means everybody's scared of what's going to happen tomorrow, but they're not scared of what's going to happen 6 months from now. When the VIX goes back into contango, which is a total tone change in everybody's perception of kind of what these markets might look like for the rest of the year. So I'm going to go a slightly different take than Tony and say that when the VIX goes back into contango, when volatility is really high like it is now, to me, that is not a positive statement. That means that we went from thinking the worst is over to maybe the worst is still in front of us. And that, I think, is a very interesting tone change that not a lot of people talk about. I didn't even until you just said that, I thought we were still in backwardation. I didn't even realize that we had gone into contango. And I think that just means that there's a lot more uncertainty going forward than we thought a couple weeks ago.
Yeah, but September volatility started
what yields are showing.
September volatility is 23, Sosnoff. I mean, it's
okay. I just listened to what Chris said. He just said contango.
Yeah, it's pretty flat. Yeah. Am I right, Chris, or am I wrong here?
It's relatively speaking, we'll call it flat, but technically it's back in contango for the first time since liberation.
It's not like this huge.
I got it. I wasn't looking at it. I haven't actually seen it, so I just.
It's not like
and one thing. That's why I put numbers to your assumption, just to put you out there so you can shut up. Go ahead there, Ilya.
One thing that sort of comports with what Tom is saying actually was the term premium in long dated Treasury yields got smashed lower as stocks were rallying. At the beginning of May here, it's started to perk up again. And it started to rebuild a little, which tells you that there's a little bit more uncertainty coming back into the longer end. They're asking to be paid for duration risk a little bit more. So it sort of starts to tell you they're less worried about now. Maybe they think that things have kind of stepped off the ledge, but downwind, it's getting a little fuzzier again.
Another interesting little take here, just for everybody watching, the S&P's on the close here. This will be the second straight day where they kind of got weak into the close, which is a little weird going into a Fed number. I think it bodes well for I'm always one of these people that think if it's two hard down closes in a row, the next day is usually up. It looks to me like everybody was playing a little bit long today. I don't think this is like selling because people are getting short. I think this is day traders who were leaning long, thinking they're going to mark them up on the close, just puking their futures on the close. That's all this is.
Yeah, flattening out. My Taiwanese sources tell me Berkshire B owns 264 million shares of Oxy.
I don't know how big that is, but it sounds like a lot.
Sounds like a lot. They own it around $10 higher too, around 49 or something like that. But that's neither here nor there. All right,
Oxy was I thought it was a lot higher than this. Do you remember?
Oxy's on its butt. I mean, the oligarch Warren Buffett is not doing his shareholders any good with Oxy. Good thing he owns that.
Do you remember what Oxy got down to? Was it in when did crude oil go negative?
April 20.
April 20. Do you remember?
Look at the big brain on Chris. Good job out of you.
It was the first day I was back from work from paternity leave. So it was quite the thing to come. It's like, okay, so I went away and there was no pandemic and now oil's negative. What the hell is going on?
What did you all do?
Didn't Oxy get into the teens? Or was I'm not remembering this. Something got into teens. I thought it was Oxy. Maybe not.
Oxy in the teens.
Yeah, 2020, Oxy was trading below $10 for a brief few days.
Oh, okay. It got under 10. Yeah, that's
he's
crazy.
right. He's right. Yeah.
I remember it got to some stupid number because if I remember correctly, I think we sold the 10 puts, and because the premium was like volatility was like 100, and we couldn't hold them because it got under $10. Right. I knew it was some crazy number. Tony sold them too. We both sold them.
I remember.
I
remember. I mean, 5-year-old trades are something that's not really etched into my mind on Oxy.
Well, it should be.
I will try to do better, Sadnoff. And I'm going to let these guys do better. That's right. The overtime guys, Chris and Ilya, immediately following these messages. Peace. Good luck to everybody out there.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hi, my name's Angeline Ong. I'm the newest member of the IGTV team. Well, I began my career at CNN Financial in London, covering everything from the financial markets to the European trading day. What I'm looking forward to working with IG is to be the best version of myself and to use all the skills that I have and help IG reach out to those clients out there who are, like me, looking to learn and are ambitious and willing to put themselves out there to learn more about a financial instrument they might not have ever used before. My philosophy is, if you're going to play, why don't you play big? Let's not settle. Let's try and learn more and become a real expert in the field that we are trading in. And that's what I hope to bring to IG in its strategy, in its content, and expand that across Asia, the US, and also Europe.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy.
Yeah.
Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Hi, my name's Angeline Ong. I'm the newest member of the IGTV team. Well, I began my career at CNN Financial in London, covering everything from the financial markets to the European trading day. What I'm looking forward to working with IG is to be the best version of myself and to use all the skills that I have and help IG in the field that we are trading in. And that's what I hope to bring to IG in its strategy, in its content, and expand that across Asia, the US, and also Europe.
Is Sell America back? It's Tuesday, May 6, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Thomas Westwater in studio in Chicago today. Dylan Radigan will be back tomorrow. Promise. We'll take you through the rest of this hour here as we wrap up the trading day. Futures market closes at 5 Eastern. If you're on the platform on tastylive.com, the website, welcome. Thanks for coming. If you're not in the chat, come to YouTube, join the chat. Tell us what you think of this action, this pre-FOMC trading action. Of course, the Fed meets tomorrow for their May meeting. Markets in a slight holding pattern here. Slight weakness in equity markets as we get a slew of tariff headlines, both from Treasury Secretary Bessent and Trump himself, while he meets with new Canadian Prime Minister, or first-time elected Canadian Prime Minister Mark Carney in the White House. Some language choices used by Trump, I think, that are indicative of where we should be looking for the skate to be next, or the skate to where the puck's going to be next, I should say. Moving on, bonds were weaker all session long until a very good 10-year note auction this afternoon. Foreign demand still very high, bid to cover ratio above its 6-month average. Good news there. Doesn't really matter for gold or silver, though, because, again, it's a sell America type of day for most of the session. So with stocks down and bonds down most of the day, you have gold screaming to the upside. And if we were to end the day here, it would be the high day close of the year for gold prices. We look to the currency market, the dollar's down. Oil has staged a terrific rebound. The sector performance isn't fantastic, but we turn to the charts here, Ilya. 56.26 right now. We're at the 1-week moving average. We're backing away from that zone that we've been discussing the past few sessions here, from Futures Power Hour on Friday to, I suppose, right now, where we have the NASDAQ and the S&P both at the 618 retracements of the yearly high-low range. We're running into the April highs. Now we're backing off. Is this simply people, covering, getting some dry powder before tomorrow?
I am not ready to say that this is a reversal lower that is confirmed, despite the fact that I am short and I want it to be a reversal that's confirmed. It looks like a very compelling evening star candlestick setup, no matter where you look, S&P, NASDAQ, Russell. But it is premature, because if you want to put a line in the sand here, for me, that line on, let's say, the S&P would be to get back under, let's say, 55, 60, or better yet, to get back under the swing highs from the initial April bounce. Let's call it 55, 40, something like that, 55, 30. So if you went back to that massive green candle that you see there, the initial kind of icing of reciprocal tariffs north of 10%, that's sort of your line in the sand. If you can get back under that, then you have an attempted recovery that's failed. That's sort of your point where your rally from April lows becomes defined not as the beginning of a lasting move higher, but as a correction in a bear market that's been confirmed as over. So if you want to really be rigorous about the price action says X versus Y, that's where you have to get under for confirmation. Now, I'm already short, but I'm not adding. And I'm not going to do anything else, I think, with stocks here until we get some clarity on what the dust settling will produce tomorrow. We'll get to some other things I put on today, though, I'm sure, as we shift assets.
Yeah, Thomas, it's a bit of stock weakness here today. The earnings reactions that we've seen from companies like Palantir obviously didn't help the picture over the course of today's session. Likewise, there was some tariff news with respect to pharmaceuticals, an executive order signed by President Trump to promote reshoring of drug manufacturing here. Of course, the pharmaceutical companies don't like that because it means smaller profit margins. So we do see that those names in the biotech space. We could go to an ETF like XBI, has a pretty bad session, down 6.64%. What's your read on the market, though, ahead of the Fed tomorrow, I think is the bigger question, as I just asked Ilya. Do you see a market that's simply settling in before the Fed, or does the Fed not really matter because it's all priced in, if you will?
I don't think this Fed decision matters too much. It's going to be one of the lower impact ones of the year. Rate odds are 2-3% of a cut. That means we're not getting a cut. We had 10, 11, 12 up days there in a row. This is kind of expected for that to retrace a bit in my mind. Like Ilya said, I agree with the technical levels he mentioned. I don't really think there's a degradation of the technical structure here. I think it's just some settling before FOMC. I'm not buying or selling right here. The only individual thing I did, I got a little long in shop. That's just an earnings play for me. It's not an expression on my view on the market. Gold, utilities performing well today, everything else down. It's pretty typical risk off right here. I don't think it's sending any big signal to us one way or the other. So I'm not taking a direction in the equities right now.
I have no incentive to put anything on right now, but Ilya, I think the point that you and I discussed yesterday still holds in terms of establishing trades in the equity indexes here as we look to FOMC. There is a way to set up a position if you want to do this in the typical tasty manner where you're looking to harvest the volatility. If you went to something like 40, just for the sake of this conversation, staying in ESM 5, if we went to 41 days, so we're not looking at the the AM expiry, the recent swing highs in the market from April 2nd come in at 57.73.25. And so doing a short call spread near those levels, say short the 57.25 along the 57.50, it's basically 1-to-1 at 41 days to expiration right now. You'd be keeping your risk constrained to the high. And if we break the April 2nd high, then you could say technically we're in a territory where we're now fully in breakout mode, right? We've digested the move. We've cleared the horizontal resistance. We'll probably have to sell at a higher level if we want to be short. Why would we do this to the short call spread as opposed to the short put spread? The short put spread, if we look to the recent low that comes on April 30th, that's at that 1 month moving average, the decline of the February, March, April swing highs here. That's 54.55. And so trading on the other side of that, if you wanted to go a little bit wider than it, you can get a better probability of profit, but the risk to reward is not a 1-to-1. You're risking more than 3, almost 4 to make 1. And so if you're doing this in the typical tasty way to look to harvest the vol, the way that you can do this that's less risky, so to speak, is by keeping your position constrained to the recent highs. There's a lot more downside than upside if you're wrong in your directional assessment.
Yeah, if you look at the sort of overall, so look at sort of the full breadth. You're kind of, and if you put the 50 non-fib on there, you can see that there's a kind of range in here between essentially halfway in the move and about the 62% level. And so you have the big high and the little high, one just above 4,800, one just above 6,200. So ostensibly, you could say, you know what, I'm just going to really widen it out and want to stay within this thing. But there's really not that much vol here. Do you think the juice is worth the squeeze?
Probably not for an iron condor. Thomas, I don't think directionally neutral could work. You're close to the 50% mark, and you could do it around the yearly high lows if you want to give it enough time. I have the chart here tuned to AMD right now. AMD earnings are due out at 4:15 Eastern, so they are expected in just a few seconds. We'll wait to see that market reaction. Thomas, as we get ready for AMD here, and any second now, we do want to get your take on let's just go with the take on the S&P. No dead air time. Thomas, do you think that the short iron condor is a better way to do this? Would you rather play S&P 500 directionally neutral here, or would you rather do something like sell the call spread and perhaps try to pick off a top as the market begins to turn from resistance?
I think you could do directionally neutral for the time being. The market's gotten into a phase where we're now expecting things to kind of trickle in. So unless we get some kind of big news, we'll get a trade deal here and there over the next couple months. There's not going to be a major re-escalation. President Trump's rhetoric has kind of shifted back to more unpredictable the past couple weeks as the market's gone up. I'm not sure if, that has anything to do with the market direction. It might. But, I think the market's done with big shocks for right now. Of course, you say that until there is one. But on the preceding path, I think you could play directionally neutral. I'd probably do it with more of a slight upside bias if I did anything. And look at that. AMD looks like it reported something good.
There we go.
Yes, they did report. AMD is in EPS at 96 cents versus 93 cents expected. The revenue is 7.43 billion versus 7.12 billion. That gives you, and you just disappeared on me, that gives you a year-over-year earnings growth rate of 38%. That looks right. I'm looking for something on the Q2 outlook. All right. AMD guides for Q2 non-GAAP gross margin at 43%, which includes approximately 800 million of tariff charges. So that is higher than what the market was expecting. I see the consensus forecast is for 35% gross margin moving forward, coming down from Q1's 50% for the most recent. So margin's a little bit fatter. They don't see tariffs being as big of a negative impact as some other companies may do. You're getting a little bouncier in stocks broadly across the board out of this. The NASDAQ up slightly, was off closer to 1% now, only about 0.8%. Same for the S&P 500 here. I don't think this necessarily is a game changer heading into tomorrow's chart setups, but more chop and grind. It's not the end of the world for another semiconductor. Thomas, going back to the charts here and looking at a potential iron condor, if we wanted to play it around the April 30th, April 2nd swing levels, the 57.73 and 54.55, we could size that up here. It's going to be real tight, though, because the market vol is still fairly elevated. You're going to risk one to maybe make two close to it. You could also just blow this out right now and just go to the one standard deviation move, maybe go 100 points wide, and you'll get something in the neighborhood of that, 63% probability of profit. You're risking four to make one. So depending upon your tolerance, there are technical levels to work around that would speak to a choppy sideways environment. I think the broader question, though, is, and I don't know if Tom would be happy that we're saying this, is vol at a floor? We have this gap here between April 2nd and 3rd in the VIX where we have Liberation Day. And for some reason, not that I would ever do technical analysis on a non-stationary time series like the VIX, but I can't help but notice we're not falling back through the pre-Liberation Day opening levels. Mm-hmm. Ilya, do you feel like volatility is a little bit understated right now in the short term?
It could be. It could be. Again, this is not the kind of series where extremes are easy to discern because it's mean reverting by its nature, sort of the way the indicator is set up here. So I think what you have to believe, essentially, is that things are well enough off the extremes that we saw in early April to say that we're probably not heading into some kind of a sovereign U.S. crisis. That makes sense. But also that we've reset to about the levels where we were on volatility going into sort of the second half of February, March, which is around the growth scare kind of really starting to metastasize in markets. And we can see that vol from about sort of mid-February starts to unclench and markets go into this kind of sideways thing if you look at the S&P, if you look at NASDAQ. I think we are close to a growth scare coming back to the forefront. And if this is kind of the reset area for those kinds of concerns, take a look at those tops in early March. It's not much higher vol. It's maybe closer to like 30. It looks like we're maybe a little bit light relative to that. So I could see it expand in that direction, especially if you get a Fed that I think really comes off vague. I think what the markets want is not vague. And it's obviously well priced in. They're not going to do anything. We know that. But if you look at the way that Fed funds is set up, the markets have exactly the same tally of rate cuts that the Fed is forecasting through the end of next year, but the markets are priced for urgency. They want 75.
End of this year, end of next year, just so I know what you're
End of
talking
next
about.
year. End of next
End
year.
of next year. Okay.
100 basis points for the markets, 100 basis points in the Fed forecast. But markets are priced for 75 this year and 25 next. And it's very clear. Even the numbers are rounded in the market's own forecasting. It's very kind of cut and dry. That's a little bit more urgent than what the Fed is saying. The Fed is saying 50-50, 50 basis points this year, 50 basis points next. So the market understands the Fed's not going to give them anything, but they want some kind of something that tells the markets, yes, we know, we're coming. We just need to hang our hat on something. We need evidence. We can't look like we're kowtowing. And the GDP numbers were, let's say, fuzzy enough to be debatable. The NFP numbers were fuzzy enough to be debatable. The inflation numbers have started to come off, but the 3 and 6 month annualized rates are just starting to cool. We've only seen maybe a month or two of that, depending on where you look, CPI or PCE. And PCE looks worse. So when you look at all of it, you want, I think, or at least the markets want, for the Fed to tell them, yes, we know, we're coming. The bias is there. Just give us some space to sell this thing. If the Fed is vague, and it's another one of these, well, we don't know what's going on, sort of the way it was in March, where they just throw up their hands and go, well, typically tariffs do XYZ thing, but who knows what they'll do this time. Okay, have a nice month. Bye. If that's what that is, I think there's a little bit of room for vol to expand and for the markets to disappoint. Not in kind of a catastrophic way. I think bonds might be a lot more action-packed than stocks when it's all said and done.
Thomas, talk to me about commodities here today. I just saw news hitting the wire just now that India has launched missiles against Pakistan, hitting 3 different sites. We've previously flagged how India broke the Indus water treaty a few weeks ago as a result of a terrorist attack in Kashmir. You're not seeing much action here after hours, but would you attribute any of the moves that we're seeing in gold or oil today to any of the geopolitical risk that we're seeing come out right now of the world?
Yeah, I mean, not necessarily between India and Pakistan alone. We've seen geopolitical risk elevate in the Middle East more broadly. And, you know, this military action with Pakistan and India, it was expected. You know, other nations have tried to mediate, get them to cooler heads to prevail. It looks like they're entering something that's going to perhaps be a more prolonged conflict here. And of course, anytime you get conflicts like that with any major nation, India, you're going to get some geopolitical risk premium priced in. The Houthis, they're continuing to launch missiles, of course, at Israel. It looks like their strategy is getting a little more effective lately because they have gotten some missiles through that the defenses have not been able to interdict, and they're doing that by launching multiples at a time from different sites. We used to call them POO sites in the military, point of origin. So that it looks like they're getting a little bit more aware of how to get around these missile defense systems, and that's not good overall because it could increase the prevalence of them. It could invite retaliation. We've already seen Israel do that. So now it's going to be on the U.S. to are they going to ramp up these attacks on the Houthis and try to get these interdict some of these capabilities that they have. Talks between Iran and U.S. indirectly are also ongoing. It looks like Iran is taking a pretty firm stance with not wanting their complete uranium life cycle to be dismantled. It looks like that's a hard line for them right now. We'll have to see how talks go. Trump visiting Saudi Arabia soon. They're, of course, going to talk about this issue in depth. and we'll have to see what comes out of that. But right now, geopolitical tensions are higher. You're seeing some of that in crude oil. I don't believe it's all of it. China also came off a week-long holiday, so you've China traders coming back onto the desk, seeing that oil prices are low. They might be figuring it's a good time to buy right now. That doesn't mean prices can't go lower, but in the short term, that's helped give it a bounce. And we'll have to see how these tensions go in the Middle East, Pakistan, and India. Things are getting hotter for sure.
I suppose the angle that interests me here as it pertains to the trade war is that China recently came out with a statement calling Pakistan an all-weather ally. And so maybe it's in the United States' best interest to support India as much as possible in order to make things more difficult for China. It just seems like it's another front that could open in this burgeoning Cold War with the world's two largest nations, economies, superpowers on either side of the Pacific. Well, these are headlines that are worth following, I think. Obviously, they could have impact on the commodity market. But the commodity market today was obviously the big story. Stocks meandered around. We can talk about gold shortly. I'm actually a little bit more interested in what's happening with crude oil here. Thomas, can you make sense of this to me? I know Ilya is going to say OPEC's a joke and doesn't mean anything, so we'll save that for a moment. What gives? 400,000 barrels plus a day coming online. We're overproducing. Why is the market completely disregarding this week?
Yeah, so if you look at the term structure in the options for crude oil, you've seen contango in the back end of the curve kind of increase over the past couple weeks. However, that's now moderated. So OPEC is going to pump more, but what the futures are telling us is that there's not as much supply fear in the market right now as there was just a week or two ago. Backwardation, the front end of the curve is still strong. 40-cent premium in the prompt spread. Crack spreads are good. So, refiners, they're going to pump product through as fast as they can right now while they have those margins. If the crack spreads start to fall apart and downstream you're getting less demand, you're eventually going to take that's eventually going to move upstream into the producers who are taking oil out of the ground. For now, though, it looks like China's economy is going to hold up rather well versus expectations at the beginning of the year. But still, we're under $60 a barrel. Prices are weak relative to where they've been the past couple of years. So we're kind of going through, we're reflecting some of the economic weakness that we're getting from trade talks, trade wars, things like that. It's about picking a bottom. Is the bottom in right now? We have like somewhat of a double bottom forming. Maybe a move
maybe
back,
around 55.
Yeah, maybe a move back up to mid to low 60s. You got a pretty good point of resistance coming around 64 right there. We've had some selling, buying in that area, churn to selling. In this peak between the double tops. So, right now I'm keeping my crude long on for now. If we get around 61 to 64, I'm going to take it off and then kind of probably get directionally neutral. Maybe even a short bias in there with the trading. But right now, geopolitical tensions are helping. We have Trump going to Saudi Arabia again. Oil is going to be another talking point. The thing is, there's speculation that Saudi Arabia is doing Trump a favor by doing this, by pumping more oil, keep fuel prices low. And now that favor has to be returned in some way. So we'll probably see something come out of these talks in terms of strategy in the Middle East that resolves around that. But right now, I think this bounce, I wouldn't be surprised to see it sell off a little bit here in the coming days. But I think we hold this double bottom for a little bit around 55, 51. I wouldn't expect it to get much lower than that.
There's always one story that just about oil in Saudi Arabia that blows my mind. Apparently back in 2003 or 2004, this is a long time ago. I was in high school when this happened. And I remember so distinctly the news story coming out in my AP government class that Saudi Arabia had offered the U.S. a security arrangement that if the United States would bring Saudi Arabia into the security umbrella, Saudi Arabia would produce enough oil annually over the next 30 years to keep oil below $28 a barrel. That obviously didn't happen. But Saudi Arabia has that production capacity if they needed to do so. I obviously know what Aramco can do. But their break-evens, the fiscal break-even for Saudi Arabia is up around $96. So when you say Saudi Arabia is doing Trump a favor, that very much tracks with the entire fiscal situation there. Ilya, from a growth perspective, there's probably not much to like here today. It's not like we're seeing any of the data pick up in any substantive form or fashion. There's nothing really on the calendar for today's session.
Right.
Do you see, I know we joke like OPEC is a cartel in name only, but is this price action illustrative of that point of view, that they can make noise in the short term, but the market is going to quickly disregard them nearly every time as they have for the past several years?
I mean, I think that's what you're seeing in the price action here, certainly. I mean, you have a gap down around the OPEC and company, OPEC plus, squawking about, oh, we're gonna pump more oil. Okay, you all have not been able to get the discipline in your ranks to meaningfully pump more oil when you've needed to hit a quota ever. This group got together in the wake of the big oil sell-off in 2014, which was, of course, the shale revolution in the U.S. really hitting fever pitch, and which, by the way, very funny to then run on drill, baby, drill, because, of course, those peaks were in the Obama administration. Anyway, so you get this blow-off in oil, and the cartel gets together with like-minded producers like Russia and goes, okay, we're going to get together and have discipline around a quota. They haven't managed it yet because other members are constantly cheating all the time. And most of the cheating occurs on underproducing when prices are down, because nobody is in the business of selling cheap oil, especially, as you've very rightly pointed out, a lot of these countries' entire fiscal architecture depends on not selling cheap oil. And so what we have then is a situation, I think, where, yeah, they can say that, you get the gap, we're right back to the top of the range on crude, where we've been consolidating, maybe forming some kind of a double bottom, maybe not, but we're essentially back to the starting line. So I was short going into it. Last week, I closed that out after a few weeks holding it, because it looked like we got to a meaningful level of support, and there was no immediate hair on fire reason to think you're going to crack it. So I think Thomas's point is well taken. I think you probably meander here for a while unless you finally get a real growth scare. And for now, at least, you need the U.S. economy to unmistakably fall apart for that to happen, because China just posted you an 8th consecutive quarter of economy-wide deflation. Their PMIs have stalled at 0, no growth. Europe is meandering at basically no growth as well. The PMIs just showed us that. Just like since the middle of last year, the U.S. is the only game in town. The problem is it is now converging on the weakness elsewhere, as opposed to spilling out prosperity to let everybody else converge on it. And so what there is to fear in crude is that there's finally some evidence that the U.S. economy has withered. But the GDP numbers were, let's call them, fuzzy enough to be inconclusive. The NFP numbers were fuzzy enough to be inconclusive. It'll be a while. You need to see it for real.
Today's definitely not a gross scare kind of day when you look at the metals market. We can see copper is up 1.19%, continuing its tepid bounce off that move into 455, 460. Silver up 3% here, which good news for those of us that are still long. But Ilya, I think you want to wax poetic a little bit about gold here today.
Oh, yes.
What's working well here for the gold market? Actually, Thomas, let's go to you first. What's working with gold here? Is this as simple as what Ilya mentioned earlier? You mentioned earlier Chinese buyers back from holiday, seeing the state of the world and saying, oh, I can get gold at $3,200 at US ounce. Please and thank you.
Yeah, I mean, the gold story is pretty simple here. The Fed's eventually going to lower rates. You have an environment where inflation could be stalled a little bit. Growth fears. I'm staying long. I have a long call spread right now. I'm going to stay long. I think you get pullbacks along the way, but I think the uptrend's going to remain intact here. There's nothing really to dive into too deep. It's just a good story.
Mm-hmm.
Is that all there's to it, Ilya? It's just a good story, narrative flexibility, yada yada, the same things as it were.
It seems like it. Gold was pretty early on the kind of, I almost hesitate to call it a currency crisis, but it had all the currency crisis type of stuff.
By the way, now that we have this India news drop, it's still climbing here after hours. It's up 3.5% now. It's added another about $10 in the past 15 minutes.
Exactly. And I think this really kind of speaks to what's going on here. Gold has a lot of narrative flexibility when the fog is thick. People reflexively buy it. I mean, consider the surge in gold when Russia initially invaded Ukraine. Why should gold rise? For that reason. Other than just knee-jerk, we don't know what's going on. There's nothing that makes gold safe in a warlike environment. Not safer than very liquid dollars. Certainly easier to use those to escape missiles raining down on Kiev if that's your prerogative. Gold bar isn't going to get you nearly as far as a wad of C notes. And so the entire sort of conceit with gold markets when the fog is thick seems to be, listen, I don't know what's going on. I don't know what the relative balance of risks is, and I don't know where things land. Let's just buy some gold and hope for the best. And that seems to be the knee-jerk reaction whenever the fog is thick, as in a war, or it seems a trade war. And so you have this kind of inherent bid, I think, and that India situation only just compounds the same sort of dynamic. And it certainly doesn't hurt that China has become a net buyer again, although their ETFs are shedding it, the official channels are buying it, and where you land on a given month is a mixed bag. But what you do see is that gold seems to have this kind of indifference to the dollar, indifference to yields, just this relentless march higher, just because the fog is so thick. And I think that continues.
Fog is thick. It continues. It continues for right now. India says that justice is served with respect to the response. So clearly,
so it's over.
Try not to escalate beyond here. Trump is out now. He said that he did not call Carney governor today. He hasn't yet, and maybe he won't. Quote, he had a lot of fun with Trudeau. FXC here. We talk about.
Are you not entertained? Are you not entertained?
Listen, one of the things that I have like talked with you guys about this. Like, Trump is a very skilled communicator, and he's very funny.
He is very funny, and
funny goes a long way. I'm a New Yorker. He's been in the newspapers my entire life. So like Donald Trump's shtick has been, if you're a New Yorker, you know Donald Trump's shtick since childhood. So yes, he has not called Governor Trudeau. He's not called Prime Minister Carney, Governor Carney yet. So that's, I suppose, the good news. Currency markets today, though, Thomas, I started the show talking about Sell America. Feels like it was back and forth for most of the session. Outside of that it was a good 10-year note auction today. Foreign demand very high, bid to cover ratio above the 6-month average. Until then, it was stocks down, bonds down, dollar down, gold up. And as we wind out the session, the long end recovers after the auction, but it's still stocks down, dollar down, gold up very aggressively here. And where is the dollar failing? It's failing right at the September swing lows, former support, turn resistance. Oh, and there's that 1-month moving average here. It's a bearish outside engulfing bar today for the dollar. It signals imminent decline.
Yep.
Thomas, what's the deal here? Sell America back on? Are gold and the U.S. dollar telling us everything we need to know about stocks?
Yeah, I mean, I've said earlier that my view is being long non-U.S. dollars in this environment. I think that makes sense. And I think it makes sense until the trade war is resolved. It's just... We've seen it when it started. There was this big rush out of the dollar. There's people calling for, this regime shift or this shift in the narrative where the dollar's not going to rule anymore. I don't think that's true long term. I think the dollar is going to survive as the world's reserve currency. It's taken decades and decades to build that reputation. I think it would take more than, a few months to fall apart here. We kind of saw it in the euro. The euro was up a lot. You had news out of Germany that the coalition government couldn't get formed. A little bit of a surprise there, but the euro, it maintained its gains. It trimmed some of its strength, but it survived. And the story right now is, your dollars are probably better off in a currency like the euro, the yen, something like that. I think that narrative is going to continue on for a while here. I got out of most of my yen and euro positions last week. I didn't put them on. I was planning on putting them on at the beginning of the week. I didn't get to it. But I'm still thinking we get more dollar weakness coming down the pipe here over the next few weeks, couple months maybe. I think this story still has more room to run.
I agree.
Oh yeah, there was a comment that Trump made today that I think reinforces this view, right? Because if the whole idea about the dollar decline is that countries implicitly at the macro level won't have the need to recycle money back into dollars and dollar-denominated assets moving forward because the trade flows just simply won't be there, right? And the only way out of this hole is for a North Star, right? We know that trade deals in some form or fashion, some structure's coming. There are differences between trade deals and trade agreements. Trade deal is not legally binding. It's not passed by Congress. It's set by the executive branch. A trade agreement is negotiated through congressional approval, and that remains in place because it's not executive order. It can't just be turned off by the next guy who occupies the Oval Office. Reporter Megan Casella noted today, and I think it's worth going over this here, in a long monologue in the Oval Office beside Canadian PM Mark Carney this afternoon, the president appears to say that trade deals his team are working on are not deals in the traditional sense, as they will not have to be signed. Trump says the U.S. does not care about accessing foreign markets. We don't care about their market. They want a piece of our market. The deal will be naming the price that people are going to have to pay to shop in the United States, unquote. So pointing this out here, he says, in Megan's takeaway here, the reporter's takeaway, the latest insight we have to how the president is thinking about the path forward on tariffs, naming a price to pay to shop in the U.S. It appears he wants some tariff to remain in place and possibly with everyone, and it downplays what to expect in terms of deals. What Trump is describing won't bring certainty to markets because you're making a long-term investment based on unsigned agreement that's subject to change again. So Trump wants trade deals that are not signed handshake agreements with countries that like we're not going to raise your tariffs? How does the business plan around that? I think is my main point. How do we get our way out of the woods if that's the attitude?
Person walks into a bodega, knocks a shelf over, and goes, "It'd be a real shame if something were to happen here. Why don't we figure out a price for it not to happen?" Price is negotiated. Week later, that person ends up, I don't know, sinking into a river with a strange amount of cement around their legs, and then something else happens inside the store with some different person.
Hypothetical or tale from Ilya's childhood? Go on.
I grew up in Moscow in the 90s, so
I'm aware.
So do with that what you will. But the story here very much is one from that kind of a childhood, because I remember my mom being an early business owner in quickly privatizing Russia and having to navigate competing extortion gangs for her language school, because that was how it was going down at the time. Of course, this doesn't create certainty. And that's the whole issue. When you have a handshake agreement like this, what you've done is exactly what the president wants, which is to give him the ultimate power, where he can mandate largesse and say, you have been good kids over there in Japan. Here's a lower tariff. But you over there in the European Union, very naughty, higher tariff for you. Don't even come asking China, you're getting coal for whatever holiday you all like to celebrate, because I'm not going to pay attention to those specifics. I'm the king and I don't care. So this is the sort of setup that we're shaping up here. Businesses cannot reshore on this basis. They need a 5-10 year window where policy is going to be what it is. The tricky thing with trade policy by traditional trade deals, it's difficult to do, but it's also difficult to undo. This is not that. And if what we're basically looking for is handing the president essentially fiat over trade policy, depending on how he feels on a given day, I mean, fine, but businesses aren't going to take that as a cue to do much of anything but hoard cash and wait. And by the way, as we get closer to the mid-term elections, they don't even have to wait that long. They just need to buckle down and go, all right, let's see what happens when people have to start campaigning for these midterms in barely 6 months' time. And then we'll see who does what where.
Yeah, my congressman held a town hall over the weekend, and people were asking him about his tariff position, and he's like, well, we got to just give the president a chance. You know, he has a negotiating window. But he did say if trade deals are not signed by the end of the 90-day window, he thinks that Congress should act on their authority. That's Mike Lawler. He's one of the 10 House Republicans in one of the swing seats. So maybe Congress will act soon. Not going to hold my breath, though, because 90 days is still a long way out. We have to wait until July, and I will definitely be blue in the face by July. Here's the interesting thing about the euro and the currency markets here today. We have a headline when we wake up this morning, at least when I wake up this morning, guys. The German chancellor, well, not quite German chancellor. He is not confirmed in the Bundestag. And the euro is falling back this morning. They quickly gather everyone together. Apparently some MPs were late, missed the vote because they were sick. They vote again. He gets into a position of authority. He's now chancellor. And the euro is able to close the day higher, kind of brush off this weakened Chancellor Merz. I would point to what's happening here. We move below yesterday's low in the euro. We close above yesterday's high. We've seen this so many times before. That's a key reversal or an engulfing bar, depending upon what you want to call it, where you identify it in the trend. We're not quite at the low off the recent swing high, so not quite a key reversal, but I digress. Off the 1 month moving average, where we've seen support over the past few weeks since the middle of April. And the 1 month here, you get that Morningstar candlestick cluster turn through it at the start of March. And ever since that bottoming effort, you see that the 1 month has been holding up here. So you get this nice turn higher in the euro, higher in the Japanese yen here today. It's moving back through key swing levels that were established initially after Liberation Day. You have an Australian dollar, which is continuing to break out. Ilya, I know you're on this. It's now on a yearly
and the
closing high here.
I bought
and the
that
yen.
pullback in the yen as well.
Right, so the dollar still doesn't look too hot. Higher commodity prices obviously good for the Aussie. On a day when oil's up 3.5%, I find it, or 3.25%, find it particularly noteworthy that the yen is able to do what it does. So strong yen, strong gold, weak dollar, weak stocks.
It all has a flavor, and the flavor is lower long end yields. Take a look at ZB here, and the little engine that could. It's been getting beaten up, but I bought a little bit of a TLT vertical here today because if you look in on let's say an 8-hour or a 4-hour, interesting little upswing here today that if you look at the shorter term time frames seems to depart from some recent consolidation. Seems to want to change of pace.
Sorry, I'm looking through some of these headlines here. CNBC's this is like this is very well written, very funny framing. Trump downplays tariff talks. We don't have to sign deals. The Art of the Deal author, President Donald Trump, said in a surprising comment Tuesday that the United States does not need to sign deals. That's just excellent journalism. That's pretty funny. Yeah. I like the framing there. Yeah, I mean, like, is this a walk back? Right? Bessent saying today that there's no negotiation with China presently.
Now there's not.
Now there's not.
Before it was untenable for there not to be a negotiation. Now there's not a negotiation. It feels very much like the Fed is going to come out, say nothing of substance, betray absolutely zero bias again, and say, listen, you know how you all are sitting here wondering what's going on? Us too. See you in June. And the markets are going to take stock of what's just happened and say, well, which way is growth likely to err? Is it going to err on the upside? Chances are not. And the Fed isn't coming. It's not coming at least until July. Okay. Let's just dig this foxhole here.
India says that justice is served. Pakistan says no, it's not. They will be responding to India's attacks in Kashmir today, even though India said specifically they did not target any Pakistani military sites. So we have, just giving with the time of day as if they're going to be waking up across the world shortly as the sun rises on May 7th. Tonight could be an interesting night in markets if we see some of these headlines continue to pile up here as we make our way through the trading day. Guys, 5 minutes left here in the session. So tomorrow, the Fed, we're expecting nothing. I think that makes sense, right, folks? Mm-hmm. If you're in the chat and you know the Federal Reserve is going to put out new economic forecasts next month, and you have a president of the United States saying today, we're not negotiating with China. We don't have to sign any deals. Do you feel like you could have the courage, the confidence, the ability to move decisively on rates or policy or offer a signal for when the next move will be? Likely not. But that's the upside here. We're now in a calendar period where we have meetings May, June, July. So if the Fed does decide that things are wrong, guess what? We get those forecasts next month. We'll get the new growth, inflation, unemployment, yada, yada in June. And with those numbers in hand and a bunch of data in our pocket, the Fed could probably make a more formidable case to think of something to do, if that's hold or cut. But the time horizon for that to occur, probably not tomorrow. Ilya, Thomas, you guys have your exposure coming out of today. Will you be making significant adjustments before the Fed tomorrow? Thomas, what's on your book right now? Will you be keeping it?
No, I'm not going to. I'm staying long crude. I'm staying long gold. I've been long ZB, ZN, taking a little bit of pain since last week. I'm going to stay long there too, though. I think it's going to be like you said. The Fed's not going to offer much. or like Ilya said, the Fed's not going to offer much. The ball's in the White House's court right now. I'm unconvinced on any long in the equity market right now.
Ilya, what are you holding? What are you getting rid of?
I got all kinds of put verticals in the stock market, which obviously I've been nursing for a couple weeks. They were early. I have them in SPY, in the Qs, in IWM, so I'm basically biased short on all three of the indexes that we look at here. I'm long the Aussie, I'm long the yen. That's working. I got a little bit long a TLT call vertical today, looking for basically the markets to conclude that the Fed outcome means more rate cuts later, because they're going to be late and they're going to have to catch up, and that's going to mean that more easing goes into the back end of the curve. So I've got that on in a completely random thing that I'm probably going to be holding on to all year. I got long Brazilian stocks, EWZ, and I'm not looking for it as a trade. I'm looking for it as something to hold for a while. I think it might be bottoming. I think one of the main beneficiaries of a rupture is, between the U.S. and China, in particular on ag exports, and in particular on soy, is Brazil. And it looks like the political situation there ahead of next year's elections has gotten about as bad as it's going to get. It doesn't look like it's going to get any worse. So it seems like we popped through a range top here, and I'm just going to buy it and hold it. It's not anything that I have any reason to trade around. I just bought a straight up call. It's 240 days out. So it expires at the end of the year. So this is just a lark. Other than that, I'm just looking for the Fed to validate a lot of what we're saying. I'm long gold, I'm short the dollar, I'm long bonds, I'm short stocks. So risk off rate cuts. That's sort of the bottom line.
So you'd say you're sanguine about EWZ?
In the interim, yes.
In the interim. Okay. Yeah. Yeah, for me, it's gold, it's bonds, it's notes. Gold still pressing the long call spread for a move back to all-time highs that was put on last week after taking a brief reprieve into being short, and glad that I switched when I did. But that, we see the black cat in the matrix. You don't look at the deja vu and think much about it. So that's working here. Silver longs, copper longs are still working, obviously. I really like the action on the utilities today in some of the names that I've been writing out for the past several weeks, like Exelon and Duke Energy, which are both still in these consolidative, kind of bullish pennant type of formations. And utilities, broadly speaking, you look at XLU, this is at the top of its range and looks like it wants to break out to, this is a fresh high for the year in XLU. Other than that, just meandering around. ZN is directionally neutral. ZBs is directionally neutral, both on a short iron condor and a short put spread. If the Fed doesn't cut tomorrow, they're not going to fan the flames of inflation or growth, which mirror image of what happened in September, guys. Higher rates out of 50 basis points of cuts. I think you get lower rates coming out of no cuts. But we'll find out if we're all right or wrong tomorrow. Ilya, you and I will be back for overtime tomorrow with Dylan, purportedly. Thomas, you're going to be on with me prior to the FOMC, so we're going to give this to people all over again and look at the trade setups intraday. So I want to thank everyone for coming out, particularly if you're on YouTube. Make sure that you join us for tomorrow's sessions, pre and post FOMC coverage here on Tasty Live. So for Ilya Spivak in San Francisco, Thomas Westwater in Chicago, I've been Chris Vecchio in New York. Good luck trading. We'll see you soon. After this, there's a brief break. Then Ilya Spivak's back with Macro Money.
See you there, everybody.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Stephen and Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and
Markets continue to leak lower as we get ready for what is the tentpole event for markets this week. No, it's not the meeting of President Trump and Prime Minister Mark Carney of Canada, although that certainly stirred up a lot of interesting pronouncements today. No, it's the Federal Reserve monetary policy announcement. We're going to dig into exactly why the markets are so soggy ahead of it and what it may bring here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. We're going to start just with a look at what the markets did here and why they are setting up the way they are for this announcement, and then take a look at what the announcement may bring and what the trade opportunity is shaping up to be in its wake. So here's just a kind of stage setting look here first and foremost at the S&P 500, and you can see here we kind of hit this former resistance at 57.24 thereabouts. You can see that there is a sort of range that's set up right here. Very tellingly, of course, this was the place where we gapped lower on Liberation Day. This was the sort of congestion range established after the markets initially got their growth scare around the deployment of tariffs in the beginning of the year. They paused to consider what happens next. Then we get Liberation Day, which of course gives us I dare say, something currency crisis adjacent kind of an episode where bonds, stocks, and the dollar all crater simultaneously in response to the president's tariff policy clarification. Then, of course, we walk that back, and at least the tariffs north of the new baseline of 10% are put on at least a temporary hold, and there's a massive rally. We then threaten to fire Chair Powell and then not, and ultimately that's what unclenches markets more convincingly. Notice we've basically erased all of this kind of sovereign risk kerfuffle, but only that, and have stopped exactly where Liberation Day would have left us were it not to have occurred at all. And so the interesting bit, of course, is since the beginning of the week, the markets have walked back a bit from those levels. It's not at all clear that the rally is over, but at the very least, it has stalled at both a level of inflection for price before, and clearly see it here with the naked eye, and also a kind of a critical inflection point in terms of the narrative and in terms of time. Now, as far as the Fed policy announcement itself goes, the expectations are very clear that the Fed is not going to do anything with rates at this meeting. We can see there's no change that is baked into the cake here until you get to July, September, and of course there's no meeting in August. But we can see here that we go from 4.38, the effective rate currently, because of course the Fed sets things in ranges. That's the midpoint, the effective rate currently between the Fed's target range of 4.25% to 4.5%. To get to one cut being priced in, we'd have to get to 4.13, and you can see that falls somewhere in between July and September here, which of course makes sense. That July meeting is on July 30th, so right at the end of the month. So indeed, if the pricing structure here is telling you that there's no cut in July, it's because for most of the month there isn't one. But it happens just as the calendar turns to August, right before then. And so by the time you get to September, obviously we're sub 4, and we already have that first cut on the menu. From there, another cut is already on the menu for November. We'd have to get to 388 there, and of course by November we're already there, 371. And to get still a third cut from there, we'd have to get to 363, and you can see we're already lower than that, 358 for December. So you can see them here: cut, cut, cut. 3 of them on the board. And so if you look at the overall structure here, you can see very tellingly, here's your 3 cuts, almost to the basis point baked in here. And for next year, 1 cut. A little bit extra if we consider the 29 basis points versus 25, but only just barely so. So what you then drill down on is 100 basis points in overall easing. Of course, there's some rounding here, but clearly this is in line with the Fed's own forecasting. This is, in fact, what the Fed has been saying since December. Here's the December projection. It was to go from 4.4 down to 3.9 this year. By the way, why 4.4? 4.4. There's the current effective rate. So from 4.4 to 3.9 is 50 basis points. From that down to 3.4 is another 50 basis points. So the Fed agrees with markets, and they agree with the Fed. We're looking at about 100 basis points in cuts between now and the end of next year. But clearly the Fed is looking at 50 basis points spread evenly over that forecast, whereas the markets want more urgency. They want 3 rate cuts up front and 1 next year. Why so? Well, we've gone over the reasons in detail before, but we'll do it again here briefly. Of course, we just got the latest batch of PMI numbers from the U.S. this week, reinforcing the idea that a cool down in the service sector has given us basically standstill on U.S. economic activity growth, down from the headiest levels that we'd seen since early 2022, where, incidentally, we hovered for most of the second half of last year. But as soon as the calendar turns to January, well, that falls apart. And so we are now basically at no growth at all, or barely any. Of course, this is, as ever, in the logic of PMIs. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So at 50.6, we're growing, but only just barely so. And in fact, at the weakest pace here, referencing back 17 months. A competing PMI survey, again, finalized this week, comes from ISM. They have a slightly weaker view of manufacturing, 48.7 versus 50.2. They have a slightly stronger view of services, 51.6 versus 50.8. But the bottom line, we're somewhere around 50 and change, maybe a little bit north of it, for a weighted composite, considering services is, of course, a much larger part of the economy than manufacturing. We're probably tilting to the positive side of 50 because the weight from services here probably matters more in any kind of composite construction than does manufacturing, because of this asymmetry in the economy. And so the bottom line, net, seems to be to land a little bit north of 50, which is exactly what we get from S&P Global. In other words, we've slowed to near standstill, and you can clearly see the direction of travel here. Basically, since the beginning of the year, these things are going down in tandem, much as we get from the other PMI as well. So there's quibbling at the details, but the overall story is of economic deceleration, and that part is absolutely unmistakable. So why won't the Fed cut? Well, we've heard them talk extensively around the idea that what these things are, ISM and S&P Global, and for that matter, consumer confidence surveys from the Conference Board from the University of Michigan, which are likewise flashing bright red, that this is survey data and sentiment-based. Granted, it's a very good proxy for GDP, especially the PMI numbers, but what the Fed wants is something more concrete. It wants to hang its hat on some kind of set of hard numbers. And we can see from their forecasting what they think the trajectory is and what they're worried about. Take a look at the change in projections for growth and inflation despite the stasis on rates. We adjust to lower growth from 2.1 to 1.7, from 2 to 1.8. We reprice to higher inflation from 2.5 to 2.8. For the core, a little bit more stable. For the headline, even for next year, from 2.1 to 2.2. And of course, this lines up exactly with what Chair Powell told us both when this meeting occurred in March and since, which is that they have no idea how these tariffs are going to impact the economy, but what they know historically is that tariffs tend to raise the prices of stuff because they are essentially a consumption tax on imports, and that this tends to weaken growth because then people have less money to buy stuff and buy less of it. And of course, we know that the biggest component of the economy by far is household consumption. So we know what the Fed thinks are the risks: weaker growth, higher inflation. We know that this pulls the Fed in divergent directions. Weaker growth says rate cuts, higher inflation says no rate cuts. And so the Fed is saying, we just don't know, and we're not going to make a call until there is hard data telling us which way we need to jump. And yes, we see the survey data, but we need it to be more concrete. We need not just for businesses to be afraid, we need for actual pain to materialize. So far, that has been somewhat difficult to engineer. Here is the data that you have most recently, of course, from the GDP report. And ostensibly, you have your kind of hard data slowdown. The 0.3% contraction in GDP is the first negative quarter in 3 years. Last time was the 1% decline in the first quarter of 2022. So, okay, do we have the hard data? Well, not so fast. If we look at the internals of that GDP report, and we've discussed them in granular detail here before, much of that negative number was the off-the-charts surge in imports. And since GDP is consumption plus investment plus government spending plus net exports, that is exports minus imports, this little sliver of imports minus this big chunk of imports obviously gives a huge downdraft on growth. Now, overall, the export sector is tiny relative to overall GDP. Net exports are maybe only about 5%, 4.5% of overall GDP, whereas consumption is 65.8% or more. In the recent numbers, it was closer to 69. But the incredible magnitude of this import surge really overwhelmed the picture. Similar story for this surge in inventories that's making for this massive jump in investment. And of course, all of this is front running of the tariffs. In the first quarter, companies know the tariffs are coming. They don't know exactly what they look like. And so they're trying to buy as much as they can from overseas to build inventories as big as they possibly can to weather a shock for as long as can be made to work. So not surprisingly, there's a surge in inventories and a surge in imports, which makes these GDP numbers fuzzy and easy to argue with, even though the part that matters, the consumption piece, actually gives you the smallest contribution since back here in the second quarter of 2023. So almost a 2-year low on household consumption. That's the part to be worried about here, but it's difficult to say that this is quote-unquote hard data with so much fuzz in the figures. It's a similar story for the jobs report, but somewhat in reverse. Notice it somewhat beats expectations. 177,000 jobs added in April versus 130K expected. Now consider what this means. This is outperformance, sure, to the tune of about 47,000 jobs. Except the March number was also revised lower by an almost identical amount, revised down by 48,000 jobs, from 228 to 185. So did the labor market look any better in April than expected? Well, pretty much no. It was exactly as expected. because whatever outperformance you got at the top was taken away in the revision for the prior number. And as we can see, going all the way back to early 2023, the 12-month trend in these 2-month revisions has been negative. That is to say, we've seen some chop up and down on these revisions, but the trend has been toward revisions down to a weaker labor market. And this has been with us for a while. So again, fuzzy data, unclear exactly what the Fed can do with it in an unmistakable way. On the inflation side of things, we've started to see some ticking lower. In particular, the core PCE number that we got reported last week gave us core inflation of just 2.6% year on year. That's certainly a welcome sight. It's the lowest since June of last year. So we're sort of at the bottom of the range that we have carved out recently. But it still looks a bit tenuous. When we look at the 3-month and 6-month annualized rates that the Fed likes to look at to get a view of inflation's dynamics, we can see that only in this most recent set of numbers did we come down a bit from this peak in February, where the 6-month rate and the 3-month rate accelerated. Now, we saw something very similar last year. There was about a 3-month upswell in these dynamics, and this, of course, got the Fed delayed and sounding frustrated, saying we want to cut rates, but we can't because inflation isn't making the progress that we want. We saw it making progress the prior year, but now our hands feel tied. And so they dithered and dithered and dithered until they got to September here, and finally had their big 50 basis point cut right here, said a bunch more easing was incoming, but then, of course, inflation started to go the other way. And at the beginning of this year, really had another sort of unwelcome spike. So far, we're only 1 month into a cool-off. If this was at all instructive, then the Fed has a few more months yet that it needs to see before it's convinced that this thing is moving in its desired direction. Now, for their part, the markets are seemingly giving the Fed permission to cut. Here are the break-even rates for the 5 and 10-year U.S. Treasuries. Essentially, what this tells us is the implied inflation expectations in the bond market, derived by taking the difference between nominal rates, which is what we typically talk about when we say bond yields, and real rates, so-called TIPS yields, inflation-protected security yields. And there, once you take the difference, you get the inflation adjustment that it takes to get from nominal to real. That tells you what the bond market thinks about inflation expectations. And so when you look at what's been happening here, shock of shocks since mid-February or so is a sharp turn down in inflation expectations, which only became more acute at the beginning of April, and these things have not rebounded. Now, the timing here is, of course, very much an auspicious thing. It is the same timing as the turn right here. So just as in mid to late February, stocks said, oh no, growth scare. The PMIs are starting to show that all of this fire and fury around tariff policy is creating uncertainty. Businesses and consumers are holding back on spending. That is a dampener on growth. The economy is slowing and doing so quickly. This is where the market started to freak out. Not sovereign crisis freak out, just heading to recession freak out. And you can clearly see this is where inflation expectations peak and start to come down. Because ostensibly what the markets are saying here is, yes, maybe there is a one-off price increase from these tariffs, Fed, but also we're looking through that to what that price increase will trigger. And that is demand destruction and recession. And so on net, inflation will be lower, not higher, because whatever one-off increase in the price will not be sticky. The economic slowdown, on the other hand, that's going to bite, and that's going to hold. So we see inflation leveling down as though to give the Fed permission and say, you're worried about the wrong thing, go ahead. But that's not enough for the Fed to really hang its hat, or so that it would seem, especially at a time when it is under increasing political pressure. Now, the president has helpfully walked back his threat to extrajudicially fire Chair Powell. That's, I suppose, helpful. But there is certainly no shortage of reversals from the White House, and that's the state of play right now. But who knows if it will continue to be the state of play going forward. And the Fed is very much aware that it is only as good as its credibility. It can't twist the arm of every interest rate in the economy. It has to be a credible lead to follow. And if it feels like it is becoming subservient to political influence, well, then it's not very much of a lead, and the markets will not follow. So, at the risk of getting the entire credit structure unglued, the Fed is not inclined to look like it is kowtowing. So it needs solid, hard data evidence to make the pitch that easing can begin on its own merits. So what we have here then is probably a Fed that comes out vague again and doesn't say much of anything. It says, why would we make a determination here one way or another? Nothing has changed. The data has been mixed. We don't have any more clarity. The fog is thick. We'll see you in June. And to the extent that the markets seem to want more urgency, again, they want 3 cuts this year, and the Fed is only telling them to expect 2, that kind of vagueness is likely to disappoint. So what you might then see is perhaps some extrapolation lower for stock markets. We'll see if they actually make a break through this former resistance turn support right around 55. I would argue you need to do that to really and truly cement that the down move is back in play. Otherwise, this could still be the start of something new that goes higher rather than just a correction. If you got through this level here, well, then the dominant bias is again reasserted on the downside. But the real active story might be here in the bonds, where just as the Fed dithered last year and the market started to make headway to price in more rate cuts later, because the Fed ostensibly is going to have to cut, is already by that point late, and has to then cut more to catch up, so too the markets might conclude is the case this time, and that might see yields disproportionately lower at the long end of the curve. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. In just 30 minutes' time, I'll be on, as I am every Tuesday, with Victor Jones for the Price of Truth. Back with Chris for Futures Power Hour on Friday. And, of course, both Overtime and this show as well. On with Victor for Tom, with Victor and with Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Good luck.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
If you don't come from money, working with money sounds like the quickest place to get to money. So this idea of allowing money to work for you was fascinating with me. And then the more I get into it, the more I realized it was just a big competition. You know, it's like a big poker game with really smart people who know game theory, and nobody knows tomorrow, but they're all just taking calculated risk. And when I figured out that's what it was, like it wasn't this weird world of like somebody knows exactly what's gonna happen and this guy's got great stock picks, it's all just calculated risk, that gave me inspiration that like, well, I can do that. So I think spending a lot of time when I was young to learn different option strategies and to learn stocks, options, futures, Forex, crypto, to be able to go where the opportunity is, I think is the most important. Getting hooked in a strategy, it's cool, I respect it, but I tend to think I like to go wherever the opportunity is.
What is going on, everybody, and welcome back to Risk of the Week. Today, we do have another Risk of the Week. We're going to put one on. As you can see, it's getting down close. It's getting close, Gus. I know it's 3-1. I know I kind of yipped my way up a little bit in there. We'll talk a little bit more about that another time. But anyways, what's going on, everybody? Gus, what's going on, my brother? How are you feeling today?
I'm feeling good, doing well. We that intro kind of snuck up on both of us there. I think we're all on. The show is called Risk and Reward, everybody. By the way, we're doing Risk of the Week. That was the same thing that happened to me. I my eyes darted over like a sleeper agent activation. But happy to be here. Been having a good day, having a good week. I got no complaints. I do have an opener question for you here, Earl. We were just having a spirited discussion about this outside. What's the last Disney movie that you can remember going to see in theaters, like Pixar movie? That's kind of what I mean.
The last Disney movie actually seen in theaters? I don't even think I could tell you, to be honest. Maybe. I might have to come across something that'll be like, oh yeah, I did go watch it in theaters maybe a few years ago, but it's been a while. What is the topic of this discussion?
That's it. That was just my opener here. We were talking about it earlier, and about the differences, the generational differences, and it's just so weird because Disney, it's like, you know, if you're 2 years older than somebody, your experience with Disney and Pixar movies could be entirely different from theirs. So fun little discussion. For me, it was Frozen. That's the last one I can remember going to see.
Really? Okay. So why? I gotta ask, why did you go to check out Frozen? Well, did you think it was interesting, or were you going to something like?
I mean, OG Frozen was like 2013, and I think I was just kind of seeing any. Ago? Yeah. Oh yeah.
Bro, we're getting old.
I know. I was kind of shocked looking that up as well. I was like, man, that's pretty recent. I don't know why I would have seen that in theaters, but no, I was just 12, just right on the verge of Disney not being entertaining anymore. It was the giant movie at the time. I've seen pretty much every Disney Pixar movie under the sun. That might actually be DreamWorks. I don't want to speak out of turn, but anyway, that's my icebreaker for the day. Everyone, let me know your favorite Pixar movie in chat. Toy Story is my personal favorite. I was a Buzz Lightyear kid.
Okay, that's up there. I don't know why you give me Buzz Lightyear vibes. I don't know what it is, but Toy Story feels like it adds up. I don't know. I would go Cars, or Nemo is a banger, bro. Nemo is a banger.
Nemo.
That is a well-produced movie.
Finding Nemo is fire.
Yeah. Yeah, and I don't know who makes Shark Tales. It's probably DreamWorks or someone else. But Shark Tales is another one of my favorites. Outside of Disney, The Social Network with Facebook and all that, I think that is such a fire movie. I love it.
Outside of Disney, and then you just pull like the most adult movie ever. Yeah, bro, I like Interstellar. Interstellar's my favorite movie. It's not what we're talking about.
That's why I made the disclaimer. But I got to ask you before we get into it again, today's going to be another risk of the week. We're going to be putting on a new position. We got FOMC tomorrow. So we got a lot of risk to put on this week. But before we do get into that, we'll do a little tour of the market. Did you see the Nuggets game winner last night? I promise we'll be right back on topic after this.
I did. I was watching it live. I unfortunately was a OKC bettor, so it was my spread had already long sunk, and I was just kind of in it for the excitement of the game at that point. And yeah, that was a crazy ending. It's insane to steal one off OKC in OKC with the rest advantage. I mean, that's huge. That's huge to steal at home court. So yeah, Nuggets in playoff form.
Yeah. So Nuggets and 4 guys, I might be just a little biased, but great game last night. And I think the Warriors and the Wolves, that's going to be a series and a half. So we'll see what happens there.
Yeah. Quite a shame my Rockets couldn't get it done, but yeah, sorry, go on.
Are you a Rockets guy?
I am a Rockets fan. It was a rough one.
Look at me.
It's all right. I was happy to stretch to 7. It's a really young team. We got like the next 10 years to build on this. I'm not super worried.
Yeah. I mean, it was Curry. We can go ahead and start jumping into these slides here. But, hey, at least it was Curry. It wasn't some bum team. And it's like, why'd you guys lose to them? You lost to one of the GOATs. So, but if Curry does win another ring, we're going to have some very uncomfortable conversations that I don't even want to have.
I concur.
Yeah. But we can go ahead and jump into these slides for the day. Risk of the week.
Let's do it.
First things first. Rivian. Okay, Gus, let us know what you got here.
Yeah, Rivian, getting a little deep in my EV bag here. Actually, I could count on one hand how many times I've traded Rivian in my life. Honestly, it's just never been super appealing to me, especially from an options perspective. It offers some sustained pockets of volatility, but generally, especially the last few years, has been moving, much like a low float stock does. But I'm liking Rivian in this spot. They have earnings after close today. Their post earnings performance has been consistently tied to their forward guidance, not their numbers, because they have been losing this entire time. And once again, we are expecting negative EPS. So this relies much more on their forward guidance, especially in this tariff environment. But they have quite a leg up in this tariff environment, especially in the automotive sector. They have all of their assembly is done domestically on vehicles that they sell in the United States. 100% of them are assembled domestically, and they have fewer imported parts than others in the sector, namely Tesla, who also does 100% of their assembly domestically for vehicles that they're going to sell in the United States. But they import a lot more parts than Rivian does. So I actually don't think that Rivian has too much tariff overhead going on here, which I think will be a good thing for their forward guidance, especially relative to these other automakers. As I mentioned, Chrysler, GM import 40% of their vehicles. Ford imports 20%. Chrysler and GM Chrysler and Ford have both suspended forward guidance for the year entirely until they can have more certainty, and GM slashed their forward guidance by about 25%. Yep. So that's what they're up against. Also, they have these R2 models, which are set to come out next year. That timeline's been holding up. They have a partnership with Volkswagen, where Volkswagen is funding development of the R2, and then Rivian is passing the EV developments back to Volkswagen to use on their own EV line. So well-funded thing, seems to be on track. And this R2 Rivian series is really going to shake up the EV space, in my opinion. They're going to come in at a $45,000 MSRP, or that's the plan at least. Tesla Model Y is $44,900. Tesla Model 3, making sure I have my models in order here. Yeah, Tesla Model 3 is 42 and change. So it's going to be a very competitive price point on this R2 series of cars. Yeah. Looks like it's on pace. So the two things that are going to move this are tariff guidance and updates on this R2 series. I think tariff guidance is going to be very good. And as long as this R2 series is still on track, I don't even think it matters what numbers they report. So I'm liking Rivian. My trade highlighted there at the top. Bull call spread, bought the 9.5, sold the 10.5. Actually, I have 3 of them myself. And it's 10 DTE, so that's kind of where the risk comes into play here. But I have plenty of room, currently trading at what is that 13 and some change.
Okay, May 16th expiration, so we got a week and a half next Friday.
Correct. Yeah,
I like the EV. I like the EV pick. One thing I think is really interesting that Rivian is doing. A lot of the electric vehicles came out very expensive, around $100,000 for like their first vehicle. It's funny. Tesla kind of did that. Now they have cheaper vehicles to where they're trying to dominate the market. Rivian came out very expensive. Now they're going to be releasing the R2 maybe in 2026. And they're going to be lowering the price point on some of those models, again, probably to compete with Tesla, like you just mentioned. But I think that's an interesting strategy. Pricing your vehicles very high to where they seem value a lot higher, and then come out with some other lower end models. But that's going to definitely give Tesla some competition. I'm curious to see what these vehicles are going to look like, because I think you get that 30,000, 40,000 price point to compete with some of those Tesla models. I mean, now you have a decision to make. It's not just going to be the Tesla.
Yeah, and it's worth considering too that it's MSRP is new, rolling off the lot with 0 miles price. These things become very affordable very fast once they hit the market. Teslas are pretty accessible to the average consumer now. If you get a Tesla with decent mileage on it, you can get a Model 3 sub $20,000 these days. And I think that we'll see a similar trend with Rivian. And yeah, like you alluded to, I think that it is a very smart strategy, and it's one that Tesla employed as well, of initially making these very luxurious, high-end seeming vehicles that are unaffordable by the masses, and then gradually expanding into where the masses can afford them, and you've already asserted yourself as a luxury brand before your price point comes down. So yeah, definitely very interesting, and I'm bullish on it here. And it really, this R2 series and the research I was doing today kind of has me rethinking things a little bit. I might pick up some shares or take some leaps or something like that, because I do think Rivian shows some promise through the next year and a half.
Yeah, no, I hear you.
Earnings probably are already out. Thank you, chat.
Yeah,
yes, I forget that the market is closed. I'm always talking like it's just still market hours right now. Let's find some numbers.
No, we'll check it out.
You can go ahead with yours.
Are you checking out the screen?
I am going to get this figured out. Hey, let me see. I'm just curious about what their how they came in relative to EPS and whatnot. We have an earnings beat. Holy cow. Okay, so yeah, they were expecting a 77-cent loss, reported a 41-cent loss. Revenue came in almost $250 million over projections. Yeah. They projected 997, came in 1.24 billion. So very, very strong numbers that I didn't even think we needed in the first place. So this one's looking like a winner. Thank you, chat. I appreciate it. Who said that?
You know what?
Thank you, Wandera. I appreciate you.
A win is a win. EPS expected to lose 77 cents per share, came in at 41 cents. It's like, that's a dub. Still came in and lost, but it's still better than expected. So how's the reaction right now? We'll take a look at it in the market here in a minute.
Yeah, we can pop over in a second. You go ahead.
Cool. Awesome. Well, this week I have to go with Old Faithful, Apple, right? One of the most popular underlyings I think to trade, but I'm going to have to go Apple here. Excuse me. Relative strength to the broader market index, it's holding up pretty well. It shows more signs that it might be a leader in its space rather than lagging behind other underlyings, which makes sense. I mean, it's Apple. Revenue services. We talked a lot about this. iCloud services, any type of services that Apple is utilizing is looking like it's going to grow from here on out. And again, a huge part of that is the iCloud service. I was really intrigued by the iCloud, and I did a little bit more research on that too. But Apple is definitely rolling in the dough on a lot of these services. We think with their iPhones, no. Those AirPods, another extreme revenue stream that they have. So it's like Apple's one of those things that it catches you off guard where they make a lot of their money, right? iPhone, most popular, right, tool that people have at their fingertips. But I mean, they're making a killing on every other avenue that they're exploring. But earnings are behind us. No volatility that I have to worry about. I know I held through the Tesla volatility. Not something I really want to do again, even though that worked out pretty well. But earnings are behind us, so it's making it a little bit more attractive for me. Maybe get involved on Apple here. And then historically, Apple tends to grind higher post earnings in Q2, and seasonality could give this trade maybe some extra tailwind. So we'll see how Apple does. It's a pretty, I want to say, basic trade. The IV is all right on it. I believe we're sitting at about 33 right now, but I was checking out the options chain. I'm not really liking the juice on some of the premiums. So premiums aren't looking too attractive. That's another reason why I'm going to be buying a vertical spread. I was looking at buying a call, didn't want to pay too much of a debit for the call. So especially with FOMC tomorrow, I was like, you know what? I'm just going to buy the at the money call spread. It's a little aggressive, right? First, I'm buying the call spread, and then I'm going to do it at the money. But I'm going to be bullish. I'm bullish Apple. I'm going to be long Apple. Don't have anything else to worry about outside of some of those binary events like FOMC. So hopefully Rivian can drag this to the upside. It can somehow do Apple some favors. That would be awesome. But we're going to go with Apple. And I'm going to be choosing the May 16th cycle as well. I thought it was interesting. You mentioned the May 16th too. And when I was in the options chain, I was looking at the May 16th as well. So we're going to do Apple this week.
And you make a great point about all the different revenue streams that Apple has. I mean, you'd be hard pressed to name an electronic or a device with a screen that Apple does not manufacture as it is. I've mentioned my Apple Watch before. I love this thing, and they got watches, they got AirPods, they got laptops and computers, they got everything in the world. What I want is an Apple TV, and I know Apple TV is a thing that exists, but not a plug-in. I want an Apple TV that is an Apple device. Like
a Apple TV, a TV branded by Apple.
Yes, that's what I would like, and I want it to be perfectly integrated into my suite with all my other devices the way that I have it now. I want to be able to be watching a YouTube video on my phone, walk in the door of my house, and flick the YouTube video onto my TV. That's what I want, and Apple has the ability to do it. But TV market oversaturated. I don't think they're ever going to do that. It doesn't hurt to dream. People have been dreaming about the Apple car for over a decade now.
Gus, brother. I don't want to have to call you a boomer, brother. But have you heard of AirPlay?
I use AirPlay, yes.
Okay, valid. All right, I take that back then.
AirPlay is fine, and I have a smart TV with the YouTube app on it, when it's already about as seamless as it can be. I can close YouTube on my phone, open the app on my TV, and then I can immediately resume the video. That's all well integrated, and I understand that the functionality is there, but I know that Apple would find a way to make that more seamless if they tried.
Absolutely. 100%. See, this is one of the reasons why I was excited about Apple producing their Apple Vision Pro, the VR headset, because number one, I'm super intrigued about that space and to see how it's going to develop. And I didn't think Apple would get involved in something if they weren't going to come out with a high quality product that resonates with their brand, right? Apple's known to have a high quality feel. So I didn't think they would produce something that is low quality. So if Apple does produce something like a TV, I mean, I bet you can bet it's going to be really good quality, that Retina display, whatever it is. But that's one of the reasons why I was so excited about the Vision Pro. I haven't heard anything about it. I know it's super expensive, like $3,500 for a VR headset. You could just buy a brand new MacBook if you wanted to. But it seems like whatever Apple touches, it turns to gold, historically speaking.
I think that they actually have kind of done away with the Vision Pro. There was originally plans to make a V2. I don't know if they're doing that anymore. Chat is welcome to fact check me on that. But I think that they're kind of doing away with that. I am in the market for a Meta Quest right now myself. That's something that I've been looking into a bit more heavily recently. And I mean, to my understanding and from the reviews that I read, you get the Meta Quest for 10% of the price of the Vision Pro, and you give up very, very little functionality. But you also don't have nice integration with your Apple Suite, like I was referencing earlier. You know, you can do all kinds of things on the Vision Pro that you wouldn't be able to do on the Meta Quest if you already have Apple devices. I think that VR and AR is very interesting, and I'm wondering how close we are to people. I mean, and this is like some dystopian Ready Player One level stuff, but to people not even having screens in their house anymore, not even having a TV hanging on the wall, and everybody just has a Meta Quest, a Vision Pro, and you can all sit in the living room and watch your shows, or you can sync up and watch the same show or whatever you want to do. But the TV is just there in your augmented reality and not there in real life. You can buy a Meta Quest one time for $300 and in theory never have to buy a TV again if you didn't want to. You just got to wear this bulky thing on your head. But I do think that we're moving that direction. And I think that, by the time our kids are our age, I would suspect that that might be the way where we're at.
Yeah, I know you mentioned virtual reality, then you mentioned augmented reality. Also, I just want to say, I don't even think that's too far-fetched. Like, I don't want to get all dystopian, but at the same time, a lot of the things and tools that we have today, we would have said the same thing 10, 20 years ago. So I don't think it's too far-fetched. And number two, I 100% agree with you. I think if it is developed, it's going to be more of an augmented reality first. Maybe if they can get it down into like a glasses size to where it's comfortable and doesn't look ridiculous on your head. Because I know, even when the VR headsets were coming out, everybody was like, yo, everyone's going to live in their VR headset now. Like, what are kids doing? And I don't think it's going to be like that. Not until they can pack that hardware into such a small space, like a little glasses or something like that, for it to really, you'll see people wearing these things out in public.
Well, Meta has the glasses. People are rocking those Meta glasses now, but it's not augmented reality. Yeah, no, it's just it has all types of really neat functionality, and you can listen to music and take phone calls and things by just wearing the glasses, and you can record what's going on in front of you. And I think that there may be some little traces of augmented reality in there, but it's nowhere near what you get with the Meta Quest. But the point is, they've partnered with Ray-Ban to do that, and they totally just look like real glasses. You would never know, which that's the crazy part to me. Like Google Glass and shit like that, like it's this huge bulky apparatus that looks like it's from the future. They just look like glasses, which is very impressive. And so the fact that Meta is doing that and also simultaneously doing the Meta Quest, I think they'll bridge that gap before too long. Like, I don't know if we're 5 years out. Honestly, I think we could turn that corner pretty quick.
I mean, that's a really good question. And before we shift gears here, with some of the augmented reality features, I'm curious, have you ever seen those heads-up displays in the vehicles? Like it'll show you just in the bottom corner of your dashboard, it'll show a mini hologram on your windshield. It's called the heads-up display. Is that, I'm just curious.
The dash is digi. The schedule was busy. Sorry, go on. That's what I think.
Always culture. That's the dash. No, I was wondering, is it kind of more like a heads-up display kind of technology on the glasses? Do you know what I'm talking about when I say that?
Yeah, I think that there is. I think that there are some elements of that. Like I think that there is some kind of visual stimulus that happens when like you're getting a phone call, or like maybe you have text pop up or something like that. I'm totally speaking outside my depth here. I've never worn them or really done much research. I just know that they exist. My dad got to try on a pair at a convention the other day, and he was really raving about it. He was excited. Theta Trader, if we ever get sick of wearing glasses, VR headsets would be 10 times worse after a long day. But Theta Trader, that means it would feel 10 times better when you finally get to take them off. Everybody would be wearing those dorky
half glass, half full kind of guy.
Everybody wearing those dorky VR headsets would be the end of humanity. No one would ever get late again. What are you talking about, bro? It'd become like a car. You'd have like a really cool VR headset, and people would be like, "Ooh, look at that guy's headset." That's how it would work. Oh goodness. But yeah, I agree though. I think that for it to be full scale implemented, where everybody consistently has this VR stuff going on every day, glasses type situation is probably what would be required. And honestly, I mean, are we crazy far from contacts? Is that like an insane thing to say? Like, I feel like 20 years from now, contacts are going to come into this equation, and you're just.
It's a crazy. I'm not saying it's far-fetched. It is a crazy thing to say. The idea is crazy. I don't think it's a crazy thing to say, but the idea is crazy. That's not that far. There's no way you're not working on that stuff.
Oh, certainly. And I mean, I don't think it's any crazier than telling somebody in 2000, say, how prevalent iPhones would be in 2020 and how insanely advanced they would be relative to what you have. So yeah, I mean, if you go 20 years from now, the way technology compounds, I don't know if that's necessarily that crazy of a thing anymore.
I was of the same department. Growing up, it was I would never get I would never. This is when those Galaxy 3s started coming out. Phones weren't super massive, but they were just a little bit bigger than what we were used to. And it was a big deal. Right. And then I remember seeing those phones like, why would anybody get an iPhone? They're so small. And then I remember when they made the iPhone 6, it was the first larger one that they had made. I think they really blew up after they did that. But never say never as we hop into Apple right here. Apple getting hit over the last few days. I know we have FOMC tomorrow, so we might get a little bit more volatility into these markets. But Apple a little beaten down over the last few days. And if we go into the options chain right here, you can see I was looking at this 200-205 vertical spread on Apple that expires next week Friday. So May 16th cycle, shorter term, I would be paying a debit. I'd be paying about $1.91 in debit for a pretty decent max profit. Again, I was looking a little further out too. I know I was originally looking in the 45 DTE. I'm comfortable. I mean, I like these levels. I'd be putting on just a little bit more risk. And then also, for this type of trade, I don't really want to be holding for a month and a half on this one. So I ended up going with the 10 days till expiration. And then also just to collect $1.75, I got to be selling that at the money. So it just lets me know, not as juicy as I would like. Could probably utilize a different strategy in this expiration if I really wanted to. But long story short, I ended up getting involved or going to be getting involved in this 10-day cycle in Apple. So we'll keep an update on that. Let's go ahead and check out your guy Rivian over here. My guy went with Rivian and said, forget Elon and Tesla.
Yeah, let's have a look. I'm told it's down a wee bit. Also, Mike, that's a great point. The glasses closed captioning for deaf people. Never thought about that, but that would be amazing.
That's where I was thinking about why they would be great glasses. No, I'm just kidding.
So,
but
yeah,
very volatile right here. Yeah,
definitely trending down a little bit here. It's I don't know, not what I expected. Like I said, I left myself a ton of room. I needed over $10 or $10.50 10 days from now. So I don't have particular cause for concern, but some faster acceleration to the upside would certainly feel good.
No, I hear you. I mean, we're kind of break even right now. I mean, we're kind of flat, all things given. I mean, look at this candle right here. That's some extreme volatility.
Yeah,
that was a 5-minute candle. But yeah, we're pretty much sitting flat right now. Maybe we rally into the open.
Also, in reference to your the 45 DTE idea with Apple, I have confirmed that the 90-day pause on this Liberation Day stuff began on April 9th. So that's 90 days from April 9th.
Why is that significant? I see what you're saying.
Would you be holding through that resumption? July 8th is 90 days from April 9th. So you just want to make sure we're not getting too far outside that cycle. You wouldn't be there yet with 45 days.
This was June 20. I got you.
Interested to see how the screens evolve when Gen Z ages. You hit 40 to 50 and looking at a tiny screen text becomes uncomfortable or impossible. Yeah. And Theta Trader, in a more macro context of what you just said too, just eyeballs, like our eyeballs. I worry. I shouldn't say worry, I guess, but think about that sometimes. And especially like even kids born after me, like my parents were very good about like not letting me have a lot of screen time until I was like, I don't know, 10, 11, 12. But when I was a kid, they were always like, go outside and go play with the neighborhood kids, whatever. But there's, it's evolving now to where we're giving iPads to babies. And I don't know if necessarily if being exposed to blue light from before you can even remember things, many, many hours a day. I would imagine that's going to take quite the toll on eyeballs. So long optometry, everybody. That's the sentiment there. I don't know how we get long optometry. If somebody can figure it out, please let me know.
I got a little bit of a hot take here, Gus. I got a little bit of a hot take, right? This is excluding babies with iPads, 3-year-olds with I'm talking middle school, high school, college, that age range. But also, I just have to say, parenting is extremely difficult. I see why parents give their kids the iPad. I want to do it with mine, but I see why. I mean, I see why.
Well, it's very easy to say, I wouldn't do it with mine. We don't have kids. We're a couple of guys in our early 20s sitting here bullshitting. So I obviously, I always give a pass. I can't have perspective on the situation, but continue.
No, absolutely. But I gotta say, I got a little bit of a hot take. I know it may seem like communication goes down with all this technology, but I would actually argue differently. I think communication and social engagement has actually gone up. I think it's just happening in a different way. I think we have access to create group chats. I know I have group chats on other platforms with my guys from 5 years ago that we're still in, 10 years ago that we're kind of still in. Maybe not 10, that was a little bit of an exaggeration, but I do think people have the ability to be a little bit more social than they were once able to a lot more frequently, right? Face-to-face contact is really good. Reading body language, being able to read social cues, you learn and pick up on all of those things by seeing people and engaging with people in person. Excuse me. But when it comes down to the engagement in terms of talking and speaking with other people, I mean, Discord didn't blow up for no reason. It's a community where communities gather, speak amongst themselves. So I think that it's a slightly gray area because I think there's negative impacts with technology and kids or people in general not being out and being physically social with people. But that's the one argument I have with that. I was like, I think actually there's a lot of communication, maybe more than I've seen when I was 10 or when they were 12, 13, whatever the case might be. So,
well, yeah, I think that communication is certainly up, and I don't think that anyone would argue with you on that. But it comes down to the psychological nuances, which you alluded to, between communication and socialization, which are two different things. And it's like, you wind up with these kids who, anytime you talk about a kid like being antisocial and having these problems that we're starting to discuss, they're probably on Reddit or in Discord talking to people all day, every day. But the reality is just that when you get out into the world, it's a little bit different. I had this friend in college, and he was kind of like, he was really, really brilliant guy, but he was kind of like a little awkward, weird. I mean, whatever. We liked him. He was just, I had some classes with him, and he was cool. I liked him. But he was like very antisocial. Like it took a long time before he was like really comfortable kind of like opening up and joking around and stuff. But he would be just typing away on Discord all class, every class. Like lots of people needed him, and he's constantly communicating. But at the same time, the social skills are not all the way there. So I think that you run into those sort of weird dichotomies, and also personality mirroring in real life from the internet, which I think is becoming way, way more prevalent. Like we had memes, but no one was running around when we were in elementary school saying MLG Doritos like it was funny. But these kids do run around saying skibbity toilet for real. And it's because they're learning how to socialize on the internet. So it's an interesting thing.
The epitome of brain rot. Yeah, absolutely. I mean, you just saying that was like straight brain rot right there. But Great points. I actually love this topic of discussion. I know we got some other good points in chat here as well, and you brought up some amazing points too. Great topic of discussion that we could go even deeper on.
Yeah, chat. You guys are killing it in chat right now. I wish I could read all these comments. We're at time, but this is This is really, really high level discussion. This is interesting stuff.
100%. Anything else to add as we head out here? We'll see how Apple and Rivian play out, but anything else?
Yeah, no, nothing to close out. Rivian might be coming. I guess that would be my closing remarks. Next 5 years, Rivian gonna be coming.
All right, there we go. Once I start shorting Rivian, it'll go up. So I got you guys first thing in the morning. But no, we'll see how these positions play out. We'll give an update back over here on Thursday, same time, on some of these positions. But that's going to do it. Thanks for taking the time to hang out with us today. Be sure to stay tuned for more segments coming up on next. And we will catch you guys next time. Peace.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on Tasty Trade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the Tasty Trade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Oh, yeah, it's Tuesday, May 6th, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's Eating Show, a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. We got a special one for you today, everybody. We have with us, of course, the one, the only, the global head of macro here at Tasty Live. I'm talking, of course, of Ilya Spivak. Ilya, how are you, my friend?
It's a great day. It's sunny and beautiful here in San Francisco, and I'm in my tiny office staring at charts. So all is right with the world.
A wild day, an interesting day, especially if you account for the last 5 minutes. Now that markets have opened back up, and some inklings of the confirmations that the U.S. and China are now officially engaging in trade talks. It's so funny. We're doing this stupid sort of like ritual dance of, just opening up.
Talking about talking.
It's so stupid. Anyways, shout out to everybody watching on tape. We all know what this is too. You know what I mean? We all have to sit around and watch them do this ridiculous political dance so they can save face and work their way to the discussion. It's such a silly thing. Anyways, shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't already have both, go get them. But if you want to be part of Bing, did I get it? One of these. If you want to be part of that conversation on your screen, there's only one place you can do it, and that is over on the evil Google YouTube. So head on over there, find the Tasty Live channel, subscribe to the chat, and get those phalanges and those metacarpals pumping away, both appropriate and inappropriate commentary on your screen. Do us a favor, try to keep it at least mostly appropriate. Ilya Spivak, I guess before we get into the little dance that we seem to be doing that is now confirmed, or at least looks like it's being confirmed by price action and headlines. Tell me, my friend, what was your take on today's sort of weakness that we saw during the cash open? S&P 500 was down 0.75%, NASDAQ down about 90 basis points, Dow Jones down about 1%, the Russell down 1%. Second day in a row of effective weakness. What was your take on price action today?
Well, I think we clearly had a blistering rally. It was a 9-day rally. We hadn't seen one of those in quite a long time. In fact, you have to kind of go back to the volatility around COVID to get these kind of runs. So not surprising at all for me that at the beginning of this week, the market goes, oh, wait a minute, is there something happening on Wednesday? Oh, yes, there's a giant flashing red sign of an event risk, and we've just had a really significant one-sided move in a direction. Oh, and by the way, we've erased all of the Liberation Day kind of hair on fire episode. We're exactly back to where we were before that gap kicked us off. So seems like a pretty good place to stop. Let's stop right here and just wait to get to the other side of what this event risk is going to be. I think the market is just taking a breather here. As bearish as I am, I don't think there's any confirmation that you've restarted the down move in earnest here. I think it's just the market sees the Fed in front of it and goes, that's a lot that we just did. Let's not overcommit in front of an event risk that's this significant.
Two things. There was never, not a single hair was on fire on this show, my friend. Let me put that out there. And why do you think?
Go ahead and look at the S&P there.
It doesn't matter. It doesn't matter.
And just highlight that was the minority position.
That's true. That's where the money is. Why do you think Wednesday is such a big deal? Maybe this is another. I don't know what my deal is lately. I don't know if I just got like a I don't know, maybe a hormonal imbalance. But I'm just not. I don't get what why do you think Wednesday is a big deal? I don't at all.
I think it matters a tremendous amount. And
explain.
I think everything that we have seen since the beginning of this sell-off in mid-February going into mid-March has followed a very clear cadence. And you can even go back to November, right? We've said it a gazillion times on this show. We'll say it again. The markets were not afraid of tariffs. If they were afraid of tariffs, conceptually, they would have sold off in November at the latest.
I know a lot of people who were screaming their heads off about tariffs, though, a month ago.
Well, there's tariffs and then there's tariffs. There's tariffs, the idea of tariffs. As, for example, they existed in the first Trump administration. And then there is whatever this is. And those are different things.
Yeah, that's true. That is totally
Those are very, very different things. One of these is not like the other, as the kids say. And so what you see is the markets don't begin to have any kind of freak out until business and consumer confidence all of a sudden start to crater. And you don't see that data until you get to mid-February, because your January and February numbers start to make a line. Right? PMIs are so great because they're timely. They're released, in the case of S&P Global, the month of you get the first look. And so in January, you start to see the numbers, you go, well, okay, but this is just 1 month. Hold on a minute now. The uncertainty, handoff to a new administration. Hang on. Then you get to February and you go, wait a second, this is starting to make a line. And that's where the freak out starts to hit. Not until the markets see that businesses and consumers are pulling back from economic activity around this rollout. Not until then do the markets think that it's anything. Obviously, Liberation Day spooked them a level of magnitude greater, but we've unwound all that, and I think reasonably enough. The administration took a step back from what the markets thought was the worst case scenario and kind of very clearly signaled that's not it, especially when the bond market hit certain points of pain, let's say like 4.5 on the 10-year or something like that. And you very clearly also had a realization in markets that what looked like almost like a currency crisis for the dollar at the start of April is a ridiculous thing. Because no matter how bad things get in the US, everywhere else isn't a better alternative, even collectively, for things like a risk-free asset, which is the US Treasury bond, or a currency of commerce that is the dollar. There's just nothing else right now on this kind of time frame. You can argue until you're blue in the face that something may emerge in 10, 20, 30 gazillion years, but you cannot go and break the system now. There's just nothing there. So you have the markets unclench, rightfully so. You're back to the starting line where the story was about growth. And that story hasn't changed at all since it started in those mid-February PMI surveys. They've only become worse. You're at a standstill if you look at ISM. You're at a standstill if you look at S&P Global. The GDP numbers gave you the weakest consumption growth in almost 2 years, and that was the real story of that report. Forget the weirdness with inventory and imports. That obviously made for a much more negative number than really was there. That's not important. It's what consumption is doing. That's what's important. And so that's why I think the Fed matters, because at the end of the day, what the markets want is they want to start fighting the recession. And the Fed's not going to give it to them, and that's going to be disappointing. The pricing is about 100 basis points, which is in line with the Fed, but the markets want 3 cuts this year, and the Fed is only giving them 2. So the markets are priced for urgency, and they're not going to have it.
I agree with all that. I still don't get, so why do you think it's such a big deal then?
Because I think that stocks will fall as a consequence of the Fed being hard vague, as it were, indicating nothing in particular. And saying, you know what, we said the fog was thick, the fog remains thick, we'll see you in June, have a nice day. And that being the extent of it. I think what the markets want in their pricing for urgency that you see in Fed funds is they want a nod to saying, look, we're almost there, everyone. We see what you see. We will come with rate cuts. Expect us in June. And I think what the Fed is not going to do is set that stage.
I agree.
And that will disappoint.
Maybe. I think
does it disappoint the stock market in like a critical back under 5,500 way? I'm not so sure. I think the bigger story might be the bond market, where the market does the same thing as what happened last year when the Fed did this same dance in the second quarter, where inflation got a little hot. The Fed said, we don't want to cut. We don't want to cut. But growth was starting to turn. And then for basically mid-April into August, the market was screaming at the Fed, you need to be more dovish, and stuffing all these extra rate cuts downwind in the forecast, saying, you're delaying so long, you're going to be late. But then growth surprised everyone on the upside at the end of last year. But nobody knows that that's necessarily in the cards this year. You just know that things are slowing. You want the Fed to cut. They're not doing it, so you stick more into the back end of the curve. So long rates fall.
I agree with all that. I'm short twos here. I've been short twos for a few days. I thought, I asked the question on this stream. I said 4 cuts from now to the end of the year, over or under. And then I go and I just said to myself, under.
Yeah, under.
And so
the market even agrees that it's under now.
Yeah, now we've backed off 4. Now we're at 3, and we had that. 3, we had we for most of the year we were going to start this cutting cycle or continuation of the cutting cycle in the June meeting, and now they've effectively taken that off the table. It's a 2 out of 3 chance that we don't do anything in June if they slow walk this. And that a lot of that had to do with the ISM. Repricing came after the ISM. I wonder, you've been speaking to ISMs and the PMIs since February. You said earlier that the ISMs are at a standstill. I don't know that I characterize it that way, and I'm curious why you did. So the ISM on Monday came in, I would call it stronger than expected, 51.6 versus 50.2 consensus. Can you give me, what's your read-through on that number?
So if you look at that number, it was a little bit better than expected at the headline. If you look into the details, it's a whole lot worse. But here's what I mean. Before I kind of get into the granular details, here's what I mean here. So there's 2 sets of PMIs. One comes from S&P Global. One comes from ISM. Okay. Last week, we had manufacturing from both. This week, we have services from both. Out of these, you get a composite that gives you a sense of the overall economy. And you say, here's the overall, but you have to scale it, of course, because services is a much bigger part of the economy than is manufacturing. What you get out of S&P Global is you get weaker services, slightly stronger manufacturing, evening out to almost 50, little bit warmer on the composite. What you get out of ISM is a second consecutive month of contraction on manufacturing, much worse than expected, but then you get a little bit better on services. So it surprises the other way. And that probably speaks to survey construction. But when you look at what the composite is that it implies, it is, again, a hair above 50, because the 48.7 from manufacturing, because it's a smaller piece of the whole, doesn't all the way shoot down the 51.6 on services. That's a heavier part of the basket. And so you probably end up somewhere in the 50.5, 50.4, 50.6 range on what is a composite. Now compare that with levels in the mid to upper 50s last year. We're looking at an economy that's gone from growing at the fastest rate in 2 years in the fourth quarter to barely growing at all. So that's what I mean when I say you look at the PMIs, and one of them is flavored a little bit to services, one of them is flavored a little bit to manufacturing, but the upshot for the growth of the economy is exactly the same. You're hugging 50 on both of them. So that's one thing. When you look at the services report, I think the worst part of it is you see a second consecutive month of job losses with a blistering acceleration of inflation. So if you look at it from the Fed's standpoint, you have a strong stagflationary impulse in this thing, and it ties your hands. And that's the worst part about it.
I do not get what's going. For some reason, this screen share keeps crapping out on us. I'm not sure if it's on my end or on the other end. My apologies, Paul. Let's keep cruising. I understand. I understand it now, Ilya. I said for a while, I think maybe last week, maybe 2 weeks ago when we started this posturing between the U.S. and China, I kind of said that the confirmations of talks between the U.S. and China, I could see that as being the short-term peak in optimism for equities.
Yes.
And I sort of look at the announcement that was just made. I look at stocks rallying 1% or so, and I go, I want to fade this. Like, this is it. This is it.
Yeah.
And there's a part of me, Ilya, that almost thinks the opposite. I do think the Fed wants to slow walk these cuts, but if you put a gun to my head, as you don't go there. If you put a gun to my head and you said hawkish lean or dovish lean Wednesday, I'd actually say dovish. Not by much. I would say slightly dovish lean, and open up the cut possibility for June, keep it 50-50 versus where it is right now.
Keep it 50-50, I think is key. I agree.
Yeah.
So dovish lean, of course. Dovish lean because the Fed has been talking about rate cuts since they issued a 50 basis point cut in September of last year. It's been a dovish lean, right? The question is it going to be more of a dovish lean in a way that is more dovish than March, where basically the Fed said, we don't know what's going on. We think we know how tariffs have worked. So here's an SEP that gives you weaker growth and higher inflation. And we're not changing the rate forecast because we don't know which version of this movie we're watching or what to do next, because history is pulling us in opposite directions, but we don't know how this thing is going to actually go. So we don't know. 50-50. See you later. I don't think anything has changed since March. And I think the tone won't be more dovish relative to March, though it will be dovish in general. They've been dovish. They want to cut.
All right. I don't want to talk too much about the Fed today because I feel like there's so much going on. And to me, that's one of the least interesting of the stories. But we've covered it. So let's keep
Our
cruising.
duty is complete. Our duty to the calendar has been rendered.
Dude, talk to me about this surge in gold for the last 2 days. Not only that, not only the surge in gold, but I'm flat. I'm not flat gold. I'm mostly flat. I've got a little short call spread. I'm like short the 3,500 and 3,500 calls with something long behind it, but I'm long silver. And this move in both gold and silver was incredible. I think silver was my biggest winner on the day. Talk to me about what you think is happening there. Is this all the geopolitical? Is this all India, Pakistan? Is this what is this in your mind?
I got long on Monday, and I did it by selling put verticals here. Because,
long what? Long gold?
GLD, the ETF. So I sold puts because buying calls was expensive. Vol was already starting to creep, and so I got long the other way. I think this is a combination of things, and for me, ultimately, it boils down to what we've been talking about since the beginning of April. This idea that term premium has started to blow out in the bond market. And what that tells you is that people want to be compensated more for duration risk because the fog they're perceiving is thick and isn't lightening up on a time frame that they like. There's just so much. And you can throw into that stew India and Pakistan. You can throw in the escalation that's looming in the Middle East. You can throw in, after these Houthi missiles penetrate Israeli defenses. You can look at the Russia-Ukraine thing that seems to be hardening the lines, not the other way around, even though this minerals deal that's been talked about forever finally gets some ink on it. You get some sort of a hiccup in Europe with the forming of Germany's coalition. On and on and on. I mean, there's so much noise on noise on noise, and obviously the main story, the post-Liberation Day shenanigans out of the White House, not really sounding any more encouraging when the president goes out there and goes, you know what, maybe the kids need only 2 dolls instead of 30. And you go, wait a minute. This is not the pro-growth thing that the markets were angling for in the fourth quarter. They wanted deregulation and rate cuts. What is this? And so what are we being made to think is coming here? So all of it to me boils down to just the fog being thick and the markets building more term premium into bonds. When you get last sort of week and a half and markets unclench, term premium eases back very, very tellingly. You come off the lows, bonds bounce, stocks bounce. Dollar, very tellingly, does not revert, and gold holds up relatively well. And when you look at the beginning of May, that term premium has started to expand again. And the markets are coming back and saying, wait a second, nothing is fixed. Yes, the hair on fire moment is over. We overshot that. That was crazy. That didn't make sense. But things aren't better. They're just not extreme. And so as you see that, I think gold almost picks up a kind of war premium demand, where you see gold reflexively rally at times. Like, for example, when Russia invaded Ukraine, why was that a gold rally? What about gold makes it special in a Russia invades Ukraine scenario? Absolutely nothing. And so, but it rallies all the same, as it tends to do at times of geopolitical tension in particular, because that's the kind of stuff markets don't know how to benchmark. It's not an economic variable. It doesn't follow kind of economic thinking. It's a complete wild card. And so markets go, you know what? The fog is thick. I don't know what to do. Buy gold. When in doubt. And I think that's sort of why you have gold really since the beginning of the year on this relentless drive higher that is especially strong in April, and which seems to be restarting now. I think China coming back off their holiday and obviously being a big buyer in this market recently, I think that's helped as well. I think there was a lot of kind of pent-up speculative interest, maybe not even just in China, but just around the fact that this big gorilla of a buyer is going to wake back up. And so, and of course, it comports with bonds perking up a little bit, with the dollar weakening some more, which I know we said we're done with the Fed, but sort of sets you up for a Fed that's going to cut later.
Couldn't help himself.
I mean, it's right. It's just right there. It's sitting right there.
So, can I ask? I know we don't normally go in this direction, but explain to me, you know, I'm looking at gold doing what it's doing.
Yeah.
And I look at Northrop Grumman. I look at Raytheon. I look at Lockheed Martin. Even Palantir today down 12%, down to 108.
Yeah.
Still expensive, but
yeah,
one of these assets is not telling the truth. Either defense stocks are not telling the truth, and that the discount that they priced in over the last couple of weeks doesn't make sense, or gold is a big old scaredy cat, scared of things that are perhaps not coming. Do you think I'm right to be thinking about it in that way?
No, I don't think so. And I don't think it's because I don't think gold is rallying because it perceives war risk. I think gold is rallying because markets don't know what to perceive. The fog is very thick. So I don't think the markets know that war is coming or that gold is rallying because it thinks that it's become more likely. I think gold is rallying because markets have concluded that there is uncertainty about everything, and that uncertainty is imperceptibly dense beyond a relatively short duration. Hence the jump in term premium back up in bond markets. I think what the market is saying is the likelihood of all kinds of unexpected stuff is greater. And that includes foundational things about the dollar and the treasury market, which would be traditional havens in times like that, where correlations go to 1 and things get spicy at a very kind of top-down level. But it's possible that the call for help might come from inside the house. And so maybe the dollar and the treasury market isn't the place to look for early safety here. And it's not that more war is coming or more this and more that. It's that the fog is so thick it's unclear what in the world is coming. And the default may be just to get more gold exposure.
Perhaps.
For lack of a better idea.
Well, I think what I've been doing is gold doesn't break enough for me to want to buy it. So at 3,500, I got short and bought it all in a couple hundred points lower, but it wasn't, in my personal opinion, wasn't cheap enough to buy. And the only thing I keep doing is messing around with the miners. So I don't think Newmont got cheap enough, but I think like Barrick Gold, which is GOLD, I think they're just on pure price alone, I think that one's okay, so offers some relative value. Maybe IAG as another one. So that's the world that I'm going. I do think the defense stocks, Ilya, I think I like them as a trade over the next 30 months. And if it doesn't work, it doesn't work. But I like the idea. I like them as a trade. I think there's a lot of people that think we're going to wrap up, we're going to wrap up Ukraine. We're going to wrap up Iran in the Middle East. I don't think so either. I think that's what there's the path there for people to see that world right now, and they're pricing in that outcome. They're pricing a lot of good outcomes right now. They're pricing in, okay, we're going to get rid of these tariffs. We're going to get global trade in order. We're going to get Ukraine solved. We're going to get Iran solved. And I'm
because we have to because tax cuts, we got to make time for tax cuts. And you go, well, this is just. And then unicorns will sprinkle rainbows down from the sky.
Exactly.
That's okay.
Everyone wants to believe that we're headed towards the happy path, but hope is not a strategy, man. And I could totally see this unraveling. In a lot of people's optimism, just like disintegrating instantly.
It's all a very flimsy foundation, which is why I keep coming back to the PMIs and why I keep coming back to growth and saying the problem is growth. Forget this nonsense. The problem is growth. Because you can afford nonsense if there's growth. You can afford all kinds of stupid stuff if there's growth. But if there's not growth, you can't afford it.
So here's what I asked this question to Tom in a very different way. And I'm curious to ask it to you from a macro perspective. So the question I asked to Tom, I go, when a stock rallies, does it matter if it's a short covering rally or if it's like a bona fide rally where markets are getting actually long? And he goes, no, of course not. Stupid question. So let me ask you the same thing. If we pulled forward a bunch of buying in the first quarter, does it matter why we purchased in the first quarter, or does it only matter that there was purchasing in the first quarter? Because a lot of people want to.
And for what?
I know, but a lot of people
matter for what?
A lot of people want to read through any positivity in building of inventories or purchases because it was front-running tariffs. And I suppose my question, Ilya, is does it really matter, in your opinion?
I mean,
and break it down.
So, let's start here. We have to ask, does it matter for who? Does it matter for consumers that shelves won't be empty even if there is an effective embargo on the most critical supply chain in the world? Of course it matters. Obviously. If you walk into Walmart and there's stuff on the shelves, it matters that it's there because you need it to be there. And Americans, I don't care what the president says about $2 instead of 30 or whatever other nonsense, but he's telling Americans not to consume? What? Who are we? What is this? What country do we live in?
Let's stick on this point for a second.
Okay.
There was a part of me when I listened to that, when I listened to him say that, I had two thoughts right away. I thought of the "let them eat cake" line, but it was "let them have $3." I thought "let them have $3."
Let them have $3. It went from 2 to 3 over the course of about 48 hours. I'm like, oh, we got an extra doll. Here we go. Let me tell my daughter she's only going to get 3 because the president is magnanimous.
So there was a total aspect of like "let them have $3" thing in there for me, and then there was a part where if you're a parent, like I'm like, yes, we. No,
I get it. I get it. I just don't want the president to be talking.
100%. That's where it is.
I just don't want the president to be telling us that we need to tighten our belts for no understandable reason.
I don't know. It's like there was a way to deliver that line. Like a JFK. Ask not what what our country can do for us. Ask what we can do for. There was a way to deliver that line, and to sort of move the country in a way that says we need to focus on having more meaning in our lives. And perhaps the pathway to more meaning is not cheap Chinese toys that we can buy.
And that
on
was
Amazon.
not it.
And so there's a way to deliver that message without it sounding like I hereby announce nobody can buy more than $3, like it sounding like that. But so I'm of two minds. I get the ethos of what he's trying to communicate to the people. I get why that's important, because if you don't start seeding that out, and you're really going to try to change the balance of trade, you're going to try to change where we're making this stuff, people got to get used to the idea that you might be buying a slightly more expensive doll. You might be buying a more expensive doll to keep somebody employed, and you got to start getting that message out there if you're serious about this. But it didn't hit right. It definitely didn't hit right.
No, and if the people were behind the president, if he'd sold this well.
Oh, I am. On this point.
No, I'm saying if you are not a statistically significant sample of one, if the people as a whole were behind this, then the University of Michigan and the Conference Board would not be reporting what they're reporting.
That's so funny. You know what? I think the people are of two minds too. I think you can get a bunch of people.
They voted for it, but they're not behind this, what they're seeing implementation wise.
Here's what I'm saying. I think you can tell a bunch of people that I'm going to bring prices down, and everyone's like, yes. And then a few months later, you go, okay, are you guys ready for the recession? And everyone's like, wait, what? Everyone.
Yeah, right.
That sounds right. People want this stuff, but they don't want to pay for it. You know what I'm saying?
Right.
We want more jobs. Okay, you ready to have $3 instead of 30? What? Wait, what do you mean? It's like we want the shit, but we don't want to pay for it.
Well, that's what I'm saying. There's not buy-in for what is turning out to be the thing, and that's creating sticker shock. And you see it in the consumer confidence numbers and the business confidence numbers, where people go, wait, hold on. What? And so from the perspective of consumers, of course, it makes a difference that shelves won't be empty. They need stuff on the shelves. From the perspective of businesses that are gonna sell this stuff, it'll go into earnings. That's fine. From the perspective of us as traders, not investors that might not care and say, you know what, does it really matter for the 10-year, 20-year outlook for these companies that I'm going to buy and hold for all eternity? No, it doesn't matter. But for us as traders, does it matter? Of course it matters. And it matters because it tells you that these are not things you can extrapolate into the second quarter and the third. And so it matters for what then the underlying message in GDP is, because that's going to dictate near-term Fed policy and what bonds do and what stocks do and what currencies do as markets navigate this environment. So for consumers, it matters in a very visceral way. For businesses, it matters in they get to survive without significant disruption for longer and maybe even charge more and pad their margins, much as they did during the shortages of COVID. Companies are absolutely going to take the opportunity to gouge here and blame the White House and say, see, it's the bad tariff man that's doing this to you. Meanwhile, money. So it's not necessarily bad for them, but it matters. It doesn't matter for the buy and hold investor. But for those of us operating on, let's say, a 45-day DTE cycle, it matters.
Fair enough. Totally fair. Let's go to some instruments here. I want to know where you're positioned and why, starting with the dollar. I'm a little bit long U.S. dollars. Mm-hmm. I almost I almost never take explicit positions in currencies. I usually have an opinion, but I express that opinion implicitly through other instruments. But right now, I'm long U.S. dollars relative to the euro. I wonder what you think about that and how you're positioned.
I'm short. I started putting shorts back.
What? Short dollars?
Dollar. Short the dollar. I started putting it on with the Aussie last week. The Aussie, unlike the euro, which is pinned inside its range and doesn't want to go anywhere, seemingly. I think it is, by the way, very interesting that no matter where you look in the dollar, right? Stocks rebounded from April's scare. Bonds rebounded, then came back down, but ultimately are in a much better sort of spot than they were at kind of the peak, holy moly, from last month. But the dollar never really came back. It has sustained those losses. And that is not a market that looks like it wants to recover just on those grounds alone. The underlying weakness here, like either the dollar is late or everything else is wrong. Mm-hmm. And I'm inclined to think that the dollar is actually right. It is the most liquid market by far, FX is, and it's oftentimes the smartest too. So I think when you look at that sort of underlying reluctance for people to buy dollars, I think that tells you something. The Aussie started to break out of its congestion higher last week, so I started layering that on. And then the BOJ gave you a really great mulligan with the yen. The BOJ came out a little bit dovish last week and kind of watered down some of their intent to hike rates. And they justified it by saying, oh, well, you know, this tariff fog is so thick, we don't know what to do. Let's wait and see for a second here. Maybe we don't hike anymore this year. Our outlook has become fuzzier. And the yen weakened on that, and I thought, well, that's exactly the opposite of what the response from the yen is to what will be lower U.S. interest rates as a consequence of exactly the growth scare that the BOJ just pointed a finger at. Okay, this is going to mean lower yields. That's not a weaker yen. That's a stronger yen. And not for BOJ reasons, because the BOJ is an afterthought anyway. Rates in Japan are so low, yield differentials only matter while the BOJ is literally talking about them that day or intervening because something is weird. But other than that, yield differentials in the yen are not a reason for the yen to go higher. Falling yields, though, absolutely. And so I got a little bit long yen as well. So right after the BOJ, after that yen sell-off. To your point, the euro is not seeing it. The pound is not seeing it. The Canadian dollar is not seeing it. So it's not by any means uniform. It's more like Asia is rallying against the dollar. Let's see what that means. I'm not prepared to sell the euro or to buy the euro yet here, or the pound especially. There's a Bank of England meeting this week as well. We'll see what it does. But I'm long those currencies against the dollar. I want to be long the euro as well. But I think that'll just take some time for it to kind of find its footing. I'm long gold. I'm short all three of the key stock indexes that we follow through put verticals, SPY, the Qs, and IWM, which is
whoa. Hold on.
Yeah.
You're getting way too ahead of me here. Let's go one at a time. So I hate being on the opposite side of you in currencies. I hate it. So, but there's a part of me that goes.
You're in the euro,
thing
though,
is,
and I think you might be.
Yeah,
I'm not prepared. I'm not prepared to be on the other side of you on the euro. That one's different.
So talk to me about where you are. I know you're long bonds. I can't for the life of me figure out why. I'm trying to talk you out of it.
No, so last week I got out of bonds with a little bit.
No, this is what you want to be in them now.
Well, no, and then today I got back in.
Yeah, I think the flattener works here. Like if I was going to do anything, and I kind of am, I'm not long. I don't think I'm long bonds. I think I'm mostly flat bonds, but I'm short the twos. And I don't have the confidence to be long bonds, but if I was going to do anything, I'd be long bonds with short twos on, because I do think the potential for a flattening of the curve along with a strengthening of the dollar, I think that's in the cards here, because nobody's positioned that way. So if only for a sort of a reflexive contrarian move for the lack of positioning in this direction, I could totally see the short end of the curve moving higher, meaning people price less cuts into the front end of the curve, which then allows people more confidence to buy the long end of the curve, and by that nature alone, you get some strengthening in the U.S. currency. I think I'm thinking about that in the right terms. So I am positioned for that. And
I actually think that gives you a weaker dollar.
Why?
Because I think what it does is it shifts cuts into the back, but it also shifts more of them into the back. And we saw this in spades last year. So again, when the Fed was resisting in the first and second quarter of last year, the market said, you're going to be late. You're going to miss the recession. You could be doing stuff now, but no. So you're going to be late again. And what that means is you're going to have to cut harder because there'll be more work to do. So if you look at the interchange last year between rate cuts priced in for 2024, they basically went nowhere from mid-April until August. But the outlook for 2025 started to blow out. And the cumulative outlook started to get more and more and more dovish. And the dollar was getting smashed. Because the markets were going, the Fed is going to have to throw the kitchen sink at this when it realizes that it's wrong.
Yeah, but it's the market.
And the thing is, the Fed did. The Fed did throw the kitchen sink at it.
It's been wrong in 2024. It was wrong. It's been wrong in 2025.
But they weren't that wrong, because again, the Fed is kind of, the Fed and the markets are in this dance where the markets go, you're gonna be late. Then the Fed goes, okay, here, and they do throw the kitchen sink at it in September. But by the time they do that, growth is already recovering, and the markets go, well, yeah, but we don't want it now. We wanted it then. But the thing is, this is sort of what I've been saying before about Fed.
It's a good point.
About Fed judo is the Fed lets the markets get all hype up, lets the froth build speculatively, then leans in, and the markets go, whoa, wait, really? Okay, that's too much. And they get walked off a ledge by their own recoil at what the Fed then does. So here, this is the build-up stage. This is the stage where the markets go, you got to cut, you got to cut, you got to cut. And the Fed goes, no, we will not. And delay. And the markets go, right, so 2026, let's put another 50 basis points in there. Let's take it out of this year and put this and some into next year. And so the long end rallies.
Interesting. Okay. I think that's I didn't think about,
and the dollar
that was one aspect I didn't think about, which is putting more cuts into next year.
Yeah. Because they'll need to put more than they take out of this year for the they'll be late adjustment. They'll have to go harder because they'll be behind the growth curve.
Do you think they're behind already? What's your personal opinion?
Yes.
Do you think so? 4 cuts between now and the end of the year, over or under?
I think under, because they're going to delay. They're not going to have enough time.
Too.
They're not going to have enough time. I think they'll realize that they're late, but they always do. They're reacting.
I said that same thing yesterday. I go, this is the dance.
But that's not a bug.
They wait. It's a feature. That's right.
It's a feature.
That's what they want to do.
You can't expect them with a medium term 2 to 3 year mandate on growth and inflation to jump at every shadow. You don't want them to do that. They're not in the business of keeping us perfectly steady at 2% inflation at all time. First of all, that's impossible. And second of all, it would create so much volatility in the economy that to constantly go back and forth, fine-tuning rates to that extent, what would they be even good for? They're supposed to be a steadying hand over a 2 to 3 year window that smooths the business cycle, not turns it off. That's impossible. We wouldn't want them to attempt it. So people are always like, oh, the Fed is always wrong. No, the Fed operates on a 2 to 3 year window and is reactive to evidence at that time scale, which is exactly what you want of them.
Let me ask you this. Crude oil is almost exactly at $60. It's about $1 lower.
Yeah.
Does crude trade with what happens first? Crude trades with a 40 handle or crude trades with a 70 handle? What happens first?
40 handle.
Opinion?
40 handle.
Explain what you think is happening there and why.
I think crude has done probably all of the imminent falling that it's needed to do when it's kind of settled in an area here. It probably has some room to digest. I was short all the way up until basically the end of last week, and then I got out and took my my profits there and just backed up because it looked like we were getting into an area where there's going to be a sticking point of some sort. I think it's high comedy that there was a gap down because people took an OPEC plus statement seriously. OPEC plus doesn't matter. They can't control the market. They can't discipline their membership. They have not been able to hit their quota once since they were created. This whole artifice is complete circus. But they did say, oh, we're going to pump more oil. Okay, so the prices gap. They hang out at the swing bottoms for a second. We've now I would argue correctly, undone that entire gap because they don't matter and nobody cares. But in order for oil to really come off, you need a growth scare that people see in real terms, much as the Fed needs one. And I think some of the annoying stuff in the recent news flow has been how malleable it is. Like the GDP report, it's like, pick your own adventure. Do you want the slowdown in consumption, or do you want to dismiss the entire thing because, oh, tariff weirdness? It's too fuzzy, I don't know. The jobs report, 47K better than expected, but the previous month was revised down by 48K. What's the difference? Have we learned anything new about the jobs market? Not a thing.
The same thing will happen when inflation numbers come out in a few months.
PCE numbers come out.
It'll tick higher, but then people will be like,
yeah, lowest core since June. But the run rates, 3-month annualized, 6-month annualized, take a little baby tick down from a crazy spike in February. And you go, well, when this happened last year, the Fed waited like 6 months before they believed that it was actually still going down. And we're only 1 month in. They don't know anything. Nothing has changed. So from crude's perspective, it needs to see like a nasty growth number, something that's real and tangible. And then you go, yeah, demand destruction. Okay. It needs the next catalyst. I think it's already adjusted down to what is a growth scare. It needs now the next kind of incremental point in the story to go, okay, there is a deeper downturn and it's here now, and we can mark down demand.
There's a weird part of me. That thinks in the same way I thought we'd see short-term optimism peak when U.S.-China trade deals. We could see the U.S.-China confirming their talks would be the short-term peak in optimism. Some part of me thinks that I want to really start getting long energy companies if and when Russia and Ukraine do a deal. Like, I think that'll be sort of like at that moment, there's less of an incentive to keep the pressure on crude oil lower. I think.
Then everybody's going to start investing in things again, and all of a sudden pumping more throughput through the whole thing. Yeah, no, that would be a big unclenching. Correct. There's a lot of money that's on the sidelines waiting to be deployed, and that'll be more of a pull on crude supply because all of a sudden everybody's going to want to refine more and ship more and all kinds of things. It'll create a level of activity, as it were.
Yes. I always want to go to Bitcoin with you, and then I stop myself because you're just like this big rain cloud over the Bitcoin conversation.
Did you love the Coinbase ad this week?
Oh, I fucking loved it, man.
I knew you would.
First thing I
saw it, and I bet Victor
I thought about
loves
you.
This.
I thought about you. I go. Ilya probably doesn't like this. Ilya probably has so much shit to talk about. I looked at it
as an Economist cover type of indicator.
No, you didn't, because you're still short. You're still short dollars.
Yes, but I am not long Bitcoin.
Oh, okay, fair.
And I'm not short dollars for the reasons that the ad purports.
I know. That's the part. That's the part I think you would have
anything remotely like it. No, no.
Dude, it's so
I'm short
obvious.
the dollars because I think yields are going down. We're going to cut rates, gold up, bonds up, rates down.
I think you're too smart for your own good sometimes. You know that? Like, I think you...
If I blindly bought Bitcoin, I would be much happier financially, but I would still be talking all this smack.
You're so invested. And this is the thing. You're so invested in the U.S. financial system that it would be hard for you, I think. It'd be hard for you to let go of all that dogma. It would be hard for you to let it all go because you're so emotionally, intellectually, and financially invested in the U.S. financial system as is.
I am certainly invested in the idea that this is as a student of history, I know that this is the best it's ever been, and to go backwards would be highly undesirable because I know what's on the other side of it.
But that's not the only. So that's a false choice.
So that's one thing.
Mm-hmm.
That's one thing. So in that sense, of course, I'm invested. I think it's the better option of what we know exists. I don't think it's by any means impervious to improvement. And in fact, its malleability and its improvements over the decades, I think is the only reason that it's survived. Otherwise, it would have caved in long ago. It's been renegotiated and rebuilt, and its rules changed. And the problems that the changes make then becoming the new thing to fix, and the flexibility with which it changes those things, I think are a feature, and an important feature. And so I don't by any means think that it is beyond improvement, not even close to it. It has
You don't think it's a
so
problem?
much room for improvement.
You don't think it's a problem that we're all playing this game and that the rules of the game, when certain parties or participants, when they are threatened, then the whole dynamics of the game, the rules change. But
I
if
don't think it's ever been different ever.
that's not what I'm saying. When I'm threatened personally, I have to deal within the constraints of the game. But certain participants have the capability and the capacity to change the entirety of the rules for the whole system when they are threatened. You don't have an issue with that?
Of course I have an issue with that, but do I think this version of it is better than the feudal version?
Isn't that status quo? Isn't that status quo? That what you're doing? That's a status quo cognitive bias. What you're saying is
it's not.
You're afraid of change.
Not at all.
That the devil is better than the devil
that
you
is
don't
exactly the opposite of what I just said. I said this system is badly in need of change, is perpetually in need of change, is never beyond improvement, and the great feature of this version of the system
But it's not
is that it has proven itself valuable enough.
You understand?
No.
It's that you're calling it an improvement, but I'm saying that's dogma. What improvement
It's not dogma.
It saves some other player, some big politically important player. They change the rules not to improve the system, but to save themselves from bad decisions.
Let's live in reality. This is the fiction can be fun, but I find the reference section much more enlightening.
Bro, it's like I want to be mad at you for that backhanded thing, but it's such a funny reference. It's such a good reference.
How good is that movie? That's one of the first movies in my American life that I really loved and was fanned out about.
Can be fun.
So let's not confuse what we have here as, of course, corruption and domination by an elite and this and this and this with feudalism, where everybody lived in hovels and 10 people controlled everything and could cut off your head at will.
False choices.
It's not a false choice.
In this argument,
it's
you
progress.
create now versus a false choice.
I'm not saying there's a risk of backsliding to that. I am saying that continues to exist today all over the world in a lot of places. Not all places, but it's not a stretch. That kind of feudal life exists, let's say, in Saudi Arabia right now. So,
but you're arguing.
My point is, we have a
whole.
system. My point is we have a system that has many, many faults, but which is the best version of a system that humanity has come up with up until this point and needs to continue to iterate that system, but not to burn it down and in service of some sort of revivalist fantasy, because there is nothing to revive.
What I agree with you. You can't. Both of those things can't be true. You can't say we need to have progress and improve and iterate, but then also there's nothing to.
No, there's no great past to go back to. We need to go forward.
Can I ask you, Ilya?
Not tear down.
QE1, QE2, QE3, QE4, Operation Twist, ZERP. In your mind, these were improvements, or these were saving people's ass?
These were saving people's ass.
These were transfers.
And by
these were
people,
transfers
and by
of wealth.
people, but no. They were transfers. Well, yes, but so they were inadvertent transfers of wealth.
Come on, bro.
Absolutely. That ultimately saved
inadvertent. You think
regular people much more so than the people to whom they transferred the wealth.
Look, I'm not.
The marginal benefit from those wealth transfers was much harder hitting for the people who lost in the bargain. When you look at paper wealth transfer, because billionaires got a little bit more paper wealth in their assets and went from billionaires to multi-billionaires. But their standard of living was not going to get terribly impacted anyway.
Yeah, I think
if the worst happened in 2008. So the unclogging of credit markets and the saving of what could have been another Great Depression, but worse because of greater interconnectivity and deeper credit dependence. That helped regular people much more than what they lost in the paper wealth Olympics. And they did. They did lose in the paper wealth Olympics. But the upshot of saving the economy, in my mind, was so much more important.
Do you think we created moral hazard in the economy? Do you think there's moral hazard in the economy?
Yes, of course. But there's always moral hazard in the economy. The question is, did we make it greater? And I think the answer is, of course, yes. Of course, yes.
Do you think we live in a capitalist system right now in America?
I don't think there is such a thing. I think what there is the natural tendency of economic actors to pursue their self-interest. And the more and what capitalism is the belief that if you enable those actors to pursue those interests in as unfettered a way as possible without hurting other actors doing the same thing, you get better outcomes. Better is relative because you have to decide what better means for you. Sometimes cheaper prices are not what you societally decide is better. But I think there's many versions of capitalism. Because the way you negotiate what my pursuit not getting in the way of your pursuit means, you come to different outcomes. But I think that's why I think capitalism is not a system. Capitalism is the absence of a system. Capitalism is letting people's self-interest and enterprises' self-interest just do what it does. And what the system is are different versions of what we negotiate to come up with societally, quote unquote, good outcomes. And obviously we're in the middle of that now, obviously, where we say, you know what, it made sense in the 80s to optimize for the cheapest possible prices because the war carried over from the 70s was inflation. And so we went to, okay, cheapest possible prices, lowest common denominator, maximize shareholder value, crush the economy with high interest rates, all of those things. At every level, we reinvented it then. And now we need to reinvent it again because it turns out that the cheapest possible prices also meant that while everybody got cheaper washing machines and cars, some people, that didn't matter because they lost their job making the washing machines and the cars. And so for them, the whole thing was a net cost. And as we typically do, we only focused on the broadest possible benefit and didn't think that maybe we don't need to keep 100 cents of every dollar of savings. We could keep 70 cents and have strategic reserves of, let's say, steel and whatever else, and keep people employed. And yes, then steel would be a little bit more expensive, but we would have a societal reason why we say, you know what, we don't need rock bottom cheap steel. We want cheaper steel. And there's a middle ground here. We didn't do that, so now we're solving that issue, and we're going to reinvent it again.
Do you think? So one of the things that the last two administrations seem to have in common, at least partially, is a desire to onshore/nearshore for strategic areas of the economy. So things like critical materials, pharmaceuticals, technology like chips and AI, and energy.
That clearly makes sense, yeah.
And I wonder, I wonder what you think about that as a political goal to deglobalize in these four strategic areas for a matter of national security.
I think it makes perfect sense, and I think it's in line with the renegotiation of what this system is all around the world, and of course starting with us, because we created the order that we're now restructuring. After World War II, it made all the sense in the world for us to have a globalized order, because Europe was in shambles. All our factories remained, and we said, free trade, everybody. We're about to get rich selling you stuff. And of course, that dovetailed with us dealing with an inflationary issue then after we got rich, and that post-war gambit worked. And then we tried to solve that by relieving inflationary pressure. Lowest common denominator on production prices, on labor costs, high interest rates, Volcker, as we just talked about. All of these things operate in concert because although they look like they're disparate policies, they always, at the end of the day, are tailored to what the fundamental issue for the median voter is. And the fundamental issue for the median voter right now is we've hollowed out the middle class, we've widened wealth disparities, and externally, we thought that we could moderate China to play ball globally and buy into a global system, and they cheated and decided that what they wanted, again, well within their prerogative, it's just we bet wrong. They decided what they wanted to play for was geostrategic advantage, and now we have to counter that. And we had a window to counter it diplomatically. I would argue the TPP in the Obama administration was a very elegant way to counter, but we didn't. We ultimately dropped that ball. And now we have to counter in a way that sort of revives a Monroe Doctrine 2.0, where we basically say this Western Hemisphere is ours. By all means, come do business, but don't stay. We run things here. This is our sphere. And then moving supply chains to South America and Mexico, where, frankly, they probably would have gone were China not to have made the offer of stability and forecastability that they made in the 90s. And we took that bet, and turned out wasn't the bet to make longer term. It worked at the time. It worked great at the time. Hundreds of thousands, if not millions of people were lifted out of poverty because it worked so well. But now it's created consequences of its own because nothing is free, right? First page of any economics textbook. There's no such thing as a free lunch. Every time we fix a thing, we create an issue. And then the next crisis is we fix that issue. Now we have to fix the income inequality and the hollowing out of strategic manufacturing. Because, let's face it, Americans don't want to sew socks. We're not bringing that back from China. It's not going to happen. When we are talking about strategic manufacturing, though, like the refining of rare earths, the building of semiconductors, all of these things. Now, obviously, there's a tremendous defense advantage there that, given the way the geopolitics have worked out, we now have to do. And that helps you to deal with all manner of other issues like the income inequality. So, yes, of course it makes sense. And yes, of course it's bipartisan. Because at the end of the day, that's what the median voter wants. And that's what the median voter is going to get, by hook or by crook.
Mm-mm. You mentioned something that I hear a lot, that we are rewriting the order that we ourselves created. Mm-hmm. And I don't know if you meant it with negative connotation, but no, I am curious.
Positive.
Yeah, because I hear that said all the time lately, and I'm going, yeah, we always do that.
No, of course. No,
we constructed Bretton Woods. We went off the gold standard.
Because it served us at the time.
I'm trying to set this up.
Yeah. I'm saying
we structured the Plaza Accord. We are at this every time the game breaks and needs to be rewritten. We are the ones who have rewritten it. So there's like this line out there. Era.
Because we're the big dogs.
Yeah, post Bretton Woods. Yes, that's what I'm saying.
Yes. No, you're absolutely right. I completely agree. Which is why, on the one hand, when people start to scream, "Oh, this order was so good, why are we breaking it?" We're breaking it because the median voter wants it broken.
Mm-hmm.
It doesn't want it torched. It wants it reframed again. It wants the system to iterate. This is a forcing function.
And the other thing you mentioned, which I find interesting, because I've said this on this show before, that if you're fixing one thing and you create a whole new problem somewhere else that's often bigger, the only person who actually wins is the politician, because they, for some short time, get to ride the wave of the idea that something was actually fixed, and but the people end up getting shortchanged because it's this big game of whack-a-mole. So I guess my question to you is like,
I think that depends. That depends, because I know fixing inflation in the 70s was a 40-50 year dividend for everybody. But it's had costs, big costs.
Where does inflation come from, man?
Well, we created inflation the inflation by engineering an economic boom. That's where the inflation comes from. And then we had to open markets to let the air out of it.
Okay.
I mean, again, it depends. If you're fixing a little problem in the sort of historical sense, right? Like Bill Clinton went around thumping his chest saying, "Oh, I took us from deficit to surplus." Yeah, for like a year. Okay. Yeah. But does that erase the entire pile of national debt up to that point? Of course it doesn't. So, okay, you solved what? But then does that big pile need solving? Well, that depends. Because if that big pile makes you the risk-free asset in a globalized financial system, then you can borrow forever because you've essentially locked yourself in as the best borrower as a function of the way the system works. And that's obviously a huge advantage. So you're right, I think, when it comes to the kind of things that can be paraded around in a 4-year electoral cycle. Most of that stuff is nonsense. And that's and that's why I think you have to look at the bigger sweep. Like, we made for ourselves an industrial boom. That industrial boom post-war generated tremendous power for us, to shape institutions, to write the global rules order, but it also gave us 12% inflation that we then had to fix. Like, should we not have had the boom? No, we just then had an inflation problem that we had to fix, and then for 40 years, we had an amazing period of prosperity when we fixed it. But now, the new issue has emerged, and when we fix it, we'll have another 40, 50 years of good time. And then that will have a cost.
I wonder if we just made like a generation of libertarians. I kind of feel like a millennial. I mean, I wish I could pull a bunch of people my age and be like, do you think these guys can fix anything? I think most people my age would go, hell no.
But that's part of it. It's not the people doing it. That's why that's why the key things are bipartisan. The system is evolving.
I think the most dangerous things are bipartisan.
The thing is evolving. The thing is renegotiating itself.
Yeah,
it's renegotiating itself, and it will reward those that do it. And if Trump comes out there and goes, I will help to renegotiate these things, because I don't think anybody can argue he's been diagnosing the issue correctly for a decade and then some. His solutions, we can quibble about. And some people say these are the correct solutions, and some people will say they're not. But why has he been so successful? Because he has successfully diagnosed what everybody on both sides is collectively upset about in their mass.
Yeah, I agree.
And then the small group of people that says, no, everything is fine, look, everything is great, they keep losing elections.
Correct. Yes, I agree with that 1,000%. Like the people that are like, don't believe your lying eyes.
Yeah.
Like that is not.
Well, I mean, like,
work.
how much more of a consensus candidate for the previous thing that people want reformed is someone like a Hillary Clinton or a Jeb Bush? Right?
I don't get the question. Ask it again.
It's not party oriented. It's the person that can articulate the will of the median voter at the turning point surprises everybody. This is how it happens forever. This is a cycle in its painful stage, the transition stage.
Normally, you and I have the conversation we're about to have, we have it off air. Yeah. And I find this is the most interesting, Ilya Spivak. I mean, all the stuff that you spew, that you impart is, I think, fascinating. But this is the most interesting part. Let me ask you this question. I'm sort of fascinated by what Dems are doing at the national political level, like putting AOC and Bernie out front. Bernie's out front, but he's also saying right away, hey, I'm not running, which is a weird political tactic, in my opinion. What do you think? To your point, I think you're 100% right in diagnosing what happened in the last election. There was one candidate willing to speak to the problems of the American people, and there was one candidate that was like just unwilling, perhaps bound by donor money, to speak to those issues, or just was incapable of doing it. Where do you think the Dems go from here into 2028, Ilya Spivak? What do they do to be competitive in your mind?
I don't think what you're seeing from AOC or Bernie represents where the party is going. I think it represents where the party is not going, because the party isn't going anywhere. I think when you look at populists of the left or right, at any moment in time, the nature of populist politics is it is rah-rah, loud, by its conception. Doesn't matter who it is.
Agreed.
But whether it's AOC or it's Nigel Farage, who cares? The nature of a populist approach from the right or the left is you got to be barnstorming all the time. So AOC and Bernie, they're just doing AOC and Bernie. They're always doing AOC and Bernie. You just hear them louder because the mainstream of the Democratic Party is real quiet because they don't know what they're doing. And they're not saying anything. They are in the proverbial political wilderness, but very, very obviously so. Like they're not even trying to front like they're not. And I think what's starting to emerge is the affinity of a number of, and I haven't read Abundance yet, the Ezra Klein book, but people seem to be starting to tie together this kind of quote unquote abundance movement coming out of the American Democratic Party, where you're seeing the parties switch. And we've seen this happen before, where suddenly the Democrats find themselves the party of free trade. Suddenly the Democrats find, and I mean, it's not that new, but like, as opposed to Republicans that aren't, this is weird and different. You're seeing suddenly the Democrats becoming the party of an assertive foreign policy, countering Russia in Ukraine as opposed to appeasement and isolationism. Again, what? This is like Cheney-esque. Why? This is different. But I think what you're seeing is what you ultimately should have read from the 2020 general election, where Democrats ran every flavor of the harder left and skewed hard that way across 25 different options. And what the voters did was they went with dependable centrist Biden. Or at least that was the sell of the options at the time.
That was the sell. But they forced Bernie out.
What happened later is not important.
And they forced the field out.
They
forced them to coalesce around Biden.
What happened later is a separate issue.